When the rest of the markets slow down, the futures market keeps moving. Did you know that CME Group S&P 500 and NASDAQ 100 futures trade nearly 24 hours with great liquidity? In the ETF markets, volume and liquidity lessens after 4 p.m. until the next morning. But with futures, you get trading opportunities both day and night. Learn more at cmegroup.com/equity-futures.
News when you want it with Bloomberg News Now. I'm Charlie Pellet. A federal judge has ruled that Alphabet's Google does not have to sell its popular Chrome web browser.
It is surprising because Judge Mehta was in favor of divesting Chrome, which is the key asset here that everyone is looking at. And in this case, I think the ruling clearly states that they're not required to divest Chrome. At the same time, there won't be any exclusive contracts. So that means the Google-Apple thing won't be at least allowed anymore.
Bloomberg's Mandeep Singh. The ruling came in the Justice Department's landmark antitrust case against the search engine. Treasury Secretary Scott Bessent is reportedly planning to start interviews on Friday in search of a candidate to be the next chair of the Federal Reserve. The Wall Street Journal says the interview process will continue next week, adding that Bessent will be talking to candidates either in person or by video conference. Robert Kaplan is vice chair at Goldman Sachs. He's a former Dallas Fed chief, and he spoke to Bloomberg from the sidelines of the Goldman Sachs Asia Leaders Conference.
Jay Powell's term as chairman ends in May, and so it makes sense that they should start the interview process. I think the main thing for the leader, the next leader of the Fed, has to be somebody who has strong grounding in economics and can make independent judgments about the economy.
Robert Kaplan, former Dallas Fed chief, speaking to Bloomberg. Following the interviews, Bessent plans to recommend a finalist of candidates to President Trump. Fed Governor Lisa Cook's lawyers say President Trump's move to oust her is based on, quote, cut-and-paste allegations relating to mortgage fraud. The House Oversight Committee has released more than 33,000 pages of files related to Jeffrey Epstein. CBS reports many of the documents were already in the public domain. The release came as lawmakers pressed the Trump administration to disclose more information on the criminal probe into Epstein. Republican Congressman Thomas Massie of Kentucky says tomorrow some of those victims will speak publicly.
I haven't had time to look at all the documents that have been released by the Oversight Committee, but I think the scope of their investigation is such that the things they requested aren't even going to include all the things that we need. And the few documents that we have been able to view are heavily redacted to the degree that they wouldn't show us anything new.
Republican Congressman Thomas Massie of Kentucky. President Trump says his administration will ask the U.S. Supreme Court for an expedited ruling to overturn a federal appeals court ruling that found many of his tariffs are illegal.
We are leading very substantially with AI. We're leading because of tariffs. We're leading because of talent, and this is where they'd like to be. But without the tariffs, we wouldn't have a chance because we wouldn't be able to protect those investments of the companies coming in. So if you took away tariffs, we could end up being a third world country.
Republican Senator Joni Ernst of Iowa says she will not seek re-election, officially opening a key Senate battleground ahead of 2026 midterms. She made the announcement in a video message.
Having been raised in a family who has given me so much love and support, now, as our family ages and grows, it's my time for me to give back to them. After a tremendous amount of prayer and reflection, I will not be seeking re-election in 2026. This was no easy decision. I love my state and country.
Apple's lead AI researcher for robotics has left the company to join Meta Platforms' competing effort, part of an exodus of AI talent from the iPhone maker. Bloomberg's Mark Gurman says there are a few reasons for these departures, including
Apple has been seriously
everyone, good morning, good afternoon, good evening to all of you. Welcome once again to this live analysis. स्टार्ट करते हैं. फिलहाल देखो ये क्रूड ऑयल नेचुरल गैस, कल क्रूड ऑयल में अच्छा सेल ऑफ आया था. नीचे से बाइंग आ गई थी, थोड़ा एक्सपेक्ट था और नीचे आएगा, आया नहीं. फिर से वापस ऊपर गया था, उसी लेवल से वापस एक सेलिंग देखने के लिए मिली थी, तो वो लेवल अभी भी इंटैक्ट ही है. बीच में और कोई नया ट्रेड है नहीं, तो सेलिंग में बने हो तो कल से तो बने रहो. वापस बनेगा फिर से लेवल तो वी विल सी दैट। इसको थोड़ा सा रिफ्रेश कर देते हैं अब। नेचुरल गैस में भी कल एक बाइंग आई थी, फिर सेलिंग एंड देन बाइंग अगेन आई, सेकंड टारगेट भी हिट हो गया था। थोड़ा सा ऊपर पहुंचता है तो इसमें एक सेलिंग का ट्रेड प्लान करेंगे अपर लेवल पे, नहीं तो लेट्स सी क्या पॉसिबिलिटी बनती है अदरवाइज। बाकी निफ्टी को देखोगे साइडवेज ही चल रहा है कम्प्लीटली। 12:30 लंदन सेशन ओपन होगा। एंड देन 5:30 न्यूयॉर्क सेशन ओपनिंग, 7 PM यूएस मार्केट ओपन, 7:30 जॉब ओपनिंग का डेटा। आज क्रूड ऑयल की इन्वेंट्री नहीं है, ध्यान रखना। क्रूड ऑयल और नेचुरल गैस की इन्वेंट्री कल है शेड्यूल। बिटकॉइन और इथेरियम का बताओ, क्या बताना है बिटकॉइन और इथेरियम में, पूरा मेंशन करो। कंप्लीटली साइडवेज, लेट्स सी कुछ मोमेंटम मिलता है तो।
Contemplating moving away from in-house model technology for some of its products and using more from companies like Google or Anthropic or OpenAI. And the LLM researchers at Apple, some of them think they're seeing the writing on the wall, and maybe it's time to get out of there before Apple really reduces the use of their technologies. Of course, internally, Apple has denied the idea that they're going to move away.
Bloomberg's Mark Gurman. A jury in Los Angeles finds rapper Cardi B not liable for assault, battery, or emotional distress, awarding zero damages to the security guard who filed a civil lawsuit against the artist. Imani Ellis alleges that Cardi assaulted her at a Beverly Hills medical building in 2018. Cardi always maintained her innocence and spoke to reporters outside the courthouse.
This time around, I'm going to be nice. The next person to try to do a frivolous lawsuit against me, I'm going to countersue, and I'm going to make you pay.
Cardi B speaking outside the courthouse. And that's news when you want it with Bloomberg News Now. I'm Charlie Palatine. This is Bloomberg.
When the rest of the markets slow down, the futures market keeps moving. Did you know that CME Group S&P 500 and NASDAQ 100 futures trade nearly 24 hours with great liquidity? In the ETF markets, volume and liquidity lessens after 4 p.m. until the next morning. But with futures, you get trading opportunities both day and night. Learn more at cmegroup.com/equity futures.
लेट्स सी, आई होप आज ये ब्रेक कर दे, क्योंकि हायर लो नहीं बना है। नीचे वाला लेवल एक बार हाई बना चुका है, लोअर हाई बना है। अगर थर्ड टाइम आता है तो ब्रेक डाउन होने के बहुत ज़्यादा चांसेस रहेंगे। ऊपर से एक ही बार सेलिंग आई है अभी, ये दूसरी बार कल आई है। अगर ये भी लोअर लो नहीं बनाता है तो दोनों ही रेंज के अंदर रह जाएंगे। तो दिस इज अ रेंज बाउंड राइट नाउ। रेजिस्टेंस अगर बन गया तो वी विल सी दैट एज वेल। बट अब एक नेक्स्ट ब्रेक करेगा। दो बार बाइंग आ चुकी है, लोअर हाई बना है, दूसरी बार सेलिंग आ रही है। अगर लोअर हायर लो बन गया तो रेजिस्टेंस भी वीक हो जाएगा। ताकि अगर नीचे आ जाए जो दूसरा वाला लेवल एक हम एक्सपेक्ट कर रहे थे वो कल वाला, वहां पर फिर बढ़िया रहेगा ट्रेड बाइंग करने के लिए। ऊपर से सेलिंग ही एक्सपेक्टेड है। ये 5620 से 5600, दैट इज अ गुड सपोर्ट एरिया। वो कल लग रहा था आ जाएगा, नहीं आया वहां तक, यहाँ पर आया तो बहुत अच्छा लेवल है।
Back to that breaking news from Google, a court ruling they are not required to sell Chrome. Let's get to Mandeep Singh of Bloomberg Intelligence for more context here. You can see that the shares are spiking in the after hours, Mandeep. How surprising to see this is this?
It is surprising because Judge Mehta was in favor of divesting Chrome, which is the key asset here that everyone is looking at. And in this case, I think the ruling clearly states that they're not required to divest Chrome. At the same time, there won't be any exclusive contracts, so that means the Google-Apple thing won't be at least allowed anymore. And then also related to Android, there won't be any like licensing agreements that bar certain companies. So really, I think what it seems like is they are in favor of opening up the platform where other companies can bid, but there is no talk about, Google having to divest any of their assets.
It's amazing Google can go up 6% just like that, like it's a small cap. I mean, that's how powerful these stocks are. We talked to Anurag earlier about the other things Google owns, like YouTube would be like the 20th biggest stock if it were spun off. Could they go after other parts of Google in an antitrust way?
Not really. There were two big lawsuits. One was the monopoly lawsuit, where Chrome was the big asset that everyone was focused on. And look, the reason why you're seeing a 5-6% move is because when it comes to Chrome, over 3 billion monthly active users, AI agents, and everything that's going on in Gen AI, browser is the most important asset. So if they were restricted in some way, I mean, that would really hurt Alphabet's position in Gen AI. So from that perspective, it did warrant a big move like this.
And Mandeep, we have about a minute left. We're talking about Alphabet, but take a look at shares of Apple, up about 3.7% in the after-hours trade as well. What can we extrapolate from this ruling into Apple?
So look, I mean, clearly the agreement that Apple had with Google is at least not allowed anymore, or that's what the ruling suggests. But Apple is looking to use someone else's model. So, from that perspective, probably they could use Gemini or something related to Google to catch up to other companies when it comes to incorporating Gen AI. So from that perspective, I do think it's a positive that Apple can use something of Google going forward, and there are no kind of big restrictions that are evident.
Good morning from London.
As well, because global leaders are gathered there. Obviously, this is not Western leaders. This is China, India, Pakistan, Russia. Lots of really interesting countries coming together. In theory, they all look very united because they don't like Trump. But are they as united as they appear?
Yes, nothing like a common challenge to bring people together, and that seems to be what's happening here. So this is the Regional Security and Economic Summit, as you say, taking place in China. We had some of those meetings yesterday, some of them continuing today. So China has met with India, and India has met with Russia. So all of these meetings carry on. But the big picture around this is, as you say, the role that the Trump administration is playing here, even though, of course, it is not on the ground. But criticising India's relationship with Russia in particular, and the fact that there's that oil trade that goes on, that's been a big topic. And so the extent to which the Trump administration's policies are having this sort of unintended or maybe even intended consequence is interesting to watch.
I think the nuance is really important here. It's really interesting. Narendra Modi went to Japan before he went to China, just to kind of maybe keep a few balls in the air at the same time, not putting all his eggs in one basket. How many more of these can I deliver? But I think he's being really careful, and he's also not sticking around for the military parade, which is going to be taking place as well.
He talked to Zelensky as well before meeting Vladimir Putin, which chimes in exactly with the theme you're
so I think he's been quite careful. So this is my point really about the fact that this is not all it appears. This is a loose gathering of global leaders that don't particularly like Trump, but not quite so sure about each other either. So you just wonder whether or not actually we read too... There's a danger, I think, in reading too much into this. Right,
yes, and in fact maybe they are keeping options open. Let's transition into the part of this conversation that takes us into how the Chinese economy is doing. We've had pretty mixed data out of China over the weekend. The official PMI looking kind of sluggish, the more private sector-facing PMI looking more positive, in fact beating every estimate out there. Commodities are responding divergently to that. We've got copper prices going higher. We've got steel and iron ore prices coming down. So it seems we're still struggling to get a decent reading on what is happening in China. But we're coming off a really strong run for the Chinese equity market. The CSI 300 in the month of August up by 10%.
Let's talk about the tech stocks in just a moment. Just with the metals, they've had a good run recently as well, so I think that needs to be borne in mind too. And just keep an eye on the effect that could have on the European miners, particularly the London miners, first thing this morning. The tech stock story, you bring up what's happening in equity markets. Baba's up. The Hong Kong listing, US listing obviously closed today. The Hong Kong listing's up really strongly on the back of this, which I think is fascinating. This is a stock that trades on circa 15 times. Amazon, which I think is probably the nearest competitor in the United States, trades on 34 times. And there's all this kind of AI story that's swirling, beginning to bubble up in China, beginning to gain some traction. Yes, it's not there. Yes, it's not able to compete directly, with the US. But the US multiples, do they really stack up when the rest of the world is coming for the same business and is very good generally at commoditizing it? That's a question that I think is going to be very pressing. Going into the end of this year. So Bubba, I think, is a really interesting trade to watch out for. Let's talk about another trade that we're watching out for as well, and that is what is happening with all this tariff turbulence. The headline is, US trading partners are dazed and confused. I'm not sure. I'm not that dazed or confused about what is happening here. Trump, the Liberation Day tariffs have been declared illegal twice now. You initially had the International Trade Court ruling them illegal back in May. Now you've had a federal appeals court ruling that they're illegal as well. Basically, this is the idea that tariffs are meant to be the designated area of Congress, and Trump is using emergency legislation to get round that. Ultimately, though, we're still in the same place. Supreme Court is going to rule at some point. The US administration doesn't have to file until October. The tariffs are still in place. They haven't taken them away. The court hasn't disbanded these tariffs, so they're still in place, so they can still collect this. It's likely the Supreme Court will take its time maybe to rule on this, so it could be into the beginning of next year before this changes. So nothing is going to change between now and probably the beginning of next year, so they're going to continue to collect these tariffs. And ultimately, all Trump has got to do is go to Congress and go, can you pass this piece of legislation? And they do that. Go away.
So I suppose our default thought, as we've seen other legal challenges, is this is an administration that will find other ways to get its way, to put its will in place in this particular area of policy. And so that maybe is why we are seeing quite muted response. I thought maybe we would see some response, but virtually nothing. I mean, if you look at US futures, of course, they're closed today, the US equity cash markets, but we've got futures, and they're really not doing very much, down 0.1% on E-minis. I will just flag, there's a lot going on in Asia, and we've talked talked about some of the tech rally. There's an area of strength there, but there's some weakness in other tech names coming under pressure. But we might not be dazed and confused, but to your point, maybe we are medium term a little more confused. Looking at South Korea, the Kospi and the Japanese Nikkei, both of those markets down. And that's tech read across from Friday.
Yep.
But is there also a question about whether trading partners who don't have trading deals in place might just kind of slow walk these things now to see where the land lies, and we end up in a period of prolonged uncertainty, I suppose, around trade?
But I think it was already uncertain anyway. Trump
I'm not sure there is a certain place
precisely.
on trade.
Trump shifts the goalpost on a daily basis on this whole story, as a result of which, did you have any certainty before? I'm not sure you did.
No.
Do you have any certainty now? You probably don't. I don't think it's changed very much. I think the expectation was that he was going to struggle legally with this, but would spin it out. And ultimately, he can go to Congress. That is the way of resolving this. Legislation is the way of resolving this. Will Congress go along with that? I don't know. But the Supreme Court thus far has largely sided with Trump. And he's got until October to file an appeal against this ruling.
Yeah, or to find a different way of doing it. Yeah.
And so the Supreme Court can then take its time. They stay in place, so nothing's going to change between now and the end of the year.
Let's talk about France, because here is another story that maybe has not changed over the weekend, but perhaps notable for that in itself.
Yep.
If you were looking for any signs that maybe these opposition parties were going to come round to support the Prime Minister for any reason whatsoever, you're not seeing it over the weekend. So the opposition parties are still talking tough, still not saying that they will support the Prime Minister. I was drawn to the Socialist words. I mean, they've both, all of the opposition parties have said that we're agreeing to meet with Beirut. But some of them are saying this is just a courtesy. There's nothing really to talk about. And the Socialists saying the only word I'm waiting to hear from Beirut, Prime Minister, of course, is goodbye. And that just sort of highlights where we are in this conversation. But then there's also this interesting front being opened up here. If the French Prime Minister feeling under attack, then he's certainly opening up a new area of offence. And that is around Italy, and talking about the Italians enacting what he calls fiscal dumping, essentially objecting to fiscal tools being used as a tool of competition.
Problems at home, blame somebody else.
Yes.
Okay? Usually quite a good tactic. Blame the Italians.
For poaching all the high net worth
precisely.
Individuals.
That's obviously the reason why we've got so many problems at home. Seems like a fairly well-worn tactic by any government if they've got problems at home. It is clear that he is going to lose this vote at this point. So we're still in this kind of phase of not really understanding what comes next.
Yeah. I mean, he still thinks he has a chance, but I don't know what he thinks he's going to say this week that will turn it around. But he does still think he has a chance. I mean, there's 8 basis points now, Guy, between Italy and France, and I wonder if that's going into his thinking as to why he lashes out at Milan and Rome. Maybe this hurts in Paris.
I'm sure it does. But it doesn't change the arithmetic that he now faces, and it doesn't change critically the arithmetic that Macron faces. So what is Macron going to do? And we're all talking about Beirut this week, but this is a... Macron has to decide what he wants to do next. Does he want to appoint another Prime Minister? How does that change the calculus? Clearly, with the current Parliament, you are going to struggle to deliver anything that is meaningful. Does he have parliamentary elections, snap parliamentary elections? That has a huge risk associated with it. Does he call presidential elections? That's obviously his resignation, and he's gone. So I struggle to see what...
He sort of ruled out any of those calling election-type activities, hasn't he? But, these things have been a surprise in the past, so we'll wait and see.
I'm surprised that anybody's surprised that anything is... this is where we are. This doesn't look like it's changed very much over the weekends. Alex Yakov, BNP Paribas, Markets 360, is going to be joining us very shortly to talk about all of this. I'm quite curious to get his take on kind of what's happening in China, and we'll get his take on that, plus also the dollar. We need to talk more about that. Callum Picker is going to join us from Peel Hunt, chief economist there. Why is the UK struggling as well? And Doe, portfolio manager Julius Baer, will join us to talk about the markets, and Bronwyn Maddox is going to join us as well to talk a little bit later on about what is happening with the geopolitical narrative, firm eye again, as to what is happening out in China this week.
Let's tell you some of the data points we have on the agenda, other items to watch. Today, German manufacturing PMI will be hitting the Bloomberg terminal. It's a US Labor Day holiday, of course, we know, so markets are closed stateside. Tomorrow we get the US manufacturing PMI numbers, we get Euro area CPI, and that's really where the interest for Europe will lie, I suppose. We get retail sales on Thursday. We've got on Wednesday a China military parade, all of this coming on the back of the dialogue that we've been talking about between China and Russia and India and others. Thursday, we get retail sales, as I mentioned. And Friday, this is the big one, of course, payrolls. And we heard Jemana at the end of the last hour, Guy, making the point, of course, that it was the revisions to the July number, or that was where a lot of the shock has been, the fact that we thought we had jobs created, and then we realised that there were couple of months. It didn't create as many jobs as we'd anticipated.
And the next calculus on that comes a few days later. The whisper number is 75, the survey number is 75. I wonder whether those numbers change a little bit. And is 75 actually the right number to keep things reasonably steady at the moment? Anyway, payrolls Friday, one of the big events of the week. What else do you need to know as we start the week this Monday morning? Norway has picked the UK to supply warships for its navy in a £10 billion deal. It's the Nordic nation's biggest ever investment in its defence. Among the NATO members that border Russia, Norway had also considered France, Germany and the US for the contract. Delivery of the British Type 26 frigates, which are specifically designed to detect, track down and combat submarines, will start in 2030. Bloomberg has learnt that OpenAI is seeking to build a massive new data centre in India. The project could mark a major step forward in Asia for its Stargate-branded AI infrastructure push. Sources say the company is currently scouting local partners to set up a facility with at least 1 gigawatt of capacity. The exact location and timeline of the project remain unclear. And Indonesian stocks have tumbled by the most in nearly 5 months, hit by growing concerns over political instability in Southeast Asia's biggest market. President Prabowo Subianto cancelled a trip to China following the unrest, and demonstrators targeted the homes of Indonesia's finance minister and several lawmakers. On Sunday, the president announced Parliament will remove hefty lawmaker perks that had been a source for ire for many protests, a source of ire for many protests.
Protesters, yes, indeed. And we see that playing out on the streets and in the markets. Coming up on this programme, then, the UK's Parliament returns from its summer recess. We discuss challenges facing the country's economy and more. Plus, Chinese EV maker BYD reports a 30% plunge in quarterly profit. More on the cutthroat battle for EV market share. We thought they were one of the winners, but we'll get into that story. Up next, we will be live from China's summit in Tianjin as President Xi Jinping hosts Russia's Vladimir Putin and the Indian leader Narendra Modi. More on that summit coming up. If you have questions, if you want to get involved in these conversations, IB plus BBTV Go. That is the function to use on the Bloomberg terminal. This is Bloomberg.
We should seek common ground while putting aside differences. Shared aspirations are the source of strength and advantage, and the will to seek commonality while shelving differences reflects wisdom and vision.
That was, of course, the Chinese President Xi Jinping speaking at the Shanghai Cooperation Organization Summit, which is taking place just outside Beijing in Tianjin. Let's bring in Min Lo, who's there for us now on this summit that is taking place. I mean, in theory, these leaders look unified. They look like they are standing together and are against Donald Trump, the US president. How unified a group really is this?
Yes, the relevance of the SEO grouping has been under question for many years because it started out in 2001 as a security grouping to rival the likes of the NATO. But you look at some of its member countries, India and Pakistan have conflicts with each other. Iran was attacked by the US, and the SEO during these instances didn't really, do a good job in showing its effectiveness in intervening in some of these conflicts. So, of course, today it is billed as one of the biggest, in fact, the biggest SEO gathering in its history, something that China is very proud of. It's all over Chinese state media. It's a platform for President Xi to show that he has this global leadership among these countries of the global south. And we'll be looking out for the joint statement, if any, that comes out of this, and what is the tone that the group adopts, especially in reference to the US, and whether there is any framing of the conflict, the territorial conflicts, the terrorist attacks on India and Pakistan. Are they given equal weight in the joint statements, and whether there is any mention of Iran and the conflict in Gaza as well?
Min, switching to markets, it looks as if there's a lot of focus on tech, and some of that tech's getting a negative read across from US stocks on Friday. Other tech, like Alibaba, lifting Chinese stocks today because of the progress that Alibaba is making in AI. Talk us through that.
Yes, Alibaba really surprised markets with its earnings report, right? Revenue surging, really supported by its cloud computing business, helping to offset the price competition and the hit to the profit in the food delivery front. And we saw this surge in its stock prices, helping to lift the other chip stocks in China, including SMIC, Hua Hong, and broadly we continue to see this blazing rally on Chinese onshore markets. Markets really shrugging off the weak or the contraction in the PMI data that we got over the weekend. The private PMI actually expanded, and it shows you that China is starting to learn to live with these tariffs. And of course, we have Modi and Xi meeting over the weekend, suggesting this normalization of ties, as President Modi announced that both sides will resume direct flights with each other. And some of these Indian companies with ties to China, they could set to benefit from the improved relations between China and India as well.
Mimin, thank you for the catch-up. Thank you very much indeed for the reporting. Mimin Lo joining us out of Tianjin. Let's carry on the conversation and connect this back to the markets that we're going to spend this week talking about. Alex Yekov is the head of G10FX strategy for Europe, BNP Paribas Markets 360. I just want to kind of connect what we've just been hearing about, what's happening out in Asia, what's happening in China right now, this gathering of India, China, Russia. These are the countries that have talked so much about de-dollarizing, finding an alternative to the global dollar system. You spend your life in this world. Do you see any progress? Is de-dollarization real in any shape or form?
Good morning. Thanks for having me on again. We've held a bearish view for the majority of this year on the dollar and still look for euro dollar to trade to 120.
Yeah.
A reduction in dollar exposure from European investors in particular has been a core part of that view. And that was the main story for H1. So higher hedge ratios from European investors in particular. We think the drivers of dollar weakness are now shifting increasingly more towards the Fed, with the Fed more in focus. It's not to say the hedge ratio story is over by any means. We think it will continue. But the Fed is increasingly important for the dollar, and that means the FX rates correlation, which had broken down in the first half of this year, can reestablish itself, meaning weeks like this, where we have payrolls, are really key for the dollar.
But is the euro... people are talking about migrating away from the dollar or focusing back on Europe. Is the euro an alternative to the dollar? Are there tectonic shifts happening within FX at the moment? Or is it just interest rate differentials still dominate, growth rates still dominate? Are these still the things that drive what we are seeing in terms of the FX landscape at the moment?
We think it's a bit of both. Yes, traditional relationships are coming back, but those tectonic shifts that you mentioned, Guy, are still there. And within the FX universe, yes, we think euro is the most attractive currency to rotate into. Importantly, we're not calling for an asset rotation. We're not calling for US asset selling, European asset buying from global investors. We're calling for higher hedge ratios from European investors. So a reduction in dollar exposure that way.
OK, so let's stick with the dollar. We'll come back to more on the euro in just a moment, because I see that Christine Lagarde is speaking. But let's stick with the dollar and that link between FX and rates that you say that correlation is sort of coming back. So what should we be watching for? It's Monday, can't speak. What should we be watching for when it comes to Friday, when we get the payrolls data and we're looking at, maybe some more strength in payrolls than we thought, or maybe some weakness? And what is the reaction function in the dollar?
So I think the two, exactly like you say, Anna, are two separate questions. On the one hand, we look for a resilient payroll print of 90K with unemployment at 4.2. But the asymmetry for the dollar, we think, is to the downside. So let me break that down for you. For starters, the fundamental picture, as I just outlined, is already bearish dollars. But importantly, as labor supply has been coming off, so too has the break-even rate, so the level of job growth required to keep the unemployment rate stable, fallen. And that increases the chance of a soft or negative payroll print. Now, that negative or soft payroll print might not raise the unemployment rate, but it would optically be sufficient for the dollar to sell off. And that's kind of what the asymmetry for payrolls is all about in FX, even though our base case is for a resilient print.
And so does that mean that the euro gains as a result?
Yes.
Yeah, that's the euro. So, and I'm watching Christine Lagarde speaking this morning. She's speaking on other media at this point, and she's talking about, she's probably being asked about France, but trying her best not to mention France by name, I would imagine. But she's saying, I look very carefully at spreads. We need to see discipline in public finances. How much does any of that conversation around what's going on in bond markets, around widening spreads for France, around political unrest in France, how much does that cut through to the euro?
Not so much at this stage. When we look at 10-year OAT asset swaps, they're already trading above 100 basis points. So rates markets, as you say, already discount quite a lot. And parliamentary elections in France, to the extent that that's where we arrive, tend to have only a short-lived impact on the euro. Last year is a good example of that, where the euro sold off a little bit into parliamentary elections, but pretty much reversed that move straight away after the elections were over. Presidential elections would be more impactful than parliamentary elections, but that's not something the market is talking about at this stage.
By the yen into a BOJ rate hike, is that the trade right now? It seems to be warming up.
We think it's that simple. The BOJ will be hiking rates in October and the Fed will be in easing mode. So you have strong monetary policy divergence again. And it doesn't seem like the market expects an imminent LDP election.
Nope.
Plus, we think positioning in the yen is lighter than in some other currencies when we look at our models. So the stars are really aligning for a bottom end of the tight range, a break of the bottom end of the tight range that dollar yen's been in August.
So it's domestic drivers then. It's that BOJ anticipation of hikes at the BOJ that you think that drives the yen, because others say, you know, look elsewhere, look at the tensions between the Fed and the US government, look at what's going on in France and other areas of political uncertainty that maybe drive into the yen. I suppose both could be true.
Exactly. I think both are true. I think the main driver is monetary policy divergence, and all the other factors that you mentioned just add to the bearish dollar yen story.
OK, Alex, thank you very much. Thank you for joining us. Alex Yakov, head of G10 FX strategy for Europe at BNP Paribas Markets 360. It's going to be a busy week for Alex and anybody in FX, of course, with the payrolls data breaking on Friday. Before that, we get inflation data out of the Eurozone, just expecting that to come in at 2%. So as it was and as it is targeted, that'll be the conversation tomorrow, perhaps. Coming up on the programme, we'll focus in on the UK. Parliament returns from recess. We'll discuss the challenges facing Prime Minister Keir Starmer. Peel Hunt economist Callum Pickering joins us. Challenges for Keir Starmer, challenges for his Chancellor as well, in terms of that budget that is coming up and a lot of expectation around tax hikes. Is that overdone? Should we be expecting that to come to pass? We will talk about the UK next. This is Bloomberg. Welcome back. 30 minutes until the start of equity trading for Europe. Not for the United States, of course. It's Labour Day holiday there, so we will be without probably some volume as a result. But the futures picture looks like this. Pretty flat for London. We'll talk about the UK and the broader macro context in just a moment. The CAC 40 futures suggesting a little bit of upside, continuing perhaps to rebound a little from what we saw last week. Of course, we have negativity around tech stocks in the US on Friday and into the Asia session as well, but maybe that doesn't cut through much here in Europe. We could see weakness, as Guy was mentioning at the top of the programme, in London as a result of the weakness in the iron ore price. But then copper is higher, so mixed picture there. Let's talk about the bond markets. We're watching to see what happens, of course, again, because of the political uncertainty in France. Not because there's a huge amount of news flow, but just because that is where the market is paying attention right now in terms of European bonds. And we're at 3.53% on the French 10-year yield right now.
Is summer over? Kind of feels like it. Will be tomorrow. The Americans will be back. Labour Day holiday behind us. And today, here in the UK, Parliament returns from its summer recess. Prime Minister Keir Starmer is facing multiple domestic challenges after a summer which has seen asylum protests, tumbling government poll ratings and fresh surges in inflation. Joining us to wrap all this good news together is Bloomberg's Alex Morgan. Now what?
Yeah, well, Guy, where to start? Let's start with a poll, shall we? A poll of polls, looking across a composite poll that Bloomberg's put together, looking across the main pollsters, and this puts the Reform Party well out ahead on 28%. Labour trailing on 20%, the Conservatives on 18%. Now, that chart, if you like, is the backdrop to the start of this new parliamentary session. You can see there that now we're looking at their YouGov survey looking at Keir Starmer's favourability ratings. Now, Labour really are going to be wanting to sort of play the long game here. 4 years until a general election must be called. A lot of what Labour promised at the last election, making people feel better off, you know, they've had a lot of headwinds on that front. So you can imagine the governing Labour Party wanting to sort of push this along. Over the summer, though, Reform have been almost every single week out with another press conference. Nigel Farage, I think it's fair to say, has been setting the political weather on the issue of immigration and asylum across the summer. And that is a hot-button issue for politics in the UK, certainly for voters. We're looking ahead to the autumn as well. It's going to be a very interesting parliamentary session. We've got all the parliamentary party conferences coming up. We've got, starting off with Reform, with a record turnout from business leaders there. Then, of course, moving through to Labour, Liberal Democrats, and finally the Conservatives. Now, for the Conservatives, of course, who were in power for 14 years, I think it's fair to say their challenge for this parliamentary session is getting heard. Really, I mean, I've talked to you there about Reform on 28 in the poll, this poll of polls, Labour on 20%, Conservatives on 18. Kemi Badenoch, the leader of the Conservatives, really trying to make sure now that she can get heard. Nigel Farage sort of parked his tanks on the Conservatives' lawn on some key topics. And all of this, of course, coming as well at the time we'll be having the autumn budget from Rachel Reeves. I know we're going to go into that in just a moment, talking about the economic pressures on the government at a time when Keir Starmer, over the summer, had defended Labour's stewardship of the economy, saying that he'd overseen a rise in wages and, of course, the Bank of England having done interest rate cuts. That, of course, is coming at a time when we have seen a rise in consumer prices. The Bank of England expecting inflation to peak at 4%, albeit coming down slightly after that. So what are the challenges? Guy, I think the challenges for the Labour Party are regaining a sort of the front foot in the conversation on a whole number of issues. Immigration, of course, is a real big one, but then, of course, you'll be having the economic picture, forecasts, and then the budget as well. So it is a busy old time, party conferences, and Donald Trump appearing for his state visit, sort of nestled in the middle of all that.
Nestled.
Nestled.
That's how we're going to describe it. He's going to be nestled.
Nestled.
Sounds cosy. Alex, thanks very much. Alex Morgan there with a rundown of some of the challenges facing the UK administration. Let's stick with that theme. Callum Pickering joins us, Chief Economist at Peel Hunt. So, Callum, no doubt there are challenges. We'll spend a lot of, 2 months talking about the run-up to the budget. So there we are. What a thing to look forward to. So we've got all of that ahead of us, and no doubt there is a big fiscal challenge. But if we step back, what is the story that you're telling around the UK? Because we've emphasised some of the negatives, but I know that the GDP prints earlier on this year actually came in a bit higher than had been anticipated by some. So what's the story you're telling?
Well, look, clearly there's a great deal of pessimism, and a lot of it is justified. Without question, the UK has made for a decade a succession of policy mistakes which have cost growth, productivity, profits and wages. No question. Then let's look at the data. Data for the first half of the year, real GDP growth, 2.2% annualised. That's pretty good. By G7 standards, that's pretty good. Only the US beats the UK in that respect. Recent PMIs, 53. Composite, that's not bad by any stretch. Inflation's a little bit high, no question. That's partly a policy mistake, but it also reflects decent domestic demand. People are willing to spend. And then across the private sector, actually, the situation's not bad. Banks are overcapitalised. Businesses have never had more cash in their balance sheets, and investment's growing. Corporate debt levels are low. You make the same argument for households. And what people forget is, just now, we're facing the tightest part of the monetary policy cycle. So from here, actually, monetary policy gets substantially easier because of the interest rate cuts that we've had. And so you look at the underlying data and you say, actually, this is an economy that's not doing great by UK standards, but it's actually not all that bad. And then you say, well, what happens next? And that's where you get panic.
Yeah, and that's where you get to the difficulty, I suppose, because even if the growth story has not been as bad as it could have been over the last 6 months or so, that's not good enough, I assume, to fix the fiscal headwinds that Rachel Reeves is facing.
Well, we need a sense of perspective when it comes to the fiscal headwinds. So a few things that I think are misunderstood. First is, borrowing so far this year, completely in line with the OBR's forecast. You can look at that data online. We've not had any borrowing surprises. Second thing is borrowing costs. 10 years today, roughly where they were in March. The 30-year is higher by about 30 basis points. But when you bake all of that in, that's probably 5-6 billion extra. And then the question is, what does the OBR do with the forecast? The danger is that the OBR downgrades the longer end of the forecast. It's expecting about 1.7, 1.8%.
Because it has some punchy productivity expectations, right?
It does, but actually in the first half of the year, basically for the past 2 years, the UK has been growing around the long end of the forecast. So since November 23, UK annualised growth's been around 1.8%. That's roughly what the OBR is. So do you make that argument? And then for this year, don't forget the OBR forecasts 1% growth.
So the IMF's
We're
not required,
more likely to get to 1.3, 1.4. What's that, sorry?
The IMF's not required.
The IMF's certainly not required in the UK's case. The situation's... That's hyperbole, without question.
So why is the why is this happening? Okay. If the numbers you talk about are accurate? Because I'm also looking at bond yields.
Yep.
The UK is in a completely different position to its nearest peer group in terms of the yields that it's being charged right now. Why doesn't the market see what you're saying?
Well, the market does see what I say. The UK's bond yield is consistent with long-term expectations for growth, inflation, plus some term premium. And then you have some structural factors. So let's take the UK 10-year rate. What are we trading at today? 4.7%?
4.7, yeah.
Bank of England's inflation target's 2%.
Yep.
Normal economic growth in the UK, let's call it 1.7, 1.8%. Maybe you want to add 50 basis points of term premium in there. Okay, that's getting you to, what, 4, 5, something like that? Maybe you're 20 basis points higher, reflecting less liquidity at the long end, the fact that it's the smallest pool of debt among all reserve currencies. There's no natural buyer in the case that there is in Japan. And the UK's followed bad economic policies, which have produced too much inflation, but that's likely to be temporary. Fast forward a year from now, once inflation has probably got a 2 handle, and a lot of this at the long end of the curve will have come out. We don't have a lack of demand for our debt. We just don't like the price that we're paying for it. The price that we're paying for it is due to the policy mistakes, which are twofold: too much inflation, too much hits to supply side, and then when it comes to the specific issue of fiscal policy, Labour's fundamental problem is that it's said half of spending we fail to touch, welfare, half we can't because it's protected, it's NHS and all the rest of it, and then 2/3 of the tax base, income tax, VAT, and employee national insurance, we're not going to touch this. And so they've painted themselves into a corner.
How does Rachel Reeves get herself out of it, though? Get us out of it. Get us out of it.
They can't do anything without paying a significant political price at this point. What matters for fiscal policy is not real growth, but nominal growth, actually. And if you look at on that metric, the UK has got sufficient nominal growth to balance a budget. Let's say 2% real plus, let's say,
if it cuts spending,
3.5. You could raise income taxes by a penny on the 21 to
You're not allowed to, though, because they said they weren't.
Well, exactly. So that's the political cost. But the economics of that actually would be fairly straightforward. Right? UK households, for the most part, are not lacking funds. They're lacking the confidence to spend the funds that they have. Real wage growth has been a bit north of 3% for the past 2 years, inflation adjusted, savings rates 10.5% in the recent quarter. We are an economy that's afraid.
So just to be clear, you think gilts are a massive buy right now?
I think gilts are probably 20 or 30 basis points too high across the curve. And I think...
In a year's time?
Yeah. As an economist, maybe you don't have...
No. But if you just added up the arithmetic on it, if inflation comes down...
Yes.
You take that component out of the arithmetic you just gave us, then gilts are coming down a long way.
If you have confidence that inflation is coming down, of course, the risk is that you have inflationary policy choices at the current budget. This idea of a moron premium is actually right. What I'm saying to you is, based on fundamentals, UK gilts look too high. If you look at the policy choices that government might make, then the premium might be justified.
Callum, it's great to see you.
It's always good to chat. Thank you so much.
Thanks. Fantastic. Callum Pickering, Chief Economist at Peel Hunt. Thank you very much indeed. Coming up, we'll continue tracking defence stocks after Germany's Chancellor says he sees the war in Ukraine dragging on with no clear end in sight. We'll talk about that and all the other stocks you need to be watching this quiet Monday morning. I'm joking, there's lots going on out there. This is Bloomberg.
In France, when we do something, it often ends up iconic. This radio antenna, for example, iconic. Or a gift to a friend, iconic. A little something for breakfast, iconic. When we aim high, when we go deep. When we make hearts beat faster, and when we make them beat again. When we search for something, and when we find it. When we triumph. Even when we stumble. Iconic. When we get people moving. When we get the world moving. Iconic. Why? Because we do things our way. Stylish, bold, exploring, innovating, carrying our history and values into the future. Make it iconic. Choose France.
1st of September, good morning. 15 minutes until the opening trade here in Europe. European futures broadly positive this morning, not up by much. You're going to see a light volume session with the US out for the day. It is the misnamed Labor Day holiday coming up a little bit later on in the United States. I guess it's already started. Let's turn to what we're seeing on the tariff narrative, because this is front and centre as well this morning. US trade partners have been left scratching their heads a little after President Trump's global tariffs were found to be illegal by the US Appeals Court Friday. For more on this story, we're joined by our trade czar, Brendan Murray, in London. Good morning. Did this change anything?
It changed the dynamics of the economic impact of these tariffs in a couple of different ways. If you're a company and you were paying these tariffs, you are now left with many more months of uncertainty, trying to figure out, should you restock your inventories? Yep. Should you wait and see, or should you should you rush to refill your inventories? And for the countries that President Trump has been negotiating with, suddenly you've got a few more cards in your hand that you can play against him if, in fact, the court does strike these tariffs down. He has plenty of other mechanisms to use tariffs.
Yep.
It's not going away. The tariffs will still be with us, but there will be different kinds of tariffs. They'll be more targeted than the blanket tariffs that he's imposed through this
because this is about the Liberation Day tariffs, isn't it?
Exactly.
Yeah.
Exactly.
Yes, about Liberation Day tariffs and about some others, it would seem, as well, but a bit unclear as to some of the details to which it would apply to. So, Brendan, do we assume then that if he can't do it this way, if the president can't do it this way, he'll find another way to generate tariff revenue, if at the end of the day that is the goal? Because market response is very muted today. I mean, I know it's a public holiday in the States, so you might expect that, and we don't have bond markets open, so we can't see what's happening there. But, it's possible that the long end of the bond curve could get very nervous about not getting that tariff revenue. But US futures are flat, and there's no sense of panic there.
We've heard the Trump administration say that they have a plan B for this. It's these other tariffs, the 232 tariffs. They've had the 301s in place on China for several years now. They can go very broad with those 232 tariffs, the pharmaceutical tariffs, the chips tariffs, the copper tariffs, the lumber tariffs, all these other sectoral tariffs that they can use, and they can use them very broadly. They can hit all sorts of things with tariffs on semiconductors. Everything every piece of consumer electronic has chips in them, and the same holds true with pharmaceuticals. So they can go pretty broad with these tariffs if these Liberation Day duties do get struck down. They can still generate plenty of revenue, maybe not as much as the $300 or $400 billion a year that they think they're going to get going forward from reciprocal tariffs, but they can definitely pay for some of the tax cuts, the spending that they've implemented with those other more legally tested.
Yeah. So other governments shouldn't assume they're going to get a refund anytime soon.
I wouldn't think that, and the Trump administration has said publicly, our trading partners know that if these other tariffs go away, that we still have some leverage through these other 232 tariffs to hit them with.
Okay, Brendan, thank you very much. Bloomberg's trade czar, Brendan Murray. That's a great title. Let's talk about the markets. Joining us now, Bloomberg's Moena Coniam with the latest on where markets might head from here. And big picture, I suppose, we're kind of in limbo. US futures are pretty flat. European futures look kind of mixed. But Asia's been weak as a result of selling of tech stocks, apart from Alibaba. There's a lot of mixed signals going into today's European session, I suppose, Moena.
Yeah, well, we are definitely seeing a bit of a rout there coming over from Friday with the AI stocks leading in the US, and we're seeing that coming through in Asia this morning as well. I think one of the things I've been looking at is that I think that's going to be quite good for the FTSE 100 because we saw them actually have a pretty rough week actually last week, but it's they outperformed European stocks. They dropped 1.4%. That was their worst week since April, but it wasn't nearly as bad as what we saw in Europe and in the US. And actually, with this sort of flight from risk that we're seeing spread around with the uncertainty, the UK's kind of consumer-heavy, defensive-heavy stocks are likely to benefit more, as well as there's a big rise in gold. And a lot of that uncertainty that we're seeing, particularly from the US Fed, what's happening with these tariff policies, helping precious metals, which again helps some of those FTSE 100 listed precious metal miners. So, you know, after a difficult week this week, I think things have really aligned for it to perhaps do a little bit better this week and perhaps return to that ascent we'd seen to consecutive record highs earlier.
We're just waiting for payrolls. Is that what we're doing all week?
There is certainly that uncertainty and that overhang, and actually things are also quite stagnant, I think. I think when you're looking at the fixed income market in particular, we've seen yields, particularly long-dated yields, really rising across the board. And so, I mean, you know, one of the things we've been talking about is France, you know, elevated political uncertainty there. But we're also seeing it in the gilt market because there's a lot of uncertainty about what's coming up in autumn's budget, but that's quite a way away. So there's generally a sense that a lot of these catalysts are a little further out. And of course, as you say, with the US, we're waiting for payrolls. There's so much uncertainty about what's happening with the Federal Reserve and, you know, also with tariff policies that I think everybody's kind of in wait-and-see mode. But at the same time, nothing's really alleviating that elevated risk profile.
Moana, we were just talking about how it's a long time to wait until the budget. It's a good 2 months, isn't it? Now, I mean, it might be roughly until we don't know the date exactly, I think. So we got 2 months of waiting to find out whether we get tax rises in the UK. It feels like the narrative can't just be that for 2 months.
No, absolutely. I think one of the things we'll be watching closely, though, is actually what the Bank of England does this month. You know, the prospects of them cutting rates has been significantly reduced, actually. They sounded a bit more hawkish in their last meeting. Markets are now pricing in less than a 30% chance of a rate cut. But whatever is going to help that bond market heightened risk, you know, could only really come from the Bank of England, because I think there's so much uncertainty with regards to what's in this budget. And actually, even though usually talks of tax cuts would be beneficial, perhaps, and reassure the bond market, I think when they seem so kind of wide-ranging, that's actually creating more anxiety just about the economic state that's faced by the government.
Well, great stuff. Thank you very much indeed. Bloomberg's Moana Cunningham joining us. Remember, you can follow all the thoughts of the whole team. MLIV Go is the function on your Bloomberg. Let's turn to the stocks that we're going to be watching this Monday session. Defence stocks firmly in focus. Chloe Melly has the details.
Good morning, guys. So, yeah, let's keep an eye on defence stocks today, and that is after German Chancellor Friedrich Merz said that he expects kind of no end in sight for the war in Ukraine at this point, and he expects it to drag on. So this could potentially lift the shares of some of those key defence names. Obviously, Rheinmetall, which has been having a fantastic last 12 months, with shares up more than 200%, but also Italy's Leonardo, France's Thales, and the UK's BAE Systems. An additional boost for BAE is that Norway picked the UK as a supplier of warships, and that is a £10 billion deal. So we could see an additional boost there for BAE, and that obviously deepens the cooperation between Norway and the UK. Moving on to AstraZeneca in the pharmaceutical space. So AstraZeneca said that its hypertension pill reduces blood pressure by more than twice as much as standard treatment. And this particular drug is particularly important because it could potentially deliver $5 billion a year in sales. And we have already seen AstraZeneca outperform its peers GSK and Roche. It's outperformed. It started outperforming around this summer. We can see it there. So this could potentially widen the gap a little bit further for Astra. Staying in the UK and moving on to Tesco, we've got a new price target, a raised price target from JP Morgan for Tesco. It placed it on positive catalyst watch. It said that the momentum looks really solid, the growth outlook looks good. So we could see an extension of that good performance that we've seen over the last year, with shares up almost 19%. And overall, analysts are quite positive about Tesco. We have got 11 buys, just 2 sells, so definitely a stock to watch.
Chloe, thank you. Our equities reporter, Chloe Melly, with the stocks that she is watching this morning. It's 7:53 here in London, so we've got a few minutes then until the start of the European equity trading session. And I guess other things we are watching, along with the things that we were just hearing about there from Chloe, the mining stocks, we put those in focus all morning, haven't we, with the weakness we're seeing in iron ore and steel prices coming through the Asia session. Interesting and a lot of that to do with stockpiles, apparently, and some of the data looking conflicted out of China. But then on the other side, copper is actually trading higher. So we'll watch to see how the miners deal with that.
Gold as well. Gold and silver stocks could be in focus as well this morning. Looks like we're going to have a fresh run at record. Silver's through 40. Gold looks like it's going to target that as well. The defence sector is in focus as well. The other kind of element that we just didn't talk about with the defence sector is VDL. Ursula von der Leyen's got some fairly precise plans, according to the FT, in terms of troop deployments into Ukraine. And that's being seen as a positive for European defence stocks, as the plans advance and it becomes clearer what could happen, you start to get an idea of how you would maybe price some of this stuff.
Yeah, some of the defence stocks retreated quite a bit, didn't they, on expectations that we were going to get closer to peace in Ukraine, and that has remained elusive, and we haven't got any sign of a meeting between Presidents Putin and Zelensky, and so we wait and backtrack some of those earlier moves.
Do you see tech stocks continuing to sell off? Some of that would have been captured Friday here in Europe. So names like ASML would have captured some of the weakness we saw back into the session Friday in the US. Does that continue, therefore, into Monday? You've certainly seen it in Asia, but I don't think the effect is going to be as dramatic maybe this Monday morning here in Europe. So that's how we are setting up for this Monday session. Remember, the United States is out. It is a Labor Day holiday over in the United States. We've got 5 minutes to the opening trade. It's likely to be, therefore, a quiet one from a volume point of view. There's going to be some stock stories, though, to focus on. Anyway, the open is next. This is Bloomberg.
For over 147 years, Bgrim has embraced doing business with compassion, always committed to giving back to society. We empower people and strengthen communities for a better future.
Monday, the 1st of September, good morning. European markets are about to open. They won't be opening with US markets. They're closed for the day. It's the Labor Day holiday over in the United States. Expect light volume as a result. Let's talk about Friday, though, because Friday was interesting and it is going to see some carry through, maybe a little bit into the Monday session. This was the sell-off first thing. The blue line here is the sell-off we saw in the United States. Tech leading that. Asia's responded to that this morning, but Europe had largely already priced some of that in. We saw it before the end of the session, so some of that is already in the price this morning. So think about, therefore, the effect being a little bit more muted into names like ASML. Keep an eye on the defence stocks. We're going to talk about those in just a moment. This is how it's all shaping out into futures. It's going to be interesting to see kind of that defence stock story maybe coming through. Not seeing much of it in the London market this morning. Miners are going to be in focus there. You're not seeing much of it in Euro Stoxx 50 futures either. Where you are seeing an interesting trade, though, this morning is in CAC futures, rising a little bit, but not by much. And again, this is going to be a week in which we're going to see political turmoil over in France, once again dominating the agenda. Does it move markets? Remains to be seen.
Yeah, absolutely. Plenty of political volatility, whether that's translated into market volatility. Let's have a look at where we are then on some of the sectors and stocks that we're watching this morning. Guy, as you mentioned, defence is on the list, but let's start with pharma. We've had some interesting readouts from various drugs that are being tested right now. Novartis' Leqivo and Astra's hypertension pill yielding positive results. On the other hand, Bayer's Verigat failing to hit primary goals. So we'll keep all of those in focus. Defence stocks, as you mentioned, watching for Europe's plans with regards to Ukraine, watching BAE and other UK defence names on the back of that Norway news, and also Ørsted, Equinor pledging to take up its rights in that rights issue from the wind turbine maker. Guy.
OK, here we go. Time for Monday's session. September session is underway. Here we go. Let's give you some numbers. Time for the opening trade. This is what the picture looks like this Monday morning. FTSE 100 out of the gate, flat as a pancake. Nothing to be seen here. We'll wait and see whether or not we get a little bit of traction. But so far, not much traction to be had. Keep an eye on what is happening in the pharma space, the defence space. Keep an eye on what is happening with some of these tech names as well this morning. Broadly, the mining sector could be of interest too, though maybe a little bit more divergent in terms of the miners in the gold sector, silver sector, and maybe in the iron ore sector, going different ways. The IBEX is up by 0.2%. The CAC, as expected, outperforming initially, but actually you can see the FTSE 100 climbing now, so actually not outperforming. So we're up by circa 0.3% on both of those two markets. We'll wait for the DAX to get going in just a moment, the SMI as well. In the meantime, Anna's going to break it down from a sector point of view.
Yeah, absolutely. And I'm pleased that one of our colleagues decided to focus in on pharma this morning, because that does seem to be one of the areas that we're seeing some strength. So healthcare stocks up by 0.5% this morning. And we talked about some of the positive results that we were seeing from various trials. So we see AstraZeneca, for example, up by 0.9%. So that's in the mix. We also see the grocery story. And I know Chloe was talking about Tesco, and we see that stock up by 2.7%. So there's some positivity around the grocery businesses. Boosted the price target for Tesco, boosted at JP Morgan. So that's something we are watching with regards to that sector. The banking sector not doing too badly. Technology pretty muted. And you were right, Guy, to suggest that this was largely in the price from Friday because some of those big tech names in Europe were down by more than 2%. So it's interesting in itself that we're not seeing a bounce back from any of that selling. We're sort of living with those levels, but we're pretty flat now on technology, feeling that we may have priced in the negativity around NVIDIA that we saw on Friday, during Friday's session over in the United States. Now, Basic Resources, another one that we discussed earlier on in the programme.
Yep.
Guy, we see Rio Tinto down around 1%, Anglo-American also weaker. Not everything is down, and some of the copper mining businesses are doing well, but that iron ore price weighing on some in the sector.
So Rio, in theory, when you think about Rio, you think about a copper producer, but it is down. In fact, the biggest points drag when it comes to the mining sector this morning, it's down 1%. So the story when it comes to what is going on with the iron ore, clearly a drag there. It's interesting some of the luxury names are also fairly soft this morning. I wonder whether that's a read across again into what we're seeing in terms of the Chinese PMI data. So LVMH is down by 0.3%, Richemont is down by 0.2%. Now, those aren't big percentage moves, but in terms of the points drag, they're fairly high into the stock 600 this morning. So that's where you're certainly seeing some losses coming through. So it's interesting. Tech is actually, in terms of points, still quite a drag. ASML is still the biggest points drag this morning, down by circa 1%.
And you mentioned precious metals earlier. We see some positivity coming through there. We're up by actually 2% on the silver price overnight, and that is having an impact on some of the miners. So we've got these two different stories, or at least three different stories. Yeah. Fresnillo, which operates silver and gold mines, that's one business that's going higher. That's up by 2.7% today.
I wonder if that's... I don't know. Maybe I'm stretching here. I wonder whether that's having an effect on LVMH this morning and Richemont in terms of maybe the hard jewellery side of the business, hard luxury side of the business, whether there's an effect there as these prices go higher, whether or not that's something they can pass through to their customers. I don't know. I'm stretching a little bit. But defence names certainly are well bid. BAE Systems, Rolls, Rheinmetall, all trading strongly this
week. And most sectors in positive territory, even if we haven't got much volume, probably because it is a US public holiday. Let us bring into the conversation Ando, portfolio manager at Julius Baer. Very nice to have you with us. Thank you for coming in. Let's start with the big picture then around these markets at this point. We're moving into September, which is usually, historically, pretty tough month for stocks. Are you expecting it to be a tough month for stocks? We might get a rate cut in the mix.
Yeah, good morning, Anna. Good morning, Guy. And good morning, everyone. September tends to be, a volatile month for the market, seasonally speaking. That said, you take a step back. The backdrop for stocks have been very good. So in terms of the macroeconomy, we've avoided the worst case scenarios in terms of the fallout from the tariffs. In terms of the policy environment, we are seeing more rate cuts coming out of the US, that Federal Reserve pivot. So that backdrop for the stock market is very positive. We just came on the back of the earnings season. That's also been quite positive for the largest weight in the stock market in the US as well.
Do you expect volatility then in these markets? Because actually VIX has not been above, I think it's above, rarely spotted above 20 over the past 3 months. We seem to not be assuming that we're going to see much volatility in these markets. Is that a safe assumption going into September, do you think?
Yeah, there is a sense of complacency, I guess, in terms of that volatility figure that you just mentioned. In terms of positioning, we're still quite risk-on. So we are overweight equities. We added in June and July on the back of that changing backdrop that we're seeing, just the economy improving, the soft data improving, as well as the earnings season signaling still quite strong momentum so far.
Payrolls are coming up on Friday. If you get how important is a rate cut at this point for equity markets to keep moving to the upside? Because I'm struggling to see where the next catalyst obviously comes from, and maybe rate cuts are it. If you get a big payroll number, say you get 150k coming through on the payroll number, where's the number that takes September to zero in terms of expectations? Where's the number? If you get north of 100, do I take it down from being 25 to maybe 15 basis points being priced? How strong does that number need to be to disabuse us of the idea that the Fed should be cutting interest rates? And if so, how big a reaction do you get in equities if that were to be taken away? All of this is hypothetical, but it's a Monday morning and Friday feels like a long way away.
The idea of the rate cut is pretty well entrenched at this point. I think it will take a lot for the market to give up on hopes of rate cuts. This year we expect 3 more rate cuts. I think that's pretty close to consensus. So if we do get that pricing out of the dovish Fed, I think the market would not take it very well. But at the same time, I think it would take a lot. And if you think of the Federal Reserve and the committee, they are very sensitive to any changes in the labor market. It's not just the unemployment rate, it's the hiring intentions. They're looking at the broad set of indices.
Do you like US markets at these kinds of multiples? I was pretty shocked the first thing this morning. It's Labor Day in the States, but the Journal, the first thing I read online this morning, US markets hit dot-com era multiples. Are these kinds of headlines okay? Can we live with these kinds of headlines? Are we okay with these kinds of multiples? I know it's very concentrated, and I know earnings are holding up at the moment, but are we okay with these multiples?
There's definitely a sense of this wall of worry, the valuation debate coming back for the market in the US especially. I guess if you look at the top heaviness of the index and where the multiples are for those big stocks and the rest of the indices, you have extreme valuations more so in the rest of the indices, so in the S&P 493 if you like. So you have to be more careful in terms of your selection here, because in the top 7 stocks, in the largest stocks, the growth is still there, the quality, the story, the long-term secular story is still there. So you want to pick and choose and where you want to take more of a valuation risk and for longer-term growth.
We ask how important rate cuts are to stocks. We could also ask how important are rate cuts to precious metals and the gains they've been making of late, because we were used to talking about them in a geopolitical context and depending on the metal and industrial context. But now there seems to be a lot of people tying this to the Fed and talking about the gold and silver going higher as a result of our expectations of rate cuts. You're overweight gold, I think. Is that a trade you're happy to stick with?
We're still overweight gold. Gold has defied expectations because it's only recently that we are hearing more about these rate cuts. Rates have been quite high year to date, but yet gold has still worked on the back of the backdrop of uncertainty, the backdrop of tariffs. So I think there are multiple elements that could still play in favor for gold. That story around de-dollarization, that story of diversification away from U.S. assets and U.S.-denominated assets into real assets like gold and precious metals. I think that story still has legs, and therefore we still overweight the precious metals.
So that's the precious metals narrative. I mean, everything we've talked about seems quite calm. Is that right? Should we be going into the rest of the year thinking about a calm market backdrop? I think news can come at us fast. We know this.
Volatility has been low, but if you look at the market narrative, you've had periods of scare here and there. The labor report was a source of fear for the market. Nvidia earnings last week was a source of fear for the market. So you have periods of scare, although it's a wall of worry. And I think the strong backdrop around the economy, the strong backdrop of the policy pivot, I think could be interesting for markets still.
Do I look elsewhere? Chinese markets are absolutely on a tear at the moment. The AI story is beginning to gain traction. Like Barbara's just had an amazing session. Do I look elsewhere?
Outside of the US?
Yeah. Where are you looking right now? Where am I going to get my alpha? Is the outperformance going to come in the States, or is it going to come from different markets?
I think we've been diversifying portfolios away from that US stronghold of secular themes that we like. We've added to China early this year on the back of that pivot in fiscal policy, more of a stimulative stance from the government, more friendliness to the private sector. So that's earlier this year. More recently, we've also added to India. That secular story of growing demographic, a very strong domestic economy, less reliance on external factors, which means they're more insulated from tariffs, relatively speaking. So outside the US, there are opportunities.
Are you adding? Sorry, are you adding more to those positions? Do you still like those trends? I guess China. Do you want to play in this recent bout of enthusiasm, particularly from domestic investors in China?
At the point of adding to China, it was still at quite low valuations. So we think it's a trading market. We think of the Chinese market now similar to Japan in the late 1980s, trading in a range. So every bounce and rallies, we need to understand the momentum and the underlying drivers.
Thanks very much. Ando, Portfolio Manager at Julius Baer. Thank you for joining us as we work our way, Guy, towards payrolls. That's going to be the big event of the week, of course. But in the meantime, it's a quiet day in terms of the volumes, no doubt, because we don't have the United States. How's the core six doing?
There's things to talk about. I'm not going to completely dismiss today. I appreciate that there are markets that are closed elsewhere around the world, but there's some interesting things happening. Core 6 looks like this. Rheinmetall is one of the names that stands out. ASML, there is still some weakness there, and that is, just from a points point of view, adding a little bit to the downside around Europe this morning. But as Anna says, it is a fairly quiet session. Pharma's looking good. Defence is looking good. Tech is looking less good. Let's dig into the details of all of that with Chloe Melly.
Good morning, guys. So, yeah, as you said, quite positive movements in defense today. That's on the back of German Chancellor Friedrich Merz saying that he sees at the moment no end in sight to the war in Ukraine, but then also von der Leyen laying out precise plans, according to the EFT, for potential military deployments in Ukraine. All of that is feeding into quite a positive story for that space this morning. BAE is also up the most out of all of those four, and that is also because it's benefiting from that, from Norway picking the UK as a supplier of warships, and that is a £10 billion deal. So it's also benefiting from that as well. Moving on to the mining sector, and there it is down a little bit. We are seeing a little bit of weakness for Rio Tinto and Anglo American. Fresnillo is doing a bit better. This is on the back of iron ore falling. The inventories of steel are accumulating in China. Some of the economic data out of China is not doing too well, and that is dragging down the shares of those miners this morning. Moving on to Tesco. Tesco is up. It is up almost 2%, and that is on the back of JP Morgan raising its price target for Tesco on the back of a good growth outlook. So that is quite a positive morning for the retailer this morning. And finally, let's end on TeamViewer. TeamViewer is a software company out in Germany, and it got raised to a buy rating by Bank of America, and that is really driving the shares this morning. We're up almost 8% for TeamViewer.
Chloe, thank you. Chloe Melly from our equities team with a look at some of those stocks on the move. We are going to talk about some of these sectors in focus next. Certainly the pharma sector in focus for us today. We're also going to be thinking about the wind generation sector with a rights issue at Ørsted. All of that in conversation next. This is Bloomberg. Welcome back to the opening trade. 16 minutes into Monday's session, the 1st of September, the first trading day of a new month. And we have European equity markets actually on the front foot, so trying to brush off some of that negativity around the technology sector on Friday. There is still some of that in there, but finding other reasons to go higher this morning. And so across the board, we seem to be up by around 0.3%, certainly on the major markets this morning. Let's focus in on the wind generation, electricity generation sector. Norwegian energy company Equinor says it intends to subscribe for new shares in the wind developer Ørsted, the first major investor after the Danish government to back the sale. Joining us now is Bloomberg's Sanna Vass with details of this. And I suppose Equinor's participation here is important because it is, I think, the second largest shareholder in Ørsted, Sanna. So to tell us the significance of this news.
Yes, this is very good news for Ørsted today. As you say, Equinor is the second largest shareholder after the Danish state, which has already been out saying that it wanted to support the rights issues. But of course, there's been a lot of uncertainty as to what extent other shareholders would want to participate, given all the headwinds that Ørsted is facing. So a big vote of confidence. Equinor holds 10%. Of Ørsted, and they will continue after as well. Very good news for Ørsted.
Sanna, the team, the investor relations team, the management team, has been speaking to investors in London the other day, trying to reassure everybody that actually the situation has stabilised. Do we have any read on how effective that effort has been? What are investors asking, and do we know whether or not they've been satisfied with the answers they're getting?
I think, I guess Equinor's move today indicates that Ørsted have had some success in convincing investors that this is a rights issuance that they should be supporting. Of course, we still don't know how the rest of the shareholders feel about this, but they may gain a bit more confidence also from now seeing Equinor's move today. Now, on Friday, Ørsted would hold an extraordinary general meeting, and there the shareholders will vote as to whether Ørsted can go ahead with the rights issuance, and then we'll know more details and we'll find out really how shareholders, the rest of the shareholders, feel about this.
And I mean, thinking about the bigger picture headwinds, if that's the right phrase to use, when it comes to this sector, Sanna, I mean, President Trump does not like wind farms. We know this. And that's really the big problem for the sector and the big problem for Ørsted. But there's still been quite a lot of volatility based on whether the latest reading is slightly more or less negative than had previously been expected. So what is the base case sort of situation over in the US?
I think certainly there's still a lot of uncertainties for Ørsted and a lot of headwinds in the US, in the UK, and whether or not they will manage those headwinds is still probably too early to say. But I'd say from the news this morning, Equinor, certainly big Norwegian energy company, they have shown, or they have communicated that they believe in the green transition. They believe in Ørsted and that Ørsted will be able to come out on top, and so that's certainly a big move today.
Sanna, thanks very much indeed for the reporting. Sanna Vass, we'll look forward to that meeting coming up towards the back end of the week, get a better read on what is happening with the investor relations story. Sanna Vass, on what is happening with Ørsted and Equinor. I'm still stunned that Ørsted announced the rights issue and then left this enormous period of time between announcing it and executing upon it. And they've just left themselves wide open for the kind of volatility that Trump can create and the problems that he can generate. And you've seen that writ large.
Yeah.
Why that decision seems so mistimed now? Announce it, get it done quickly, seems to have been the message here.
Right, and in the meantime, as you point out, President Trump has been active, has been cancelling wind farms, or his team has been cancelling wind farms in various locations, as we've talked about over the last couple of months. It is still interesting, though, how, very negative expectations around this sector at the time of the election and inauguration. Everybody knew how President Trump was very anti the sector, and yet we still managed to create quite a lot of volatility in the share prices within it, based on some of the latest reporting. Whether some of these fields get a stay of execution turns out to be a positive.
But and you just left yourself so vulnerable to that with the kind of timing. So just does seem as if it's been a very strange decision. Let's talk about one area that we are certainly more positive on this morning. AstraZeneca shares rising after the drug maker said its experimental hypertension drug, its next generation one, is reducing blood pressure in patients by more than twice as much as standard treatments. This is a large, late-stage study that has been conducted here. Bloomberg healthcare reporter Sonia Vint joining us now. Can you just tell us a little bit more about this? This seems like a very big step forward in the treatment of hypertension, i.e. high blood pressure. When can we be potentially seeing this drug coming through, and what could it mean in terms of the scale of sales that we're talking about?
Yes. So AstraZeneca really just cleared a pivotal trial for this drug. It aims to file by the end of the year. So that means that the drug could launch in the market in 2026 if all goes well. And what the drug does is that it blocks certain hormones that allows it to lower the blood pressure in patients. And what's really significant here is that it also works in patients who are usually resistant to drugs. So 1 in 10 patients are drug resistant for hypertension. So this drug works there, which is a huge win for AstraZeneca. And it also helps it to expand beyond its oncology pipeline and push into the market for cardiovascular drugs and bulk up its portfolio there.
Yeah, blood pressure medication, clearly a really big market, of course, Sonia, but also a very competitive market, a crowded field, perhaps. Roche in this space, other US pharma companies also developing blood pressure shots. Is there room for all of them?
Well, so you mentioned the one from Roche, and that one would be a twice-a-year shot. So that would be a huge advantage because the main important thing for drugs is that patients actually take them in order for them to work. And many patients struggle with taking pills on a daily basis. So the shot from Roche could be a really interesting medicine, but the trial is really huge. So it's more than 10,000 people, and it will go until 2030. So it's really early days for that medicine there, and we need to wait for that data to come out. So AstraZeneca could move way earlier. It could launch the market 2026, as I mentioned before. So that would be an advantage. And when we look at the similar medicine from Mineralys, which works similarly to the one from AstraZeneca, there they have a similar risk-benefit profile. So that's something that analysts mention. And so they think that investors really want to wait until next year when the drug is launched on the market to see if the expectations really live up to the performance on the market.
How does this fit into the wider cardiovascular story that Astra is generating at the moment? Is this something that is going to work in conjunction with other therapies? This is an area that the company clearly has been focusing on.
Yes, exactly. Yeah, so AstraZeneca, it has a really good footprint in the oncology space. So this drug is a key part of its efforts to bulk up its portfolio of drugs in the cardiovascular space. And hypertension is a really common issue, and it's a risk factor, like the leading risk factor for death from heart disease. So there's really a big market potential here, and to treat also a wide group of patients.
Sonia, thank you very much. Thanks for joining us. Sonia Vind with the latest on the pharma sector. And actually, the pharma sector is doing really well today, guys. The best performing sector on the stock 600. But at the other end of the spectrum, we've got weakness coming through in the mining stocks. But it's a host of different reasons really driving that mining story. So on the one hand, you've got iron ore prices, which are weaker. So iron ore is down by 2%. Mixed signals coming out of China, perhaps. We had the official PMI and the private sector PMI telling us different things about where we are versus expectations there in China. So that's part of the narrative. But then on the more positive side of things, we've got the likes of Fresnillo trading really strongly. That's more precious metals related. And we've got gold prices, silver prices, in particular silver prices, in fact, going higher. Because the more we expect the Fed to cut rates, the lower is the opportunity cost of holding other things, such as precious metals.
Yeah, we'll wait for the data Friday to see whether or not the Fed does cut rates. Obviously, the expectation is that it will be in September. I want to go back to the top end of the FTSE 100, actually. Astra's doing very well, but BAE Systems is also doing very well. The reason for it is there's a multiple number of reasons, one of which is the fact that we've got this big Norwegian defence order coming through for ships. They're going to be buying frigates out of the UK. You've also had Ursula von der Leyen talking about fairly concrete plans about troop deployments in Ukraine. That seems to be helping the situation out as well. So names like Rolls-Royce are doing very well today. BAE Systems is doing well elsewhere on the continent. You've got names like Rheinmetall also trading strongly as well. So the defence story front and centre this morning, along with some of these pharma names that are doing well as well.
Coming up on the programme, we'll talk global geopolitics. We'll be joined by Bronwyn Maddox, Chief Executive of Chatham House. China's Xi and India's Modi rebuild ties. We've seen Modi also meeting with President Putin of Russia. We'll put all of that in focus. Is it as simple a story as this new alliance builds in the face of threats from President Trump's administration, or is there more complexity behind the scenes? We'll talk about that next. This is Bloomberg. This is the opening trade. It's September, everybody. 30 minutes into today's session, 30 minutes into trading in September. And so far, so good. I've read a lot of stories about how negative September can be for stocks. Historically, it has been so. But today, so far, only half an hour in, it's not negative at all. We're up by 0.5% on the DAX, on the CAC 40. The Stocks Europe 600 up by 0.4%. We are without the United States, of course. They are on their Labour Day holiday, so volumes no doubt are a little lighter than usual. And we've got some big data points, Sky, coming up at the end of the week. No doubt payrolls will be front and centre. And if we take the first half of September, we also include in that time frame a rate decision by the Federal Reserve, which will no doubt be pivotal. So there's a lot at stake during September.
Weirdly, actually volume isn't as bad as I thought it would be, in as much as volume's been pretty terrible over the last few weeks. That continues today. We're down by, let's call it a third in terms of where we should be versus the 100-day average. But actually, I've seen worse numbers than this over the last few days. So maybe the 1st of September, the Labour Day holiday, not having that big an effect. In terms of the internals, the market's definitely higher, 444 up, 133 down. So that's definitely front foot territory when it comes to equity markets. In terms of the 52-week highs, if you want to play the gold and silver story, well, there's a number of ways you can do it. One of which is you can buy lumps of the stuff. Obviously, a lot of people have been doing that. But you can also buy some of the assets that surround it. And one of the miners that digs the stuff out of the ground is Fresnillo. And it has been on quite the tear of late. As you can see, this is a stock on a one-year basis that is up by 235%. Today, it has hit a fresh 52-week high. And there's talk of fresh highs in silver. Silver's through 40. We've also got gold potentially getting kind of pulled along with that trade and potentially hitting fresh record highs as well. And one of the ways of playing it thus far has been with Fresnillo. And as I say, Anna, that stock at a 52-week high today.
Yeah, certainly a multi-dimensional trade around basic resources this morning, isn't it? Let's take stock of some of the other news headlines that you need to know about this morning. US trade partners have been left perhaps confused after President Trump's global tariffs were found to be illegal by a US appeals court on Friday. The 7-4 decision by a panel of judges in Washington was a major setback for President Trump, but the ruling leaves the levies intact for now while the case proceeds. The French Prime Minister François Bayrou is striking a combative tone in his effort to gain support for next Monday's confidence vote. He told French TV that, quote, compromise is a beautiful thing, but I'm not sure it's possible. The remarks follow comments by several opposition leaders over the weekend that appeared to sweep aside any chance of their support. Chinese President Xi Jinping says the Shanghai Cooperation Organization is taking on greater responsibility in driving shared development as global uncertainty continues to rise. Xi made the remarks as he welcomed international leaders, including India's Narendra Modi and Russia's Vladimir Putin, to the summit in Tianjin. And it is this summit, Guy, that is on our minds as we take stock of the geopolitical shifting tectonic plates this morning.
Absolutely. Let's continue with our coverage of the summit that is taking place in Tianjin. President Xi talking about seeking, quote, commonality as he looks to build bridges with neighbours across countries in Asia.
We should seek common ground while putting aside differences. Shared aspirations are the source of strength and advantage, and the will to seek commonality while shelving differences reflects wisdom and vision.
Min Lo in Tianjin for us to cover this event. We've obviously seen some fairly significant meetings taking place over the last few hours as the day has progressed in China. What else is on the schedule? What else are we looking for to come out of this event?
Yeah, first of all, we had President Xi speaking this morning, talking about opposing this Cold War mentality. He didn't name drop the U.S., but it was clearly a veiled swipe at the U.S. But what we're watching most closely today is the Modi-Putin meeting. It just ended. We don't have the readout yet, but we have the opening statements from Modi. He said that Russia and India had a very special, privileged relationship that has withstood the test of difficult times. And so far, it seems India remains very defiant in the face of those additional 25% tariffs that U.S. has imposed on India in punishment for its purchases of Russian oil. India's largest state-owned oil company saying today that it will continue to buy every drop of Russian oil available as long as it remains economical. India's oil minister as well hitting back against Peter Navarro's criticism that India is this laundromat for the Kremlin, saying that its buying of Russian oil so far has been within international rules. It's in line with, or it's at least below that price cap that has been imposed by the G7 to limit Russian oil revenue. And so it looks like we have to thank President Trump for providing this diplomatic opening for India to continue to tilt towards other partners in the region, Xi and Putin. And one of the more iconic images that have come out of this summit so far is that image of Putin, Xi and Modi laughing together, Modi and Putin as well embracing each other. They took the same car to the venue of the bilateral meeting, really giving them a bit of private time to speak together with each other without a lot of aides around.
Yes, I mean, President Trump's presence at the meeting, even though he is not physically there, clearly an interesting one to think about, Min Min. Now, over the weekend, we also saw that meeting, bilateral meeting between President Xi and the Indian Prime Minister Narendra Modi. These two nations have been far apart for some years diplomatically, but again, we're seeing a coming together, perhaps.
Yes, President Modi announcing that the two sides will be resuming direct flights with each other at some point. But again, bear in mind, this is something the two sides had pledged since the start of this year, since January. But progress has been slow. But there are signs of this normalization of relations, and the tone suddenly has improved very markedly from 2020 when the two sides were engaging in deadly border clashes along the Himalayan border. And the tone, the rhetoric from the Chinese Foreign Ministry, one of the most common metaphors they're using now is to describe the relation as this dragon and the elephant tangoing together. So a very positive tone here. China certainly has been the one to court India amid this backdrop of their mutual mission to counter the tariff impact. But Modi is walking a very fine balancing act because he is one of the few leaders present at the SEO meeting that will be notably absent from the military parade happening a couple of days from now. So he will not be standing on the days above the portrait of Mao Zedong alongside President Putin, Kim Jong-un and President Xi. Think about that optics. It's not going to look good for Modi given India prides itself as one of the world's largest democracy, for him to be standing alongside some of these autocratic leaders. So he's hedging his risk against that souring relations with the US, but not exactly diving into the embrace of China as well.
Min Min, thank you very much. Bloomberg's Min Min Lo joining us there from Tianjin. Let's stick with this theme of global geopolitics and bring in Bronwyn Maddox, Director and Chief Executive at Chatham House. Bronwyn, nice to have you and your perspective on the programme today. So we're watching closely the developments of this Shanghai Cooperation Summit, and clearly all of the attention on big superpowers coming closer together as they all face a shifting policy environment, to put it politely, from the United States, and challenges and threats perhaps from the United States. Is that too simplistic an interpretation, or are we really seeing, yes, these powers being pushed together by a rivalry with the US?
It's not too simplistic. It may be too polite. I think it is one of the most self-destructive things that the US has done under the Trump administration, of putting these tariffs on India while having as a policy combating China's rise and military rise in its own region. Because what it has done very abruptly, and we've just heard a description of how the relationship between China and India has suddenly warmed up. That is in response, I think, to the chill that India is feeling from Washington. And so India, which has always tried to stay non-aligned, that has been its policy, but is looking for other friends and alliances, and has made a point of going to China, of having these top-level conversations. A few wrinkles in that. India's Modi has said he's not going to go on the Victory Day parade, so there's some things still keeping his distance, and there are a lot of things that India and China still do not agree about. But what the Trump administration with its tariffs has done is create a lot more warmth between India and China that were rivals until very recently.
Yeah, I mean, what are the limits to how warm that relationship can become, though, Bronwyn? Because as you point out, they don't see eye to eye on everything.
They really don't, including on the borders, where they've managed to talk themselves down from the friction that was there a few years ago over border clashes, but it still is a kind of running sore. You also have the commercial unease, India really trying very actively until all these tariffs came in to persuade companies to move out of China because of the risk there, move into India. Apple was one of the big ones, but obviously its card isn't as strong as it was if suddenly it's going to be hit with tariffs as well. But it has been a rival of China in that respect. And then India is alert to and not comfortable with China's increasing military power in the region and in the seas around there. So there are lots of points of potential tension. I don't think they're going to become warm friends, but they may become quite calculating allies.
OK, calculating allies. How does that actually translate into policy and action, Bronwyn? Because this feels a lot to me like optics. There's some nice pictures being taken. Clearly some handshakes are being made. It all looks great. But in reality, as you say, it's much more difficult to translate this into something concrete. So what actually, does anything come out of what we are watching in Tianjin at the moment?
Well, I think it does. And the practical thing, the first practical thing is India continuing to buy Russian oil in great quantities, and so siding itself pretty firmly, not just with China, but with Russia over that. And then we'll have to see what happens on weapons and other trade deals. You're absolutely right about the optics, but optics are not nothing. China has been reaching, whether through the BRICS or now the Shanghai Cooperation Organization, to find congenial clubs of countries which, even if it doesn't say its manifesto is anti-NATO or anti-the West, that is what it is reaching for. So I think we have to see, but it's not nothing.
What's the OK, so they're reaching for this greater group. They want to have warmer relationships with some of these countries. What is the objective of that? What does China want out of this in terms of furthering its cause?
That is a very, very good question. And I think it is hard to define beyond saying more influence, more ability to tilt the world its way. It has railed for a long time against the rules-based international order, very much crafted by the US, particularly after the Second World War. And it has been delighted, in a way, to see the US stepping back from that, and has been making rhetorical hay with that, saying, well, look, we'll have a different rules-based order. But it hasn't yet been as emphatic as it might in actually trying to shape that its way. It seems to be doing it through alliances rather than trying to hammer out new rules. So I think we have to see what comes. But it has found good use of those alliances in the past to extend its own trade, its own military influence.
OK, so we'll watch how China tries to increase and extend that influence. In the meantime, how should Europe respond? I'm thinking here about the European Union and what it's witnessing and how it thinks about its own interests, but also the UK and the wider European family.
I think Europe needs to keep up its ties with India. This is a complex world we're in, and the fact that one country has moved away from the US doesn't mean it has to move away from Europe at this point. Europe needs those trading ties, particularly the UK, which has just done a trade deal with India. So I think that will continue. You do have the thorny question of Russian oil in there, but of course Europe still takes some Russian gas. But that does have an impact on the Ukraine war. But I think Europe can also send a message to Washington of be careful with this relationship, because it is really can destabilize a lot of things if India more decisively moves in the Chinese direction.
Bronwyn, always great to catch up and get your insight. Thank you very much indeed for bringing it to us. Bronwyn Maddox, Director and Chief Executive of Chatham House. Thank you very much indeed. Coming up, we're going to stay with the political theme. The French Prime Minister admits he may fail to reach a compromise ahead of a confidence vote later this week. The latest on efforts to save his government from being ousted. That's next. This is Bloomberg.
Welcome back to the opening trade, 8:47 in London, and it is the 1st of September, and we have green on the screen. So far, so good for what is typically a volatile and negative month for stocks. So we've got European stocks on the front foot, up by around 0.4%. Will it last? We've seen pressure on French stocks as a result of political turmoil in recent days. So let's go to that story next. The French Prime Minister, François Bayrou, has told reporters he wasn't sure that a compromise would be possible in talks with opposition parties this week. Those remarks coming a week before legislators hold a confidence vote in the government that he is currently running, of course. For more, let's bring in Bloomberg's Paris Bureau Chief, Alan Katz. And still the Prime Minister, Alan, good morning to you. Still the Prime Minister says he can see a way through this. He can see a way that he can get support. Most other commentators and investors tell us they can't see a way that the Prime Minister can survive. What are you hearing in Paris?
Well, I think Bayrou is certainly being more optimistic than just about anybody else who is looking at this. Now, that said, it's politics, so you never say never. Things have been known to change, and as he points out, a week is a long time in politics. So I suppose the answer is you never know, but it really does look quite likely that he will be forced to resign a week from today when he holds this confidence vote. The other parties, particularly both the Socialist Party and the far-right National Rally Party, over the weekend said they absolutely would not support him, that they would vote against his confidence motion. And without either one of those parties changing around and at least be willing to abstain, it seems that he would have very little chance of surviving that motion.
So who's next? What's next?
Well, that's the million-dollar question. I mean, sort of formally that's easy to answer, but in terms of actually figuring out who the people are or how it would be structured, that's much harder. So the way it works is that if he loses the confidence motion, then Bayrou will be forced to offer his resignation to President Emmanuel Macron. Macron can then either name a new prime minister, and that person could even include François Bayrou, though that seems unlikely. But he can name any person he wants as prime minister. But again, that person sort of in the longer term, over the course of the next several months, would need to be able to sort of couple together enough support to be able to pass the one really must-pass bill in France, which is the budget. And that's really not obvious who that person would be. The other alternative, or there's actually a couple of other alternatives that Macron has. He could dissolve Parliament like he did in June 2024 and call new elections. Now, that went pretty badly for his party and its allies a year ago, so would he really want to do that again? It appears unlikely, but you never know. The last possibility is that Macron could, of course, resign himself and force presidential elections. Now, he absolutely categorically ruled that out just on Friday. So that appears to be off the table. So it would really be the first two options. And the most likely appears to be naming a new prime minister. But again, finding that person is really quite difficult.
Yeah, will they have any better chance than the current Prime Minister, of course, is the question. And so in amongst all of that, it seems that France is now, or the Prime Minister, François Bayrou, is upset with Italy about poaching of high net worth individuals and other policies that he deems to be fiscal dumping. Take us behind this one then, Alan.
So that was a funny little moment, actually. In this interview last night, there were four reporters, TV reporters, interviewing Bayrou at the same time, and there were actually the question was about the way that the wealthy were fleeing the UK in the wake of the UK getting rid of the non-dom status and raising taxes on them, and then Bayrou said, "Oh, actually, the UK is not really the issue; it's really Italy." Or it's other countries that are engaged in fiscal optimization or fiscal dumping, as he said, and then he used Italy as an example of that. But it really was, in many ways, it was a throw.
Alan? I think we've lost Alan, which is very unfortunate. He was in full flow. And it's got an interesting little aside to an interview that we've just had with the leadership in France and just trying to get an idea of exactly kind of who people are pointing fingers at. Anyway, Alan Katz, our Paris bureau chief. He will return at some point. He's going to be a busy man over the next few days and weeks. Let's stay with Europe and kind of stick with what we've been talking about. Suzanne Lynch is our Brussels bureau chief and joins us now to talk about the broader European picture and why Europe is struggling at this point, particularly when it comes to responding, of course, to President Trump. And we've been debating this a great deal, Suzanne, recently and trying to understand kind of where we go next. And the question we keep asking is Europe playing this correctly? Do we have enlightened sort of policy here, i.e. play up to Trump's weaknesses, effectively his desire to be flattered in order to get deals done? Or are we just basically bending at the knee of the new kind of, the new king of Washington?
Yeah, it's an interesting one. I think there is definitely a sense here that the Mark Rutte approach, people may remember his cozying up to Donald Trump at the NATO summit at the end of June and his daddy comments. Well, in some ways, this did work. The NATO summit went very well with Trump, European allies committed to the 5% of GDP spending on defence, and Donald Trump committed to keeping the United States committed to NATO. So that was a good result. We saw it too over the last couple of weeks when the Europeans got that last-minute meeting in the White House with President Zelensky and Trump. Now, we're still waiting to hear what comes from that ultimately, but it was a good coup for the Europeans in the sense that 2 days earlier, Donald Trump had been meeting with Vladimir Putin on his own in Alaska, and the Europeans were nowhere at the table. So that kind of flattery did work in that the Europeans got back at the table. But you're right in the sense that I think, you know, it's very much back to school here today, September the 1st, here in Brussels, and all the European officials are back at their desk. And it's been something of a bruising few months for Europe. They have had to accept this trade deal with a ceiling of tariffs of 15% from the US. A lot of countries saying that's not good enough. And on Ukraine, they've had to push themselves into the conversation. They have not naturally been at the table. So I do think that there is a bit of soul searching now as this new term begins here.
Suzanne, yes, and with that in mind, as policy initiatives from the US administration come fast at Europe, they might want to respond quickly. And as foreign policy priorities keep shifting and the world moves quickly, they might want to act more quickly when it comes to foreign policy. And I know that our reporting is suggesting that that's going to be something that Europe can do. What have we learned?
Yeah, we had some reports over the weekend. European foreign ministers were meeting in Copenhagen for a kind of informal meeting. But the issue is that the way the EU works, because it's a collection of 27 countries, it's sometimes hard to move forward with decisions. And some very significant decisions when it comes to foreign policy, for example, tax is another example, you need the unanimous agreement of all 27 countries, and that can stop a decision being made. So there was a proposal that we reported on from the Danish presidency. They're in the rotating chair of the EU Council at the moment, and they're talking about making changes to the system that in some cases this requirement for unanimity is abolished. So I think what everyone is thinking here is Hungary. The Hungarian government have been blocking different measures, particularly on Ukraine, for a year or two now. For example, they've talked about blocking Ukraine's bid to join the EU ultimately. So this is becoming a problem when it comes to everything from sanctions policy to a kind of joined-up thinking of defence. So I think the European policymakers and officials are trying to look at ways around this issue.
Suzanne, just very briefly, we're all excited about this new newsletter that's going to be coming from Brussels. Talk to me about what we're getting.
Yeah, this is our Brussels edition newsletter, so people may be familiar with it, but we're relaunching it today. So each weekday afternoon for European readers, this will be in your inbox, and it's just really bringing you the latest news from Europe. As we've just been speaking about there, Brussels is increasingly significant when it comes to geopolitics, economics, finance. So this newsletter, anchored by myself, will be giving you a snapshot every day of what's happening in Brussels, as well as pointing readers to some of the latest news from across Europe and here in Brussels, as well as interviews across our platforms, but very much trying to present and give that snapshot into what's happening here in Brussels each day.
Suzanne, thank you very much. Suzanne Lynch, our Brussels Bureau Chief, helping us take stock of where Brussels is on foreign policy, on its relationship with the United States and beyond. And we'll look for that newsletter. And, Guy, we're just getting some confirmation, really, of the PMI picture for manufacturing around Europe. The German number stands out as a little bit weaker than had been anticipated. The French PMI number actually coming in expansion territory, better than had been anticipated. The euro up 0.3% on a weak dollar day.
Yes, it was up pretty much already. Anyway, that wraps things up with some interesting data. The Pulse is coming up next. Plenty of great coverage coming up, and we'll continue the coverage throughout the day, despite the Americans being out for the session. This is Bloomberg.
News when you want it with Bloomberg News Now. I'm Lizzie Burden.
And I'm Caroline Hepker.
Growing concerns over government debt burdens and public spending are helping to drive a sell-off in global bond markets. The yield on 30-year US Treasuries rose close to 5% as Japanese long-dated bond yields are also climbing. The moves track yesterday's declines in longer maturity European bonds and
क्वेश्चन है तो पूछ लो बोलता तो नहीं रहूंगा मार्केट चल नहीं रहा अभी if you have any question you can ask otherwise न्यूज़ लगा के थोड़ा न्यूज़ सुन लेते हैं थोड़ी नॉलेज ही बढ़ जाती है बोलता रहूं किसका क्या फ़ायदा so keep quiet watch the market listen the news this is I am prefer यही मैं प्रेफर करता हूँ कोई क्वेश्चन है तो पूछ लिया करो लाइव में ही रहता हूँ कोई ट्रेड बनेगा तो मैं लगा दूंगा अदरवाइज बोल के भी फ़ायदा नहीं है फिलहाल साइडवेज ही है नेचुरल गैस और क्रूड दोनों ही.
Seen since 1998 yesterday. Right now, 30-year yields in the UK up by 1.5 basis points at 5.7%. Stubbornly high inflation and extremely tight government finances make Britain vulnerable to the moves in global markets. Many expect the Labour Chancellor will now need to raise taxes in her upcoming autumn budget in order to meet her fiscal rules.
The US Treasury Secretary Scott Bessent is said to be planning to start interviewing candidates this Friday to replace Jerome Powell as Federal Reserve Chair. According to the Wall Street Journal, Bessent will talk to candidates either in person or by video conference, with 11 people in the running for the role. Robert Kaplan, Vice Chairman at Goldman Sachs and former Dallas Fed President, says it's to be expected.
Jay Powell's term as chairman ends in May, and so it makes sense that they should start the interview process. I think the main thing for the leader, the next leader of the Fed, has to be somebody who has strong grounding in economics and can make independent judgments about the economy.
Robert Kaplan speaking to Bloomberg as Federal Reserve Governor Lisa Cook's lawyer criticised President Donald Trump's move to oust her as being based on nothing more than cut-and-paste allegations of mortgage fraud that were made in social media posts. In a flurry of court filings, Cook's attorney doubled down on arguments that he presented at a hearing last week, saying Trump lacked valid grounds to fire Cook.
Now, Bloomberg understands that authorities in Hong Kong are probing allegations of insider trading involving at least 2 individuals at the stock exchange and the city's financial regulator, as well as brokers and social media influencers. Authorities are investigating if regulatory staff tipped off traders and others to upcoming announcements involving dozens of listed companies. Sources tell us that the probes have been ongoing for months, with unexplained price spikes having long been a source of concern in Hong Kong.
And China's President Xi Jinping has used a once-in-a-decade military parade to showcase the country's growing firepower and diplomatic influence. Xi attended the event, flanked by Russia's Vladimir Putin and North Korea's Kim Jong-un, in a clear sign that the three leaders are willing to coordinate their actions more openly. The event marks 80 years since Japan's defeat in World War II, and Xi Jinping said that his country remains unshaken by threats.
The Chinese nation is the great nation that is never intimidated by any bullies and always values independence and forges ahead. In the past, when faced with critical struggles between good and evil, light and darkness,
डाउनसाइड पोजीशन बना लें क्या सर नेचुरल गैस में वॉल्यूम है अपसाइड नेचुरल गैस में या मेरे साइड से कोई ट्रेड नहीं चल रहा भाई नेचुरल गैस में भी बनेगा तो मैं लगा दूंगा ले रहे हो अपने अकॉर्डिंग तो उसमें ऐसा लगा के चलना और क्या कह सकता हूँ मेरे साइड से अभी कोई ट्रेड नहीं है
Pipeline has the potential to turn the global LNG market on its head, with Russian gas potentially making up 20% of China's needs by the early 2030s.
The UK government is planning to ban under-16s from buying energy drinks, citing health concerns. But the soft drinks industry says that manufacturers have already taken steps to self-regulate. Bloomberg's Siwa Adebayo has more on that story.
Drinks including Red Bull, Monster and Prime will likely soon be off limits for under-16s in shops, restaurants and online in England. The new law will build on existing voluntary bans in place at most supermarkets and excludes lower caffeine soft drinks like Diet Coke, coffee or tea. A 12-week consultation period on the legislation will now begin, gathering evidence from health experts as well as retailers and manufacturers. Energy drink sales have soared in recent years. Red Bull's revenues grew 17% last year, mainly driven by increased UK distribution with 75,000 new points of sale. Research from the British Medical Journal shows up to a third of British children consuming one energy drink every week. In London, Tiwa Adebayo, Bloomberg Radio.
Well, those are your top stories this morning on the market. 7 minutes into the European cash trade, we have the Stock 600 up 0.4%, the FTSE 100's up 0.1%, and on Wall Street, S&P E-mini futures are up 0.2%.
That's news when you want it with Bloomberg News Now. I'm Caroline Hepker.
I'm Lizzie Burden, and this is Bloomberg.
play, given that China's AI players are much cheaper, valuations are way cheaper than the U.S., why wouldn't you be buying into China then try to keep on, racking up gains in the U.S.?
I think the rally certainly started in the U.S., but it has broadened out to areas like China because the applications around AI are really starting to expand. But let's not forget what's happening in the U.S. markets as well. The U.S. markets historically grew earnings at about 6 or 7% a year. And post-AI, since 2022, U.S. markets earnings EPS is growing at double digits. So we've grown from a market that's growing at 6 or 7% to now a market that's growing at 11 to 12%. And for the next 3 years, we think that earnings growth is once again going to be in the double digits. And so you've seen a little bit of an expansion in the absolute valuation in the U.S., but we think it's much more than justified.
The thing is, NVIDIA disappointed. Was it a surprise to you? I mean, expectations were sky high. It was kind of bound to disappoint.
Yeah, look, the stock's doubled in a very short period of time, so expectations had certainly gone a lot higher. But I think it was a very, very good result. And fundamentally, the question around NVIDIA is always what happens to the trajectory of CapEx from these levels, right? CapEx, remember at the beginning of the year, CapEx, the 4 major hyperscalers, was expected to be around $280 billion. You know what that number is now? It's $360 billion. And so that's the single biggest KPI that's still impacting NVIDIA. And we think that models are going to get increasingly more competitive. Hyperscalers are chasing after artificial general intelligence. They're not happy with standing still right now. They understand that this is going to be the biggest technology pivot that we've seen in our lifetime, and they want to be the leaders. And that race is not slowing down. And until it does, NVIDIA is going to continue to be interesting.
The thing is, show me the money. If CapEx is so high, I want to see the returns. I'm not seeing the kind of returns that I should be seeing if I'm putting that much money.
Yeah. So you might start. So part of the reason why Alibaba has been so strong today is because they're actually starting to see the returns around AI as well. You're seeing a lot of consumer internet platforms
Not to the level that you're investing, though.
So one interesting stat that NVIDIA put out over the last couple of quarters is that if you look at training versus inference workloads, inference is actually the monetization piece. Training is actually the building of the models, right? We're now crossed over to the point where more than 50% of the workload is on inference relative to training. And so you're actually getting to the point where monetization is increasing. And we're optimistic as we look into 2026 with things like the development of AI agents, the continued monetization of consumer internet platforms like Meta, Netflix, and Spotify. The reason why these stocks have been so strong is because they're using AI and leveraging AI to actually drive higher levels of monetization. So there might not necessarily be visible forms of ROI to us right now because enterprise is just getting started, but it's well underway.
But you can understand why people are beginning to think about it being a bubble, right?
Yeah.
Because of the surge in the stock prices.
Yeah.
I mean, you're optimistic about the future, but you have changed your mind before.
Yeah.
That DeepSeek moment did prompt you to reassess perhaps your position on NVIDIA.
Yeah.
What would cause you to rethink again?
Yeah, look, I think what would cause us to rethink, and first of all, we've been talking about an AI tech bubble for the last 10 years, right? 2015, it's a bubble. 2016, it's a bubble.
It's just a bigger bubble, though.
And by the way, the reason why is because we had such a sharp correction down that this rally up has been so powerful that people are saying, hey, we need to be cautious. But if you think about 2025 in isolation, the NASDAQ is up 12%. Over the last 10 years, the NASDAQ has averaged about a 16% return per year. So we're really back on track to where it has been, right? And if you told me at the start of the year that the single most important KPI for AI trade is AI CapEx, and AI CapEx has gone from $280 billion to $360 billion, and now the trajectory going forward is many people think that it's going to be more than the size of the U.S. Department of Defense spending, which is crazy to think about. Then you got to think that the trade continues to have legs.
So how do you play this? I mean, you buy the dip?
Yeah, I mean, this is a period of digestion. So like stocks, anytime
every dip, buy every dip?
You buy every dip. But so you have to think about what's happening, and you have to really go into the mindset of these people the companies that are spending this large amounts of capital. So if you think about what Meta is thinking, Meta is just hiring engineers for $100 million per engineer. Is that because they're going to stop spending on AI tomorrow? No, you have to think about what they're chasing after. And the big goal of what they're trying to chase after is AGI. And AGI is trying to unearth something beyond what humans are capable of today. So how do we cure cancer? How do we solve climate change? How do we solve, like, are there aliens in existence, right? There's, like, things that human intelligence can't currently comprehend, and we're trying to move towards that AGI, and we're just cracking the surface on that, and I just don't see them slowing down in terms of that. So outside of any kind of big multi-standard deviation event where we lead to a big correction, I just think that the medium to long-term trajectory of spend is upward, not downward. And so for those reasons, I'd probably be buying a lot of the dips.
I'm a little bit nervous because I think there are risks there, and I guess risks are being underpriced right now. How do you hedge? I mean, you know, just in case you're wrong.
Yeah. So look, I think you have to think about it and one of the things about Goldman is what we try to pride ourselves on is trying to be humble. And anytime the fact pattern changes, we're going to change our opinion as well, right? At least the investing culture is that way. And so, you know, we're going to continue to look for signposts that maybe we are wrong on this.
Including, like what? What signposting?
So basically, anytime that we think there's indicators that the CapEx trajectory is slowing, think about it, that's the most important KPI right now in the whole AI CapEx trade. And so what we're going to look for is any indication that that's slowing down.
Got the S&P hovering around an all-time high, but it has posted its smallest monthly gain in August for almost a year. September, historically not a great month for equities, although we are seeing futures better by about 1/5 of 1% at the moment. NASDAQ futures pushing higher as well. It was not a good day for tech. The Magnificent 7 index down 1.1%, although we did see Alphabet and Apple moving higher after hours, both gaining after a US judge stopped short of banning the lucrative search arrangement between the two. Crude prices also finding a little bit of support there. Ukraine did hit 2 refineries in Russia, so we've seen a series of attacks now pushing Russian crude processing to its lowest since 2022. Avril.
Yeah, and we're also watching these developments between China and Russia. The Chinese President Xi Jinping will be joined by Russia's Vladimir Putin and North Korea's Kim Jong-un as Beijing marks 80 years since Japan's defeat from the Second World War. Bloomberg's chief North Asia correspondent, Stephen Engel, is at Tiananmen Square for the event. So, Steve, China's military might on display here.
Yeah, that's right. Back in Tiananmen Square, back in front, of course, the main entrance to the Forbidden City. On the wall there, you will see within the hour or two the leaders that will be gathered here. Of course, Xi Jinping at the center, but also with his key guests like Vladimir Putin, who was also here 10 years ago, as I was, almost in the exact same position. You could see them up there on the top of the wall. Back then, they were accompanied by Jiang Zemin, who is, of course, since passed away. Also, Hu Jintao was there, but he is not in the public view of late. But an additional guest this time will be Kim Jong-un, coming in yesterday on train from North Korea, his first visit to China since 2019. So right now we're having a bunch of pre-pomp and ceremony with the soldiers coming up, lining up on Chang'an-jae, the main avenue that bifurcates the Forbidden City to Tiananmen Square. And if they go true to script like they did 10 years ago when I was here, we will get Xi Jinping riding in his Hongqi limo out the sunroof and essentially addressing the troops saying, "Tongzhimen hao, Tongzhimen xingku le," which means, "Hello, comrades, good work, comrades." And then he will retreat back to the top of the wall and top of the Mao painting and give a speech and address. And then we will get the military hardware from tanks, new missile technologies, drones, and overhead will be the latest fighter jets. So it will be quite a ceremony here in the center of Beijing.
Steve, tell us a little bit more about what we're expecting to see there. Could there potentially be any new hardware unveiled? And also in the crowd, you talked about the foreign leaders there. Might we see some new faces in terms of the military as well?
Well, that's a very good question. And don't know, simply because we do know that 10 years ago, Xi Jinping made news in his speech, essentially was going to modernize and also scale back and make the PLA, the People's Liberation Army, more efficient, removing some 300,000 soldiers. And since then, we've seen a bit of a purge under Xi Jinping of top generals and leaders, including the vice chairman of the Central Military Commission. He has been out of sight for quite some time. If he appears up on top of that wall today, then we know that he is not necessarily under investigation. If he's missing, that will send a very big sign. Of course, 2 defense ministers in the last few years have also been dismissed, including Li Shangfu and others, including the head of the rocket force. That was something that was announced back 10 years ago. The rocket force essentially is in charge of China's nuclear arsenal, but there's been a lot of retrenchment and reorganization even within that body. So it will be interesting to listen to every single word that Xi Jinping has to say. Meanwhile, of course, there's going to be some, I guess you could say, a war on history a bit. Xi Jinping really wants to portray over and over again, especially to the Western world, that China and their guest, Russia, the Soviet Union back in World War II, played a major role in the victory over the Japanese as well as the Nazis in Europe, and that history should be reflected in that. Already, we know that Vladimir Putin does his military parades through Red Square to commemorate the end of World War II. Xi Jinping did it 10 years ago. He's doing it again today. To show that it was the Chinese who lost upwards of 20 million people in the war against the Japanese, and the Soviet Union lost upwards of 25 to 30 million people. So again, a bit of reinforcement of their participation in World War II.
All right, Bloomberg Chief North Asia correspondent Stephen Engel there in Beijing. Well, Indonesian President Prabowo Subianto is heading to China to attend Beijing's major military parade. He earlier had to skip the Shanghai Cooperation Organization summit in Tianjin due to week-long protests in his country. Prabowo's decision shows growing confidence that the social unrest in Indonesia may have already peaked after the government agreed to key demands from demonstrators. And President Trump says he's not looking at lowering tariffs on India a week after doubling U.S. levies on the country's imports to 50%. Speaking at a White House event, Trump continued to criticize what he said was an imbalanced trade relationship between Washington and New Delhi.
We get along with India very well, but India has, you have to understand, for many years it was a one-sided relationship. Only now, since I came along, and because of the power that we have with tariffs, India was charging us tremendous tariffs, about the highest in the world. They were about the highest in the world, number one. And we, therefore, weren't doing much business with India, but they were doing business with us because we weren't charging them. Foolishly, we weren't charging them.
Now, aside from the tariff uncertainty, investors also weighing fiscal concerns across developed markets as stocks also face a historically rocky month. Let's get a preview of the trading day with our executive editor for Asia markets, Paul Dobson. So, Paul, we're seeing in terms of tech, mega caps, they are extending those declines. Valuations are concerned here, but then also these higher yields that are affecting their attractiveness. What are you watching out for the session?
Good morning, Avril. So it's really the bond market that has been the focus for investors at the start of this week. Once the US came back from holiday, bond syndication desks all around the world look a little bit like those Chinese military parades. Everybody's scurrying around dealing with record supply in Europe, very hefty supply in the US as well, and that's really been helping to catalyze that increase in bond yields that we've seen. That, as well as people concerned about the fiscal profligacy of governments around the world, most prominently the UK, and inflation risks as well. So all of that is pushing up those yields, particularly on the longest maturity bonds where demand seems a little bit more vulnerable at the moment. And that, in turn, is weighing on those valuations, the long-term outlook for earnings and discount rates for the technology companies. And so that's why we've seen them come under some pressure as a sort of knock-on impact from the bond market. so far this week. Now, it's not all been bad news. Some of the government debt sales that we've seen so far, the Japanese 10-year sale yesterday, even the UK syndication, had strong demand, were well taken down. The question is, can the bond investors and the bond world make enough room in their portfolios, and is the demand there to take down all of this supply that's coming all at once?
Paul, you mentioned the UK there. I mean, we saw a similar story. We've got yields rising, markets slipping. I mean, the budget due before the end of the year, that's a conundrum, isn't it? Staying within the fiscal rules. What's the choice here? Lift taxes, slash spending, or both?
It is. It's a difficult one for the government to try to puzzle out exactly how to see its way through it. And I think that, that's why the market is expressing those risks in the form of demanding a higher premium for UK government debt, particularly on those 30-year bonds again. And it just sort of shows you the importance of fiscal prudence once the bond market smells some danger. So, you could draw a parallel almost, although it's an emerging market versus a developed market, with what we saw in Indonesia this week. The riots that we saw over the weekend initially sent pretty severe jitters through the market, causing a sell-off in stocks and the currency, and putting the bonds under pressure as well. But then we heard those reassuring words from Sri Mulyani, the finance minister, and that kind of settled the market pretty much immediately. If she's in control, the market thinks, then this is okay. We're confident enough to stay with Indonesia. And the UK could do with somebody like that right at this moment to sort of be the adult in the room, as it were, and to be able to say, don't worry, we've got this. This is what we're going to do. This is the plan. Stick with us. It's all going to be okay.
All right, Bloomberg's executive editor for Asia Markets, Paul Dobson there. Now, we're also following the latest updates on the Fed. Treasury Secretary Scott Bessent is reportedly planning to start interviews on Friday for a successor to Jerome Powell. This is according to a Wall Street Journal report, which says there are 11 contenders, including Fed Governors Chris Waller and Michelle Bowman. Following the interviews, Bessent plans to recommend a final list of candidates to President Trump. Fed Governor Lisa Cook's lawyer says President Trump's move to oust her is based only on a cut-and-paste claim of mortgage fraud and social media posts. In a series of court filings, Cook's attorney argued Trump lacked valid grounds to fire Cook for cause. He also said social media posts by Federal Housing Finance Agency Director Bill Pulte and a criminal referral to the DOJ didn't give Cook a chance to respond before she was fired. Avril.
Yes, still to come on the Asia Trade. We're live from Goldman Sachs' inaugural Asia Leaders Conference, where we'll be speaking with their vice chairman and APEC ex-Japan president. The Asia Group weighs in on the power struggles within Japan's LDP. Plus, we'll also be talking crypto with Galaxy Digital. Much more ahead. This is Bloomberg.
In France, when we do something, it often ends up iconic. This radio antenna, for example, iconic. Or a gift to a friend, iconic. A little something for breakfast, iconic. When we aim high, when we go deep, when we make hearts beat faster, and when we make them beat again, when we search for something, and when we find it, when we triumph, even when we stumble. Iconic. When we get people moving, when we get the world moving. Iconic. Why? Because we do things our way. Stylish, bold, exploring, innovating, carrying our history and values into the future. Make it iconic. Choose France.
Well, let's take a look at how some of the big US tech names are moving after hours. Got both Apple and Alphabet moving higher, in the case of Alphabet especially so. Now, this is after a US judge stopped short of banning the lucrative search arrangement between Google and Apple, which generates about $20 billion in revenue per year for Apple. Both those stocks pushing higher there. Federal judge also ruled that Google's going to have to share some of its search data with competitors, but Google is not required to to sell its Chrome web browser. It did, however, bar Google from entering into exclusive contracts for internet search, although Apple exempt there. Google, for its part, says it's got some concerns, privacy concerns about that antitrust ruling. And it is reviewing the court decision on Google search. Now, you see TSMC, Taiwan Semiconductor ADRs there at the bottom of the screen, kind of flat, a little bit softer there at the moment. We'll tell you why. The US has revoked TSMC's waiver to freely ship essential equipment to its key chip-making base in China. Now, that move mirrors action taken against Chinese facilities operated by Samsung and SK Hynix. Bloomberg's Tom Giles has been tracking this story. Tom, what more details do we know about this?
This is just another example of the U.S. doing everything it can to tighten and constrain China's ability to get advanced semiconductors. They've taken many steps, imposing lots of limits on the sale of U.S. and the availability of products that have U.S. components in them. This is just another step of the U.S. reaching into other countries, big companies like TSMC, telling them what they can and can't do. And the way it does that is by focusing on U.S.-made products and saying, we're going to impose limits on their availability in China. And in particular for TSMC, it's these operations in Nanjing. It's not a big component. It's not a big percentage of what TSMC does, but it's strategic, right? Because TSMC has key customers in China, and it's easier for them to sell using a facility on the ground on the mainland.
Tom, this is also mirroring similar moves on SK Hynix, Samsung Electronics. What are we expecting on the impact overall on the chip supply chain?
Yeah, certainly what this is it's basically saying that if you are a company like ASML, Tokyo Electron, AMAT here in the U.S., KLA, there's a whole host of chip supply companies. These are basically chip making equipment makers. So they're the companies, they're the suppliers that sell to TSMC. TSMC needs these products in order to manufacture chips. And remember, TSMC is the world's leading manufacturer of semiconductors, in particular semiconductors that are used for the most advanced capabilities like artificial intelligence. Anything you do to make it harder for TSMC to get these components, that can basically potentially disrupt its production and the sale of these products into the Chinese market.
All right, Bloomberg's Tom Giles there in San Francisco. Let's get to some other tech stories that we're tracking. Apple shares slipped after it was revealed that its lead AI researcher for robotics has left to join Meta as part of a wave of departures hitting the iPhone maker. Sources say 3 more members of Apple's large language models team are also leaving, 2 to OpenAI and 1 to Anthropic. The exits follow the loss of the group's chief and raise fresh questions about Apple's AI strategy. AI unicorn Anthropic has meanwhile closed a $13 billion funding round, nearly tripling its valuation to $183 billion and making it one of the world's most valuable startups. The deal was led by Iconic Capital, with participation from Fidelity, Lightspeed, Singapore's GIC and Inside Partners. Anthropic says it will use the funds to meet enterprise demand, expand globally, and advance AI safety research as competition with OpenAI and Google intensifies. And OpenAI has agreed to acquire product testing startup StatSig for $1.1 billion in stock, one of its biggest acquisitions to date. StatSig CEO Vijay Raji will join OpenAI as Chief Technology Officer of Applications, helping developers build safe AI products. The Seattle-based startup, used by firms including Eventbrite and SoundCloud, will continue operating independently after the deal, which is pending regulatory approval. We have more ahead on the Asia trade. This is Bloomberg.
For over 147 years, Bgrim has embraced doing business with compassion. always committed to giving back to society. We empower people and strengthen communities for a better future.
As stated in the news release distributed to all of you, yesterday evening, the CEO and chairman, Takeshi Niinami, stepped down. I would like to sincerely apologize for any inconvenience caused.
Suntory's president Nobuhiro Tori confirming the resignation of CEO and chairman Takeshi Niinami after his home was searched for cannabis-based drugs. And here's a look as well at how the stock moved on the news yesterday. Niinami is now hinting that he may try to clear his name. For more, let's bring in Bloomberg senior editor Reed Stevenson. So Reed, we know Niinami as an incredibly outspoken business leader in Japan. He's now seeking to clear his name. What more do we know about this case?
Well, the thing to watch today is going to be a meeting in the afternoon, or a press conference actually in the afternoon, of the Keizai Doyukai. It's Japan's second biggest business lobby. Niinami is actually the chairman of this group. He still remains the chairman. And based on what we've seen from media reports and some reporting, it does appear that he's actually going to show up at this news conference. And so when you look at that fact, plus a couple interviews he's given to a Japanese magazine as well as the Asahi newspaper, it does seem like he might come out swinging to try and clear his name. And the thing to note here is that, it's quite unusual when there is a corporate scandal in Japan. There's usually a playbook for these sorts of things. There are apologies, there's remorse, there's resignations, there's a turning a new page with new management, and then, whoever was at the center of the storm kind of quietly disappears. It doesn't seem like Niinami is going to quietly disappear.
This is an unusual case, as you say, Reed, because the products that he was found with contained CBD, which is a non-psychoactive substance, which might be somewhat perplexing for viewers outside of Japan, because in many countries this is legal. Some doctors even prescribe it. So does Niinami possibly have a case for leniency here?
Indeed. I mean, the fact is that CBD is actually legal in Japan as long as it's completely free of THC. Now, the amounts are just so small as to the point where if you detect even a tiny amount, you are possibly liable for, a narcotics law violation. Now, just to note, officially, Suntory, the company, has not even identified the substance. They call them supplements, and they're possibly under suspicion. But the reporting we've seen elsewhere, and also from Niinami's interviews in the media, that they were CBD products. He had arranged to have them come into Japan. He had believed that they were completely free of the illegal substance THC, and essentially he's asserting that there was no crime committed, and asserted also that police found nothing when they searched his house. And so, this is going to be quite a dramatic saga and keep him in the news. And look, he's always been in the news. He's been outspoken. He's been very willing to poke at Japan's staid business establishment. So we're just going to have to see how this presser plays out and how he decides to, kind of wage a public trial here.
All right, Bloomberg senior editor Reed Stevenson there. Some of the other corporate stories we're following. Jane Street's $10.1 billion haul in second quarter net trading revenue has beat out all of the biggest banks to set a Wall Street record. Sources tell Bloomberg the sales figure more than doubled from a year earlier, also pushing Jane Street's first half totals to a record. Trading volumes have been elevated since President Trump announced a raft of global tariffs as investors rush to reposition portfolios. And Bloomberg's learned Tesla's Indian market debut has underwhelmed so far, with orders for about 600 cars since mid-July. Sources say those numbers are short of even Tesla's own expectations. More in a moment. This is Bloomberg. Let's take a look at what's happening in global bonds at the moment. We've got 30-year bond futures for the US pointing up a little bit. 30-year yield approaching 5%. The 10-year also pushing high. We do, of course, have a Fed meeting a bit later on this month with swaps currently pricing at about 20 basis points of easing. But we've seen bonds mostly around the world rising. Japan had a yields rising, that is. Japan had a very solid 10-year auction on Tuesday. Yields actually fell half a basis point. Well, I guess you take the win. There's going to be another test on Thursday with the 30-year auction. Political uncertainty also lingering in Japan. UK yields also pushed higher. A few concerns on the budget there, as we were discussing. Australian bonds, though, a bit of an outlier. Yields on the 10-year falling right now, 435.95. Futures indicating that Aussie bonds might just withstand this global debt sell-off. Averill.
Yeah, Paul, and you've just been highlighting how we also are watching out for the September FOMC. Before that, we have a couple of data points to get through, and then the Fed independence under threat. A lot of focus on the U.S. Central Bank. I'm here in Hong Kong at the Goldman Sachs event. It's hosting its inaugural Asia Leaders Conference. It's bringing together top global businesses, investors. Who better to get insights from than our next guest, who is Robert Kaplan, Vice Chairman at Goldman Sachs, and of course, former Dallas Fed President. Robert, really great to have you with us.
Great to be with you.
So let's start with the latest. We're hearing reports that the Treasury Secretary could begin in Fed chair as soon as this week. Who in your mind do you want to see taking over from Chair Powell?
I'm not going to comment on individual candidates, obviously, but Jay Powell's term as chairman ends in May, and so it makes sense that they should start the interview process. I think the main thing for the leader, the next leader of the Fed, has to be somebody who has strong grounding in economics and can make independent judgments about the economy, can forge a consensus, can oversee the Fed and manage it, and can operate, in my view, in an independent manner to make the best decisions for the U.S. economy.
An independent central bank is something you've cited previously as being the mark of a successful nation. We've seen Trump ramping up pressure on Powell, moving to fire Lisa Cook, moving as well potentially to get a majority on the board. How worrying is that for you?
Well, I won't comment on those individual situations, but I do think, as you've said, it's critical that the people that are in the governor's seats and in the bank president's seats operate without regard to political influence or political considerations and divorce themselves from worrying about political pressure. They have to make the best decisions they can. They can debate, they can disagree, they can bring innovative ideas, but it's got to be done on the basis of what they think is the best decision for the U.S. economy. And I think it's critical that that ethic, I think it's in the interest of the United States for that ethic to be maintained.
They're under a lot of pressure, though. How do you think they can work with these constraints? How might that shape policy making between now and potentially in May?
So the best way to deal with these pressures, if I'm at the Fed, is to ignore them and to focus on the job. And I would right now be focusing on my team on the decision for the September meeting. And it's not completely clear. The job market, on the one hand, we're at full employment, but we think hiring is slowed to stall speed. We'll see what the jobs report is Friday. So that's on one side, but inflation is above target. And that's before considering the tariffs. Service sector inflation is still very sticky. And so I'd be focusing my team on making the best decision in September. I personally would be leaning toward cutting in September, but I doubt it will be the start of a rate-cutting cycle. I think they'll take it one meeting at a time. But those cross currents are complicated enough. I'd make sure, if I were at the Fed, keep my team focused on the issue at hand and doing our job.
Do you see strength in the labor market? You were talking during the break about some of these structural changes underway. How is that going to affect?
So GDP growth in the United States is solid but somewhat sluggish. We started the year thinking GDP growth in the United States might be 2.25%. I think our best judgment at Goldman Sachs now, it's more likely to be closer to 1.5%. So, and why is that? Number one, the tariffs, at least in the short run, and the uncertainty have slowed growth. The second thing that slowed growth is labor force. We are curtailing labor force supply. There are at least 10 million undocumented immigrants in the United States that are key parts of construction, agriculture, other industries that are either not reporting to work, they're not shopping, and it's creating also some stickiness and slowing in the economy. And so I think the reason the unemployment rate is so low is because supply is declining, but hiring is also very sluggish. So I think the Fed is starting to realize maybe they need to look through the headline unemployment rate and realize that even though we're still looks like we're at full employment on the surface, the hiring level is very sluggish because growth is sluggish. And that would be the argument for making some adjustment to the Fed funds rate, even though inflation is still above target.
It's interesting also because this is a Fed that, for the most part, has stuck to its guns about data dependency. What is your sense of how the BLS needs to evolve along with these structural changes that you just cited in the economy, including trade, AI? Yeah. How does it need to?
So you may know when I was at the Fed, and since I've left, I've never been a fan of the term data dependency because it's a piece of the puzzle. What do I mean by that? There are BLS and Commerce Department figures every month. The problem is they're backward looking, they're aggregated, they tend to get revised later. So you want to look at them, but you don't want to overreact to any one data print. You also want to talk to businesses, you want to look at structural trends. You want to look at the whole mosaic. But in that regard, to your point, it's critical that the Fed still rely on BLS information. But here, let me give you an example. We've got a significant AI data center power boom going on in the United States. It will be disruptive to many industries, but disruptive in a constructive way that will increase productivity growth. That's disinflationary. We haven't seen that quite yet show up in the data, but I think it will. And so even though inflation's running above target, that structural driver has to be taken into account because it's one reason why inflation may moderate. And that's a good example when you're at the Fed. You want to look at data, but you want to look at the whole picture, including structural drivers, in forming a judgment.
That's really interesting because you talk about these cross currents they include for the inflationary outlook, and this is coming at a time when we still might not have seen fully the impact from tariffs.
That's right.
What is your sense of, is that going to be coming, one-off or more in waves?
Well, we're going to find out, and that's still somewhat in flux, but we do know the following. Before even considering tariffs, as I said, service sector inflation is still sticky. But we know the following about goods. First of all, goods for the last 2 years have been disinflating globally. What's driving that? China overcapacity, manufacturing overcapacity. That overcapacity hasn't gone away. The tariff situation may complicate it, but I think over the horizon, global overcapacity in goods, and the fact that U.S. consumers don't need to buy goods. They can shift, they can substitute, they're price sensitive. They could decide to go to dinner instead of buying a set of goods. I think that makes me think it is more likely these tariffs will be one time, more likely to be, and that the effect may moderate over time. That and the AI boom, which is also disinflationary, and also the fact that growth is sluggish, which also limits demand for goods. I think all those things make me more optimistic that maybe you'll see some moderation of the tariff impact when we look back a year from now.
Would it not make sense then, beyond September, for there to be more cuts then?
Well, those who want more cuts will argue that. The truth is, I mentioned cross currents. I think in a period where you've got cross currents, the best thing I think you can do is don't be a prognosticator, be a risk manager. And that means take it one meeting at a time. So all my attention will be focused on September. After that's done, I'll wipe the slate clean and do my analysis between September and the November meeting. And that's why I say I wouldn't assume this is the start of a rate cutting cycle. I think they'll shorten up the time frame and the prognostications and take it one meeting at a time.
All right, Robert, really great to chat. It's been a pleasure. Robert Kaplan is Vice Chairman at Goldman Sachs. Back to you, Paul.
All right, April Hong there in Hong Kong, the Goldman Sachs Leaders Conference. We're going to have more interviews out of Goldman Sachs Asia Leaders Conference this morning as well. The bank's APAC ex-Japan President Kevin Sneeder and Galaxy Digital founder and CEO Mike Novogratz both going to be joining us in the next hour. Still to come, the Asia Group joins us as we discuss the future of Japanese Prime Minister Ishiba's Liberal Democratic Party after a key power broker moved to step down. This is Bloomberg. Let's take a look at how Japanese assets are tracking towards the open. Futures a little bit softer by about 0.2%. We did have a pretty good 10-year auction on Tuesday. Strongest demand there since October 2023. Yields just slipping a little. We've got the 10-year yield at 1.615. The yen, meanwhile, weakening 148.55 because we're seeing a bit of political uncertainty returning, or, well, it's not returning, it's always been there in the Japanese political scene at the moment. The Prime Minister Shigeru Ishiba's key power broker, Hiroshi Moriyama, has offered to step down. Now, this comes after a meeting on the LDP's upper house election setback, and it could weaken Ishiba's political standing. Bloomberg reporter Yoshiaki Nohara joins us now from Tokyo. So, Yoshiaki, what's the latest on Japan's Prime Minister and his government?
Hi. So, Paul, what happened yesterday was that they examined what went wrong in the July election. And as a result of that, the Prime Minister apologized that he didn't meet the expectations of the people. And also, one of the key members of the party, Secretary General Hiroshi Moriyama, he said that he would like to resign, and it's now up to Ishiba whether to accept his resignation or not.
What is this going to mean in the meantime for policy making and potentially fiscal spending plans?
That's a great question. There's a strong likelihood that Prime Minister is going to get started with the stimulus package because he repeated this point that he would like to do more urgently to help people cope with inflation. And LDP's message to help people didn't go far during the July election. So that's why he's trying to get the stimulus package going to do more to help people with the rising cost of living. But there's no sign of how big the stimulus package is going to be and what kind of content it's going to be, given that opposition parties have been calling for a tax cut instead of cash handouts. So that's going to be a point to be monitored going forward.
Well, Prime Minister Ishiba has repeatedly said he's not planning to step down. So can he hang on, or is the party going to mobilize against him?
Well, yesterday, he didn't say, he just said he will make the decision at the appropriate time, but he did not say what kind of decision he's talking about. So it's unclear whether he is trying to step down or, stay on for a longer time. But for now, it seems like he's sending a message that the party has many urgent issues to be tackled right away, so that he is busy tackling these challenges for the public. And that's kind of sending a message that he will focus on his job and try to stay on for now.
All right, Bloomberg economics and government reporter Yoshiaki Nahara there. For more on this, let's get to Rintaro Nishimura, Japan practice associate at the Asia Group. Rintaro, it's been another interesting week in Japanese politics. We've had a number of high-ranking officials either offering to step down from the LDP or stepping down. Is this good for Prime Minister Ishiba in that other people are taking the blame for that upper house election defeat, or bad and that his circle of allies is shrinking?
First, thank you for having me. I think it's not a good thing that his top brass, the party leadership, has basically all announced that they would like to step down. It wasn't just Moriyama yesterday, it was 3 other senior executives. And clearly that is a sign that to many that this is a sinking ship and that Ishiba's days may be numbered. It will not help the Prime Minister that in the report that was released yesterday, there was no direct mention of responsibility, his responsibility or the leadership's responsibility. And so lawmakers, I think, are still waiting to see if Ishiba himself will take responsibility. And I don't think the resignation or the intent to resign by the other senior leadership will take the blame off of him. At the same time, Ishiba is not very well known for having friends within the party, so it will be very hard to see him try and find new members to replace these folks, especially Moriyama, who is very key to coordination with the opposition, which will be critical for his stimulus package, but also for realizing policy goals that he may have in the near future.
Well, so far, Prime Minister Ishiba's made it clear that he has no intention to resign. But how likely is it that LDP lawmakers and branch representatives could make a move against him and force him out?
It all comes down to September 8th, which is when the LDP will technically vote to see if they would like to hold an early presidential election. It would require 172 votes for a majority of lawmakers and prefectural branches to vote in favor of this measure. We've seen in recent days that members of his own cabinet have actually been announcing publicly that they would actually support this measure, which is, again, not a good sign ahead of that September 8th vote. There's also reports that came out overnight that senior advisor and former Prime Minister Taro Aso is planning to announce today that he would also support this measure. So again, not a lot going for the Prime Minister at this point. I think it's still neck and neck. We won't really know until September 8th, but judging from what we saw yesterday, I think that the report and also the way Ishiba handled things, it certainly is not looking good for the Prime Minister.
It's interesting, though, because we are seeing approval among the public for Ishiba ticking up a little. What is your sense of, are the public's frustrations more about Ishiba or the LDP at this stage?
This is a very interesting situation where Ishiba has essentially took the LDP into 2 national elections and lost both of them, but somehow is seeing a rebound in approval, mostly because there seems to be a lot of concern about what could come after Ishiba, particularly around the momentum that we saw with the right-wing party Sanseito and also the prospect of potentially Sanae Takaichi taking the presidency from Ishiba after his potential resignation. So there are concerns, obviously, that what's to come might be more right-wing or hardline government, and that has boosted Ishiba in a sense. I think there's a lot more of a concern or frustration within the public about the way in which the LDP seems to be more focused on its own politics of who's going to replace Ishiba or what's going to happen to Ishiba, rather than the pressing issues which the Prime Minister did mention yesterday, which include inflation, the tariff situation, agriculture policy, disaster relief. There's a lot of issues that are ongoing, but I think to the public it seems that the LDP is more interested in its own future rather than the public and Japan as a whole.
Indeed, there are more pressing issues, the tariff risk, as you highlighted, among them. Do you think that in order to ensure his survival, we might see Ishiba aggressively pushing forward spending plans and a way to buffer from the economic pains?
I think it's certainly possible given the way in which we've seen in the last days that Ishiba is planning to instruct the crafting of a stimulus package. At the same time, I do think that he is constrained in the fact that I think people see in the LDP that this is a sinking ship, like I said earlier, and this reality in which a minority government will have to work with the opposition, there is really no incentive for the opposition to be helping Ishiba form a huge stimulus package that essentially helps him continue as prime minister. So I think there will be a push and pull between the ruling parties and also the opposition parties on what would look like they are doing their best to help the public with inflation and tariffs and whatnot, but also not looking like they are supporting this prime minister as perhaps his days may be numbered in the coming weeks and months.
All right, Rintaro Nishimura, Japan Practice Associate at the Asia Group. Thanks so much for joining us today. We have more ahead on the Asia trade. This is Bloomberg. Who doesn't love a parade? We're alive here in Beijing at the Forbidden City. Chinese allies gathering for a military parade. This is to celebrate the 80 years since the end of the Second World War. That's not the parade, by the way. It's going to get more impressive than that. We will see quite the array of military hardware. China preparing to showcase its latest anti-ship missiles, combat drones, nuclear-capable ballistic missiles at the event as well, which includes cutting-edge technology such as hypersonic systems as well. In the crowds, going to be a number of luminaries as well. Russia's Vladimir Putin will be alongside Chinese President Xi Jinping. North Korea's Kim Jong-un will also be in attendance after making the journey yesterday on a bulletproof train from North Korea. There will also be heads of state from Vietnam, Malaysia, Pakistan, Belarus, Iran, Serbia and Slovakia as well. So we'll be bringing you live pictures of this once it gets underway. Xi Jinping will address the troops very briefly. He will also be participating in the parade himself, riding in an open-topped Chinese-made limousine. Then at the conclusion of the parade, we will hear remarks from Xi Jinping as well. It'll be interesting to note who's in the crowd from the military behind him. There has recently been a purge of the leadership in the military. So who's there, who's not there? That's going to be of great interest to China watchers as well. So there we see world leaders starting to arrive for the parade, getting underway soon, 80 years since the end of World War II. Okay, we've got market opens in Sydney, Seoul and Tokyo up next. Stay with us for that. This is Bloomberg. This is the Asia Trade. We're counting down to Asia's major market opens. Also this hour, some impressive visions coming out of Beijing at the moment. It is a military parade, as we mentioned, to celebrate 80 years since the end of the Second World War. First such parade with
गाइस मार्केट तो देखो बिल्कुल सुपर साइडवेज हो रखा है, कुछ मोमेंटम ही नहीं है ना क्रूड ऑयल में ना नेचुरल गैस में। एक छोटा सा एक रिस्की ट्रेड बन रहा है यहाँ पर, इसको प्लान कर सकते हो, ज़्यादा रिस्क मत लेना क्योंकि वॉल्यूम नहीं है, फंस जाएंगे नहीं तो थोड़ा सा अगर ट्राई करना चाह रहे हो, दिस इज अ ट्रेड, डोंट टेक द हैवी रिस्क। ओके, ज़्यादा रिस्क मत लेना, 1.5 पॉइंट का एसएल है, जाएगा तो वेल एंड गुड, नहीं जाता है तो ऐसा लेट होगा तो निकल भी जाएंगे। 1.5 घंटा और है, अगर जाना होगा 1.5 घंटे में चला जाएगा, इससे ज़्यादा टाइम लगाना नहीं चाहिए। क्योंकि अगर नेक्स्ट 3:30 बजे तक नहीं गया तो वैसे भी साइडवेज ही है उसके बाद मार्केट, फिर मोमेंटम वैसे भी नहीं आता, फिर वही 5:30 के बाद ही मूव देखने के लिए मिलेगा। तो एक छोटा सा रिस्की ट्रेड है, लेट्स सी, ज़्यादा रिस्क मत लेना बस। 1.5 पॉइंट का एसएल है फ्यूचर में। बाकी और कोई वॉल्यूम के साथ मोमेंटम आएगा तो फिर देखेंगे। बाकी नीचे अगर यहाँ पर होल्ड नहीं करता है तो फिर 250 तक आना चाहिए इसको, वहीं पर एक नेक्स्ट मेजर सपोर्ट है अनटिल अनलेस कोई नया सपोर्ट और क्रिएट नहीं हो जाता। थोड़ा ध्यान रखना, थोड़ा सा रिस्की है तो ज़्यादा रिस्क नहीं उठाएंगे अभी।
Moment. We have indeed, as you said, just opened a new location. It's an expansion of what we had previously. It's a world-class facility. We're very proud of it. And in that context, we did so because we do see opportunity in India. The underpinning factors in India, which essentially come down to a combination of demographics, political stability, and indeed reform, which is increasing the financial focus and power of the domestic market in India, all of those come together and make us confident about the longer-term opportunity. And just as I said with China, in India we take that longer-term view. We want to make sure we're there for our clients. And so we'll look beyond near-term challenges. And that's why we've made this commitment through an expanded location.
The relations with the US, though, do you not think that that could potentially affect the longer-term trajectory of India's growth story? The short term does inform the long term.
Obviously, you have to pay careful attention to it. And I think in reality, the India story has been a domestic story to a large degree. If you just look at Q2 GDP, it came in at 7.8%. And that was largely driven because of a combination of consumption beginning to improve and also the services economy. So, of course, it does matter what happens in terms of broader geopolitical context, the political relationship, the export, all of that matters. But the Indian story has a large domestic component to it as well. And I hope and believe that over time, these differences, as the world itself transitions to a different set of international relations, the images coming out of Beijing talk to this. We're in a period of change. Hopefully, we'll settle down. And over the course of that time, I'm pretty confident we'll find opportunities to help our clients.
Talk to me about how you're looking to build the India business. What are the largest revenue generators for Goldman in the country now?
Well, in India, we have many different parts of our business that we're already proud of and continue to expand. Our investment banking business there has certainly benefited from this expansion. The ECM side of the business has certainly seen growth, and we've made a conscious effort to do that. But it's not just there. We see our equities business continue to develop. So I'm very much of a view that our India business will look like the rest of our business across the region over time. And there's plenty of places, therefore, where we'll continue to expand and develop.
You talked about hiring earlier. In which areas, which cities, particularly for India, what sort of headcount are you looking at?
Well, our major presence is in Mumbai from the point of view of the client service business, but we're also present in Hyderabad and Bangalore through our global capability centres. All of those locations will be a focus for hiring in India.
Kevin, really good to chat. Thank you so much. All the best for the rest of the event.
Appreciate it. Thanks for being here.
Kevin Sneeder is APEC ex-Japan president at Goldman Sachs. Back to you, Paul.
Thanks, Avril. Avril there in Hong Kong at the Goldman Sachs Asia Leaders Conference. Now we're also following the latest updates on the Fed. Treasury Secretary Scott Bessent reportedly planning to start interviews on Friday for a successor to Jerome Powell. This is according to a Wall Street Journal report which says there are 11 contenders, including Fed Governors Chris Waller and Michelle Bowman. Following the interviews, Bessent plans to recommend a final list of candidates to President Trump. And Fed Governor Lisa Cook's lawyer says President Trump's move to oust her is based only on cut-and-paste claims of mortgage fraud and social media posts. In a series of court filings, Cook's attorney argued Trump lacked valid grounds to fire Cook for cause. He also said social media posts by Federal Housing Finance Agency Director Bill Pulte and a criminal referral to the DOJ didn't give Cook a chance to respond before she was fired. Right, let's take a look at how we're tracking here in Australia. We've got a little bit of softness on the ASX, off by 0.5%. One bright spot, though, gold miners pushing the whole metals and mining sector higher. Gold miners in Australia better by 1.73% collectively, and of course the gold price above $3,500 an ounce. Aussie dollar a little moved, about 65 cents at the moment. Keep an eye on that, though. We will get second quarter GDP numbers out of Australia a bit later on. We're expecting to see a modest increase there to 1.6%. Australian bonds, meanwhile, not really seeing yields tick up like we are elsewhere. Things are pretty stable there. The 10-year yield right now, 436.40 at the moment. Now, I want to check in on Suntory as well, because the CEO, Takeshi Ninami, has, of course, stepped down. This is after, the cannabis-based products were a result of a police investigation. He had his house searched. In a published interview, he says he didn't think the products he obtained were illegal, and he's suggesting he will try to clear his name. Local media reporting that those were CBD products. which are legal in Japan so long as they're completely free of THC, which is the psychoactive compound in cannabis. Suntory, meanwhile, shares only just a little bit softer in the early going in Japan. We have more ahead on the Asia trade. This is Bloomberg. Chinese President Xi Jinping will be joined by Russia's Vladimir Putin and North Korea's Kim Jong-un as Beijing marks 80 years since Japan's defeat in World War II. Bloomberg's chief North Asia correspondent Stephen Engel is there at Tiananmen Square for the event. Steve, what are you seeing so far, and what's the message China's trying to send today?
Well, there are clearly many different storylines coming from this military parade. At the top of that, of course, is China's marking 80 years since the end of the World War II, and obviously wants to portray to the world that China, as well as the Soviet Union, now, of course, Russia, paid a great price in their contribution to the defeat of Japan and fascism in Europe. There was some 47 million combined deaths between China and the Soviet Union. So it's not rewriting history, it's just re-emphasizing that China played its part as well in defeating the Axis parties, the powers. Now, Xi Jinping, if it follows suit to 2015, when I was last year, and the last time they marked a similar anniversary, the 70th anniversary of the winning of the World War II, Xi Jinping, in his speech, which he will be giving, we don't have the exact timetable, but possibly within the next hour. But 10 years ago, he announced that the People's Liberation Army would be reduced by some 300,000 soldiers. And it really ushered in one of the biggest military restructurings in Chinese history. And also, we've seen a corruption purge of top leaders, in particular in the rocket force, which is overseeing China's nuclear arsenal. The rocket force commander, Li Yuchao, has been replaced. And now He Weidong, the vice chair of the Central Military Commission, might be missing from the dais today here at the parade. No official reason has been given for his extended absence from public, but he may indeed be the highest casualty of China's expanding military corruption probe, which has already claimed Li Shangfu, a former defense minister, as well as another senior admiral from the PLA Navy, Miao Hua, who was removed. So, again, Xi Jinping came to power promising to root out corruption, in particular from the PLA. He said they'll go after tigers and flies. So big generals and also rank-and-file soldiers. So that's the backdrop of this as they roll out the military hardware and also the growing diplomatic clout with Vladimir Putin, also Kim Jong-un here, and other leaders like Anwar Ibrahim from Malaysia and others from Iran and other nations.
Yeah, Steve, as you're speaking, we continue to see these world leaders streaming in. It's also interesting what we've seen between China and Russia at this event. They've inked a gas pipeline deal, perhaps drawing potentially the attention of Donald Trump. But what are you seeing in terms of the Chinese president at this stage, perhaps redrawing the geopolitical map amid all this?
Well, we saw it obviously over the last couple of days at the SCO in Tianjin. Remarkable footage, of course, of Xi Jinping and Vladimir Putin and Narendra Modi clasping hands and sharing a good joke and a good laugh there. Also, of course, Modi and Putin spending a long time in Putin's limousine talking about a number of different things. We all know that India's purchases of Russian-sanctioned oil and crude has, sparked the ire of Washington, saying India is profiteering from lower-cost purchases of Russian oil. But on top of that, we got a surprise announcement yesterday. The long, hard-fought victory for Vladimir Putin is to get China's backing for the second gas pipeline from Russia to China, the Power of Siberia 2. That, according to Russian sources, has been agreed to by China. It has been hard fought. I mean, it is something that the Chinese have resisted doing so for a long time because of the high costs involved, and also the Chinese economy is slowing and energy demand has waned. So why embark on such a new expensive pipeline at this time? But the Russians say it's going to go ahead with China's blessing, but we're still awaiting China's announcement that they are going to go ahead out of Siberia too. So that's probably the most prominent deal that is sort of been announced coming from this gathering of leaders here in China this week.
Steve, as you're speaking there, we're seeing North Korean leader Kim Jong-un arriving as well. You mentioned a little bit earlier about we've seen something of a purge inside the military. Are we potentially going to see some new faces among the crowd today? And what are we likely to hear in Xi Jinping's speech?
Well, we could get some sort of clarity, or we might not. We simply don't know. But we do know that since Xi took power in 2012, 2013, he has ousted nearly 1/5 of the generals that he appointed. Hu Jintao, his predecessors, Hu Jintao and Jiang Zemin, they didn't get rid of any of their generals during their terms in office. So Xi Jinping definitely revamping the hierarchy in the military and demanding more loyalty and more discipline within the ranks. So the corruption probe has gone wide and deep. But Xi Jinping understands that his grip on power, which is now extended into a third consecutive term, really lies, as Mao Zedong said, in holding on to the power of the military. Mao Zedong was famous for saying political power grows out of the barrel of a gun. So I think Xi Jinping has adopted that kind of mentality. He has strengthened and increased discipline within the ranks of the military. And that's going to be on show, on display here on the streets of Beijing within a matter of the next hour, showing the modernization of the People's Liberation Army, from the latest stealth fighters, the J-20A, to, of course, hypersonic missiles, the latest technologies there, and drone warfare is going to be on display.
All right, Bloomberg Chief North Asia correspondent Stephen Engel reporting from Tiananmen Square. Well, I've just had EU futures open. Let's take a look at how things are tracking at the moment. We're seeing a little bit of weakness in the euro right now. It's off by, just a few, just about 0.8 of, even less, 1/10 of 1% there. Stocks futures, though, pointing higher, though perhaps surprising considering some of the selling that we've seen over the past 24 hours. We've got DAX futures higher also by 0.5%. We saw long-dated yields in the UK rising to their highest since 1988, and UK stocks selling off as well on Tuesday. Both the euro, as you see there, and the British pound also weakening. All right, we've got more ahead on the Asia trade. This is Bloomberg.
We're taking you live now to Tiananmen Square, where world leaders continue streaming in for China's military parade. And we're seeing on the red carpet the Indonesian leader Prabowo Subianto, who, of course, had his trip to China delayed. He couldn't attend the SEO earlier in the week because of protests in the country now at this very event. In the meantime, we're also tracking developments related to U.S. tech companies. Google will be required to share online search data with rivals following a U.S. ruling in the country's largest antitrust case in almost 3 decades. Bloomberg Tech Senior Editor Nick Turner joins us now. So, Nick, this is a big case that we've been tracking. It seems like Google will have to make some adjustments, but overall, it's been seen as a sign of relief for the company.
Yes, certainly Google investors or Alphabet investors are pretty happy with this outcome. The stock is up about 7% in late trading, and it seemed like Google was spared of some of the worst penalties, such as a potential breakup, having to sell the Chrome browser, or also having its Apple search deal unwound, which essentially, perhaps surprisingly, stayed intact through this ruling.
Yeah, Google seemed to have some misgivings after the judgment came down, however. What did they have to say?
Yeah, I mean, they're still appealing this, and I think that they, ultimately, this is all based on the premise that they're monopoly and that they have abused that monopoly, and obviously they take issue with that. I think the sharing of data presents potential privacy issues in their mind, and even if these remedies weren't necessarily as severe as what people had expected, they're not something that Google embraces.
Yes, so we saw stocks rising after hours. Apple stocks rising as well. So there was some good news for Apple in this ruling as well.
Yeah, I mean, the Apple one is interesting. I think a lot of people thought that the government was going to force Google and Apple to break up their partnership. Now, this is the partnership that that Apple essentially makes Google the default on its devices and for the Safari browser and other things. And it can still do that, but go ahead.
All right, Bloomberg Tech Senior Editor Nick Turner there in San Francisco. Just wanted to interrupt, Nick, there to take you back to Tiananmen Square because, of course, you see Vladimir Putin, the Russian leader, arriving for this parade to mark the victory in World War II 80 years ago. So Vladimir Putin now arriving to round out this collection of world leaders. Earlier we saw Kim Jong-un arrive, Indonesian President Prabowo Subianto arriving a short time ago as well. Prabowo was, of course, unable to attend the Shanghai Cooperation Organization summit a little bit earlier, but his attendance today signals, well, perhaps some of those domestic issues back in Indonesia coming under control. So with the leadership and the guests almost assembled, we do anticipate that parade will be getting underway very soon. So we'll be keeping an eye out for not only what military hardware China is able to display, but for any new faces or faces that are missing in the crowd in terms of China's military leadership following Xi Jinping's purge. More ahead on the Asia Trade. This is Bloomberg. Let's briefly take you back to the Forbidden City in Beijing. There you see the Chinese Premier Xi Jinping greeting the world leaders that have gathered for this military parade in honor of 80 years since victory in World War II. So there you have the world leaders arriving there. The parade itself will be shortly getting you underway. We'll bring you pictures of that as it happens. Some other news that's happened in the last few moments. Gold, yep, it's another fresh record right now, $3,536 an ounce. That is, in fact, off the high that we hit a few moments ago, where it did briefly break above 3,545. So gold on a tear at the moment, up about 30% this year. UBS sees gold pushing higher as well in coming quarters. Bets on U.S. rate cuts pretty much fueling this rally. Silver also performing very strongly, outperforming gold, in fact. So you've got the gold price at a fresh record. Aussie gold miners doing very well today as well. I want to take a quick look at cryptocurrencies also. Some of the cryptocurrencies have been struggling a little. They're ticking up a little bit now. Bitcoin higher, back above 111,000, though it's well off that $124,000 peak, though perhaps underscoring the volatility of this asset. The big catalyst for both gold and cryptocurrencies going to be coming later on this week when we get a number of readouts on jobs data in the US. April.
Yeah, those Fed rate cut bets potentially fueling further gains for cryptos. And it's not too shabby, their performance so far this year, even though they've pulled back from the highs we saw in the middle of last month, underpinned by ETFs, friendly crypto legislation. I'm here at the Goldman Sachs Asia Leaders Conference in Hong Kong. And let's bring in our next guest. He is Mike Novogratz, CEO at Galaxy Digital. Mike, great to see you.
Thank you.
So we're talking about crypto prices, and I'll pick your brains in a bit. But let's talk about the crypto legislation that you've seen in the U.S. It's been increasingly friendly. How do you think Trump so far has delivered on making the U.S. the Bitcoin capital of the world?
Listen, so far it's been a 10 out of 10. the old administration really was everything they could do to be anti-crypto. And we've gone 180 degrees. And so we've already got one piece of legislation called the Genius Act, which gives us a framework around stable coins, which is really important. There's one more big piece that needs to happen. It's called Market Structure Bill, and hopefully that happens either in the fourth quarter or early next year. But just as importantly, all the regulatory agencies, the SEC, the CFTC, FinCEN, the Federal Reserve, have all taken a very friendly posture to crypto. And so the U.S. went from way behind in crypto friendliness and crypto legislation to now the world leader. And because it's still the biggest economy, pretty much everyone's going to have to match what the U.S. is doing. And so it's crazy how fast that shift happened, but it's created a tremendous amount of enthusiasm, not just from retail, which traditionally is what fuels crypto prices, but from institutions. So Galaxy, our company, tries to sit in between institutions and the crypto community, and every big institution is reaching out to us. The fact that I'm here at the Goldman Sachs conference for financial leaders to talk about crypto tells you something, right? And so
Goldman are among the institutions that have been engaged with you.
Every single institution is trying to figure out what their role in as the world tokenizes and digitalizes. The SEC chairman made a speech about 2 weeks ago, which was stunningly important, where he said he thinks every financial market should move on chain. Like, that was such a radical thought that Gary Gensler would say that would have been a 0 out of 100 chance. And so it's going to take a long time for all financial markets to move on chain, but that's the direction things are happening. And so that's why you now, if you're a board of directors of a major company, you have to have a view on crypto. Right, before you can just ignore it, it's a small little crazy thing.
It's a big change. We're here in Hong Kong. I wanted to get your thoughts on the prospects for an offshore yuan-backed stable coins. How are you assessing that? What is your sense of how much demand we could see from that?
So far, almost all usage of stable coins have been in dollars, and they've been for liquidity in crypto markets, right? So if I want to buy one crypto, and you're always doing it against the stable coin, and some for payments, remittances. In the not so distant future, the biggest user of stable coins is going to be AI. You're going to pick up your phone and say, buy my groceries. And your grocery agent, who knows what you like to eat, knows that you're on a diet or not on a diet, is going to figure out what groceries to buy from where, and they're not going to send a wire instruction or a Venmo. They're going to send a digital currency over a crypto rail.
Right.
And so sometime in the near distant future, I don't know if it's 1 year or 5 years, you're going to see an explosion of stablecoin transactions. And at that point, the Euro stablecoin, Galaxy has done a Euro stablecoin with partners that just getting started.
So you think offshore yuan back is just a matter of time?
Just a matter of time.
And how much potential demand-wise do you think could be unlocked there?
Listen, we have an unfortunate Cold War between the U.S. and China, right? That the battle line now is be around AI, but also around currency strength. So you're going to see the U.S. currency is weakening right now, and cyclically it's weakening. But the government wants dollarization in other places. So you're going to see the government push other countries to try to dollarize. And I think you're going to see China do the same thing. And we'll see whoever has a better economic policy in the long run will have a more stable currency. But I don't think it's a fait accompli that the dollar will always be the only dominant currency.
Talk to us about deal making in the industry. We reported recently on the Solana Treasury that your company, along with Jump and Multicoin, might be exploring. Is that something you're going to be able to confirm? What's the thinking behind that?
Yeah, unfortunately, the SEC doesn't allow us to speak of things when you're discussing it. So I can't talk about that today. What I can tell you is the whole treasury company movement, which has brought lots of activity into crypto. A lot of the reason prices of Ethereum are higher is because of these two treasury companies, SBET and BNMR. I was a little bit skeptical that they would work so well and they've worked unbelievably well. And it tells you there's still so many more people that are comfortable buying an equity than a crypto outright. And so it's like the aperture of people.
You've warned previously, though, on these treasury plays that they may have peaked. Has that thinking changed now?
I think in the long run, you're going to have to provide a lot of value added to keep a premium over the underlying coin, right? And so when some of these would trade 5 times the NAV of the coin, you really have to believe you're with a special team. I think you're going to see most of them trade closer to NAV of the coin. And then they'll be like closed-end funds. Fine businesses, the ones that are better run will attract more capital. The ones that aren't will trade at a discount and probably be swallowed up.
Okay, one last question for you before we have to let you go. Bitcoin, Ethereum, where do you see it at the end of the year? Because you are more positive on Ethereum than Bitcoin, right?
Listen, it comes and goes, right? I think the markets are really challenging right now to predict. The equity markets are as high as they've been, right? And there's tremendous bullish enthusiasm. And so you could see a correction there.
So maybe not 150 on Bitcoin?
It's going to be either or. If we take off, if Ethereum can break through 5,000, it will be much higher.
Do you think it's going to be this year?
If it's not this year, it'll be next year. I think there's a shot. Most likely it's this year, because what normally happens is because of hedge fund economics, because of enthusiasm, when you've had a fast horse, it runs fastest the last 2 months of the year.
We'll see how that all pans out. Mike, great to chat with you. Thank you so much. Mike Novogratz, CEO at Galaxy Digital. Paul.
All right, Avril there in Hong Kong at the Goldman Sachs Asia Leaders Conference. You're seeing live pictures there of the foreign dignitaries at the Forbidden City greeting presumably war veterans there. It is the 80-year anniversary of the victory over the Axis forces in World War II. So the leaders now in position. The parade will be shortly beginning. You saw Kim Jong-un there. Fun fact for you, Kim Jong-un's appearance. First time a North Korean leader has attended a Chinese military parade since 1959. And way back then, it was his grandfather, Kim Il-sung, attending, along with the former Soviet leader, Nikita Khrushchev. So Kim Jong-un, Vladimir Putin flanking Xi Jinping there as they take their positions for the start of this military parade. We'll bring you more pictures as we get them from Beijing and more ahead on the Asia Trade. This is Bloomberg. Here's some tech stories that we're tracking. Apple shares slipped after it was revealed that its lead AI researcher for robotics has left to join Meta as part of a wave of departures hitting the iPhone maker. Sources say 3 more members of Apple's large language models team are also leaving. 2 of them are going to OpenAI and another one's going to Anthropic. The exits follow the loss of the group's chief and raise fresh questions about Apple's AI strategy. AI unicorn Anthropic, meanwhile, has closed a $13 billion funding round. That nearly triples its valuation to $183 billion and makes it one of the world's most valuable startups. The deal was led by Iconic Capital, with participation from Fidelity, Lightspeed, Singapore's GIC, and Insight Partners. Anthropic says it will use the funds to meet enterprise demand, expand globally, and advance AI safety research as competition with OpenAI and Google intensifies. And OpenAI has agreed to acquire product testing startup StatSig for $1.1 billion in stock, one of its biggest acquisitions to date. StatSig CEO Vijay Raji will join OpenAI as Chief Technology Officer of Applications, helping developers build safe AI products. The Seattle-based startup, used by firms including Eventbrite and SoundCloud, will continue operating independently after the deal, which is pending regulatory approval. Alphabet shares surged after the bell following a US judge's ruling that Google won't have to sell Chrome but must share some search data with rivals. The judge also banned Google from exclusive search deals but also allowed it to continue making payments to third parties. Google says it's reviewing the decision and flagged privacy concerns over the antitrust ruling. Well, the US has revoked TSMC's waiver to freely ship essential equipment to its key chip-making base in China, and that move mirrors actions taken against Chinese facilities operated by Samsung and SK Hynix. Bloomberg's senior executive editor for global tech, Tom Giles, has been tracking this. Tom, what more do we know?
Yeah, this isn't just another example of the ways that the U.S. government under Trump is really trying to make it really difficult for China to get the chips that it needs. And in the U.S.'s view, this is about national security. This is about making it hard for China to use advanced chips to develop things that could be a threat to U.S. national security, like in its military. You've been showing footage all morning of the big military parade there, and I think that just underscores what the U.S. is trying to achieve. And this shows the lengths to which the U.S. will go in order to hamstring China and its abilities. This time, it's targeting a manufacturing facility in Nanjing that's run by TSMC, the leading maker of advanced chips, the world's leading maker of these advanced chips. And specifically what it's doing is it's basically saying that if you are a supplier of the machines that TSMC needs to manufacture chips, you're going to have to jump through an extra set of hoops in order to sell your products to TSMC if, one, they contain U.S. components, which many of them do, and two, if it's destined for this facility in Nanjing. Never mind that these are not the most advanced chips. Never mind that this only accounts for 3% of TSMC's overall production, right? It's about sending a signal that the U.S. is going to continue to take steps to make it harder for them to get these products, even when it means we're going to interfere in the operations of companies like ASML or Tokyo Electron that have nothing, that are not based in the U.S. That's exactly what the U.S. has been engaged in for many, many years now, and that is getting companies in U.S. allied countries like Japan, like the Netherlands, to come alongside and help make life harder for Chinese chip makers.
How much harder is this going to make life for companies up and down the supply chain as you alluded to what we're seeing from ASML and Tokyo Electron?
Yep. It's not going to make it impossible, but it is an extra set of requirements that they're going to have to meet, seeking permission. It means that U.S. bureaucrats are going to be looking at these proposals, making determinations and saying, well, you want to buy this $383 million machine that ASML sells? That machine has U.S. components in it. I'm using that as just one example. And we're going to make that determination of whether we think that that's okay or not okay. What it could mean for the supply chain is longer delays. We saw during the pandemic that if you disrupt the supply chain, if you slow it down, that can throw a lot of production into disarray of a whole host of products. And it's another headache. It's another hoop that these suppliers are going to have to jump through. And it's not just Netherlands and Japan, right? These are some big U.S. manufacturers of semiconductor equipment, like AMAT, like KLA. So it's not just foreign companies, it's U.S. companies as well that the U.S. is going to make life complicated for in the coming months and years.
As you say, the U.S. showing that it will not hesitate to go through these great lengths to make things difficult for China. Our global tech executive editor for Bloomberg, Tom Giles, for us. Great to get your insights. Thanks so much. Now, of course, we'll also be watching TSMC when Taiwan opens in a few minutes, and keep an eye on Chinese chip stocks as well amid U.S. pressure to squeeze chip makers' access to China. In the meantime, shares of Chinese fighter jet makers, robotics companies, and other defense-related firms are in the spotlight amid this major military parade in Beijing. Our Asia equities reporter, Winnie Su, joins us for more on this. So, Winnie, we are seeing, along with this ceremony underway, that stocks are rising along with it. What is the focus here?
Yeah, so really all eyes on the parade right now, and investors will be watching closely the equipment upgrades and new technologies. But as you mentioned, we've seen that CSI Defense Index up about 22% so far this year, really outperforming the broader CSI 300 index that was only up 14%. So a lot of excitement has been building up, and from history, we've learned that usually these stocks rise ahead of the military parade. Lots of expectations here. However, when we look at what happened in 2015, we still have to have a bit of a caution here, because usually stocks tend to fall after the parade because of the lack of catalysts and also because expectations are built in. However, the key sectors people are still watching here, jets we mentioned because of how it was highlighted during the India and Pakistan conflict, but also drones, for example, missiles, and also some of the other areas like AI and robotics. So people would really want to see how the artificial intelligence is going to be integrated in, for example, how to simulate the battles and how robotics are really going to come into play. And these are stocks that have been really outperforming and have been doing really well so far this year.
Yeah, there's been a lot of enthusiasm more generally around Chinese equities, to the point that we've got Chinese investors now borrowing record amounts of cash to buy local stocks. What could possibly go wrong?
Right. So actually, like you mentioned, the retail sentiment is still very strong. However, when you look at just what happened yesterday in the session, stocks was down about 0.7%. So we are starting to see a bit of a profit.
ये नेचुरल गैस में ध्यान रखना, ये मैं पहले ही बता चुका हूँ, मार्केट वैसे ही साइडवेज है, मोमेंटम ही नहीं आ रहा है। ये ऑलरेडी काफ़ी डीप लेवल से बाइंग करके गया है, यहाँ पे कंटिन्यूसली ओपन इक्वल टू हाई बना रहे थे सेलर। ये कैंडल भी वापस ओपन इक्वल टू हाई है, यहाँ से वापस ओपन इक्वल टू हाई, ओपन इक्वल टू हाई, ये भी ओपन इक्वल टू हाई थी, ये भी ओपन इक्वल टू हाई थी। तो डीप लेवल से बाइंग करके गया है, बाइंग जाना है तो यहीं से निकल जाना चाहिए। थोड़ा सा रिस्की ट्रेड है, रीज़न वही है, वॉल्यूम नहीं है, नहीं तो अभी तक तो ये बहुत पहले ही टारगेट दे चुका होता। तो अगर इसी तरह से ये यहीं पर घूमता रहा तो फिर ब्रेक डाउन हो जाएगा इजीली। तो निकलना है तो निकल जाना चाहिए। अब ऑलरेडी काफ़ी डीप लेवल से बाइंग आई है, सुपरफिशियल अपर लेवल से ही खाली बाइंग आई होती, अबव 263 264, तो भी फिर भी चांसेस था कि एक नीचे जंप कर सकता है, और ऑलरेडी काफ़ी नीचे डंप करके आया है। तो अगर अब नहीं निकलता है टिल 330 तो फिर प्रॉब्लम क्रिएट कर देगा बायर्स के लिए। ठीक है, जाना तो चाहिए इसको ऊपर, रेजिस्टेंस काफ़ी ऊपर है बट वॉल्यूम ही नहीं है, रेंज के अंदर फंसा हुआ है। ये देखो, ये कैंडल भी ओपन इक्वल टू हाई बनी है फिर से। इवन दो ऊपर कोई ऐसा रेजिस्टेंस है नहीं यहाँ पे, स्टिल मार्केट होल्डिंग दिस लेवल, क्योंकि अगर ये नीचे गिरता है और नया सपोर्ट नहीं क्रिएट होता है तो फिर वही 250 ऐसा मैंने बताया, दैट वन इज द नेक्स्ट सपोर्ट जोन, जो एक टेस्ट होना पेंडिंग है अभी भी। तो लेट्स सी पहले सपोर्ट टेस्ट करने जाता है वापस से, या फिर ऊपर का एक रेजिस्टेंस और है वो टेस्ट करने जाता है, वो भी नहीं किया इसने अभी टेस्ट। लेवल अब पेंडिंग है हमारे पास, जो टेस्ट होने पेंडिंग है 270, 172 और नीचे 250, 247। बायर भी एक लिमिट तक ही रोकेंगे लेवल पे, ज़्यादा देर रोकेंगे नहीं अगर मोमेंटम नहीं आता है तो, स्पेशली जब कैंडल ही ओपन इक्वल टू हाई बन जा रही है बार बार। अगेन लुक एट दिस कैंडल, दिस इज आल्सो अगेन ओपन इक्वल टू हाई। बायर भी चाह रहे हैं कि पहले बाइंग में ही जाए नीचे। का ध्यान रखना, एसएल जाएगा तो होल्ड मत करके बैठना, निकल जाना। छोटा सा एसएल है 1.5 का। थोड़ा सा मार्केट मोमेंटम में होता तो ठीक था, चला जाना चाहिए था। मोमेंटम नहीं आ रहा, इस वजह से रेंज बना दी है। 30 मिनट में देखोगे या 1 मिनट में देखोगे तो और क्लियरिटी मिलेगी वहाँ पे। कंप्लीटली रेंज बाउंड। क्वांटिटी में मत बैठना, कम ही क्वांटिटी रखना, ठीक है, इन नेचुरल गैस। बाकी देखते हैं, अगर नहीं आया मोमेंटम तो आफ्टर 3:30 और 5:30 पीएम, क्योंकि आज इन्वेंट्री भी नहीं है क्रूड ऑयल की, एक तो दोनों इन्वेंट्री कल शिफ्ट कर दी है। सिर्फ एक ही डेटा है जॉब ओपनिंग का एट 7:30। क्रूड ऑयल थोड़ा सा और ऊपर आ जाता है तो देखते हैं, ये भी रेंज के अंदर ही है, 5810 to 20 के बीच में, क्योंकि इसका नीचे का लेवल भी, ये जो नीचे वाला है 5700 टू 680 मल्टीपल टाइम टेस्ट हो गया। कल भी टेस्ट हुआ था, परसों भी टेस्ट हो गया था, तो नीचे आया तो ब्रेक डाउन भी हो जाएगा इजीली इसमें भी। स्टिल फर्स्ट 15 मिनट की कैंडल के अंदर ही है मार्केट क्रूड क्रूड ऑयल में। ऑयल में क्या करें, उसमें भी कुछ नहीं हो रहा, साइडवेज है। थोड़ा ऊपर आता तो सेल करते, एग्जैक्टली लेवल पे भी नहीं आ रहा। sideways हैं completely crude and natural gas. जैसा मॉर्निंग पे निफ्टी फ्यूचर में हो रहा था वैसा ही हो रहा है. अभी तो थोड़ा बहुत बाइंग आ गई है बट मॉर्निंग पे कंप्लीटली ओपनिंग के बाद 15 मिनट के मार्क के अंदर ही था प्राइस. 15 मिनट टाइम फ्रेम पे निफ्टी फ्यूचर सेम लाइक मोमेंटम इन क्रूड 15 मिनट के बाहर ही नहीं निकल रहा है. निफ्टी में मॉर्निंग पे जब ओपन हुआ था कैंडल फ्लैट ही ओपन हुई थी. पहली कैंडल में बाइंग आई फिर सेलिंग आई फिर वो घूमता रह गया. थोड़ी देर पहले ब्रेकआउट हुआ प्रॉपरली 12 12:30 के आसपास फिर थोड़ा एक मोमेंटम है.
News when you want it with Bloomberg News Now. I'm Nathan Hager.
And I'm Karen Moscow.
Karen, we begin this morning in China, where President Xi Jinping is asserting his country's power and growing influence with a once-a-decade military parade. The event marks the first public appearance among Xi, Russian President Vladimir Putin, and North Korea's Kim Jong-un. Speaking through an interpreter, President Xi said China aims to stand self-reliant and that his country remains unshaken by threats.
The Chinese nation is the great nation that is never intimidated by any bullies and always values independence and forges ahead. In the past, when faced with critical struggles between good and evil, light and darkness, progress and reaction, the Chinese people rallied together to defy the enemy.
Chinese President Xi Jinping spoke through an interpreter there after Russia's energy giant Gazprom said it signed a legally binding agreement to build a major gas pipeline to China through Mongolia.
On social media, Nathan, President Trump is responding to China's military demonstration, writing, quote, "Please give my warmest regards to Vladimir Putin and Kim Jong-un as you conspire against the United States of America." The president did not elaborate on his accusation. President Trump recently told reporters in the Oval Office that the parade did not pose a threat to the U.S. power and publicly expressed confidence China would not aim its military at the U.S. But Bloomberg's Stephen Engel is in Beijing and says the message from China is clear.
This is the 80th anniversary of the victory in World War II, that China really wants to tell the West that, yes, China contributed to that victory over the Japanese as well as the Nazis in Europe to probably a lesser extent. But again, it's also a great chance for China to roll out its latest modern weaponry.
Bloomberg's Stephen Engel is reporting from Tiananmen Square, where the parade took place.
Well, back here in the U.S., Karen, the focus is on tariffs. President Trump says he's going to ask the Supreme Court for an expedited ruling to overturn a federal court decision that many of his tariffs were illegally imposed. The president says it's essential to keep his trade policy intact, saying it would be a devastation for our country, in his words, if the appeals court rulings left in place. The U.S. Court of Appeals for the Federal Circuit ruled President Trump wrong.
Look at the crude oil. कुछ न्यूज़ डेफिनेटली आई है क्रूड ऑयल में. Look at the candle. Open equal to high and then fall. Heavy fall. Don't know what is the news. But definitely कुछ तो bigger news है. जब तक पता चलेगा तब तक मोमेंटम हो चुका होगा. Let's see, देखते हैं. यहाँ पर एक सपोर्ट है but open equal to high है. डायरेक्टली बाय नहीं कर पाएंगे. Wow. OPEC Plus to consider further oil output hike on Sunday. Major news. OPEC Plus कंट्री ने फिर से कंसिडर किया है आउटपुट हाइक. क्या चाह रहे हैं कि प्राइस को और गिराना चाह रहे हैं क्या? ठीक है, OPEC Plus की न्यूज़ है. क्रूड ऑयल पे एक मेजर इम्पैक्ट. OPEC Plus will consider further raising oil production at a meeting on Sunday. Two sources familiar with the discussion said as the group seeks to regain markets here. Another boost would means that OPEC Plus, which pumps about half of the world oil, would be starting to unwind a second layer of output cuts of about 1.65 million barrel per day. Wow. 1.6% of the world demand, more than a year ahead of a schedule. 8 OPEC Plus countries are due to hold an online meeting to decide output for October on Sunday. There is also chance some analysts and an OPEC Plus sources said that OPEC Plus could pause the increase for October. Final decision had not been made, the OPEC Plus sources. OPEC Plus की ओर से मेजर न्यूज़. ठीक है, नेगेटिव न्यूज़ है क्रूड के लिए तो वैसे. हाँ, न्यूज़ है, बताया मैंने. ओपेक प्लस ने कंसिडर किया फर्दर आउटपुट हाइक करने के लिए अक्टूबर मंथ के लिए. दैट इज़ अ कम्प्लीटली नेगेटिव न्यूज़. नीचे सपोर्ट है ज़रूर. लेट्स सी इसको ब्रेक कर पाता है या फिर नहीं, क्योंकि कैंडल तो ओपन इक्वल टू हाई बनी है. ये सपोर्ट भी है यहाँ पर. सपोर्ट होल्ड कर रहा है, इवन दो न्यूज़ काफ़ी नेगेटिव है बट फिर भी सपोर्ट होल्ड कर रहा है। एक बार ये कैंडल अगर यहीं पर क्लोज जाती है ना लेवल के ऊपर, तो फिर नेक्स्ट कैंडल पे बाई कर लेंगे। अगर नेक्स्ट कैंडल ओपन इक्वल टू हाई नहीं बनती है तो बाई चांस ये क्लोज होते होते लेवल के नीचे क्लोज हो गया तो फिर तो नहीं करेंगे। लग रहा है न्यूज़ का ही वेट कर रहा था मार्केट, तभी इतने देर से साइडवेज है। बाकी अगर ये सपोर्ट ब्रेक हो जाता है इन केस, फाइव 5,570 की ओर आएगा शायद, वो भी एक बार टेस्ट हो गया है। अभी भी स्ट्रांग है शायद। ना, ना, ना। क्या वो क्रूड ऑयल में बताया तो सी, क्रूड ऑयल में न्यूज आई है। देयर इज अ न्यूज इन क्रूड ऑयल, सडन जो जंप डाउन साइड की ओर हुआ है। ले नहीं पाए एंट्री, कोई बात नहीं। अब ऐसी सडनली न्यूज आ जाएगी तो कौन पकड़ सकता है। नो बडी कैन प्रिडिक्ट दैट काइंड ऑफ न्यूज़। ये न्यूज़ भी ऐसा नहीं है अभी आई है जस्ट, ये न्यूज़ पुरानी है बट सोर्सेस के थ्रू अभी निकली है। तो जैसे ही मार्केट को पता चला, मार्केट ने रिएक्शन दे दिया। ओपेक प्लस की न्यूज़ थी, बता दिया मैंने, मैं शेयर किया हुआ है। ओपेक प्लस कंट्रीज़ ने ऑयल आउटपुट जो है वो हाइक करने का डिसीजन लिया है फॉर अक्टूबर मंथ, और ये मीटिंग उनकी संडे को हो चुकी है। बताओ, संडे को होगी या होने वाली है। ओपेक प्लस विल कंसिडर फर्दर रेजिंग ऑयल प्रोडक्शन एट अ मीटिंग ऑन संडे। तो एक जस्ट न्यूज़ ने मार्केट को हिला दिया, बताओ, पूरा पूरा। ठीक है, देखते हैं ये सपोर्ट पे अगर होल्ड करेगा तो यहीं से बाई करेंगे, नहीं तो फिर नीचे वाले सपोर्ट का वेट करेंगे क्रूड में। टेस्ट ये ना, उसको ऐसे भी होल्ड कर सकते हैं। दोनों में आता है होल्ड पुट ऑप्शन और एग्जिट नाउ। मुझे पता नहीं सर आपने कहाँ एंट्री ली है, क्योंकि एंट्री मेरे अकॉर्डिंग बनी नहीं है। तो अगर आपने कहीं ऊपर से एंट्री बना रखी थी, प्रॉफिट हो चुका है, ट्रेल करना चाह रहे हो तो इस कैंडल के क्लोजिंग का वेट कर सकते हो। इफ दिस कैंडल क्लोज बिलो 5682 और डाउन जाने की पॉसिबिलिटी रहेगी। इफ दिस कैंडल क्लोज्ड above 5711, exit with full profit. Okay. सेल एंट्री ले लें क्या यहाँ पर? नहीं है एंट्री भाई, वहाँ पे बीच में एंट्री नहीं होती। Because next major support area is 5580 approximately, and एक रीटेस्ट था वो कर चुका है ऑलरेडी प्राइस, तो फिर से रीटेस्ट पे रुकेगा, चांसेस थोड़े कम ही हैं। नीचे ही आ जाए तो बेटर है अब क्रूड। रीटेस्ट भी कर चुका है प्राइस, लेट्स सी फिर से रीटेस्ट करता है क्या 5650 को। दो बार रीटेस्ट कर दिया इसने इस लेवल को। हाँ, बाकी नेचुरल गैस मोमेंटम में ही नहीं है। टू एंट्री एट 57805 पे कर रखी है तो फिर तो बढ़िया है। एग्जैक्टली 5780 पे कर रखी है, बताओ इतना एक्यूरेट कैसे एंट्री ले ली, बताओ यार भाई, सुपर एक्यूरेट एंट्री। मुझे तो लग रहा है एग्जैक्टली हाई 5780 का बनाया था क्या इसने, 5784 का हाई बनाया था। एग्जैक्टली ही एंट्री ली है आपने, बताओ सुपर एक्यूरेट एंट्री बोल सकते हैं इसको। इससे एक्यूरेट और एंट्री क्या हो सकती है। करते रहो, अगर नीचे ब्रेक कर देता तो और जाएगा नीचे। लाइक भी करते रहो गाइस, इंडियन मार्केट भी क्लोज होने वाला है। वो फ्यूचर में वाओ, इलेक्ट्रिसिटी मार्केट कल डबल सर्किट लगा था डाउन साइड पे, आज ऑलरेडी पूरा रिवर्स कर गया। देखते हैं नीचे और आता है थोड़ा। नीचे एक रीटेस्ट है, सपोर्ट तो काफ़ी दूर है। खैर एक रीटेस्ट है, उसने पहले ऑलरेडी किया हुआ है उस रीटेस्ट को डन एक बार, या फिर यहीं से बाई करें। वहाँ पर लिक्विडिटी ऑलरेडी है ना। तो रिटेस्ट से ऑलरेडी मार्केट ने एक हायर हाई बनाया है, तो थर्ड टाइम आएगा तो एक फिर से लोअर हाई बनने के चांसेस है, बनाना ही पड़ेगा अगर डाउन साइड पे कंटिन्यू फॉल करना है। लास्ट कैंडल को देखोगे ओपन इक्वल टू हाई थी, ऑलरेडी लेवल के नीचे क्लोज है, तो डायरेक्ट बाइंग तो यहाँ पर बन नहीं सकती क्रूड में। लेट्स सी ये रीटेस्ट पे जाता है क्या, अगर क्योंकि अगर बाइंग होनी है तो लेवल के ऊपर रिकवर करना पड़ेगा, या फिर थोड़ा नीचे आ जाए एक बार और रीटेस्ट करने थर्ड टाइम। ठीक है, वैसे इसका एग्जैक्ट सपोर्ट देखोगे तो वो नीचे 5000 के आसपास यहाँ कहीं है, बट बीच में एक रीटेस्ट भी है, दो बार कर चुका है रीटेस्ट वैसे, बट रीटेस्ट में भी एक बार हाई बनाया था, दूसरी बार हायर हाई बनाया था, ये तीसरी बार है। न्यूज़ काफ़ी ज़्यादा बेरिश है ओपेक प्लस की। में अगर कोई नया रेजिस्टेंस ना बने तो बेटर है, क्योंकि फिर पूरा ऊपर स्पेस ओपन हो जाएगा। ऊपर तक कोई रेजिस्टेंस नहीं है, बीच में कहीं नया रेजिस्टेंस बना दिया तो फिर ज़्यादा बाइंग आएगी नहीं। कल नहीं, कल तो न्यूज़ नहीं थी, कल वाला फॉल तो नॉर्मल था, वो जो बात सेलिंग में किया था यहाँ पर परफेक्ट वाला, ये नॉर्मल थी, यहाँ पर कोई न्यूज़ नहीं आई थी। न्यूज़ अभी आई है। न्यूज़ कभी आया तो कैंडल देख लो, ओपन इक्वल टू हाई बन रही है ना कहीं पर कैंडल तो, या फिर ओपन इक्वल टू लो, डेफिनेटली कोई ना कोई न्यूज़ जरूर होती है, तभी उस तरह की कैंडल बनती है। नॉट ऑलवेज बट मोस्ट ऑफ द टाइम। 7 मिनट लेफ्ट इंडियन मार्केट फ्यूचर में। चल इसका ध्यान रखना गाइस, ट्रेड का बहुत देर से रुका हुआ है सपोर्ट पे, निकल जाना चाहिए था अभी तक। बार बार कह रहा हूँ 330 तक मोमेंटम नहीं आया तो फिर तो मोमेंटम आना और मुश्किल हो जाता है, वॉल्यूम डाउन चला जाता है। लंदन सेशन का वॉल्यूम भी 1230 से 330 तक ही रहता है मैक्सिमम, फिर अभी 530 से इंक्रीज होगा। हाँ ये है परफेक्ट, बस एसएल का ध्यान रखना, जाएगा तो होल्ड मत करके बैठना, इतनी देर लगाएगा नहीं, क्योंकि काफ़ी डीप लेवल से बाइंग आ चुकी है ऑलरेडी नेचुरल गैस में। वाह, अगेन ओपन इक्वल टू हाई कैंडल. लुक एट द नेचुरल गैस, फिर से ओपन इक्वल टू हाई बन गई. इंडियन मार्केट क्लोज, नाउ मोमेंटम स्टार्ट. कैंडल ना हो तो इसमें ठीक है 5630 के आसपास है ये बाइंग इन क्रूड थोड़ा सा नीचे और आना चाहिए इसको ठीक है 5620 से 5630 5620 टू 30 के बीच में याद रखना यहाँ पे ऑलरेडी एक बार रीटेस्ट कर चुका है प्राइस 2 बार सॉरी तीसरी बार कर रहा है यहाँ पे हाँ। बाकी देखो अगर नेचुरल गैस में ये कैंडल भी ओपन इक्वल टू हाई में बनी रहती है और ये नहीं जाता है ऊपर तो फिर यहाँ पर रुकना पड़ा इस क्रिएट कर देगा ठीक है तो अगर नेक्स्ट कैंडल देखते हैं अगर ये नहीं आती है ऊपर वापस अबव 263.4 तो समझ जाना पूरा कंसोलिडेशन है नाउ वेटिंग ऑन दिस लेवल इज टू रिस्की क्योंकि फिर दोनों साइड मूव कर सकता है नॉर्मली इतना नहीं रुकना चाहिए प्राइस को बुक 915 पुट साइड ग्रेट 6 मिनट ठीक है 5630 से 620 के बीच में ज़्यादा नहीं साइड वाइज हो गया लगता है मिनट लेफ्ट, अगर ये नहीं आया वापस नेचुरल गैस लेवल के ऊपर निकल जाएंगे स्ट्रेट से। काफ़ी देर से रुका हुआ है, रेंज ब्रेक करने का ही वेट करेंगे। फिर इतने देर से सपोर्ट पे बैठा हुआ है, मोमेंटम अब जरूर करेगा। ऐसा ना हो 330 से 530 पूरा साइडवेज चला जाए। कल वाले में है चले हो रहे हो तो। ओके देखो हो गई कैंडल क्लोज, नेचुरल गैस में नहीं आया वापस। स्ट्रेट से निकल जाओ, काफ़ी देर हो गई है। ये कैंडल फिर से ओपन इक्वल टू हाई बन रही है, एग्जिट कर लेना स्ट्रेट से। अब जाएगा तो जाएगा, एक रेंज को ब्रेक होने दो, किसी एक साइड पे निकलने दो, फिर देखते हैं। इतने देर रुकना नहीं शेयर प्राइस, ठीक है। स्ट्रेट से निकल जाना, कॉस्ट टू कॉस्ट पर ही है। 1 आवर में भी साइडवेज है, 30 मिनट में। कोई न्यूज़ तो नहीं है इसमें, तो वैसे भी साइडवेज है। 12:30 के बाद से अनमूव करें। Google not requiring sell Chrome to code trolling.
Why you see such an instant stock reaction, because the judge was quite vocal about how Google had created a monopoly because of all the assets, and Chrome was one of the most prominent assets that the judge focused on. So clearly in this case, the fact that the ruling says that they don't have to divest Chrome, it's positive news. And look, all the exclusive arrangements with Apple and for their operating system, I think that was expected remedy. Really, I mean, it kind of allows Apple to pick the partner they want. There won't be an exclusive arrangement. But look, from an Apple perspective, they can still say Google has the best LLM and, they want to do business. So from that perspective, that's why Apple is up too. So, this sort of clears all the uncertainty for both the companies.
Look, I'm going to ask a crazy question here. Do we care about search the way that we used to care about search, in the sense of typing something into Google, or increasingly do we care more about which LLM people choose?
Well, so the search market has definitely expanded because of generative AI. So think of how Google had a 90% plus share. I'm sure if this lawsuit came to the scene and the hearing was happening now, the judge would say Google doesn't have 90% plus share, because ChatGPT has got 1 billion monthly active users. It's got the query volume, not comparable to Google, but almost, 1/3 of Google. And so that search market is not the same.
का व्यू थोड़ा बहुत नेगेटिव हुआ है न्यूज़ की वजह से, नीचे एक रीटेस्ट है अभी फ़िलहाल के लिए। टाइम फ्रेम बता दो, सिल्वर में किस टाइम फ्रेम पे पूछ रहे हो? एनएमसीएक्स पूछ रहे हो या फिर फॉरेक्स, वही बता दो। नेचुरल गैस तो सुपर साइडवेज है।
Because everyone knows if you take out Chrome from Google, even if Google has their own chips and they have got their, own LLM, without a browser, the advantage just goes away. So divesting Chrome would have been a big, big blow. And, that's why the combined entity owning Chrome and owning all the other assets that Google has is such a big advantage when it comes to generative AI.
Why are we getting, though, this ruling? And I guess I'm just bringing up in a world where we have a White House that I think it's fair to say is transactional, and we have seen various tech executives make their way to the White House. Is there something that was going on behind the scenes of, I don't know, that caught the attention? I don't know. What are you hearing? And
I mean, there are obviously lobbies for these companies. It's not a surprise regardless of the administration. But look, in this case, clearly, as you said,
कहते हैं एमसीएक्स में आर्ली टाइम फ्रेम पे सिल्वर को क्या चल रहा है? सिल्वर में तो वॉल्यूम ही नहीं दिख रहा। एमसीएक्स में पूछ रहे हो ना पक्का? बिकॉज वॉल्यूम बहुत ही डाउन है। ये मुझे दिखाई दे रहा है डाउन। देखो, इसका फॉरेक्स का चार्ट यूज़ कर लो, बिकॉज एमसीएक्स में ऑल टाइम हाई पे है, वहाँ पर कुछ लेवल है भी नहीं बनाने के लिए। एंड वॉल्यूम भी नहीं है वहाँ पर एमसीएक्स में, तो जितना मुझे दिख रहा है 15 मिनट में देयर इज नो वॉल्यूम। मॉर्निंग से ओपन होके साइडवेज ही चल रहा है। सुबह 9 बजे ओपन हुआ था। इट इज़ स्टिल साइडवेज विथ वेरी लो वॉल्यूम। फॉरेक्स में देख लो, एमसीएक्स में तो मुझे कुछ समझ में नहीं आ रहा उसमें इतना कम वॉल्यूम कैसे हो गया। ठीक है कि ऊपर ऑल टाइम हाई पे है, वहाँ पर कोई रेजिस्टेंस है नहीं। सिल्वर एमसीएक्स को ही देख रहे हो तो देयर इज नो सच मेजर रेजिस्टेंस। सिल्वर फ्यूचर एमसीएक्स या वॉल्यूम बहुत डाउन है इसमें। ठीक है, तो यहाँ पर रेजिस्टेंस ही नहीं है, ऊपर से वॉल्यूम नहीं है, तो मेरे अकॉर्डिंग इसमें कुछ नहीं है भाई। अभी फ़िलहाल के लिए ऑलरेडी इतने कम वॉल्यूम में मैं क्या ही बताऊँ। ऑल टाइम हाई का ही रेजिस्टेंस मान सकते हो, क्योंकि इसमें और ऑलरेडी ऑल टाइम हाई चल रहा है। फॉरेक्स का यूज़ करोगे तो वहाँ बेटर है, क्योंकि वहाँ पर ऑल टाइम हाई नहीं है। वहाँ पर आपको पीछे रेजिस्टेंस दिख जाएंगे जो बने हुए हैं। ठीक है, यहाँ पर ऑलरेडी ऑल टाइम हाई है, तो ऊपर कोई लेवल शो नहीं कर रहा है। सो एमसीएक्स में तो मुझे कुछ दिख नहीं रहा। फॉरेक्स में ऊपर रेजिस्टेंस है। ओनिडा का चार्ट देखोगे तो 41 आवर टाइम फ्रेम की मैं बात कर रहा हूँ। इसमें इतना कम वॉल्यूम पता नहीं क्यों है आज एमसीएक्स में। कैंडल तक सीधा गैप अप गैप डाउन हो रही है, इवन 1 आवर की। ये तो ऊपर 41 से लेकर 41.05 इस लेवल के आसपास एक रेजिस्टेंस है। 1 आवर टाइम फ्रेम की बात बता रहा हूँ मैं, वो इस सिल्वर फॉरेक्स की। एमसीएक्स में आई डोंट नो, लेवल शो नहीं हो रहे हैं उसमें। एंड कैंडल भी गैप अप गैप डाउन है, इवन 1 आवर टाइम फ्रेम। सो फॉरेक्स का चार्ट यूज़ कर लो, इवन दो एमसीएक्स में ट्रेड कर रहे हो फिर भी। या फिर 5:30 के बाद ट्राई करना, थोड़ा वॉल्यूम तो आ जाएगा। वेरी लेस वॉल्यूम। ठीक है, फॉरेक्स का यूज़ कर लो, नहीं तो 5:30 का वेट कर लो। natural MCX silver. थोड़ा और नीचे आने दो। कंप्लीट साइडवेज है तो एक उसमें स्कैल्पिंग वहां पर है शायद। रेंज ब्रेक करने वाला है नेचुरल गैस हल्का सा रेंज ब्रेक कर दे फिर लेते हैं दोबारा इसमें एंट्री ब्रेक नहीं हो रही इसकी अभी भी रेंज ब्रेक नहीं हो पाई
When the rest of the markets slow down, the futures market keeps moving. Did you know that CME Group S&P 500 and NASDAQ 100 futures trade nearly 24 hours with great liquidity? In the ETF markets, volume and liquidity lessens after 4 p.m. until the next morning. But with futures, you get trading opportunities both day and night. Learn more at cmegroup.com/equityfutures.
News when you want it with Bloomberg News Now. I'm Nathan Hager.
And I'm Karen Moscow.
Karen, we begin in China, where President Xi Jinping is asserting his country's power and growing influence with a once-a-decade military parade. The event marked the first public appearance side by side with Xi, Russian President Vladimir Putin, and North Korea's Kim Jong-un. Speaking through an interpreter, President Xi said China aims to stand self-reliant and his country remains unshaken by threats.
The Chinese nation is the great nation that is never intimidated by any bullies and always values independence and forges ahead. In the past, when faced with critical struggles between good and evil, light and darkness, progress and reaction, the Chinese people rallied together to defy the enemy.
Chinese President Xi Jinping spoke after Russia's energy giant Gazprom said it signed a legally binding agreement to build a major gas pipeline to China through Mongolia.
Well, on social media, Nathan, President Trump is responding to China's military demonstration, writing, quote, "Please give my warmest regards to Vladimir Putin and Kim Jong-un as you conspire against the United States of America." The president did not elaborate on his accusation. President Trump recently told reporters in the Oval Office that the parade did not pose a threat to U.S. power and publicly expressed confidence China would not aim its military at the U.S. But Bloomberg's Stephen Engel is in Beijing and says the message from China is clear.
She says China will remain committed to peaceful development, but that the PLA will resolutely defend national security. One word that he used that's been repeated by the Chinese authorities, and that is they will not be intimidated by bullying, a not-so-veiled reference, of course, to the United States and Donald Trump and the tariff regime and the actions, unilateral actions against many countries in the world, including China.
Bloomberg's Stephen Engel is reporting from Tiananmen Square, where the parade took place.
And Karen, President Trump is still focused on tariffs. He says he's going to ask the Supreme Court for an expedited ruling to overturn a federal court decision that many of his tariffs were illegally imposed. The president argues it's essential to keep his trade policy intact, saying, quote, "It would be a devastation for our country if the appeals court ruling is left in place." The U.S. Court of Appeals for the Federal Circuit ruled the president wrongfully invoked an emergency law for the tariffs he imposed on imports from dozens of trading partners.
Let's turn to the Fed now, Nathan, and Treasury Secretary Scott Bessent is planning to interview candidates this Friday to replace Jay Powell as Federal Reserve Chair. The Wall Street Journal says Bessent will talk to candidates either in person or by video conference, with 11 people in the running for the role. Robert Kaplan, Vice Chairman at Goldman Sachs and former Dallas Fed President, says it's to be expected.
Jay Powell's term as chairman ends in May, and so it makes sense that they should start the interview process. I think the main thing for the leader, the next leader of the Fed, has to be somebody who has strong grounding in economics and can make independent judgments about the economy.
Robert Kaplan was speaking exclusively to Bloomberg from the Goldman Sachs Asia Leaders Conference in Hong Kong.
And Karen, Fed Governor Lisa Cook is still fighting to hold on to her job. Cook's lawyer says President Trump's move to fire her is based on nothing more than, quote, cut and paste allegations of mortgage fraud made in social media posts. The attorneys argue that the president lacks valid grounds to fire Cook for cause and that she did not commit mortgage fraud. Cook's lawyers are seeking a temporary ruling to preserve the status quo and allow her to continue performing her duties while the legal fight goes forward.
Well, Nathan, let's turn to the markets and the global bond sell-off. The yield on 30-year U.S. Treasuries rose close to 5%, and long-dated European and Japanese bond yields also rose, with Japan's 20-year note climbing to its highest level since 1999. Eric Lonergan, discretionary macro head at Calibrate Partners, tells Bloomberg he's concerned about the slump in long bonds.
We're starting to get something approximating panic. A lot of this has got to do with bond markets breaking through levels, and the market being de-anchored in terms of how to price them. I think there's two things to be aware of. One is that the prevailing narratives really don't add up, right? So most of the narrative is about public sector debt levels and debt issuance. And that really doesn't stack up, because if you look at this, it's a global phenomenon, and yet the public sector debt issues isn't a global phenomenon. Now, something has changed in Japan, however, and I think that has kind of been the catalyst for very considerable levels of contagion. What's changed in Japan has been inflation.
Eric Lonergan with Calibrate Partners says traders are also contending with a range of concerns from public debt, inflation, tariffs, and an assault on Federal Reserve independence.
In Hong Kong, Karen, Bloomberg News has learned authorities are probing allegations of insider trading involving at least two individuals at the city's stock exchange and financial regulator, along with brokers and social media influencers. Authorities are looking into whether regulatory staff tipped off traders and others to upcoming announcements involving dozens of listed companies. Sources tell Bloomberg the probes have been ongoing for months, with unexplained price spikes having long been a source of concern in Hong Kong.
Time now for the Bloomberg Sports Update, and we bring in John Stashower. John.
Thanks, Karen. It's a three-team race in the AL East, and all three won last night. Toronto 12-9 in Cincinnati. George Springer homered twice. The Yankees 7-1 at Houston. Jazz Chisholm homered twice, and the Red Sox with 18 hits 11-7 over Cleveland. The Blue Jays lead the Yankees and Red Sox by 2.5 games. At the U.S. Open, Novak Djokovic a 4-set victory over the American Taylor Fritz. Djokovic into the Grand Slam semifinal for the 53rd time. He'll play Carlos Alcaraz. That's your Bloomberg Sports Update.
Thanks Thanks, John. And that's news when you want it with Bloomberg News Now. I'm Karen Moscow.
I'm Nathan Hager, and this is Bloomberg.
When the rest of the markets slow down, the futures market keeps moving. Did you know that CME Group S&P 500 and NASDAQ 100 futures trade nearly 24 hours with great liquidity? In the ETF markets, volume and liquidity lessens after 4 p.m. until the next morning. But with futures, you get trading opportunities both day and night. Learn more at cmegroup.com/equity futures.
Bloomberg Daybreak is your best way to get informed first thing in the morning, right in your podcast feed. Hi, I'm Karen Moscow.
And I'm Nathan Hager. Each morning, we're up early putting together the latest episode of Bloomberg Daybreak U.S. Edition. It's your daily 15-minute podcast on the latest in global news, politics, and international relations.
What's special about Bloomberg Daybreak is the immediacy of the news we bring you each day in your podcast feed by 6 a.m.
Back to that breaking news from Google, a court ruling they are not required to sell Chrome. Let's get to Mandeep Singh of Bloomberg Intelligence for more context here. You can see that the shares are spiking in the after hours, Mandeep. How surprising to see this is this?
It is surprising because Judge Mehta was in favor of divesting Chrome, which is the key asset here that everyone is looking at. And in this case, I think the ruling clearly states that they're not required to divest Chrome. At the same time, there won't be any exclusive contracts, so that means the Google-Apple thing won't be at least allowed anymore. And then also related to Android, there won't be any like licensing agreements that bar certain companies. So really, I think what it seems like is they are in favor of opening up the platform where other companies can bid, but there is no talk about, Google having to divest any of their assets.
It's amazing Google can go up 6% just like that, like it's a small cap. I mean, that's how powerful these stocks are. We talked to Anurag earlier about the other things Google owns, like YouTube would be like the 20th biggest stock if it were spun off. Could they go after other parts of Google in an antitrust way?
Not really. There were two big lawsuits. One was the monopoly lawsuit where Chrome was the big asset that everyone was focused on. And look, the reason why you're seeing a 5-6% move is because when it comes to Chrome, over 3 billion monthly active users, AI agents and everything that's going on in Gen AI, browser is the most important asset. So if they were restricted in some way, I mean, that would really hurt Alphabet's position in Gen AI. So from that perspective, it did warrant a big move like this.
And Mandeep, we have about a minute left. We're talking about Alphabet, but take a look at shares of Apple, up about 3.7% in the after-hours trade as well. What can we extrapolate from this ruling into Apple?
So look, I mean, clearly the agreement that Apple had with Google is at least not allowed anymore, or that's what the ruling suggests. But Apple is looking to use someone else's model. So, from that perspective, probably they could use Gemini or something related to Google to catch up to other companies when it comes to incorporating Gen AI. So from that perspective, I do think it's a positive that Apple can use something of Google going forward, and there are no kind of big restrictions that are evident.
क्रूड 5700 पुट ऑप्शन चल रहा है 168 पे नाउ 173 योर व्यू। या नीचे सपोर्ट है थोड़ा सा और आ सकता है, ज़्यादा एक्सपेक्ट्स नहीं है, थोड़ा बहुत और गिर सकता है। चल गया साइडवेज है। फाइव 5623 तक जाएगा, वो पूरा ही सपोर्ट जोन है भैया, एग्जैक्टली एक पॉइंट नहीं होता। 5620 से 630 सपोर्ट जोन है पूरा, उसमें कहीं पर भी रुक सकता है। किया हुआ तो अपना टारगेट बुक कर लो, बेटर रहेगा। थोड़ा सा व्यू तो बेरिस ही हो गया है क्रूड ऑयल का 1 days for enough प्राइस के 5760 के ऊपर जाने के चांसेस भी कम है वजह से बहुत ज़्यादा बेरिस हो गया ठीक है, नेचुरल गैस में देखो यहाँ पर एक ट्रेड नेचुरल गैस में ही प्लान करते हैं। है तो साइडवेज ही, बट मोस्ट प्रोबेबली रेंज अब ब्रेक तो जरूर करेगा, काफ़ी देर से रुका है, नीचे भी ब्रेक नहीं कर पाया। तो ये नीचे के लेवल पे अभी आना पेंडिंग है। भी लग रहा है इसी रेंज में रह जाएगा अगर रेंज ब्रेक नहीं करता है तो। बाकी ऊपर जाएगा 5720 के आसपास, तो वहाँ वापस सेल करेंगे क्रूड को, मिलता है उस लेवल के अराउंड।
let me start off by asking you whether you think it actually is plausible for India and China to move towards a partnership away from a rivalry.
Well, a very good morning to you, Jomana. And let me just start by saying that one needs to sort of really get this insight correct because, if you were to just take out all context and look at this as a reset, I think we are going to get all our conclusions wrong. What we are seeing happening in China, the last couple of days is a tactical management from India's side. It is about signaling and not substance. Please remember, China remains to be our biggest challenge. Okay, China claims about 90,000 square kilometer of our territory in the eastern sector. It claims 38,000 square meter of our territory in the western sector and illegally occupies more than 5,000 square kilometer of our territory today. However, having said that, recently India's experiences after Operation Sindoor have shown us that China is willing to go all the length to support Pakistan strategically, diplomatically, and militarily. And here, let me underscore the word militarily, which has been detrimental to India's interest and could be detrimental to India's interest in the future. And right now, with our relationship with Donald Trump, literally being thrown under the bus by Mr. Navarro's repeated tone-deaf statements on India's purchases of Russian oil. And everybody knows here in India, it is not about Russian oil. The problem is an ego clash between Prime Minister Trump and, President Trump and Prime Minister Modi. So coming back with a very important strategic partnership thrown under the bus and all the trade talks with the U.S. now uncertain, we simply have to really tactically manage our neighborhood, and China being the dominant power comes first.
Let me pick you up on a couple of things that you said there, specifically the relationship between India and the U.S. And of course, Peter Navarro's comments got a lot of attention last week. But specifically when it comes to President Trump and Prime Minister Modi, what hope is there at this point of fixing the relationship and the damage that has been leveled over the last couple of weeks? Do you see things turning around in the near future?
Jomana, like I mentioned, and I'm going to stay by that, the thing is that this is all tactical. Please see, is there anything which is substantive? What we have done, we have only resumed our direct flights, which we suspended after the Galwan attack. We have now, China has told us that they are going to ease different kind of export controls on things like urea and stuff. Today, India remains, the trade we have is $125 billion, and the trade deficit we have is more than $100 billion, okay? Second, in the last 25 years, in your primer, you were mentioning that China has been diversifying its investments into the countries of the global south. In the last 25 years, between 2000 and 2025, the total investments from China into India is about $2.5 billion only. So please, one needs to understand that the problems we have with China are structural, okay, and they are not going anywhere. But the need of the hour is that India tries to keep it on the side and tries to take a step forward in managing a complex relationship, because the last thing we want is another instability in the neighborhood. And that is where it is. It is a small step forward. And just another thing, all these developments are not only coming in the last 2 days. Please, let's also set the record straight there. The normalization, or the tactical normalization, so to say, started in October 2024, and there has been progress made ever since in incremental steps and incremental developments. So what we see happening yesterday and today is also a part of that. Let us not confuse or kid ourselves or anybody else, because I see a lot of, wrongly pitched commentaries coming all over the world, which is that this is a strategic paradigm shift and a reset.
So
it is not.
Point taken. Okay, so point taken on that. Let me just ask you maybe a bigger picture question, which is, historically, China has sort of been the global anchor for the BRICS. And India, in the past, perhaps has enjoyed close relationship with the U.S., perhaps closer ties to the Quads. How does this relationship change, if at all? Because you seem to think that what's happening now between China and India is purely a tactical arrangement. Could there be more long-term strategic implications as well?
Yes, Jomana, I have to really, here also mention that if Donald Trump, I mean, we in India understand that Donald Trump is an aberration. In a very carefully crafted and put together strategic partnership for the last 25 years. So Donald Trump here is the aberration. Donald Trump will go, or Donald Trump's attitude towards India will change if at all he's able to put an end to the war in Ukraine. That seems to suddenly have become the centerpiece. Now, if Donald Trump's attitude does not change, and if America continues doing what it is doing, it is a possibility that India will then have to look for other, trading partners. Now, having said that, please remember that when it comes to SCO is not a trading bloc. SCO is primarily a counter-terrorism kind of a structure. You have a permanent structure called the RATS, the Regional Anti-Terrorist Structure. And our bigger problem, the biggest problem there is that Pakistan is a member of the SCO. And recently, all the kerfuffle that you saw in India after what happened in Pahalgam actually was coming from Pakistan. So long and short is that there are serious restrictions and limitations on what India can expect from the SCO. It makes sense for us to be in these groupings because we also want to, we don't want the countries of the global south to completely fall into China's lap. And very quickly coming and connecting it to BRICS.
Yeah.
Now, BRICS certainly is something which is more useful for us because of the fact that BRICS has something called a New Development Bank, which is a loaning agency. And that makes BRICS an attractive proposition for many countries of the middle order. And that is the reason so many countries are joining it. And that loaning mechanism actually works rather well. That's one. The second thing is that all this drive that you see towards de-dollarization, from India's perspective, it's a very nuanced thing. I see, again, very wrongly, interpreted statements where one says that India is pushing for de-dollarization. And the thing is that there is a nuance. The nuance is that if India is not in these groupings, what India basically does is that India sort of lets the space for de-dollarized trade to be, to be expressed in yuanization, which is not in India's interest. So long and short is that this is about India's participation in groupings that are non-Western. It doesn't mean to say that India shares an anti-Western, preference for the world order, because India's huge partnerships are with the West.
Opportunity.
Hi, good to have you with us. We've been talking about the political situation here in Thailand. Is that impacting sentiment in any way? Is that impacting your business in any way?
Yes, maybe it's maybe impacting the confidence of the countries a bit, but actually, we Thai Airways, we are we lay down our new strategy that we will becoming the network airline. So that's the difference is in the past we carry passenger from other country into Thailand back and forth, but now we can carry the passenger from one country through Bangkok and to the other destination. That's the difference from the past and now. So this is a way that we can reduce risks that relying on depending on heavily on only one single market. Yeah.
So in terms of Thailand as a holiday destination, a business destination, has that been impacted at all in any way? Are you seeing perhaps a decline in numbers? Add to that, of course, we have the border situation between Thailand and Cambodia.
As a visitor or the traveler coming to Thailand, the only one area that dropping is the China market. But the rest, for the rest of the market, European, India, Australia, other northern Asia is still growing. As I said, the only impact is China. But China, there's some other issue, like a safety issue, the confidence to travel into Thailand. During the past, early this year, we have a problem on that. But we, as a Thai Airways, we carrying the passenger not only to Thailand, but also through Thailand to the other city. So it's different picture between Thailand and Thai Airways. Because most of our passenger is individual FIT, not the group. Mostly the group travel with the low-cost carrier. We FIT travel with us. Some of them into Bangkok, and some of them passing through Bangkok to other countries.
You talked about how you're seeing growth apart from China when it comes to passenger numbers. Can you shed some light as to what the numbers look like?
European round, we fly to 11 cities in Europe. Two of them are double daily, but
it is such a poignant moment right now. Risk is this current situation to the economy, which is already struggling to turn around. 2% growth is half what we're seeing in the rest of Southeast Asia.
I would say this, one thing that I think we've been fortunate about is that our buffers are reasonably strong. So from a vulnerability standpoint, the chances of the country kind of heading into a crisis or whatnot are fairly low. So the downside isn't.
Why? Why do you think it's low?
Look at the usual things that tend to cause a crisis, like a balance of payments crisis, right? You would expect to see, current account deficits. You would expect to see high levels of foreign debt. You would expect to see low external reserves. On that front, we're okay. The other source of crisis is a banking crisis. And if you look at our banks, they're very liquid, they're well capitalized and whatnot. Yes, there are NPLs that are increasing, but they're fairly well provisioned. So again, chances of a banking crisis, reasonably low. Fiscal situation is not as good as it once was, and there's challenges in that front. But again, I think it's not approaching like Greek crisis type level. So that's why I say that on the whole, the chances of us having that big downside of a crisis are relatively low. That said, the upside is also limited, and that's a big issue. I mean, if you look right now, one thing that's very clear from all this uncertainty is that this uncertainty is going to be with us for.
Guys, देखो नेचुरल गैस ने रेंज ब्रेक कर दी है फाइनली. लग तो रहा था ऊपर ही जाएगा काफी देर से. नीचे आता है वापस, रेंज ब्रेक हो चुकी है. अगर हल्का सा नीचे आता है, ऊपर तो रेजिस्टेंस है ही है, नीचे आता है तो वापस बाइंग कर लेंगे. रेंज ब्रेक हो गई है इसकी. ठीक है, वही सेम ट्रेड थोड़ी देर पहले लगाया था. हल्का सा पुल बैक दे दे, बाई कर लेना. परफेक्ट लेवल है. काफ़ी देर से साइडवेज था, एक बाइंग का ट्रेड लगाया था, फिर लग रहा था ब्रेक डाउन करेगा, वो भी नहीं किया. फिर लेवल को होल्ड करके बैठा है. रेंज ब्रेक कर दी है तो अब वॉल्यूम आना चाहिए. हल्का सा पुल बैक आता है तो बाइंग वापस. अगर सीधा गया ऊपर तो फिर ऊपर से सेल कर देंगे अप्रॉक्सीमेटली 272 के अराउंड. ठीक है, रेंज ब्रेक हो गई है तो बाइंग ही एक्सपेक्टेड है. पुल बैक में डायरेक्ट ऊपर जाएगा तो ऊपर से सेलिंग. लेट्स सी पहले बाइंग देता है या फिर अब सेलिंग देता है. क्रूड ऑयल नेचुरल गैस बुलिश ही है अब थोड़ा सा. ऊपर एक रेजिस्टेंस है, वहाँ सेल करेंगे. पुल बैक आता है तो वापस बाई कर सकते हैं इस तरह से. ऊपर डायरेक्टली जाया है तो यहाँ सेल. बाकी क्रूड ऑयल में भी ध्यान रखना, ज़्यादा बाइंग एक्सपेक्ट नहीं है, थोड़ी बहुत ही आएगी. 5710 to 15 वहाँ पर रुक ही जाएगा ऑटोमेटिकली.
Even more.
Yeah. The big risk for us, I think, on the property market, we haven't seen kind of the rapid price increases that you saw in other countries and whatnot. So I don't think there's like this kind of huge property bubble happening here in Thailand. But back to China, to me, that's where the risk is for us in terms of the impact on the broad picture of the economy. Why? It's not just because of the exports, as you mentioned. I think China is an important destination for exports, both in terms of final goods and also as part of the supply chain going elsewhere. But the big impact in terms of the overall economy is on tourism. Because as you mentioned, tourism is a huge kind of footprint here in Thailand. And the Chinese tourists haven't been coming back. So, last year we saw about 6 to 7 million Chinese tourists. This year to date, it's about 3-odd million. We expect by the full year to see about 4, but still that's kind of a significant drop-off. And while the total tourism spending has been holding up reasonably well, because we see more European tourists who tend to spend more, stay longer and whatnot, there's a distribution effect. Because the Chinese tourists tend to go to certain kinds of, do certain kinds of spending, stay in certain kinds of hotels and whatnot, and that segment has been hit very, very hard. If you go around a lot in certain areas and whatnot, you'll see like the restaurants being very, very quiet and whatnot, and that again reflects the fact that the Chinese tourists haven't been coming back.
The picture is not looking pretty. Some are perhaps suggesting that a credit rating downgrade may happen. Is there basis for that?
Yeah, I mean, if you look at the credit rating report, the kind of stuff that they talk about, they would like to see some more fiscal consolidation, which we at the Bank of Thailand have been saying the same thing, that we would like to see more fiscal consolidation, especially over the medium term. I mean, we needed to do a lot of the fiscal stuff that we did during COVID and whatnot, but now it's a time to kind of start to tighten our belts. If we don't see clearer signs of a medium-term fiscal consolidation, that would be, because the particular metric that they've been flagging and paying attention to is like interest payments as a share of the budget and whatnot, and that's been creeping up. But the other thing they also cited about was the political uncertainty as one of the possible triggers. So, that's certainly a possibility.
Given the lackluster economy, is there reason to think that Thailand perhaps needs more rate cuts than that's already been priced by the market?
Yeah, I should caveat this by saying that my term is ending, so when talking about the outlook, I will not be on the next MPC meeting. But I can comment on what our thinking has been to date. And I think that for us, the Monetary Policy Committee, I think is reasonably comfortable about where rates are now. We've always emphasized that when we set rates, we do so in what we call an outlook-dependent manner. And so the outlook, as I mentioned, particularly for this year, seems pretty much consistent with what we had been expecting. So we feel that the rates as they are consistent with that, and that takes into account, again, even the newer risks that we've been talking about. The uncertainty, as I mentioned, has more to do with next year. And then, again, that I think we need to see how things evolve on that front. But the thing I would urge also to keep in mind is that we do have a limited amount of policy space left. Rates are 1.5%. That's about, the fourth lowest in the world. I think that's only, Japan, China, the Swiss have lower rates than we do. So there's not a whole lot of policy space and room left to cut rates. And I think one of the lessons that we've learned, right, is that there will be shocks that we never anticipated that will come along, and that it's important, again, to maintain the policy space to try to handle those things.
You said that 1.5 is already low. We had Nomura coming out to say that given the current situation in the economy, terminal rate should be below 1%. What would force you, under what circumstances, I suppose, should rates go below 1%? What needs to happen?
A material deterioration in the outlook. As I mentioned, we're outlook dependent, right? So if we see a material deterioration in the outlook, then that would warrant further rate cuts. And again, I have to emphasize that we have what we call a flexible inflation targeting framework. So we don't look just at the GDP numbers, but we also look at what's happening with on the financial stability front. We have very, very high debt, so that's always another issue. And also, what's happening with the inflation outturns. So we take those three things into consideration when setting our rates.
Throughout your time, you resisted calls to cut rates further. Given where we are right now, with greater clarity on where inflation is, inflation has been pretty benign. Should you have cut more? Should you have cut earlier to ensure that growth is actually better than where it is today?
One can always argue about, whether at the margin you should have cut 25 basis points here or there, sooner, later, slower, whatever. But broad picture, broad strokes, I think we're ballpark, we're roughly where we need to be. And why do I say that? If you look, I think it's fair to say that we haven't been dogmatic in terms of our approach towards rates. Yes, right now there's still calls for us to cut rates and whatnot, but you look at what we did over, again, 5-year term. When COVID hit, We brought rates down all the way down to 0.5% because obviously big crisis, we had to do what it takes, brought that rates down to 0.5%. Then we got the Ukraine thing. Inflation here peaked, right? 7.9%, highest in the region. At that point, we were facing calls consistently that we were behind the curve, we needed to raise rates, faster and by more, chunky bits, right? 50 basis points time. We said no, because we saw, again, our economy is recovering much more slower than others because we're so tourism dependent. So we took what we called a gradual measured approach, gradually increased rates, and we raised them back to 2.5%. We were aiming to try to get it back to neutral, which is ballpark in that range. But then come the next phase, which is where we were facing structural headwinds. The recovery, as you mentioned, has been slower than we expected, particularly in the household income front. We got new shocks with the tariff shocks and whatnot, and so we felt that again it's important to move from a neutral stance to a more accommodative one, and that led to our next phase of again lowering rates back down to 1.5%, which we feel again is broadly appropriate for the situation that we have. I know that on the optics, it's easy to kind of say you should cut rates. Why? Growth is kind of below your potential, inflation is below your target. From a financial stability standpoint, right, credit isn't going all that fast, so you shouldn't be worrying about the accumulation of debt, household or otherwise. But it's our job to not do the easy thing. It's our job to look beneath the numbers and not just kind of look at the headline numbers and look at why those numbers are why they are. Why is growth below potential? Why is inflation below target? Right? And if you look
it is your job to look at inflation and growth.
Absolutely.
That lost the growth at 2%. Yeah. If you had cut rates 200 basis points instead of the 100 that you did, would growth have been much higher?
Short answer, very little. And that's why I say it's important to kind of look behind the numbers and look at why is growth so low? Why is inflation below target? So if you look at the growth pattern in Thailand, right? Every time we get hit with a crisis and we recover, it takes us a while to recover. When we recover, we come back at a slower growth trajectory. So, we went after post, 1997 crisis, about 5%. We got hit during 2008 with the global financial crisis, tracked down to 3%. After COVID, it went from 3+%, now down to 2+%. So that's that trend that you're seeing, which does not reflect, the cyclical stuff about whether rates are at this or that level. That reflects structural stuff that we're seeing. It reflects the lack of resilience in the economy, that we're not able to rebound back from these shocks and these crises. A lot of it reflects stuff like demographics, right? You got fewer people working. The only way to get our growth up is to get higher productivity, but we haven't been investing, right? We haven't been getting new kinds of technology, increasing our capacity in that front. So those are the kinds of things that we need to address. And rate cuts alone are not going to deliver that. You look at inflation, again, below the target, agreed. And it's been negative for a couple of months now. But again, our job, look behind the numbers and look at, why is that inflation coming in below target? And it's not because of, this kind of deflationary problem, negative wage price spiral, people aren't spending because they expect prices to go down. No, it's largely because of supply side stuff. It's a lot of it's energy, a lot of it's raw food. And that's not, again, stuff that interest rates directly can affect. So again, and when we look at the broader picture, we don't see that signs of big risk of deflation. So again, I take your point. You look at the numbers, it looks like we should be cutting, but again, it's our job to kind of look.
Governor, your successor, Governor Vitae, is known to be pro-rate cuts. Yeah. He's aggressively pushed for that, pretty much in line with what the government has been proposing. Is there a sense, perhaps, that he was chosen as governor because of the stance that he's adopted? Because there was a very well-respected deputy governor who was in the right place to take up that position.
It's not for me to comment on what the selection committee and the Minister of Finance, who was the one that made the final proposal to cabinet about the reasons for choosing the governor. I won't go there. But I would say, just getting back to what we were talking about also, as Linda, which you were saying, if we had cut rates, sooner, whether we would have seen a stronger growth impact. And like I said, I think the thing that we also need to consider is, if you cut, right, what's the upside that you get from it? And also, if you cut, how much room, how much policy space do you have left? Please keep in mind that we got put calls to kind of cut rates from, even way back, even before the tariff stuff happened. So imagine if we had cut rates. as people were calling for us to do. And then we got the tariff shocks. And then we're out of ammunition. What do we do? Both on the fiscal side and the monetary side.
Governor, I'd like to get back to the upcoming governor, the new governor, because Fed independence is, or rather BOT independence is a huge question for the market right now. What messaging do you think this is sending to the rest of the world, to investors interested in putting money in Thailand when that independence is in question?
Are you talking about for the Fed or for Thailand?
For the BOT.
For the Bank of Thailand.
It seems like both central banks are in the same situation.
There's no doubt that we have been, and I'm sure will continue to be, under pressure. And it's what we see happening, again, as you mentioned, not just in Thailand, but in many, many different countries. But I think, if anything, we've demonstrated that we are able to maintain independence and try to do what's right and not pay, necessarily. We need to listen, but not to kind of pay undue heed to the demands of government. So I think, in a sense, the independence has been what I would call, tried and true and proven. And I would emphasize this, that...
So far, but going forward, that is the question, because we had the finance minister, Pichai, who said that, now the BOT and the ministry will work hand in glove, meaning that the BOT will... We'll do what's in line with the government.
Working together doesn't mean you have to actually, do exactly what the Ministry of Finance tells us to do. So I think in terms of collaboration and cooperation, there are many things that we have, even, during my term when there was all this turbulence on the political side, that we worked closely with the Ministry of Finance on. But I will say this, Hazelinda, that independence of the central bank, of any central bank, but including the Bank of Thailand, is not just about one person. It's not just about the governor. It's broader than that. It's about the whole governance framework that you have. It's about the legal setup you have. And it's about, if I may say, kind of the whole institution setup.
So you are confident that Governor Vichai will not cut rates more aggressively than what's needed?
I can't comment on the upcoming MPC decisions. I'm not going to be...
The concern is that because he stands for aggressive cuts, that he may be doing that. Is there concern that he might end up doing that?
You'll have to ask him that, but it's not for me to comment on what the MPC is going to do going forward. I can tell you what the embassy has been thinking and has been thinking, and that's what I commented on. But what I was trying to say, Hazelinda, was that the independence of the central bank is deeper than just one person. There's this, we've been around 80 years. There's this long tradition, I think, of independence, of being, technically very sound, technocratic people. There are 3,100 people here working. So it's part of the DNA of the place. So I don't think it's something that just depends upon one person. There's a whole kind of a ecosystem around that, right? Well, the other thing you have to see, and we'll have to see. I'm not saying there are no risks to this. I'm not being sanguine. We have to see what happens with the Monetary Policy Committee. There will be changes in the Monetary Policy Committee going forward, both this year and next year, because some members...
Governor Sethaput, what's the sense you're getting from the repeated calls for the Fed to cut rates? I mean, the Fed independence, a big question mark for the rest of the world. We had the likes of Lagarde saying that it is a danger to the global economy.
Yeah, I guess the term I would use would be it is unfortunate. Because, there are many things that economists disagree on, but I think one thing that they all tend to agree on is that central bank independence is a good thing. And it's a tried and proven thing that it works, it's important, and that there are many examples of what happens when you violate central bank independence, both historically and if we look across the world, many countries that violate that, the problems that arise that come about when you violate that. So it's a hard-won lesson. It's a shame that it's being, I think, not remembered as well, especially in, again, the place which is supposed to be the world's safe haven. So, and that there's a danger that there are spillovers, negative spillovers, right? Because if people start to see, even in the U.S. this can happen, it kind of increases the chances that it happens somewhere else, because people can say, look, even in the U.S. they're doing this, why not do this?
What might the repercussions be for the rest of the world? This is the most important central bank in the world. It sets a policy tone for the rest of the world. How might this play out?
Well, I don't know how it's
to the global economy. To the point that Lagarde said this is dangerous to the global economy. How might this play out?
Well, I have to say, I don't know how it's going to play out, but I mean, just the kinds of things that we're seeing.
A weaker dollar?
Sorry?
We're already seeing that, perhaps?
Yeah, I mean, the stuff that you're seeing is already seeing, right? The yields are going up and the dollar is weakening. So those are the immediate market effects. But again, it remains to be seen how the whole rest of it plays out. But again, like I said, I think some of the effects that we worry about, regardless of how it plays out, is how do I put this? It increases in a sense, the scope of what is. I don't want to use the term acceptable. That's not quite the word, but in the realm of the possible, things that we never thought, were likely now, seem to happen. And I think it's also brought into, I think, stark relief that a lot of things that we kind of took for granted, that we thought were checks and balances, that we thought were guardrails, were just norms, and that those norms can be violated. So, yeah, I think those will be some of the.
How concerning is it to you when you take a look at the current bond route, global bond route, and we're seeing 30-year yields inching ever closely to 5%? Surely these are signs that someone like you, in your position as a governor, will be looking really closely.
Yeah, again, not entirely welcome, especially since you look at the broader fiscal picture. The fiscal situation globally is not a good one. Public debt is again way too high. Again, we haven't seen the kind of fiscal consolidation that we need to see after COVID. Again, COVID was an exceptional thing. We needed to kind of do the fiscal stuff at that point, but we really needed to retrench after that, and we haven't seen that happening as much as we should. So that with the high debt stock and you have these yields going up, it does create the vulnerabilities that we need to keep a close eye on.
What are the implications for emerging markets in particular when you see such high yields? We talk about the bond vigilantes when they take action. It was only the bond vigilantes that could actually make Trump listen.
Right. I would argue, Haslin, that actually the first immediate channel that hits emerging markets like us in this region most directly is less on the bond market side, because most of our economies are more bank-based rather than bond market-based. So even if global yields go up and our yields go up, it hits us relatively less. The main channel that hits us immediately is the dollar. So what we've seen with the dollar weakening is we've seen currencies in the region tend to appreciate. And one thing that we normally would expect and would normally like to see is, with the tariff shocks, we would normally expect the tariff-imposing country, in this case the U.S., we would expect that currency to appreciate, and the currencies in the other regions tend to depreciate. That hasn't happened. It's gone the other way around. And that's caused the exchange rate, which normally we would want to act as a shock absorber, to not play that role. And I think the appreciation of the exchange rates, not just in Thailand, but across the region, has exacerbated some of the adjustment difficulties to the tariff shock that we've all been.
How much capacity, how much appetite is there to perhaps manage that? Because the dollar is set to depreciate even more from here. That's the expectation of the markets, at least.
Yeah. I think again, most of the countries in the region, Thailand included, we have a managed floating exchange rate system. So we don't have a target level that we set. We allow the exchange rate to move in line with fundamentals and whatnot. But again, the movements have been quite marked. Our volatility has gone up quite a bit, the baht volatility. It's about 8% now, close to like the Korean won, which is a higher volatile currency, which is not good for us. So, in terms of our response, it's been more to try to manage that volatility, to prevent that excess volatility from happening too much, but rather than trying to steer the direction one way or another, which we know is very, very difficult to do.
It's not just about the dollar, it's also about the yuan. Some talk about perhaps competitive devaluation. If we continue to see the yuan decline from here, that's detrimental to your economy as well.
Yeah, but like I said, I think a lot of the countries in the region, there's still enough of us that are still around, present company included, that still remember the 1997 Asian financial crisis. A lot of us are retiring, like myself, but there's still a bunch of us around that still remember that and still recognize the lessons and the dangers of trying to, basically do too much in terms of trying to keep exchange rates at a certain level for competitive reasons.
Prosper thy neighbor. I've covered this region for a very long time, and just when there are signs that, the region's picking up and growth is intact, here we are, not just in Thailand, but Indonesia, seeing a lot of violent protests. I mean, how concerning is it that the region itself is pretty much unstable? Growth in question?
For me, the lessons actually that you're seeing from what's happening in countries like Indonesia, or even to a certain degree, but we see signs of it here and elsewhere, is that it's important not just to look at the growth, the headline numbers, but to look at where that growth goes. So I think one of the messages and one of the takeaways is the importance of paying attention to issues about inequality, issues about opportunity. I think the rise of populism that we see in a lot of places reflects the fact that they don't feel that growth has delivered for people, right? That some people are, very well off, and then other people aren't getting the benefits. And I think it's that sense of loss of opportunity, right? That creates that sense of frustration. I think that's what we need to pay a lot of attention to, and not just, again, this kind of short-term stimulus, get the headline growth numbers up.
But when you expect tariffs to bite, and this region is looking at tariffs anything between 10 and almost 40%,
right,
you can expect the region to actually be saddled with a lot of challenges.
Absolutely, absolutely.
What are some of the things that need to be done, to be adopted? What policies need to be implemented in this part of the world to ensure that growth remains intact?
Yeah. For us in Thailand, I would argue, again, given what we had talked about initially, right, that far too long, and not just any government, every single government over the past, I would say, even 20 years, the focus has always been on that, short-term stimulus stuff, handouts, stimulus, and we haven't paid attention enough to the structural stuff. And for me, this is like, we use that cliche term of a wake-up call. This is about as clear a wake-up call as you can get, that we need to kind of get our house in order on that front. And I also think that what will happen eventually, it will take a while to play out, is that things will realign. There's an action and there will be a reaction. We don't know exactly how it's going to play out, but it will play out. On the tariff front, again, as we know, the U.S. at the end of the day, it's 15% of the kind of the final import demand. So there's still 85% of the rest of the world, and so the rest of the 85, we kind of need to reorganize and whatnot. That's, again, not to downplay the importance of the U.S. by any stretch of the imagination, but I think it's just again, a stark reminder that, again, we need to find these new avenues of growth.
Governor Sataput, you've navigated, I guess, a turbulent 5-year term.
You would agree. Long 5 years.
You would agree with me on that. I'm just wondering if there is anything that you would have done differently. Any decision you would have.
Yeah. I mean, Haslund, in terms of the broad strokes of what we were doing in terms of the adjustment, particularly on the monetary policy front, which is what most people pay attention to, I think broadly, we kind of got that right. The right calls at the right time, the big calls, and again, I'm not saying exactly every single 25 basis point up or down we got right, and you can always argue about whether that should have been 25 basis points higher or lower, and one MPC sooner or later. That stuff I take, but the broad contours of what we did, which was to bring rates down a lot during COVID, not raise them too rapidly during the Ukraine thing, and then gradually lower them down to where they are. I think broadly that was right. My takeaway, I'm not saying by any stretch that we got all the stuff right. There was. The one thing I am relatively proud of, me and the team, is that we didn't just pay attention to the short-term stuff. We also try to make sure that we put in place the longer-term foundational stuff in place. So we did things in the financial landscape about open infrastructure, open payments, open data, open competition. So virtual banks, cross-border payments, things like that we continued to do. The thing I would have done differently, there was some stuff on the longer-term structural agenda, which turned out to be a whole lot harder to do than I had thought, and that the lead time to do it took longer than I thought because there was a lot of pushback. So I wish I had started that stuff sooner. So, for example, credit guarantees, that's very important because we've seen SME credit kind of trend down, and I worry about that. we need a way to address the credit risk on that. So we've been pushing this thing, but it took much longer than we expected, so it should have started that process sooner. The other thing I think was very important for us is open data. I think that's a real kind of game changer. Try to get the freer flow of data to float around. And we started that in the plan, but again, given the amount of pushback and resistance we got, I wish I had done this sooner so I had more lead time to do it and have kind of taken us further along than where we are today. So those are the kind.
What a ride it's been. And congratulations on the BOT being named Central Bank of the Year 2025. So ain't too shabby, Governor. Thank you so much for your time.
News when you want it with Bloomberg News Now. I'm Karen Moscow. We begin in China, where President Xi Jinping is asserting the country's power and growing influence with a once-in-a-decade military parade. Speaking through an interpreter, Xi Jinping said China aims to stand self-reliant and that his country remains unshaken by threats.
Today, humanity again has to choose between peace and war, dialogue and confrontation, win-win cooperation and zero-sum game. The Chinese people firmly stand on the right side of history and the progress of human civilization.
Chinese President Xi Jinping speaking through an interpreter. Bloomberg's Stephen Engel is in Beijing and says President Xi was accompanied by key allies.
Also in attendance have been the guests of honor like Vladimir Putin. He was also here 10 years ago to mark the 70th anniversary. This time a new guest, Kim Jong-un from North Korea, was in attendance along with other foreign guests, including the heads of government in Iran as well as Malaysia.
And that's Bloomberg's Stephen Engel, who says the event marked the first joint public appearance among Xi, Putin, and North Korea's Kim Jong-un. Back at home, President Trump responded on Truth Social, writing, quote, "Please give my warmest regards to Vladimir Putin and Kim Jong-un as you conspire against the United States of America." The president did not elaborate on his accusation. President Trump is also focusing on his tariff policy, saying his administration would ask the Supreme Court for an expedited ruling to overturn a federal court decision that many of his tariffs were illegally imposed. The president argued it is essential to keep his trade policy intact, saying it would be a devastation for our country if the appeals court ruling was left in place. President Trump says he will direct federal law enforcement intervention to combat crime in Chicago and Baltimore. This despite staunch opposition from state and local officials in both cities. Trump has already sent National Guard troops into Los Angeles and Washington. More recently, he has said he plans similar moves in other cities, particularly those run by Democratic officials. To the Fed now, and Treasury Secretary Scott Bessent planning to interview candidates this Friday to replace Jay Powell as Federal Reserve Chair. The Wall Street Journal says Bessent will talk to candidates either in person or by video conference, with 11 people in the running for the role. The House Oversight Committee has publicly posted the files it's received from the Justice Department on the sex trafficking investigations into Jeffrey Epstein and his former girlfriend, Ghislaine Maxwell. Pressure is mounting on Congress to force more disclosure in the case, but the files released yesterday mostly contain information that was already publicly known. In markets, the yield on 30-year U.S. Treasuries rose close to 5%, and long-dated European and Japanese bond yields also rose, with Japan's 20-year note climbing to its highest level since 1999. Bloomberg macro strategist Mark Cudmore says there's been a steady sell-off in global bonds.
But it's very significant in terms of that it's ongoing, and there's no sign on the horizon that it's going to improve anytime soon. In fact, we expect stress to increase significantly into year-end. And many of these bond market yields at the long end, you take France, Japan, UK, are at multi-year highs. US not quite at multi-year highs yet on the 30-year, but pretty close to it. So, that fiscally fraught four, I think, are very vulnerable to significant worse sell-off.
And that's Bloomberg's Mark Cudmore, who adds that he believes bond uncertainty will continue to be a theme throughout the year. Macy's shares are on the rise after it reported its best comparable sales growth in 12 quarters. That's the latest sign that consumers are still spending despite concerns about inflation and tariffs. Bloomberg's Valerie Teitel has more on the outlook.
They upgraded their full-year adjusted EPS range from $1.7 to $2.05. The estimate was for $1.81, but they did raise that range from previous guidance. They also decent guidance when it comes to full-year net sales as well, that topping some estimates.
And that's Bloomberg's Valerie Teitel. In a major win for Google, a federal judge ruled the search giant does not have to sell its popular Chrome web browser. It will be required to share online search data with rivals and cannot dictate that device makers take all its apps to access the Google Play Store on Android. Hurricane Lorena has swarmed off the coast of Mexico's Baja California peninsula. Forecasters have issued a tropical storm warning for parts of the area. The U.S. National Hurricane Center said the storm is expected to strengthen in the next 24 hours. And futures this morning, they are on the rise, with S&P futures up 0.5%. Dow futures little change. NASDAQ futures are up 0.7%. 10-year Treasury yield at 4.27%. The 30-year yield 4.96%. And COMEX gold rising to another record. It's at $3,612 an ounce. That's news when you want it with Bloomberg News Now. I'm Karen Moscow, and this is Bloomberg.
to what we've seen play out in Europe?
Yeah, I was looking at the yield curve between whether it's 10s and 30s or 2s and 10s. And yeah, it's widened out in the United States, but just to the highest levels since a couple of years ago. It's not exactly this incredible steepening. And you could say it's because people are expecting a reacceleration in growth. Isn't that usually a positive sign for risk assets going forward? It's something we were talking about. At the same time, it does seem like the U.S. is subject to some of the same concerns overseas. So why has there been such an outperformance? The idea that Greg was saying maybe it's because of the tariff revenues really highlights how much there is uncertainty about the fiscal picture of the United States.
We're talking about real money, $300 to $500 billion of revenue every single year. Now, we can have a big debate about the source of that income and whether it should be coming from those places, but ultimately it's going to be supportive of the bond market, and has been.
Honestly, I have no, I mean, people can come up with lots of different reasons, and I'll say, yes, that sounds great.
That's what makes them money.
Exactly. But right now, it's a very uncertain time.
Coming up on the programme, we'll talk about that uncertainty with Jitanya Kandari of Morgan Stanley. We'll catch up with Stefan Slavinsky of BNP Paribas, Nancy Lazar of Piper Sandler, and Mark Cabana of Bank of America. The third hour of Bloomberg Surveillance up next.
For over 147 years, Bgrim has embraced doing business with compassion, always committed to giving back to society. We empower people and strengthen communities for a better future.
However, I think both things can be true. I think the U.S. can remain exceptional, and I think it's still possible that investors are going to look to allocate marginal dollars elsewhere. And what I mean by those marginal dollars is the following. Like, there's a lot of talk about whether we're losing or we're winning. I just want to posit to people that the United States of America has 5% of the world's population, 25% of its GDP, and over 70% of its market cap. So we came into 2025, one might argue, with actually a lot to lose. And I really dismissed the concept that people would allocate away from the U.S. In January. I just said, that's not possible. We are the world's reserve currency. We have all these formidable advantages. There's nowhere better to allocate capital. I actually still think that's true. And the middle market, which you talked about, is, if you add it together in the U.S., the third largest economy in the world. So, I mean, there are amazing opportunities. But what I'm hearing from investors all over the world is, yeah, America's great. And it may stay great, but maybe I don't need to put more than 70% of my capital into that equity market.
In case you missed it on Bloomberg Tech Asia. From labs in Shenzhen to workshops in Silicon Valley, humanoids are stepping out of science fiction and into our reality.
This might seem like just a gimmick, but the humanoid companies in China, like Unitree, are blending tech and entertainment as seen as a serious path toward commercialization.
Ultimately, the goal is to bring humanoids into households, with varying estimates for how long that might take.
Don't miss Bloomberg Tech Asia every month.
In case you missed it on Balance of Power.
The president says grocery prices are dropping. Is that what you're seeing?
If you go back to COVID and everything, they've obviously gone up since then. I think you see a pause in grocery prices right now because we don't know what to do as far as buying goes right now. The other big one that hit us today was this. India grows most of the shrimp in the world right now.
Wow.
And now this, what do we do now? This just got 50, is it 50% or 25%? I don't even know.
So how long do you think you can sustain margins here if these tariffs do not change? You mentioned the holidays. Is that when this starts to kick in?
Yeah, we're hanging by our fingernails right now. I mean, we can't do this forever. And I'm hoping all of Trump's tariff deals and everything will work themselves out.
Don't miss Balance of Power live every weekday.
The top names at the Fed are on Bloomberg.
We have a banking system that's a dual banking system. So we have national banks and we have state chartered banks. The FDIC and the Federal Reserve oversee those state chartered banks together with the state banking commissions. It's important that we maintain the ability to oversee both the state chartered banks and the OCC with the national banks, and that we have a rational framework that is very similar for all of those banks going forward.
Nobody covers the Fed like Bloomberg.
bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Michael McKee at the Economic Policy Symposium in Jackson Hole, and this is Bloomberg.
There's a lot of negativity hiding out in pockets of the market that have not performed.
The outlook for the equity market from here is not really that robust.
You're really seeing this pivot and rotation.
You got to follow the tech stocks. If they go down, the market's going to go down.
For most investors, they're really levered to what's happening at the Fed.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning, this is Bloomberg Surveillance. Good morning, good morning. The third hour of Bloomberg Surveillance starts right now, and your scores look like this. Equities on the S&P 500, positive by 0.4%, bouncing back, supported by Google and Apple. The Nasdaq 100 higher by 0.65. In the bond market, within 1 basis point of 5% at the long end of the curve in the last 24 hours. This morning, 495.93, and yields just a touch lower. Unchanged on 10s, 426.92, and lots of data still to come. Later on this morning, job openings, the drumbeat continues. ADP data tomorrow, together with jobless claims, and then payrolls this Friday.
Key question is, how bad does the data have to be to reintroduce the idea of a 50 basis point rate cut this month? And you might laugh and say, really, we're talking about that again? I thought we took that off the table. And yet Stephen Englander, actually, over at Standard Chartered, put out a piece overnight where he said, actually, if the non-farm payrolls report comes in with a headline number of 40,000, or if revisions come in really problematically, they could see a reason to cut by 50 basis points. And suddenly, you might see a huge rally in the global bond markets, and we could reverse this whole conversation.
Well, I can tell you the median estimate is 75, the low is 0, the new high is 144. So that's a pretty wide spread going into Friday.
And you could make that spread even wider when you start to talk about revisions and how accurate any of this data actually is and how much the market is going to look at that, which is a reason why we're all very excited about ADP and JOLTS today. Don't forget JOLTS. I'm very curious about job openings and the quits rate, which might tell us more, as well as the ISM subcomponents from yesterday.
So that's for July. And as we understand in July, things weren't tremendous based on non-farm payrolls. Much more interested in the data still to come and a forward look at things, because this market is pricing in a big snapback, a recovery, an acceleration in growth, reflected in and by what we saw in the equity market just last month. Home builders doing nicely, airlines doing nicely, small caps running aggressively. That's got to be supported by a rebound in the actual economic data. Let's see if we get it.
I have an economic data point for you.
What have you got?
The Beige Book. That is coming out later today, and I can tell you I am very interested to see the Beige Book because it might give some commentary about how much companies are actually re-upping some of those investment plans. Although, of course, it can all be dated considering the court case and what that could actually do. But that is the key question. How much do you see a reacceleration in investment beyond just the artificial intelligence giants that have powered a lot of the index higher, even if we do get some questions around the underlying economy?
The good news is Chairman Powell's not going to wait. He already looks spooked. It looks like he's going to prioritize a little bit of front-loading, a rate cut in September, regardless of what the data looks like between now and then and potentially beyond.
And this is the reason why I think the bond market sell-off has spooked a lot of people. And you could say it's a global story, and you could say it's a real question of fiscal authorities kind of facing a lot of dysfunction. But there is a bias to allow inflation to run hotter. When you have Japan and their core CPI coming in above where the United States is for the first time in 40 years, you are talking about a new inflationary regime globally. And if the Fed's going to tolerate that, if they're not necessarily going to see that as the priority in terms of the concern, that introduces a new risk. Of course, in the break-even rates, you're not seeing inflation necessarily as a concern that's coming out, but this is what a lot of people are saying.
I hear you, Lisa. I'm totally there with you. I don't think anyone on the committee can look at you with a straight face and say they're targeting 2%.
I think that's correct.
Because if they think they are, they've failed. They've clearly prioritized the labor market. We saw that last year when they cut 100 basis points, and arguably we're seeing it again going into the September meeting.
If you look at break-even rates, people are saying 2%. The new 2% is something like 2.4%. And if you're targeting 2%, you say, I'll be okay with getting down to 2% in 2035 as long as we maintain unemployment rates at this level. That's a very different type of 2% target than during a period of time where it was getting inflation up to 2%, not down to 2%.
You know what the schedule looks like? Payrolls this Friday, then 6 days later on the 11th we'll get CPI, then the following week that Federal Reserve decision. Coming Coming up this hour, over the next 60 minutes, we'll catch up with Jitanya Kandari of Morgan Stanley as global bonds are facing renewed selling pressure. Stefan Slavinsky of BNP Paribas as Google wins the antitrust battle to keep Chrome. And Nancy Lazare of Piper Sandler as we look ahead to jobs data throughout this week. We'll begin this out with the global bond market sell-off showing some signs of easing. Bond yields this morning just about stable in the States and in the UK. As for Japan, still very close to the highs on record. Jitanya Kandari of Morgan Stanley joins us now for more. Jitanya, good morning. It's good to see you. Thanks for dropping by the studio. These global bond market moves, you seem comfortable with things. Things are okay. Are you more comfortable with what's developing in the United States versus what's happening elsewhere?
Yeah, I think there are two things for the bond yields in the United States, right? One is the fiscal and one is inflation, right? On the fiscal, I think there are offsetting factors. There is spending, there's some revenue coming in from tariffs. I don't worry excessively there. On inflation, it's important to keep in mind that though the goods inflation rates are going up because of tariffs, on the services side, inflation has been coming down. And things like rent are a big part of the core CPI. Wages, they are also an integral part of the CPI. So on the services side, you have inflation coming down. So I'm not so worried between the goods and the services inflation. You could have inflation rates of core PCE of 2.83%. So sticky inflation, but not a runaway inflation story that really...
Of course not, but this is ultimately what we're getting at. 3's the new 2, is it not?
It is, and I think based on that, if you look at where we are on a real rates and a 10-year, it seems like fair value. And if Fed were to cut rates, I think that's a high chance. 10-year always comes off when Fed cuts rates historically. So I'm not overly concerned on this run-up in yields. Markets tend to overreact in the short term, but I think based on the economics of the situation, we should be okay.
Well, does it really pull into question this idea of dollar depreciation, though? Because if the United States is dealing with inflation and yields that are going up, well, it looks less bad if the rest of the world is experiencing it and then some, and you see inflation actually running hotter in a place like Japan. So does this story necessarily come together with an ongoing depreciation of the dollar?
It's exactly the point. I think the worry is more on the dollar. So interestingly, from mid-April to date, the dollar's been steady, but you've had a depreciation trend and a counter-trend rally tactically in June to August. I think at this stage, the 2-year and the 5-year differentials, which is typically what drives the dollar versus especially the G3 FX, are now favoring ex-US. So you have that interest rate differentials actually helping ex-US, and the administration wants a weak dollar because that'll help deficits, that'll help trade competitiveness, that'll help the debt. So I think that continues, and that makes international assets appealing.
This, to me, is really a theme that's been throughout the morning. We've heard this from Jamie Rush. We heard this from Greg Peters. The buy Europe and the European bond story in the wake of the sell-off, more so than the long end of the U.S., because there seems to have been maybe an overestimation of political dysfunction and fiscal dysfunction in Europe. And right now, you're getting compensated for it there, while as you're not getting compensated in the United States. Do you agree with that? Do you think that things have gone a little bit too far outside of the U.S.?
I think so. I think the one thing to keep in mind is Europe now, the inflation has bottomed out. So I don't think ECB will cut rates. The other point is Europe with the fiscal stimulus is going to issue a lot of bonds. And I think there's more opportunity outside the US for the first time. Japan is positive, so there are bonds there to buy. And most importantly, I think the public-private partnership route that Germany is going to take in this process of the fiscal spending is also going to be an important piece of the overall infrastructure stimulus, and the state-led industrial policy that seems to be the driving theme both within and outside the US.
Is this a story you have more confidence playing through equities, bonds, or foreign exchange?
A combination of two. We always look at asset allocation.
नेचुरल गैस में बाइंग में से निकल जाना, वहाँ पर एक सेलिंग का ट्रेड है। नेचुरल गैस में जो लोग बाइंग में थे एग्जिट कर सकते हैं। सेल यहाँ से प्लान है। तो लगा दिया। ठीक है, ज़्यादा बड़ा टारगेट नहीं है। फाइव 30 हो चुका है। 5:30 की कैंडल है, थोड़ी सी वॉलेटाइल रहेगी। न्यूयॉर्क सेशन ओपन हो चुका है। ये वापस थोड़ा पुल बैक देगा, नीचे आएगा तो वापस बाई कर लेंगे इसमें, नेचुरल गैस में। नीचे काफी स्ट्रॉन्ग सपोर्ट बन गया है ऑलरेडी। दीपांशु एनर्जी, गुड इवनिंग। एक डेटा आएगा अभी 7:30 पे, मेनली इम्पैक्ट करता है गोल्ड और सिल्वर के प्राइस को। डाउन पोजीशन, हाँ यहाँ पर नेचुरल गैस में। सीधा 7 PM पे यूएस मार्केट ओपन होगा, वॉल्यूम एक्सपेक्टेड आना चाहिए। वॉल्यूम कम है अब, ठीक है, वॉल्यूम नाउ इट इज गुड। जिस न्यूयॉर्क सेशन ओपन हो गया 5:30 पे ओपन होता है इंडियन टाइम के अकॉर्डिंग। 1 मिनट रह गया कैंडल क्लोज होने में, तो 5:30 to 5:45 मेनली फर्स्ट कैंडल का वॉल्यूम इन 15 मिनट। वॉइस कम है अब ठीक है
Back to that breaking news from Google, a court ruling they are not required to sell Chrome. Let's get to Mandeep Singh of Bloomberg Intelligence for more context here. You can see that the shares are spiking in the after hours, Mandeep. How surprising to see this is this?
It is surprising because Judge Mehta was in favor of divesting Chrome, which is the key asset here that everyone is looking at. And in this case, I think the ruling clearly states that they're not required to divest Chrome. At the same time, there won't be any exclusive contracts, so that means the Google-Apple thing won't be at least allowed anymore. And then also related to Android, there won't be any like licensing agreements that bar certain companies. So really, I think what it seems like is they are in favor of opening up the platform where other companies can bid, but there is no talk about, Google having to divest any of their assets.
It's amazing Google can go up 6% just like that, like it's a small cap. I mean, that's how powerful these stocks are. We talked to Anurag earlier about the other things Google owns, like YouTube would be like the 20th biggest stock if it were spun off. Could they go after other parts of Google in an antitrust way?
Not really. There were two big lawsuits. One was the monopoly lawsuit where Chrome was the big asset that everyone was focused on. And look, the reason why you're seeing a 5-6% move is because when it comes to Chrome, over 3 billion monthly active users, AI agents and everything that's going on in Gen AI, browser is the most important asset. So if they were restricted in some way, I mean, that would really hurt Alphabet's position in Gen AI. So from that perspective, it did warrant a big move like this.
And Mandeep, we have about a minute left. We're talking about Alphabet, but take a look at shares of Apple, up about 3.7% in the after-hours trade as well. What can we extrapolate from this ruling into Apple?
So look, I mean, clearly the agreement that Apple had with Google is at least not allowed anymore, or that's what the ruling suggests. But Apple is looking to use someone else's model. So, from that perspective, probably they could use Gemini or something related to Google to catch up to other companies when it comes to incorporating Gen AI. So from that perspective, I do think it's a positive that Apple can use something of Google going forward, and there are no kind of big restrictions that are evident.
मेरी वॉइस सही है मेरी वॉइस ही लगा देता हूँ फिर नहीं न्यूज़ का इम्पैक्ट 7:30 वाली जो न्यूज़ है उसका मेनली इम्पैक्ट गोल्ड और सिल्वर पर ही होगा 7:30 की जो न्यूज़ है उसका इम्पैक्ट गोल्ड और सिल्वर के लिए ही है मोस्टली जॉब ओपनिंग का डेटा है कौन सा है केस में भी देखो सेलिंग यहाँ से आ जाए तो बेटर है, क्योंकि एसएल काफ़ी बड़ा है इसमें। डाउन साइड पे ओवरऑल देखोगे तो एसएल टोटल बनता है 276.7, बट उतना बड़ा एसएल लगाएंगे प्रॉब्लम हो जाएगी। ठीक है, 276.7 के अप्रोक्सीमेट इतना बड़ा एसएल बन रहा है, तो ऑब्वियसली इतना बड़ा एसएल नहीं रख सकते, विच इज़ अराउंड 4.3 पॉइंट। तो यहीं से आ जाए तो बेटर है सेलिंग, क्योंकि अगर यहाँ से नहीं आई तो फिर थोड़ा सा और ऊपर रखना पड़ेगा 274.7। उस केस में फिर रिस्क रिवॉर्ड थोड़ा बेटर बन जाएगा, विच इज़ अराउंड अप्रोक्सीमेटली 2 पॉइंट का जितना भी रखा हुआ है लगभग। हाँ, लगभग 2 पॉइंट का। तो बेस्ट के सिनेरियो यही है कि हाँ, इसी लेवल से सेलिंग आ जाए, नहीं तो एसएल अननेसेसरी हिट करके फिर नीचे आएगा नहीं तो। ठीक है, ओरिजिनल एसएल इधर पे है, बट इतना बड़ा एसएल ले नहीं सकते, समझ रहे हो ना। इतना बड़ा एसएल लेंगे तो प्रॉब्लम हो जाएगी अननेसेसरी, वो नहीं चाहते हैं। तो अगर थोड़ा एसएल कम करना है तो थोड़ा और ऊपर से लेना, नहीं तो क्वांटिटी थोड़ी कम रखना यहाँ पे, क्योंकि एसएल थोड़ा सा बड़ा है। वी डोंट नीड दैट मच, उतना बड़ा एसएल। उस केस में थोड़ा सा आपका टारगेट बड़ा हो जाएगा, रिस्क रिवॉर्ड सॉरी, नॉट टारगेट। टारगेट तो उतना ही है जितना रखा हुआ है, तो इससे बड़ा एसएल नहीं ले सकते, क्योंकि ये पूरा ही यहाँ से लेकर यहाँ तक रेजिस्टेंस जोन ही है। ठीक है, उसको बोल देंगे। समझ में आया ना, वो पूरा का पूरा जोन ही रेजिस्टेंस का जोन है। सपोर्ट देख लो एक बार। ठीक है, बाकी लॉट क्वांटिटी थोड़ी कम रखना, ऊपर आएगा थोड़ा बहुत तो वहाँ क्वांटिटी इंक्रीज कर सकते हैं। ठीक है, 273 से 275, दिस होल एरिया जो रेजिस्टेंस एरिया, एसएल इज अराउंड 276.7। 4 लॉट से कर रहे हो तो आपकी मर्जी सर, 4 से करो या 5 से, उससे में से कुछ मतलब नहीं है। क्वांटिटी अपने साइज का ध्यान रखना है, एसएल बहुत बड़ा है। चाहो थोड़ा सा अपर लेवल से भी ले सकते हो रिमेनिंग क्वांटिटी, यहाँ पर अगर कम क्वांटिटी रख रहे हो तो, क्योंकि इस केस में रिस्क रिवॉर्ड सिर्फ 1:1 ही है, एटलीस्ट ऊपर एसएल छोटा है, नथिंग एल्स, और कुछ ज़्यादा डिफरेंस नहीं है। ठीक है, बाकी सेलिंग इसमें से कहीं लेवल में से कहीं पर भी आ सकती है, पर जितना ऊपर से आएगी उतना सही है। उसको भी रख देते हैं, कोई ऐसा नहीं है। एक सेकेंड, ये हाँ ठीक है, वो दिया उन्होंने लेवल एक्चुअली। देख लेते हैं कहाँ पर है। क्रूड भी स्टक हो गया, वॉल्यूम ही नहीं आ रहा क्रूड में भी। उसमें हाँ क्वांटिटी है। ठीक है, थोड़ा सा नीचे और आ जाए क्रूड ऑयल तो इसमें भी बाइंग बन जाएगी। एग्जैक्ट लेवल पे नहीं आ रहा है, ये भी स्टक हो गया वहीं पे। अरे यार अटक गया, पता नहीं क्यों। ठीक है सपोर्ट रेंज के आसपास ही थोड़ा सा, बट नीचे चाहिए क्योंकि इसका भी एस एल अप्रॉक्सीमेटली 5578 के आसपास है। तो थोड़ा सा पुश और कर दे नीचे की ओर तो एक बाइंग का ट्रेड इसमें ही बन जाएगा इजीली। ठीक है 5620 से 630 के बीच में इसमें भी सपोर्ट है। सॉरी 5620 से 5610 के बीच में इसमें भी सपोर्ट है। इसमें एक हल्का सा बाइंग का ट्रेड, थोड़ा और नीचे चाहिए हमें। इस लेवल पे मत लेना, नहीं तो एग्जैक्ट लेवल पे नहीं आया अभी भी मेरे अकॉर्डिंग तो। टारगेट इतना ही रखते हैं। हाँ वो कर सकते हो, कॉल शॉर्ट कर, सॉरी पुट शॉर्ट कर सकते हो, वो ठीक है। Yeah, sure. ठीक है तो क्रूड ऑयल में थोड़ा सा नीचे आने का वेट करना। 5620 से 5610 के बीच में कहीं पर ही मिले, वहाँ पर एक बाइंग। एंड ऊपर जाता है तो वापस 5745 के अप्रोक्सीमेटली वापस सेल कर देंगे। कोई डाल सकते हैं, कोई इशू नहीं है। ठीक है बाकी नेचुरल गैस में भी ये रेजिस्टेंस जोन ही है। टू 273 से 275 के बीच में कहीं पर भी सेल कर सकते हो। नीचे सेल करोगे तो ध्यान रखना उसमें एसएल और टारगेट ऑलमोस्ट सेम ही बन जाएंगे, रिस्क रिवॉर्ड ठीक नहीं रहेगा। तो अगर नीचे से सेल कर रहे हो क्वांटिटी कम रख लेना, थोड़ा ऊपर से सेल करोगे तो एसएल छोटा हो जाएगा, टारगेट तो उतना ही है बट रिस्क रिवॉर्ड बेसिस पे ठीक ठाक मिल जाएगा। रेजिस्टेंस पे कॉल शॉर्ट करते हैं, पुट शॉर्ट सपोर्ट पे होती है। ऑयल का नहीं हुआ है भाई अभी। हाँ स्टक हो गया होगा। और रिटेस्ट पे जाता है। क्या ट्रेड चल रहा है नेचुरल गैस का? एक सेलिंग का ट्रेड। क्रूड ऑयल में थोड़ा सा अगर नीचे आ जाए तो बाइंग भी बन जाएगी। थोड़ा सा रह गया, नहीं आ रहा एग्जैक्टली लेवल पे। क्रूड ऑयल यार, क्रूड ऑयल ओवरऑल तो बेरिस ही है, मतलब थोड़ा बहुत नीचे से सपोर्ट से बाइंग जरूर आ सकती है। ऊपर जाना 5760 के मुश्किल ही लग रहा है, वहां तक मैक्सिमम जा सकता है गया तो। उसके ऊपर जब तक क्लोजिंग नहीं आती, इंट्राडे थोड़ा सा बेरिस।
When the rest of the markets slow down, the futures market keeps moving. Did you know that CME Group S&P 500 and NASDAQ 100 futures trade nearly 24 hours with great liquidity? In the ETF markets, volume and liquidity lessens after 4 p.m. until the next morning. But with futures, you get trading opportunities both day and night. Learn more at cmegroup.com/equityfutures.
News when you want it with Bloomberg News Now. I'm Karen Moscow. We begin in China, where President Xi Jinping is asserting the country's power and growing influence with a once-in-a-decade military parade. Speaking through an interpreter, Xi Jinping said China aims to stand self-reliant and that his country remains unshaken by threats.
Today, humanity again has to choose between peace and war, dialogue and confrontation, win-win cooperation and zero-sum game. The Chinese people firmly stand on the right side of history and the progress of human civilization.
Chinese President Xi Jinping speaking through an interpreter. Bloomberg's Stephen Engel is in Beijing and says President Xi was accompanied by key allies.
Also in attendance have been the guests of honor like Vladimir Putin. He was also here 10 years ago to mark the 70th anniversary. This time a new guest, Kim Jong-un from North Korea, was in attendance along with other foreign guests, including the heads of government in Iran as well as Malaysia.
And that's Bloomberg's Stephen Engel, who says the event marked the first joint public appearance among Xi, Putin, and North Korea's Kim Jong-un. Back at home, President Trump responded on Truth Social, writing, quote, "Please give my warmest regards to Vladimir Putin and Kim Jong-un as you conspire against the United States of America." The president did not elaborate on his accusation. President Trump is also focusing on his tariff policy, saying his administration would ask the Supreme Court for an expedited ruling to overturn a federal court decision that many of his tariffs were illegally imposed. The president argued it is essential to keep his trade policy intact, saying it would be a devastation for our country if the appeals court ruling was left in place. President Trump says he will direct federal law enforcement intervention to combat crime in Chicago and Baltimore, this despite staunch opposition from state and local officials in both cities. Trump has already sent National Guard troops into Los Angeles and Washington. More recently, he has said he plans similar moves in other cities, particularly those run by Democratic officials. To the Fed now, and Treasury Secretary Scott Bessent planning to interview candidates this Friday to replace Jay Powell as Federal Reserve Chair. The Wall Street Journal says Bessent will talk to candidates either in person or by video conference, with 11 people in the running for the role. The House Oversight Committee has publicly posted the files it's received from the Justice Department on the sex trafficking investigations into Jeffrey Epstein and his former girlfriend Ghislaine Maxwell. Pressure is mounting on Congress to force more disclosure in the case, but the files released yesterday mostly contain information that was already publicly known. In markets, the yield on 30-year U.S. Treasuries rose close to 5%, and long-dated European and Japanese bond yields also rose, with Japan's 20-year note climbing to its highest level since 1999. Bloomberg macro strategist Mark Cudmore says there's been a steady sell-off in global bonds.
But it's very significant in terms of that it's ongoing, and there's no sign on the horizon that it's going to improve anytime soon. In fact, we expect stress to increase significantly into 2020 year end. And many of these bond market yields at the long end, you take France, Japan, UK are at multi-year highs. US not quite at multi-year highs yet on the 30-year, but pretty close to it. So, that fiscally fraught four, I think, are very vulnerable to the significant worse sell-off.
And that's Bloomberg's Mark Cudmore, who adds that he believes bond uncertainty will continue to be a theme throughout the year. Macy's shares are on the rise after it reported its best comparable sales growth in 12 quarters. That's the latest sign that consumers are still spending despite concerns about inflation and tariffs. Bloomberg's Valerie Teitel has more on the outlook.
They upgraded their full-year adjusted EPS range from $1.7 to $2.05. The estimate was for $1.81, but they did raise that range from previous guidance. They also decent guidance when it comes to full-year net sales as well, that topping some estimates.
And that's Bloomberg's Valerie Teitel. In a major win for Google, a federal judge ruled the search giant does not have to sell its popular Chrome web browser. It will be required to share online search data with rivals and cannot dictate that device makers take all its apps to access the Google Play Store on Android. Hurricane Lorena has swarmed off the coast of Mexico's Baja California peninsula. Forecasters have issued a tropical storm warning for parts of the area. The U.S. National Hurricane Center said the storm is expected to strengthen in the next 24 hours. And futures this morning, they are on the rise, with S&P futures up 0.5%. Dow futures little change. NASDAQ futures are up 0.7%. 10-year Treasury yield at 4.27%. The 30-year yield 4.96%. And COMEX gold rising to another record. It's at $3,612 an ounce. That's news when you want it with Bloomberg News Now. I'm Karen Moscow, and this is Bloomberg.
When the rest of the markets slow down, the futures market keeps moving. Did you know that CME Group S&P 500 and NASDAQ 100 futures trade nearly 24 hours with great liquidity? In the ETF markets, volume and liquidity lessens after 4 p.m. until the next morning. But with futures, you get trading opportunities both day and night. Learn more at cmegroup.com/equity-futures.
Bloomberg Daybreak is your best way to get informed first thing in the morning, right in your podcast feed. Hi, I'm Karen Moscow.
And I'm Nathan Hager. Each morning, we're up early putting together the latest episode of Bloomberg Daybreak U.S. Edition. It's your daily 15-minute podcast on the latest in global news, politics, and international relations.
What's special about Bloomberg Daybreak is the immediacy of the news we bring you each day in your podcast feed by 6 a.m. Eastern Time.
This isn't a deep dive on yesterday's news. Instead, you get the latest stories with context.
And that's something you don't get from other news podcasts. So join us for the best from Bloomberg's 3,000 journalists and analysts around the world, with reporting backed by data and journalists at the center of the stories we cover.
Listen to the Bloomberg Daybreak U.S. Edition podcast each morning for the stories that matter with the context you need.
Find us on Apple, Spotify, or anywhere you listen.
Bloomberg Screen Time is back this fall for year 3. We're bringing together the biggest names in business and pop culture, like Netflix co-CEO Greg Peters, Instagram boss Adam Mosseri, and Los Angeles royalty Will Obey. We're going to talk about how sports is eating entertainment, check in on the state of the movie business, and get an update on LA after the fires from Rick Caruso and Irving Azoff. You should expect newsy interviews from industry leaders, meaningful business networking, and of course, great food. We'll feature some of the best chefs and food trucks from my hometown of Los Angeles. Tickets are available now. You should head to bloomberglive.com/screentime for details. I'll see you in Los Angeles, October 8th and 9th.
In case you missed it on Bloomberg Tech.
Overall, our roadmap for the rest of the world is very strong, and we think it's just getting stronger as we go forward. And as it relates to China, it's something that we have to work through with the administration. But as I said, we've had very close conversations, and we're making good progress there. So from that standpoint, I think the overall competitiveness of our AI roadmap has never been stronger.
Don't miss Bloomberg Tech, live every weekday.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
There might be even more room to run on this in terms of the concerns around Fed independence, the concerns around inflation, the concerns about a government shutdown. We think that all reinforces at least a steepening bias. All of these things that we speak up in terms of Washington really do reinforce this idea of a bond steepening.
We've seen a lot of that, not just in America, but around the world. That was Libby Cantrell of PIMCO. The good news in the bond market so far this morning, things have settled down. In the equity market, we are firmer by about 1/3 of 1% on the S&P 500. The opening bell just around the corner. As for the week ahead and the day ahead is shaping up as follows. At 10 a.m. Eastern Time, durable goods and jolts data. At 11 a.m., Poland's president visits the White House. Look out for that. At 2 p.m., the Fed Beige Book. Plus tomorrow, ADP, another round of claims, and a Senate hearing on Stephen Miron's Fed nomination. And then, of course, the big one on Friday, the payrolls report just around the corner. Just to stay on the markets, global bonds continuing to sell off, particularly here in the United States over the last 24 hours. Things settling down, though, over the last morning or so. The 30-year bond yield coming within just 1 basis point of 5% in the last session. Mark Cabana, the head of US rate strategy at Bank of America Global Research, is with us around the table for more. Mark, good morning.
Good morning.
It's good to see you.
Likewise.
A lot's changed. What's changed for you?
So we think that investors should really be focused on where the cutting trough in this cycle is. That's still around 3%. The Fed thinks 3% is neutral. The market seems to believe that that's credible and that the Fed will head there. Increasingly, at least for our rate strategy team, we see 3% as almost a cutting ceiling. They're going to at least cut to there, we think. And we think that the market is not fully appreciating the potential range of outcomes below 3% that the Fed could take us to. And that range of outcomes, we think, exists because you do have a moderating labor market. You do have inflation that is expected to peak around the end of this year or first half of next year. But we also think that you're going to have a composition of individuals at the Fed that are going to be targeting potentially different objectives than the current Fed is. And specifically what I mean by that is, think about, let's say, how the Fed judges the natural rate of unemployment. The Fed thinks that in the longer run, this level is 4.2%. They don't know that for sure, but that's their estimate. What's to stop a new composition of Fed officials from targeting a potential 3.5% or sub 4% type of natural rate of unemployment? And we think that you're going to increasingly hear these types of arguments from individuals that are being considered to adopt leadership positions at the Fed. I'll certainly be listening for that on Thursday with Miron's testimony because we have heard from other, let's say, Fed chair contenders that they're open to this idea. And if the Fed does indeed adopt that type of approach, that opens up the range of outcomes for where the funds rate can go well below 3%. We think you want to be received 5-year OIS to benefit from that. It also means that you should be expecting that longer run inflation expectations move up. Because they are still very well anchored. We agree with the Fed's assessment on that. We think that they can be moving up. We think that the inflation curve can be steepening. And we think that the nominal curve should also be steepening in that type of environment. Finally, we like being short 30-year asset swap spreads because we do worry about some of this supply-demand dynamic at the back end of the rates curve. If the Fed is, let's say, cutting to rates lower than what many of us would think are justified by fundamentals today, who's going to buy the bond? if you're worried about upside inflation risks and the deficit is still not improving materially, who's going to take down all that long duration treasury supply? So we think you want to be positioned for that, and we like being short 30-year asset swap spreads to do so.
So as you talk, I'm thinking I'm going to hide in gold. I'm going to hide in the most pro-growth stocks because essentially they're going to juice everything. I mean, essentially, isn't what you're saying really positive for stocks, really positive for gold, terrible for the dollar, and don't even touch that 30-year bond?
Yes, 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 yes.
Okay, so that's basically what you're looking for right now.
And we just think that, again, you can focus on fundamentals. And fundamentals and our economists, and kudos to them, are still very much rooted in that. They're thinking this is an economy that's not headed into a recession, where you've got stagflationary risks, where inflation is going to be 3% or higher by the end of the year, and where the Fed is running the risk of a policy mistake by cutting later this year, if that's indeed what they do. And so they're thinking, why would the Fed be doing this? And I understand that from a fundamental perspective. But we've all seen the headlines. We've all seen, at least, or we've heard some of the approaches that individuals who are being nominated or considered for Fed leadership positions are espousing. And all of those, at least to me as a rate strategist, say, why are they going to stop at 3? Why would they do that? Waller is just saying, no, we're going to cut to neutral, or I think we should be heading to neutral, and I think neutral is 3%, but he'll be the first to tell you that he doesn't know where neutral is. And then once you start to contemplate some of these other arguments, we suspect, about lower natural rate of unemployment and really strong GDP and deficit financing levels, which is not in the Fed's mandate, but certainly you hear that line of argument from administration officials. Once that creeps into the dialogue, then why would they be stopping at 3? So we just think, again, that the distribution of rate outcomes is much greater to the downside than what the market is currently pricing, not necessarily due to fundamentals, but due to a shift in the approach for how the Fed will likely be thinking about setting monetary policy.
You know, I give you a lot of credit for trying to force people to think outside a conventional framework, because I think that what we could see next year could be very unconventional.
The idea of targeting something sub 4.2% on the jobs market and ignoring the inflation possibility. I'm just thinking, I mean, I understand why people are pro-risk in that environment, because why wouldn't you be pro-risk at a time where they're trying to juice growth at the expense, potentially, of inflation?
No, we've got to run.
I do
We're
think
against the clock. 15, 20 seconds.
Okay, so what stops this? We think two things stop this. Number one, popular discontent with inflation, the voter. But I don't know about you, I would imagine that it takes above 3% inflation to really bring individuals out to the ballot box on this issue. 5. Or 2, loss of control on the back end. And you're going to be looking at best in cutting auction sizes in that event, or potentially the Fed using the balance sheet.
Nice, as always. Always take it down to the wire, don't you? Mark Cabana of Bank of America, thank you. From New York City, this was Bloomberg Surveillance.
For over 147 years, BGRIM has embraced doing business with compassion, always committed to giving back to society. We empower people and strengthen communities for a better future.
Pain of inflation is really biting. And so we have to balance those two sides of our mandates when we think about setting correct policy. And we have to look at, if we're missing, by how much and for how long do we expect those misses to last?
Nobody covers the Fed like Bloomberg.
Let me break down our CapEx into the buckets that we spend. Big part of it is to expand our reach of fiber. You cannot wait until there is certainty to build that. These have long lead times that require you to have conviction about where demand is going. Another bucket is, as more people are on our network, we also have to add more coverage and capacity. It's almost like a variable expense. Third, we are modernizing our wireless network right now. Through the investments we're making, we are driving down our unit costs over time and providing more capacity to serve the demand that we think is coming.
Do you have less confidence in that 3-year plan now than when you first came out with it, given that some people are having trouble deciding how things are going to look in the next 3 days?
No, I really don't. I look at the nature of our business. it doesn't matter the economic cycle. It is a critical goods or service, and we have every confidence demand for it will remain. Will it be harder in a more challenged economic environment if that ends up being the case? Of course, but remember, we are investing at record levels. Slight moderations of that would allow us to deliver a lot more incremental cash to the bottom line. So I have every confidence we're going to be able to deliver our guidance.
Our applications have been received positively both in Kenya and UAE, and we are optimistic that we should be able to open the office in the fourth quarter. We think the Middle East have deep capital sources. It has strong logistics for trade, and it is a strong center for investment. And we are seeing increasingly the global GDP is increasingly becoming overweight in Asia and Middle East. So that linkage with the middle income segments growing in India and China, it will provide a very strong market.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Francine Lacqua in Sintra, Portugal, and this is Bloomberg.
Stability returns to this market. The bond sell-off eases. Google spared the fate of a breakup. 30 minutes until the start of equity trading. I'm Danny Berger. Matt Miller is off. Bloomberg Open Interest starts right now. Coming up, stocks stage a modest rebound after 2 days of losses, with antitrust relief for Google boosting big tech. Meanwhile, Macy's raises its outlook but joins a chorus of retailers warning of
नेचुरल गैस को देखोगे एग्जैक्टली लेवल पे पहुंच गया है, अपर लेवल पे। कैंडल बार बार ओपन इक्वल टू लो बनाया जा रहा है। एसएल का ध्यान रखना, ठीक है, उससे बड़ा एसएल नहीं है, जाएगा तो निकल जाना है। गलत जगह पे ओपन इक्वल टू लो बन रहा है। तो 7 PM पे फ्लैट था, नाउ ऑलमोस्ट अपर सर्किट पे पहुंचने वाला है, 65.99 पे अपर सर्किट लग जाएगा ऑलमोस्ट। पर नहीं रुकता, इसके ऊपर एक और रेजिस्टेंस है 279 टू 81 के बीच में। यहाँ पर भी टारगेट बड़ा नहीं है इसका। वही ना, रिस्क रिवॉर्ड बड़ा छोटा हो जाता है। क्रूड ऑयल की इन्वेंट्री आज नहीं है, क्रूड ऑयल और नेचुरल गैस की इन्वेंट्री कल शिफ्ट हो गई है दोनों की। आज सिर्फ जॉब ओपनिंग का डेटा है 7:30 पे, और फिर अभी यूएस मार्केट ओपन हो जाएगा 7 बजे। 8 बजे क्रूड ऑयल की इन्वेंट्री नहीं है। क्रूड ऑयल नेचुरल गैस दोनों की इन्वेंट्री कल शिफ्ट हो गई है। 9:30 क्रूड ऑयल और 8 बजे नेचुरल गैस। आज सिर्फ 7:30 का डेटा है। ध्यान रखना थोड़ा सा, क्रूड ऑयल की जो इन्वेंट्री देख रहे हैं आज आती है नॉर्मली वेनेसडे को ही, बट इस बार वेनेसडे को नहीं है, कल शिफ्ट कर दी है। वो लिया नहीं एक्चुअली ना, यहाँ पर एक बार आना है पेंडिंग। साइड पे ये पॉसिबल नहीं है लेवल पे आना.
When the rest of the markets slow down, the futures market keeps moving. Did you know that CME Group S&P 500 and NASDAQ 100 futures trade nearly 24 hours with great liquidity? In the ETF markets, volume and liquidity lessens after 4 p.m. until the next morning. But with futures, you get trading opportunities both day and night. Learn more at cmegroup.com/equityfutures.
When you want it with Bloomberg News Now. I'm Karen Moscow. We're looking at the markets this morning with the yield on 30-year U.S. Treasuries rising close to 5% and long-dated European and Japanese bond yields also gaining, with Japan's 20-year note climbing to its highest level since 1999. Jamie Rush is with Bloomberg Economics.
First, we need to recognize, right, that there's a very big global component to what's going on with bond yields globally, especially at the long end, but you are of course right that Japan, that France, that the UK are at the epicenter of this. I guess one thing I'd point out if we're thinking about how worried we should be about this is that because it's so concentrated at the long end and because we only issue, say, about 10% of our debt at around that horizon, it's not going to have an immediate fiscal consequence. So the imperative to start to respond to this isn't really going to be there.
And that's Bloomberg's Jamie Rush, and the U.S. 30-year yield currently at 4.96%. Well, President Xi Jinping hosted the leaders of North Korea and Russia in Beijing for the first time, marking a historic show of united defiance against the U.S.-led world order. China's commander-in-chief was flanked by Vladimir Putin and Kim Jong-un as he approached Beijing's Tiananmen Gate at a vast military parade in his first-ever appearance with both men. We get more with Bloomberg's Rosalind Matheson.
Certainly these parades are always about optics and projection, and this one was no different. A large military presence, quite a few interesting weapons on display, some more modern versions of weapons, nothing too startling, but it's all about the pageantry and who's attending, and Xi Jinping in the minute, as you say, projecting power, both internally and externally.
And that's Bloomberg's Roz Matheson. The parade marked the 80th anniversary of the end of World War II. President Trump, posting on Truth Social as the parade began, accused Xi of trying to conspire against the United States of America with Kim and Putin without elaborating. President Trump says he could seek an expedited ruling from the Supreme Court as soon as today after a federal appeals court declared most of his country-specific tariffs illegally imposed under an economic emergency law. The president argued it is essential to keep his trade policy intact, saying it would be a devastation for our country if the appeals court ruling was left in place. The Senate Banking Committee will hold a confirmation hearing tomorrow on Stephen Myron's nomination to be Federal Reserve Governor. Meanwhile, Treasury Secretary Scott Bessent is planning to interview candidates this Friday to replace Jay Powell as Federal Reserve Chair. The Wall Street Journal says Bessent will talk to candidates either in person or by video conference, with 11 people in the running for the role. Fed Governor Lisa Cook is accusing President Trump of making, quote, cut-and-paste allegations of mortgage fraud against her as she fights the president's bid to fire her for cause. Bloomberg's Tyler Kendall has more from Washington.
So in this latest filing, we're really seeing Cook's lawyers double down on the arguments that we heard from them on Friday when I spent all day at the federal courthouse for the first hearing in this case. But they're perhaps putting a little bit more of a finer point on what they are arguing, that President Trump doesn't have sufficient cause to fire Cook. And we got really what felt like the most explicit denial to date that the allegations of mortgage fraud against her are not true.
Bloomberg's Tyler Kendall reports Cook's attorneys are asking for an emergency ruling so she can keep her job, but it's unlikely the judge will rule this week. She's giving the government until tomorrow to respond to the latest filing. The Fed's next rate decision is in 2 weeks. The House Oversight Committee has publicly posted the files it's received from the Justice Department on the sex trafficking investigations into Jeffrey Epstein and his former girlfriend Ghislaine Maxwell. Pressure is mounting on Congress to force more disclosure in the case, but the files released yesterday mostly contain information that was already publicly known. Macy's shares on the rise after it reported its best comparable sales growth in 12 quarters. It's the latest sign that consumers are still spending despite concerns about inflation and tariffs. In a major win for Google, a federal judge ruled the search giant does not have to sell its popular Chrome web browser. It will be required to share online search data with rivals and cannot dictate that device makers take all its apps to access the Google Play Store on Android. And sales at Cracker Barrel took a hit from the political firestorm that emerged after the chain updated its logo, highlighting the real-life business impact of social media outrage. A Bloomberg analysis also shows that transactions slowed at the restaurant starting on August 19th. That's when Cracker Barrel unveiled a new emblem that modernized the font and removed an overalls-clad man known as Uncle Herschel. And futures this morning are mostly on the rise, with S&P futures up 0.33%. Dow futures are lower, down 0.2%. NASDAQ futures up 0.7%. And again, the 10-year Treasury yield 4.26%, the 30-year yield 4.95%. And that's news when you want it with Bloomberg News Now. I'm Karen Moscow, and this is Bloomberg.
When the rest of the markets slow down, the futures market keeps moving. Did you know that CME Group S&P 500 and NASDAQ 100 futures trade nearly 24 hours with great liquidity? In the ETF markets, volume and liquidity lessens after 4 p.m. until the next morning. But with futures, you get trading opportunities both day and night. Learn more at cmegroup.com/equity-futures.
Bloomberg Daybreak is your best way to get informed first thing in the morning, right?
It's one of those stories where we start with the basics. Where did the idea come from to do this of a Kronos treasury company? Where did it originate?
I think it's a little bit of a trend by now, and pioneered by Michael Saylor of MicroStrategy. And I think every single blockchain from the top, say, 20 will have a leading treasury company that will be focusing on driving demand for it and acquiring as much as physically possible. And we thought that partnering with Trump Media to do so is just the perfect match.
So there are a number of initiatives between Crypto.com and Trump Media, or the broader Trump family. Where did that relationship start? Who did you first meet, and how long have you held those relationships?
So I think it dates back a couple of years, and we always look forward to working with people who are pro-crypto, who want to help drive this industry forward. And I think it has to be said that both the current administration and specifically Trump Media Technology Group has already done a lot in this space. We've helped them execute on their Bitcoin treasury strategy with a multi-billion-dollar Bitcoin purchase. We help them custody their coins. So we provide infrastructure. And this new play on CRO is just an extension of the relationship.
Extension of a relationship that broadens out to ETFs, that broadens out to payments and subscription creation. But it also broadens out the conversation that people are having about, more broadly, benefits to the Trump's broader family when it comes to crypto, Chris. When you're having those conversations with friends, with family, how do you talk about whether or not there might be any conflicts of interest, which I will reiterate, the family and indeed spokespeople for the administration would say there are none?
And, you have to agree with their statement, because everything is held in blind trust, and this is a public company that operates independently. And, we are still a privately held company, but we love partnering with people who want to really take this industry forward. So I think people need to understand that the administration has set a certain agenda which places cryptocurrency industry at the very center of it, with setting out a very ambitious role for America in this space. And anything we can do to help, we'll do so. We'll support it.
What's interesting is you say you're still privately held. What are the plans for Crypto.com more broadly? We're just hearing of IPOs of Gemini and the like. Would you ever think of an IPO? Would you ever think about selling parts of the business?
Right. I have to admit it's quite tempting to consider these options, given how richly the market values crypto companies these days. We certainly have the numbers to do so. We've done about 1.5 billion in revenue last year, about $1 billion in gross profit, reinvested about 700 million of it, so let's say 300 million net profitability. This year, I think it's going to be better, especially if we see the Fed rate cut and a strong Q4 following. So we have the numbers. We've been approached by all the top names in terms of the investment banks. We want to be a very well-run company, so we are working on preparing everything, but no decisions have been made at this point. We think that we actually enjoy operating as a private company. It allows us to move really fast. Right. We've got a solid balance sheet, so we don't have to make any decisions in the short term.
Some breaking news this morning that you're looking at starting sports prediction markets, particularly for the NFL. That's so interesting. There was market reaction from some of the established players in that space, right? Explain how it's going to work, but why?
Look, we think that prediction markets are going to be huge, and sports is a part of it, but it's not the whole thing. And if there's any company out there, a large business that wants to build out a prediction market operation, we are the perfect infrastructure partner. We are regulated by the CFTC. We've got battle-tested trading technology, very robust APIs, all the best market makers. We want to be the liquidity center for prediction markets onshore in the US. So we'll play very aggressively in that space.
And you're someone who's comfortable perhaps in markets that regulation is always trying to catch up with, Chris. It's interesting that the CFTC federal courts are still debating whether ultimately sports prediction markets count as gambling. How do you think about the regulatory process, having given what you've lived through when it comes to crypto?
I think it's new space and it's going to evolve, and the regulatory setup is going to have to evolve with it. We've gone through this journey of cryptocurrency, so we are used to being in the role of a trusted counsel to regulators and helping them understand how they can do their job effectively while allowing market participants to make use of these wonderful instruments.
Just very quick, Chris, do you expect that this could be some sort of meaningful contribution to revenues this year? You kindly gave us your financials for last year. Just model it out for us.
I think it's still, it's not going to be a massive contributor this year, but we're also very aggressive in pricing for our partners. Like, it's all about building liquidity right now. But if you look at what's it going to be in like 5 years' time, I think it's going to be a massive business line for us.
And you have revenues coming down, and you have an economy that isn't growing. How do you put that together with something that actually is feasible for the currency and for the bond market?
Well, to your point, that last point, really important. The currency and the bond market, the tension in the UK. Bond yields up, sterling weaker. The pound, the biggest one-day loss so far going back to April. Sterling down by more than 1%.
And this comes with a backdrop of supposed dollar weakness. People saying that the Fed, because it's going to be so politicized, is going to cut rates, is going to allow inflation to go up, and that's going to cause the dollar to to weaken, and yet against what? And this is really showing this in prime light. The idea of the United Kingdom not providing an alternative, the European Union with France and the yields on those bonds versus Italian bonds shrinking to the narrowest since 2003, not coming from there. So where is the leadership coming from? And the fiscal responsibility that is really what a lot of the bond markets really are looking for.
We've got a big month coming up stateside as we anticipate the payrolls report. The estimates are in, starting to build. The median here at Bloomberg, 75K the range, the high's 115, the lowest 0. That's how Friday is set up so far, going into payrolls.
What's the biggest risk event? A better than expected payrolls report or a weaker than expected payrolls report? And I say this at a time when the entire market got a sigh of relief after the Jackson Hole speech. Oh, the Fed's going to cut rates. How high is the bar for the Fed not to cut rates later this month if we get, say, a really good payrolls report, or is it in the bag? And then suddenly people have to wonder, are we going to see some sort of reacceleration of inflation? I know I sound like a worry wart to start the year, start the school year, but truly, this is going to be a momentous time where not only there's a question about what the data is, but what we do with the data, both from an economic perspective as well as a political one.
I'm right there with you. The inflation story front and center. We get an inflation print next week on the 11th. Gold at all-time highs. More still to come on precious metals. In the equity market, equity futures negative by 0.5% on the S&P 500. In the bond market, that's where the headlines are this morning. Coming up this hour, Jay Pawlowski of TPW Advisory with stocks on a 4-month winning streak. We'll catch up with the former NEC Deputy Director, Everett Eisenstadt, with President Trump's tariffs in legal limbo, and Leland Miller of China Beige Book as she warms ties with India and Russia. We begin this hour with stocks looking to add to 4 months of gains. Jay Pawlowski, the founder of TPW Advisory, writing the following. The global bull market is broadening out as more and more markets hit all-time highs. As we enter fall, we would not be surprised by a performance chase into year-end. Jay joins us now for more. Jay, welcome to the programme, sir. A different character in the equity market rally of the last month. Small caps up 7%. Double-digit gains for the home builders, for the airlines for the month of August. Jay, do you believe that can continue?
Yes, certainly in the case of small caps, John. It's great to be with you and Lisa, even at this early hour. I'm impressed by you guys, how you do this every day. We're constructive going into year end, and we're looking at the laggards. So, small caps is a laggard, energy is a laggard, things of that nature are starting to perform. And we think that's what's going to continue to confound investors who have been, playing off the back foot since April. And so we expect a performance chase into year end. For us, we're basically rotating out of U.S. tech into laggards within the U.S. as well as emerging market equities. And then, as I say, very bullish on commodities, very bullish on energy and on renewable energy in particular.
Jay, just want to pick up on what's happened with the Federal Reserve and how it might inform some of those views. Lisa mentioned it. This is a Fed now, led by Chairman Powell, that seems to be more worried about jobs and less worried about inflation, and perhaps even more tolerant of it. Now, that second point, I think the framing of it, Jay, is really, really important. Do you sense this Fed is more tolerant of higher inflation? And how does that play into this view of what's been happening with small caps and, for that matter, with bond yields worldwide as well?
Well, we think that the focus really is fiscal, John, and we've been talking about this for over a year. Monetary policy, less important. Fiscal policy, more important. That's why you see the long end breaking out, as you pointed out at the open here, around the world. It's a global issue, and that's because governments have to spend. Governments have to spend on AI, on climate, on defense. There's no choice. These are all existential. And so we expect that to continue. We've talked about this before on this show. We've been out of government bonds for years, haven't owned a treasury bond in several years, and continue to feel that way about the rest of the world. So to us, it's all about fiscal. It's all about growth. Fed is less important. If the Fed doesn't cut, that's probably sets up a little bit of a pullback here. That would be viable because I do think people are now believing that almost with a certainty the Fed will cut later on this month. If they don't pull back, it's viable. If they do, markets continue to be okay. Look, and the issue is not economics. It's not politics. It's really quite simple. Earnings. Earnings drive equities, and earnings have been good. Forward earnings revisions globally are rising. You have liquidity, abundant liquidity around the world. People's Bank of China, ECB, Fed, all providing liquidity, and you have a very robust technical position underpinning the market. Just one quick example, 100% of the equity markets in the Asia Pacific are above their 200-day moving average. 100%. That's the first time in 4 years. We have a global equity bull market.
I'm just struggling to square the idea that we could see yields, particularly on the long end, continuing to rise because of fiscal spending, and you could see outperformance by some of the most yield-sensitive areas of the market. How do you square that circle?
Well, I think that there's leverage to rate cuts. So on the front end, right? The ECB has cut. We're in a global rate cutting cycle as well, Lisa. As you know, vast numbers of central banks around the world have been cutting, will be cutting going forward. If the Fed joins them, small caps are the play. They have the most sensitivity. Small caps benefit from deregulation. That's a big focus of the Trump administration. So, I think there's a rationale here. And look, what we think is kind of interesting is that there are record short positions in things like small caps. There's the most bearish oil positioning in 25 years, according to folks who really focus on that segment. So there's a lot of negativity hiding out in pockets of the market that have not performed. And as they start to perform, we think that is the catalyst and the kindling for the run up into year end. Because if all of a sudden the places where people are hiding and are negative flip to being positive, as John pointed out, small caps up 7% in a month, then you got to get on that train. Particularly if December is only a few months away.
I've actually been somewhat surprised that markets have completely shrugged off the court ruling that happened late last week, when we really have to rethink whether these tariffs that Trump has put on will be able to be maintained. And I know that there are other options, but it raises a question for the bond market, and it raises a question for fiscal spending. How much does this actually not plug a hole in the deficit that's crucial? It's going to send yields even higher. And then how much does this force more cuts, not more spending, in order to offset that? Jay, are you just dismissing the possibility of cuts that have been proposed in places from the UK to France to here in the United States?
Cuts in rates? I'm sorry.
No, cuts in fiscal spending.
Spending. Okay, thank you. We wrote a piece 6 months ago now called the Stoic Strategy, right? Where we said the number one strategy to invest in the age of Trump is to ignore everything that Trump and his administration have said. That's worked out phenomenally well, right? It's been an investing superpower to ignore Trump and his admin and focus on the things we just talked about. As far as spending cuts, look, it looks like places like the UK are facing those issues. We don't think that's an issue in Europe. We expect growth next year. Not only are we looking into year end, but we're now looking into 2026. In 2026, two big things we expect to see happen. One, better European growth driven by German stimulus, defense spending, etc. Two, most importantly, China defeating deflation. We are super focused on China's ability to defeat deflation and drive economic growth. We expect that to happen. We're watching the 10-year government bond in China as our bellwether signal there. I think it's the single most important macro number in the world today. As that heads north towards 2%, suggesting that deflation will be defeated in China, those are the things that are going to drive markets, not, frankly, whether spending is cut in the UK, for
Jay,
example.
just final question. I just want to jump in. That point on China is an important one. If you believe they can defeat deflation, do you also believe they're going to aggressively cut excess capacity? If so, and where? And has that changed your views from sector to sector?
100%, John. You're right on top of it. No surprise, buddy. And where the opportunity is in renewable energy, right? China has a two-pronged approach to defeating deflation. The first, anti-involution, reduce excess capacity. That's focusing mostly in the renewable energy space, in solar and in wind and in EVs. So what is breaking out, interestingly enough? Renewable energy. ICLN is the ETF that we focus on. it looks like a champ. It just broke above its 200-day moving average for the first time in over a year. The second prong is consumption, right? Fiscal stimulus to drive consumption, to drive demand. Moving on to cash handouts. China is actually engaging in cash handouts to stimulate consumption. And so the big opportunity, as we see it right now, to benefit from this beyond, China large caps and K-Web, which again, you and I know, we've been invested in overweight China for close to 2 years now. But the big opportunity right now is in the renewable energy space as a play on China successfully defeating deflation.
Hey, Jay. Great to catch up with you, sir. Jay Pulaski of TPW Advisory. Let's play this out one further step and take another asset class. Let's say Jay's right on China. What does that mean for the global bond market if China actually slays the deflation beast? What does that mean for this bond move we're seeing already take place around the world?
So you're looking for some sort of discipline and you're not going to find it suddenly in China. Well, then all bets are off and you've got this global inflationary cycle with maybe China demanding higher prices for their goods because they're going to cut some of the overcapacity. In other words, if you're looking for anyone to tame inflation, it's been China. If they're going to reverse that, well, let's see how high these yields can get.
Gold gets it. Record highs for precious metals. Let's get you an update on stories worldwide with your Bloomberg brief and some breaking news. Here's Yahara Arnott. Hey, Yahara.
Hi, John. Exactly. The Kraft Heinz Company's board approved a plan to separate the firm into two independent publicly traded companies through a tax-free spinoff. The two resulting companies will have names determined at a later date. Kraft Heinz expects the transaction to close in the second half of the next year. The companies had merged about a decade ago. Meanwhile, the Trump administration is preparing to take its case to the Supreme Court after an appeals court ruled that the bulk of Trump's global tariffs were illegal. Treasury Secretary Scott Bessent saying the appeal will emphasize the long-standing trade imbalances facing the U.S., as well as the need to curb the flow of fentanyl into the country. And China, Russia, and India are deepening their diplomatic ties, which was on full display at a summit in China. Leaders of the three nations have been pushed closer together due to President Trump's tariffs. And the partnership between Beijing and Moscow is growing as President Vladimir Putin appears to have secured a deal to build a gas pipeline to China through Mongolia. That's your Bloomberg Brief. John?
Yahara, thank you. More Yahara in about 30 minutes' time. Up next on the program, President Donald Trump's tariffs face a legal setback.
We think we're going to win at the Supreme Court. We are close to a tipping point where we could have financial instability due to these large and persistent trade deficits. So we are trying to head off a crisis.
Up next on the program, we'll catch up with the former NEC Deputy Director Everett Eisenstadt, live from New York City this morning. Good morning. From New York City. Welcome to the program. Here's your week ahead. Later on this morning, some economic data, ISM manufacturing data. Look out for that through the week. Lots on the jobs front. Concludes on Friday. Payrolls Friday, just around the corner. In the equity market, equity futures pulling back by, let's call it 0.5% on the S&P 500. Following some massive outperformance on smalls, the Russell 2000 is negative by 0.8. Let's just sit on the bond market for a few beats. I want to talk about 10s and 30s. In April, when this administration came out with some major tariffs, it was bond negative. In August into September, as the courts challenged these very same tariffs, it's bond negative. Go figure.
People thought that this would be problematic in terms of both the deficit and with respect to U.S. trading relationships. They underestimated back in April how much revenue, actual tangible revenue, would be brought in and how much that would offset the deficit. Without that revenue, what does that do to the fiscal backdrop and to the bond market? And that is the reason why it was negative then and negative today.
Remember Mohammed Al-Erin would talk about all these little fires? All these little fires in the bond market right now in the US. The UK has its own issues. France, Japan, seeing it all build into one big monstrosity, potentially at the long end of the yield curve worldwide.
Yeah, bonfire of the credibility of developed market economies and actually cutting their deficits and being able to do so effectively at a time of raising costs. Bonfire of the vanities, sort of 2025.
30-year bond yields up by 5 basis points, closer and closer to 5% on a 30-year maturity stateside. Under surveillance this morning, President Donald Trump's tariffs face a legal setback.
We think we're going to win at the Supreme Court. We are close to a tipping point where we could have financial instability due to these large and persistent trade deficits. So we are trying to head off a crisis.
So here's the latest this morning. President Donald Trump facing a legal setback in his tariff agenda after a federal appeals court ruled most of the levies are illegal. The Trump administration vowing to take the case to the Supreme Court. Bloomberg's Tyler Kendall joins us now for the latest. Good morning, Tyler.
Hey, John. Good morning. So these are the tariffs that have to do with IEEPA, the International Emergency Economic Powers Act. And the court ruled that President Trump overstepped his authority because in order to invoke IEEPA, the president had to declare a national emergency that the administration felt warranted a tariff response. So in the case of the so-called reciprocal tariffs, the president cited persistent global trade imbalances. And in the case of those tariffs against Canada, Mexico, and partly on China, the president cited concerns when it comes to fentanyl and the border. Keep in mind here, courts have actually been historically pretty deferential to presidents and their ability to declare national emergencies. But we've never seen a White House invoke IEEPA in order to impose tariffs, let alone such broad-ranging ones. Now, for the time being, these levies are allowed to stay in place while they make their way through the court system. But I want to make one really critical point here. The appeals court upheld a lower court ruling from the Court of International Trade, but it actually urged the lower court to re-examine its ruling and how it applies to everyone instead of just the parties that sued, essentially looking into whether or not this decision really should be universal. That could have some pretty big impacts here and leaves this White House with really two options on the table. One, they could have the lower court retake up this question and relook at the issue, or they could appeal directly to the Supreme Court. And at this point, John, it seems like they're headed in that direction. You just heard the Treasury Secretary there saying that they are prepared to take this all the way. And we are expecting Besson to actually put forth a brief to the Solicitor General as soon as today. Of course, that's the one that would be arguing this in front of the High Court.
Tyler Kendall down in Washington, D.C. Tyler, thank you. To build on this conversation, joining us now, the former NEC Deputy Director, Everett Eisenstadt. Everett, welcome to the programme, sir. Companies don't know how to price this. Governments don't know if they should or shouldn't negotiate with this government now. What do you think the next move is?
Well, I think as was indicated, I think the administration is going to go to the Supreme Court and get a final determination on whether the tool they use to put these tariffs in place are going to stand or not. If they fall, they've got a lot of other options. They've got many different statutes they could go to. They could go to Congress and get some, revised statutory authority. So it is an important matter, and it is quite significant, but it is not the end of the story by any means. There's a lot of other options out there.
At the same time, the court decision stayed these tariffs and kept them in place until October 14th. And it seems like that's a pretty ambitious timeline for the Supreme Court to see this case. What happens for companies between October 14th and whenever the Supreme Court takes this up, given that they could be owed compensation for what they already paid for tariffs?
It's a really important point. I think one of the things we've been counseling clients is to be sure to be tracking their import data. What are they bringing in? Making sure they file protests at the appropriate time, understanding their liquidation dates, because there may come a point in time where a company has to take a proactive stance to actually go and get these tariffs back. Traditionally, if a tariff like this, fell, the government might say, okay, well, it applies to everybody. Everybody can get their revenue back. We don't think that's going to be the case. We think this administration is going to work hard to retain that tariff revenue, which will put the burden on companies to actually go out and get the revenue back that they've already paid. So being diligent and keeping track of those expenditures is going to be very important.
This was supposed to be the time of the year when companies had more certainty and would actually engage with plans of acquisitions, mergers, investment. How much do you see that stymied because of the lack of clarity here?
Yeah, there's no question about it. I mean, we see it all the time. Every time we think we're going to get some foundational understanding of the trade environment, something happens. Court ruling comes, a new tariff measure comes out. I mean, India and Brazil are two examples, but we have some other tariffs that are coming down the road as well. There's a number of 232 national security investigations ongoing on really important sectors of the U.S. economy, like critical minerals, pharmaceuticals, semiconductors. All of these have implications for companies' supply chain investment. So I think for understanding where to put your money as a company, where to invest, and the best timing, I think it's quite a challenge. And they still don't have the certainty that they'd like to see to make those big long-term investments.
Everett, you mentioned the 232 investigations. Do you think that perhaps some of those investigations will be delayed until we have a conclusion on the legal issues around IEEPA? Because if they need to use different tools, maybe they need to wait and see if they do need to do that or not.
Absolutely not. I don't see any delay. And if anything, I see an acceleration of those. One of the things that even the president had kind of indicated over the weekend, or leading into the weekend after this court case had been dropped on Friday, was that they are going to use this national security law, this 232 law, to expand the scope of tariffs. Now, what we've seen with the steel and aluminum tariffs that are now at 50%, just recently there were 400 petitions from companies that sought to have their products pulled into these tariffs. And almost all of those were granted. So companies were sitting back. They hadn't been affected by the tariffs. This new inclusion process is a way to bring a lot of product into the tariff regime. And it's being used very aggressively. So I would actually expect an acceleration of the 232s and an expansion of their scope, because if the IEEPA tariffs fall, they're going to want to have this tariff revenue. They're going to want to have this backstop.
Everett, appreciate your time. As always, thank you, sir. The former NEC Deputy Director, Everett Eisenstadt. What did you make of Secretary Besson's argument? We're close to a tipping point where we could have financial instability due to large and persistent trade deficits.
He's trying to figure out, how do you make this an emergency? You don't call fentanyl an emergency, and you can see that legal argument getting shaped.
Stocks down. Bond yields higher. That's the price action so far this morning. Coming up, China-based book CEO Leland Miller as President Xi signals unity with India and Russia. Four months of gains on the S&P 500, the longest monthly winning streak of the year so far. Equities kicking off September, lower by 0.7% on the S&P, lower on the Nasdaq by 0.9%, and likewise on the Russell 2000. Small caps in August up 7% this morning, down by almost 1%. In the bond market, 2-year, 10-year, 30-year bond yields, big move lower at the front end of the curve through last month, thanks to a weak payrolls report and a dovish Fed chair, Jay Powell. 2-year yields, 365.36 this morning, higher by 3 basis points, but the longer end of the curve will get your attention, not just stateside, but worldwide. 30-year bond yields getting closer to 5% in the United States. In Japan, at record highs. In the UK, the highest since 1998. Now, this is the toxic mix we've talked about so often. Yields up, currency weaker. You see that tension, that pain building in the UK.
And you've talked about this, the emerging markets like dynamic, where a company is hamstrung by its debts at a time when they cannot grow their economy. So how do you get out of it? Do you make cuts that just add to some sort of pain in the economy, that shrink the economy further? Does that actually gain the confidence of bond investors? And I will ask this, right now is a great test. Is this enough from the bond vigilantes to force discipline on a government? Are we seeing the tipping points, or do we have to see more pain around the world before governments make the hard decisions to make certain cuts and to make certain select investments? Prudent government.
Sterling, 133.87. We'll come back to that story in just a moment as we count you down to the opening bell. About 3 hours away. Let's get you some morning movers, some single names. Here's Danny Berger. Hey, Danny.
Hey, John. NVIDIA, because of its weight, was responsible for 40% of the S&P's decline on Friday. Its reign of terror continues today. It is down 1.5%. This would be the fourth consecutive day of declines, the longest losing streak since March. The catalyst, take your pick. Is it higher bond yields? Is it because of its earnings? Is it because Alibaba is developing a new chip in China? It's unclear, but otherwise, NVIDIA is sinking lower. Moving to the upside this morning, however, is Frontier Airlines. This is on some sell-side action after Spirit Airlines on Friday declared bankruptcy for a second time. Analysts at Deutsche Bank pointing out that Frontier is most likely to be the biggest beneficiary of that, another budget airline. It overlaps with a lot of Spirit's routes, so you'll see consumers perhaps moving to Frontier, those shares up 9%. Finally, ending things with Eli Lilly this morning. Yesterday, we learned that Novo Nordisk did a real-world study of its drug Wegovy and found that people with cardiovascular disease. The risk of death, of stroke, of heart attack fell 57% versus that of Lilly's offering. Analysts noting that this could be used for advertising against Zepbound, so those shares down 1.6%, John.
Danny, thank you. Appreciate the update. More from Danny in the next hour. On our radar this morning, one of our top stories, the Treasury Secretary Scott Bessent expressing confidence the Supreme Court will uphold President Trump's tariffs. Reuters reporting that Bessent is also eyeing another legal methods to impose the tariffs as a backup plan. Our second story, President Trump reporting considering declaring a national housing emergency this fall as the administration gears up for the midterm elections. Scott Bessent saying housing affordability would be a critical leg of their platform. And finally, the biggest story in the bond market this morning, long-dated UK bond yields climbing to multi-decade highs as investor confidence wanes in Prime Minister Keir Starmer's government. Yields on 30-year gilts climbing to nearly 5.7% as concerns continue to mount over the country's budget trajectory.
If you want any positive spin on this, you could say the trajectory hasn't been the spike upwards that we saw a number of years ago during the Liz Truss moment, that it hasn't been as rapid of a momentum. But I would argue that actually the slow grind higher in yields, the slow grind weaker in the pound is actually more concerning, because what it signals is not necessarily some forced sale, but a gradual and persistent loss of confidence in the UK's ability to really get their budget around at a time when they are facing this question about their deficit expanding and growth that's weakening. And that really is the toxic brew that everyone wants to avoid.
I think in addition to that, Lisa, I'm so pleased you said it, they've lost control of the messaging. If you follow the domestic press in the UK over the past few weeks, I've seen suggestion after suggestion of new tax hikes in the United Kingdom. Many of those won't even make the light of day. But the problem with that is every single day you have a story like that out there, you lose more and more confidence. And the problem the UK's got at the moment is they keep putting up taxes and the tax base keeps disappearing. A lot of people are just leaving the country. And if you keep floating more and more tax hikes, guess what people are doing? They're not investing, and they're not going to remain in the United Kingdom if they've got money or any ideas to invest in a business anytime soon.
So how do you do it? And this is really the quandary that the Starmer administration faces. Do they cut a lot of the services around the board? Well, they tried that. That didn't go so well. How do they raise revenue? How do they bring investment back at a time where they don't have the luxury of pro-growth measures? And this is really interesting for the United Kingdom, but also at a time where this is an issue everywhere. This is happening in France as well in a massive way when they're proposing cuts that are so deeply unpopular. Remember, they were going to take away a national holiday, and that turned into a national catastrophe. Was reversed. So how are they going to shore up their economy before they reach that point? And that, I think, is the big concern.
You've got the tax lever and the spending lever. And if you're on the left, you keep reaching for the tax lever, and that's the problem. Secretary Bessent has said this quite a few times. We don't have a tax problem, we have a spending problem. And they have a spending problem in the UK and a spending problem in France, and no seemingly ability to do anything about it or willingness for that matter, both in the UK and France. Now, France has got an excuse. France can turn around and say, we simply don't have the numbers in Parliament to get this through. We need help from elsewhere. The Labour Party does not. They have a massive majority in Parliament and can't make it happen.
Yeah. This is the difficulty right now, because ultimately, where do you make cuts? And what do you do to the economy in the short run, and how do you avoid the blame? The tax lever isn't going to work. We already know that because we've seen the tax base get dissipated around the world. But the spending lever is a real question mark when you have a decelerating economy. How much pain are you willing to tolerate? And then what does the Bank of England do with that? And this is going to be a case model, maybe, for other nations around the world.
The highest since 1998. It's not pretty in the UK. And to Lisa's point, it's not pretty elsewhere either. Let's turn to geopolitics. Chinese President Xi Jinping, the Russian leader Vladimir Putin, and Indian PM Narendra Modi presenting a united front at China's annual security summit. Joining us now is Bloomberg's Min Min Lo. Min Min, welcome to the programme. Just walk us through what's been happening over the past day or so.
Yeah, today Putin and Xi had a meeting, and it was one that came with a lot of breakthroughs, because the big deal that was signed was between the Gazprom, which is Russia's state-owned company, and China agreeing to build this Power of Siberia 2 pipeline, which would help to divert a lot of the gas pipeline sales to Europe to China instead. And that would help the company recoup about 30% of those gas pipeline that was diverted, that used to be sold to Europe, to China. So, and a very important breakthrough, because this was something that has been under discussion for many, many years. President Xi and China have been reluctant to sign onto the deal because they didn't see it as urgent to continue to step up gas purchases from Russia. They didn't want to over-rely on Russia as well. And this deal coming as President Trump has been threatening more tariffs on China if it continues to buy Russian oil. Interestingly, we see the same thing with Modi as well. Modi's India's largest state-owned company, oil company, saying it will continue to buy every single drop of Russian oil available as long as it remains economical. Really a slap in the face for President Trump, and perhaps showing that Trump's additional tariffs to punish India is in some ways backfiring.
Min Min with the Lotus. Min Min, thank you. Appreciate it. Min Min Low there of Bloomberg. The kind of imagery that would irk this White House big time. These three leaders in one room.
It is the imagery, though, that might speak louder than any kind of real relationship. And that is the ultimate question. How close can these ties get? I will say the idea of Putin and Xi being the ultimate statesman is really quite ironic.
It's quite something,
yes,
right?
Yes, absolutely.
Yeah. OK, let's extend some of this with Leland Miller, the CEO of China Beijberg. Leland joins us now for more. Leland, welcome to the programme. Is China and President Xi, from an economic standpoint, operating from a position of strength?
I wouldn't call it a position of strength, but it's getting stronger considering that a lot of countries are backing away from their close relationships with the United States. I mean, if you look what's happening with India right now, India doesn't want to be looking around the room and see China on the left and Pakistan on the right and Belarus across the room. I mean, it would rather be in a group of countries, the United States and others, and strengthening trade relations there. But it will push back if it thinks it's being pushed into a corner. And so we're seeing a situation where China is becoming an attractive option because it's not the United States right now.
It seems like Russia and China have a very clear relationship. China is almost the owner, or Russia is the vassal state of China because it is so dependent on its revenues. The relationship between India and China is much more complicated. How do you see that evolving? How close can that get, given how incredibly contentious the relationship has been for decades?
Yeah, look, India considers itself a non-aligned country, and a lot of countries do in Southeast Asia too. That have said they're not going to be a U.S. ally directly or a Chinese ally. They're going to manage relations with both. I mean, you've got Indonesia, you've got Vietnam, you've got a lot of other countries. But within that non-alignment label, there have been tightening relationships for years and years in the United States. It's been geopolitical, it's been economic, it's been trade. These things have been very advantageous to U.S. policy goals, trade and foreign policy and even military in the Pacific region. And if all of our policy ends up backtracking to become one big question about sort of fair trade, but it doesn't have any look at the geopolitical side instead, and how are these things balancing out, then we're going to wake up 5 years from now. We're going to realize that we've just undid 20 years of diplomacy that have sort of pushed back against the China-led world. It's a problem.
How much are you already seeing some of these new alliances in the trade data? I mean, we've seen, for example, Chinese exports that have decreased substantially to the United States, but that have increased substantially to the rest of the world. Do you see that along alliances, or is this just transshipments? The idea of finding the weakest node that they can get products in that can eventually get to the United States?
Yeah, it's not alliances, but it's not all transshipment either. It's essentially China shoving its exports down other countries' throats. And, the United States, as you can see it in our China Beijberg data, you can see it in other trade data. The direct shipments in China to the United States have been going down, but China has been just unloading its exports, in particular into Southeast Asia, because they can't push back. They can't push back geopolitically. They can't compete with Chinese lower prices that are sort of dumping their overcapacity into Southeast Asia. So it's not about tightening economic block. If anything, it's the opposite. But it means that in a world in which China is trying to find places to dump its exports, it's picking on its weaker neighbors, and it's being very successful right now.
Leland, can we just stand that point? China's overcapacity. We had a guest on the program about 40 minutes ago making the argument that China was going to address that. Do you see any sign of that whatsoever?
It's one of these things that people read they read what the government's plans are, and they say, oh well, the government must be willing to address this. They're going to have more consumption. They're going to have more stimulus. They're going to have they're going to combat overcapacity. Finally, the model doesn't allow them for them to do this very easily. So look, if it was a priority in the short term, yes, I think that they're doing little things. This anti-involution campaign, they're trying to weed out some of this price competition that comes from every provincial government in China subsidizing the same stuff, leading to oversupply, leading to exported oversupply and this overcapacity problem. So yes, in the short term they're going to deal with it on a micro level, but the economic model that China has, which is stimulus to the supply side and not to the demand side, it does not allow for them to shift things away. They're going to have more overcapacity, and they're just going to have to find places to bury it until someone or some bloc forces them to do otherwise.
Leland, just why are they married to that particular model? What would it take to make them change their mind?
Well, I think it's what Xi Jinping and Chinese communist leaders have thought for a long time. What they want to do is they want to produce more. They want to build up their industrial base, and that's fine, and that's laudable from their perspective. But what has happened is it's all the stimulus. The entire model is based on spurring more production and more exports, and they're being very explicit about that in the last couple of years in particular. So as long as you're trying to produce more, but you have very weak domestic demand, and you're doing absolutely nothing structurally in order to empower consumers or households or the private sector to become more consumers back home, what you're doing is you're having a model that's completely reliant on production. And that's what the model is right now. It's why China is very vulnerable, but also not a very good trade partner for others who want them to import more.
And why the US has been so frustrated over the last decade or so. Leland, appreciate your time. Leland Miller there, the China Beige Book CEO. Some pushback to what we heard from Jay Pelosky earlier this morning.
Saying that it would be very hard for them to push back on this model of overcapacity, and that essentially they're making noise as though they can, but ultimately they would have to upend their entire economy in a way that there doesn't seem to be the impetus to do so.
It's amazing what's happened so far this year. Tariffs have gone up big time. Trade has broken down between the US and China, and yet still that budget surplus, that trade surplus rather, in Japan is bigger and not smaller with the rest of the world.
Well, that really is the issue, right? Is this going to cause some sort of unrest in Southeast Asia? How do they fight back? And then what is the U.S.'s role? Is the U.S. truly stepping away from being any kind of safeguard or any kind of alliance or allied partner? And that, I think, is what a lot of people are grappling with.
If you are just tuning in, welcome to the programme. Bond yields higher across the curve this morning. Equities lower. Stocks are down by 0.75% on the S&P 500. That's the price action. Let's get you an update on stories worldwide this morning with your Bloomberg Brief. Back with us, here's Yahara. Hey, Yahara.
Hi, John. A plane carrying European Commission President Ursula von der Leyen was affected by GPS jamming as it landed in Bulgaria. According to authorities, the GPS signal was neutralized as the chartered plane approached Plovdiv Airport, forcing air traffic control to use alternative navigation tools. Bulgarian authorities blamed Russia for the incident. Meanwhile, gold prices climbed to record highs as investors add exposure to the precious metal in anticipation of rate cuts from the Fed. Gold has risen more than 30% so far this year, as you can see there, making it one of the best performing major commodities. Traders are looking ahead to Friday's jobs print for further signs of rate cuts, which add to gold's value as it doesn't pay interest. And Nestle has abruptly dismissed its CEO, Laurent Frex. An investigation found he had an undisclosed romantic relationship with a direct subordinate, of course, violating the company's code of conduct. Frex will not receive an exit package, and he'll be replaced by Philippe Navratil, who had overseen the company's Nespresso coffee brand. That's your Bloomberg Brief. John?
Yahara, thank you. More from Yahara in about 30 minutes' time in the next hour. Up next on the programme, global bond yields grinding higher.
The narrative that somehow something has dramatically changed about the behavior of the dollar, it's really too early. People point to the correlation between what's happening with long-term bond yields and the strength of the dollar and saying, well, that's changed, and therefore something has changed dramatically.
A conversation up next with Sonia Martin of DZ Bank, live from New York City. You're watching Bloomberg TV. It's a tough start to September. Equities down, bonds down, yields up. We're down by 0.7% on the S&P 500. Underperformance on the Russell, where there has been some outperformance more recently. We're down by 1% so far this morning on the Russell 2000. If you switch at the board and get to the bond market, check out the long end of the curve. Yields higher on 30s by 5 basis points, on 10s by 6. 30-year bond yields getting closer and closer to 5%. 4.98 so far this morning. Under surveillance this morning, it's global bond yields grinding higher.
The narrative that somehow something has dramatically changed about the behavior of the dollar, it's really too early. People point to the correlation between what's happening with long-term bond yields and the strength of the dollar and saying, well, that's changed, and therefore something has changed dramatically. That's not the case. If you take a long enough period, the relationship between the dollar and the borrowing costs, it can move in different ways. So there's nothing unprecedented. But of course, these are still early days.
So here's the latest this morning. 30-year bond yields around the world climbing to fresh multi-decade highs in France, the UK and Japan. Joining us now to discuss is Sonia Martin, the head of FX and monetary policy at DZ Bank. Sonia, welcome to the programme. This move we're seeing at the long end of the curve, I just want your initial reaction to that, both in what's happening in the UK and France and Europe, but also here in America.
Well, I think in the UK, it's pretty obvious. We have some major fiscal concerns. I mean, Keir Starmer has just publicly humiliated his chancellor, and there's really a question of how long Rachel Reeves can hold on to her job. So that's triggered a new wave of fears. And I think we're still, in a way, witnessing the after effects of the trust budget a couple of years ago when people got totally spooked about, the prospects for the UK bond market. And I think in a way that's still hurting. So you can see yields moving higher sharply. You just mentioned the 30-year in particular. And we have seen fiscal concerns pretty much across the board. France, obviously, with the the vote coming up next week, there's a lot of uncertainty here, and it's just pulled everything up in its wake, I think.
Sonia, is the UK idiosyncratic, or is this doom loop really showing signs of beginning across the developed markets? You pointed to some of the other countries that are facing similar dynamics with increasing bond yields at the long end and just pressure on the collective currency. But do you see it being somewhat different than the dynamic playing out in England, in Britain?
Yes, I think we really have to be careful to differentiate here. I mean, there is a structural factor at play, which is obviously that we have seen, deficits rising, and that has triggered some concerns that are justified, and I will buy that. But we then have to differentiate what's happening. And in the UK in particular, I think what's happening here, the market is sort of starting to show, I wouldn't say panic, but there's clearly some nervousness in the market. But when you look at it, the DMO has already acknowledged the lack of demand for the ultra long end of the curve. There'll be less issuance there. The Bank of England can sort of shift around its gilt sales as well. And let's not forget one thing. Even if yields at the long end rise very quickly right now, this does not impact the interest payments of the UK government on its existing debt. I mean, this doesn't translate right away into higher spending on interest rates. And that's just something I think people need to be aware of. So I think it's a little bit overdone at the moment. I don't expect this to turn into an absolute rout, no.
Hold on a second. Are you saying, Sonia, that the 30-year bond can't be the discipliner that a lot of people thought that it was, that this cannot be the bond vigilante slice of the market to come back with pitchforks and tell governments around the world, cut your deficits, that it won't act as that type of measure anymore? Is that your point?
Well, I would not go as far as to say that. I mean, it is a warning sign. I will say that it is a warning sign. And we have seen governments react to this sort of warning signal. Donald Trump himself clearly has reacted to that sort of warning sign before, and we've seen the same thing in the UK. It is a warning sign. I'm just saying we have to be careful not to conclude right away that if the bond yield rises, that automatically translates directly into much, much higher spending on interest payments. That effect will come in the long run, obviously, if interest rates remain high. But it's not, it doesn't happen one day to the next. So I think that's just something we need to be a little bit careful of, not to mix signals here.
Sonia, it can tighten financial conditions, though. And maybe it's too early to have this conversation, but I'm thinking ahead, a few steps down the road, maybe into 2026. Remember the ECB introduced the transmission protection instrument. And I just wonder if other central banks might look at the situation and say, look, we're cutting interest rates, but financial conditions aren't getting easier. Long bond yields are still climbing. Do you see central banks, either the Fed or others, thinking about stepping in here?
Well, I mean, when you mention the Fed, I mean, that's quite possibly a discussion that we're going to be having next year. I mean, the Fed, is going to be morphing increasingly into a sort of a very dovish institution with everything that's happening on the board. And so I do fully expect a discussion to come up in the US next year about the potential for the Fed to start, buying bonds again. I don't think there's any fundamental justification for this, and I think it would be very dangerous to do this unless there is a justification for these purchases. But I think a discussion about this is likely to happen in the US next year, definitely.
Sonia, appreciate your time. As always, Sonia Martin there of DZ Bank on the latest situation in the global bond market and with central banks too. This from Peter Chia over the weekend from Academy. At least I'm sure you saw the same thing. People aren't thinking out of the box enough and may well be underestimating this administration on their plans for bond yields.
Yeah, ultimately, we could have yield curve control. We could have shifts in terms of where issuance is happening. We already are seeing that on the margins. But this really underscores why we're seeing such a bid into gold, right? Ultimately, you've got governments around the world that are facing off with higher costs at the long end as they try to cut yields at the short end. It turns out monetary policymakers don't have control over everything. So what do? You start to manipulate. It's sort of the financial engineering that has really supported the economy for so long. What do you end up with? The depreciation of developed market currencies, the reason why people are looking at gold at record highs today.
Chairman Powell contributed to that as well, showing a greater tolerance for above target inflation. That's been problematic for a lot of people.
There's been a feeling that the pain that comes with any kind of recession is worse than just a little bit more inflation and a little bit more. And if you look at five-year break-even rates, they're creeping higher.
Gold, 34.85. Coming up in the next hour, here's the lineup for you. Phil Orlando of Federated, Henry Trays of Vader Partners, plus Matt Maley of Miller Tabak and Matt Hornback of Morgan Stanley. The second hour of Bloomberg Surveillance up next.
You have a situation where the Fed is clearly worried about the growth side of their mandate.
The growth story just isn't that great.
The uptick to 2.9% on the core PCE deflator is a little concerning.
Fed independence definitely affects the inflation narrative as well.
If the Fed does cut rates by 25 basis points in September, it's still not going to necessarily mean a sequence of rate cuts.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, the second hour of Bloomberg Surveillance starts right now, and your scores look like this. Equities lower to kick off the month of September. We're down on the S&P, on the NASDAQ, the Russell, the S&P 500 negative by 0.75%. The epicenter for the pain worldwide, it's in the bond market at the long end of the curve. Here's 2s, 10s and 30s. Yields high by 5 basis points, getting closer to 5%. 497.69 on 30s, the highest yield since 98 in the UK, since ever in Japan, and in France the highest since 2011. The week ahead to set the tone for financial markets worldwide, a lot of labour market data stateside, including ADP in just 24 hours time and payrolls coming up on Friday.
You know, this is a very complicated week, given the political consequences of Washington coming back, the tariffs and what happened there. And then, of course, what happens in markets, the bond market response to the jobs data. What is the bigger risk? That the jobs data comes in better than expected or worse than expected? How high is the bar for the Fed not to cut rates later this month? And how much is the hope and prayer of those rate cuts, regardless of the economic backdrop, what's supporting this market? And that, I think, is a real question heading into what typically is a pretty volatile month for stocks.
Mike Apen of Morgan Stanley is trying to answer that question, going into payrolls for you. September cut is not a certainty. Payrolls of 225 in August. Another clear acceleration in tariff-related inflation could keep them on hold.
This is a highly political question, especially because Stephen Myron might actually be on the board by the September meeting, by September 17th. That is the goal. And on Thursday, you do see that Myron confirmation hearing. Do they fast track that to get that into practice? There's just a real question here about a reaction function at a time where inflation is starting to creep higher in terms of expectations and in terms of what the bond market is pricing in globally. That is a real question. How much does that stymie potential return? Not only in the bond market, but also in equities.
I got excited about ADP. 48 hours away for ADP. But for the first time in a long time, maybe ever, we're talking about an ADP number on par with payrolls. More attention being paid to that data point.
Yeah, on par or maybe even at some point superior, because this will be the first payrolls report coming after the firing of the Bureau of Labor Statistics head, because of the revisions that are bigger than expected, but also have been traditionally something that we have seen during periods of disruption. So how does the government, how does Trump's administration react to whatever number we get at a time where it already has been highly politicized? And a lot of people are wondering not only about collection rates, but also just about how things are manipulated. I don't know that I buy that. I got to be honest. I don't think that things are being manipulated. I think that there are too many staff people in place. I just think the accuracy is more a question.
The fact there's a question, though, Bramo, that's the problem.
100%.
Going into a big week for labour market data. Big out coming up. We'll catch up with Phil Orlando of Federated Global Investment as we kick off a big month for markets. Henrietta Trades of Vader Partners as President Trump's tariffs bump into legal issues. And Matt Hornback of Morgan Stanley as gold hits another all-time high. We begin this hour with stocks on a 4-month winning streak coming into September. Phil Orlando, the chief equity market strategist at Federated Global Investment, writing the following. We expect the Fed to cut interest rates by a quarter point at both its September and December meetings this year, which should boost stocks towards our 7,500 target next year for the S&P 500. Phil joins us now for more. Phil, good morning.
John, thank you very much for having me back.
Thank you for being here, sir. Let's talk about the month ahead. Payrolls this week, inflation next week, and then the big Federal Reserve meeting. How are things shaping up for you and the team?
So we've had this massive 35% rally off the Liberation Day bottom going into, I guess, the week before Jackson Hole. And then the market traded off about 4% or so because the market didn't really understand or appreciate what sort of a tone would Powell take at the meeting. Now, the rally we've seen over the course of the last week or so has been that Powell took the right tone, that the Fed is thinking about easing. But as we get back to, the day after Labor Day, everyone's back from vacation. Now, the cold dose of reality sets in. All right, what's the next set of inflation data going to look like? What is the labor market data this week? And then you've got all the noise surrounding the Fed and tariffs. And does Miran, does he get seated this week? So at this point, that dose of reality, we think, given the fact that we've turned the calendar to September, there could be some chop here looking out going into the September 17th meeting.
Well, let's touch on a potential source of tension. Let's say the move we saw in the last month to see cyclicals outperform, to see the airlines up double digits, the home builders up double digits, to see the Russell of small caps up by 7% at a time where the chairman is increasingly worried about a cyclical downturn. Does that one stack up for you?
So we love small caps, just full disclosure here. And the key reason for that is we believe lower interest rates. Not only do we think we've got 2 quarter-point cuts this year, we think we've got another 4 quarter-point cuts over the course of next year. The funds rate by the end of calendar 26, we think the upper band is going to be at 3%. If we're right, that suggests that you've got an excellent backdrop for small cap stocks as well as those consumer cyclical areas. So that's our longer term view. But there's a lot of noise and nonsense that we're going to have to parse through over the course of the next several weeks.
Given the fact that this would be the deepest rate-cutting cycle outside of a recession ever in data going back to the 1980s. I mean, this is something that a lot of people have pointed to. So do you see these cuts coming irrespective of whatever economic data that we get? In other words, you can question the politics of the moment, but what this market seems to be pricing in is rate cuts for the sake of rate cuts that juice growth and possibly inflation, regardless of the economic data.
Great point, Lisa. We're looking at that dual mandate. We're looking at the data. And so while there is some concern about inflation, we're focused on the labor market here. What's happened in the labor market over the last three months? The average non-farm payrolls, 35,000. The first 4 months of this year, that number was up around 125,000. All of last year, that number was 168,000. So the labor market is materially slowing. This coming Friday, we're going to get the August non-farm payroll report. The August report, historically, is the wonkiest report of the year. There's going to be a lot of noise. You've got summer vacations in and out. Companies, manufacturing facilities take downtime in terms of furloughing temporarily workers and whatever. And then next week, I think it's next Tuesday, we're going to get the annual payroll revisions. Last year, that revision was down 800,000 jobs. We think the revision this year could be down another 500,000 or 600,000. So we'd be focused more on the labor market and the deterioration there as opposed to what's going on with inflation.
If inflation is higher, though, and you do see that sort of crimping in the labor market, the sort of loosening or in the labor, I should say, this issue of people not being able to get jobs, then why would small caps rally, which are typically hinged to growth, when that's a stagflationary backdrop?
So we think that growth ultimately over the course of next year is going to improve. Let me throw this data point out. Our macro policy committee at Federated, our GDP forecast for next year is 2.8%. The blue chip consensus is 1.4%. Within the blue chip consensus, the highest estimate on the street is 2%. So why are we at 2.8? One of the things we're focused on is the fact that we are looking for a significant improvement in economic activity coming in corporate capex. One of the key provisions in the One Big Beautiful Bill was 100% expensing. So you look at productivity growth in the first quarter of this year, and it was negative by 2%. It's never negative. What we think was happening is a lot of companies were holding back their capex plan, saying, we're going to wait to see what's in this piece of legislation.
Okay, but that was also contingent on some clarity around tariffs. Don't some of those plans get withdrawn now that there's a real question mark around how much the tariffs go into place?
Well, the tariff question is an open question at this point. And so I think legislatively we've got that, but I think this is ultimately going to be decided by the courts, particularly the Supreme Court, in terms of the legality of the tariffs.
Despite that, you're clearly looking for a re-acceleration in growth through the next year.
Absolutely.
And arguably the market's picking up on that in the last month. Do you think what's happening at the long end of the yield curve is a reflection of a better growth profile in our future? Or do you think it could become a constraint for risk assets?
So the way we're looking at the yield curve is you're probably going to see a further steepening, lower interest rates at the low end, higher interest rates at the high end. But as we look out over the course of the next 18 months or so, we think the benchmark 10-year Treasury yield could be working down towards the 4% level, which is supportive, we think, of consumer cyclicals and smaller cap stocks.
What's helping 10s fall? What do you think delivers that outcome?
Well, I think the reality that inflation is not going to be as significant a problem as some individuals are pricing in now. We think that, again, as we're looking at this Phillips curve trade-off, the thing that we'd be focused on is the weakness in the labor market. Yes, there's been a little bit of a tick up in inflation, no question, but we're down off of a 41-year high to a 4-year low. There's been a little bit of a tick up, but we don't think we're going back to, a 9% CPI level over the next couple of years.
So basically the steepening yield curve is just bond traders getting yippy, and that they will stop being so yippy and everybody will come back and it will just go back to something that seems more stable?
Things will calm down over the course of the next couple of months.
Sound like the chief strategist from the White House.
Well, that's sort of what it seems like. I mean, it's sort of these momentary freakouts by bond traders that come back to work and think, oh, my goodness, these headlines are concerning. This is it. This is the big moment. And then they get kind of cowed into reality.
Well,
and
they've been lying on a beach for a month, and today's the reality call.
Oh, yeah, I
can
see all the
There is something unsettling, though, about the very long end of the curve. The fact that the DMO in the UK, for instance, has to come out and basically say not much appetite for the long end of the yield curve, seeing a similar thing play out in the US. Likewise in Japan. France has got its own problems. I get that. But they all contribute to the same thing, a reluctance for a lot of investors to buy at the long end.
How do you invest in the programs of a government that can't even stay together for 6 months? And that is the conundrum that a lot of people have for European, for developed market governments. This is really the ultimate question. Are developed markets losing their clout on the global bond market stage, and how much does that crimp their ability to support their budgets that they've been having for the past 30 years?
We mentioned this just last week, going into the weekend, the conversion of EM and DM dynamics over the past 12 months. Pretty notable.
Yeah, it was a great point that you made, and this was really what ultimately is going to come to fruition here. How much are countries losing the ability to gain control of the narrative at a time where it's kind of getting away from them from both the currency perspective and the bond market perspective?
Bonds down, yields up by about 5 basis points. Stateside, the 30-year at about 4.98. Phil Orlando, Federated. Phil, good to see you, sir. Appreciate it. Thanks for dropping by. Let's get you an update on stories worldwide with your Bloomberg Brief. Here's Yohara Arnold. Hey, Yohara.
Hi, John. Klarna is looking to raise as much as $1.27 billion in its highly anticipated U.S. IPO. It plans to sell 34.3 million shares in the IPO, with the price expected to be between $35 and $37 per share. The buy now, pay later firm will trade on the New York Stock Exchange under the ticker KLAR. Meanwhile, it's an underwhelming start for Tesla in India, with just over 600 orders since its sales launch under 2 months ago. Heavy import tariffs have pushed the cost of Tesla's entry-level model above 6 million rupees, which is about $68,000. That's much higher than the 2.2 million rupee price tag of most other EVs in the country. And we are on to the round of 16 in the 2025 U.S. Open after number 23 seeded Naomi Osaka took down the third-ranked Coco Gauff in straight sets. This marks Osaka's first quarterfinals since 2021. On the men's side, favorites like Jannik Sinner, Carlos Alcaraz, and Novak Djokovic all advance to the next round with ease. That's your Bloomberg Brief. John?
Yahara, thank you. Appreciate the update. More from Yahara in about 30 minutes' time. Up next on the program, a tariff roadblock.
We think we're going to win at the Supreme Court. We are close to a tipping point where we could have financial instability due to these large and persistent trade deficits. So we are trying to head off a crisis.
Up next on the program, we'll catch up with Henrietta Trays of Vader Partners, live from New York City this morning. Good morning. Had a really decent run over the past 4 months. 4 months of gains on the S&P 500, with much more of a cyclical tilt through the month of August. Waking up in September, though, reality check from the bond market. Stocks down by 0.7% on the S&P, on a Russell by 1 percentage point. And here's your reality check. Slap round the face from fixed income worldwide. 30-year bond yields up by 5 basis points, 4.98 this morning on 30s. Highest since 98 in the UK, highest on record in Japan, highest since 2011 in France.
The why is interesting here. How much is this a fiscal concern issue? The question of how sustainable a lot of the budgets are around the world. How much is this an inflation issue? And how much is this just a protest issue? The bond vigilantes with pitchforks, and ultimately that will drive what the meaning of this is. You asked Phil Orlando a great question. Is this yield curve increasing or widening a sign that growth is going to accelerate, or a sign that inflation is going to get out of control? And he's saying, it'll normalize, right? But that's really the key question at a time where it could be viewed positively or it could be viewed very negatively.
I think what a lot of people find unsettling, myself included, is the loss of confidence in the long end of the yield curve. And we've seen bout after bout of that through the year so far. And you're not just seeing it in the United States. That's problematic. You're seeing it across DM. And I'm not sure there's much that governments in the UK and France at the moment seem to be able to do about it. We know what the recipe is. We know what the to-do list is. They just don't seem to have the ability to actually follow through anytime soon.
The bond market is almost like a gauge of the dissolution of the global world order. And there's been this feeling that governments in democracies around the world can't bring the poles together. And you've seen that in France, you've seen that in the US, you've seen that in the UK. You cannot bring the two very polarized sides of the political spectrum together. So what do you get? A bond market that's not having confidence 30 years out that that government's going to have the ability or willingness to actually pay back their debts. And that is what you're seeing increasingly priced into bond markets.
Wouldn't call it a buyer's strike just yet. Wouldn't go that far, but you've seen signs of it, that's for sure, for the year so far. Under surveillance this morning, a tariff roadblock.
We think we're going to win at the Supreme Court. We are close to a tipping point where we could have financial instability due to these large and persistent trade deficits. So we are trying to head off a crisis.
So here's the latest this morning. More uncertainty over the future of Trump's global tariffs after a federal appeals court ruled most of the levies are illegal. The tariffs are allowed to stay in place while the case plays out. With the latest, here's Bloomberg's Tyler Kendall. Morning, Tyler.
Yeah. Hey, John. Good morning. So these are the tariffs that were invoked under IEEPA, the International Emergency Economic Powers Act, and The court ruled that President Trump overstepped his authority here because under IEEPA, the president had to declare a national emergency that the administration felt warranted a tariff response. So in the case of the so-called reciprocal tariffs, the president cited persistent global trade imbalances. And in the case of those tariffs against Mexico, Canada, and in part China, the president cited concerns around the border and fentanyl. And I would expect these to be the arguments that the White House really highlights in the coming days as they prepare to likely take this to the Supreme Court. Now, I think it's worth mentioning that courts have historically been pretty deferential to a president's ability to declare a national emergency, but we have never seen a White House invoke IEEPA in order to impose tariffs, and let alone them be this wide-ranging. So this really does appear to be perhaps some uncharted territory. Now, as you mentioned, these tariffs are allowed to remain in effect while this works its way through the court system, and I don't need to tell you that trillions of dollars are tied up in the decision. In fact, if the Supreme Court were to uphold it, the Committee for a Responsible Federal Budget estimates that 71% of projected tariff revenue for this year would all but vanish. Now, with that said, John, of course, we're not expecting tariffs or the revenues that come with them to really go away. A person familiar tells us here at Bloomberg News that administration officials are already preparing other federal authorities to enact tariffs, even as they plan to appeal this decision. That could mean everything from more Section 232 investigations or the Treasury Secretary Scott Bessent saying over the weekend they're looking into Section 338 under the Smoot-Hawley Act.
Tyler Kendall with the latest in Washington. Tyler, thank you. This is why we've been asking a question on this programme. If this was struck down, would it be bond positive or bond negative, given how much money has been raised?
Yeah, given the fact that that wouldn't be plugging the gap in the federal budget deficit that a lot of people were expecting, and people are recognizing that a little bit more this morning than some of the other potential consequences.
Do you think, just on the margins, this is contributing to what we're seeing in America in the bond market this morning?
You know, Sure. I mean, maybe you could see that as saying maybe that's the case, but it's not being led by the United States. And that's the one caveat, because you're not seeing the extremes in the U.S. bond market that you are in the U.K. and in Europe. So while I'd like to say, yes, that fits a neat narrative, I can say I really cannot explain it fully.
It's a global bond market move, that's for sure. To weigh in on some of this, Henrietta Trays, the Director of Economic Policy Research at Vader Partners, joins us now for more. Henrietta, welcome. A lot of people just assume this will arrive at the Supreme Court, and this administration assumes that ultimately the Supreme Court will side with them. Is that how you see things playing out?
It would require a whole lot of fiscal dominance and migrating that fiscal dominance strategy away from the Fed and onto the Supreme Court. Not that he can't do both at the same time. But the reality of the situation is that the Court of International Trade found unanimously that these tariffs are unconstitutional and illegal. The Court of Appeals found the same thing on Friday night. The Supreme Court generally would not even take up this case. This is obviously political pressure coming from the administration trying to insert itself into the Supreme Court of the United States. And while Bessent might be optimistic that they're going to prevail, we hosted a conference call with international trade lawyers who've argued in front of the Supreme Court on Saturday for clients, which came out to 65% odds that the administration is going to lose this case. So as Tyler points out, I mean, prepare to migrate to sectoral tariffs. Expect much more of them on 232, 301 across the board.
So let's talk about what that would mean in terms of revenues. You said that even with those sectoral tariffs, if you took away the tariffs implemented under IEEPA, that would reduce revenue collection to the U.S. Treasury by $2 to $3 trillion at least. Can you sort of expand that out to give a sense of how much this kind of sends Congress back to the drawing board when it comes to reducing the federal budget deficit?
Yeah, and I heard your last commentary about whether or not the bond markets are paying attention to this. In my experience, they absolutely are. I was in a lunch room in New York with 20 investors just this time last week, and it was really clear that repealing these tariffs is going to be a massive problem for the bond market. And so you're really going to have a tale of two responses with the market, one for the bond market and the other for the retailers who are dire impacted by these tariffs, whether it's 25% on India for the reciprocal rate plus 25% for their purchase of Russian oil and gas, whether it is the 50% tariffs on Brazil. I mean, these are all exhaustive and imposed directly on nations that cannot be replaced quickly with 232s or sectoral tariffs. Just think of India, Vietnam, Malaysia, the Philippines, those nations have a 20%, 19% IEEPA tariff rate, but then they also have a 40% IEEPA tariff rate. That's everything coming in that you're buying at Walmart. So it's a huge boon for those names. But the bond market that's still struggling with the fact that earlier this year, the Republican conference passed the most expensive tax bill in U.S. history, and we did not pay for it. We cut 12 million people off of Medicaid, but that's not enough. We need a lot more revenue, and the tariff revenue is what's keeping the bond market together. So stripping IEEPA tariffs, while beneficial to Walmart, is going to be a disaster for the bond market. And I think that's what people are pricing in right now as they come to grips with the fact that the president could lose this authority at the Supreme Court by the end of the year.
Henrietta, John pointed out that earlier this year, when some of these tariffs were first implemented, it was considered a negative for bond markets. And now the removal of said tariffs is considered a negative for bond markets. What about the argument that the reduction of these tariffs will cause an increase in growth, an increase in trade, that will foster an increase in tax revenues just by virtue of how much money companies and individuals are making?
Yeah, absolutely. I mean, it's wild. It's unbelievable to watch the market correct 12% on Liberation Day and then respond negatively when the tariffs start to come off. And it's because we started baking in this idea that just because inflation hasn't hit yet, and just because we're only down 116,000 manufacturing jobs and job growth is stagnant, these tariffs are somehow a good thing. It's completely counterintuitive. There's going to be a lot to shake out in the market. It is highly political, and that's what we're dealing with.
Henrietta, appreciate your take. Henrietta Trace there of Veda Partners. One common theme: policy uncertainty, both in April and here again coming into September.
Well, I just wonder how much this really supports or rejects the bull case scenario that Stuart Kaiser put out over the weekend, where he was talking about, well, companies are finally going to have the confidence to implement all of their spending plans. Well, can they have that confidence? Is there more clarity? I mean, maybe there's more clarity than on April 2nd, but do we really have a sense of what the structure of tariffs will be? It seems like that might be a real question.
What did he call it? The sneaky bull case?
Yeah, I mean, it's
the sneaky bull case for year end.
Is it still sneaky, or is it now getting sleepy and pushing to the side?
It's getting sleepier.
Yeah.
Put it that way.
I don't know if that works.
Big move in the last month. Small caps up 7%. In just a moment, we'll catch up with Matt Maley of Miller Tabak following the best month for small caps so far this year. Plus, Danny Berger with your morning movers. We'll catch up with Danny as new data reportedly shows fewer Amazon Prime sign-ups despite expanded sales. That stock is down by 1.4%. From New York, you're watching Bloomberg TV. Let's check out some moves. Early days, I know, early in the month, but this is how we're kicking off September. Equities down across the board by 0.75% on the S&P. Outperformance for the small caps in August. Underperformance this morning. Up by 7% last month, down 1% so far today. In the bond market, 2-year, 10-year and 30-year bond yields higher by 5 basis points on 10s and 30s. The 30-year bond yield inching closer to 5%. 497.48. Worth repeating once again, it's not just a move here stateside, it's a move worldwide. You're seeing it in the UK, in France, in Japan. But a move I wanted to pick out was what was happening with gold. The takeaway from Chairman Powell is that Chairman Powell is much more sensitive to what is happening with the labour market, much less sensitive to what's happening with inflation. And I think there's another way to frame the second point. More tolerant of above-target inflation is a takeaway of a lot of people right now, and that speaks to the 5% move we had in gold just last month.
What is the haven trade if you can't count on stable inflation and a fiscal policy that is just as dependable as it's always been in the United States? You've seen gold increasing as an allocation for sovereign wealth funds around the world because of this question. Gold reaching all-time highs, more than 3,500, as people look to that alternative and finding it in the precious metal.
I think it's up 30% so far this year,
bonkers,
which is just absolutely remarkable. Up this morning by another 1/10%. That's the price action in precious metals with 2 hours until the opening bell. Let's get you some morning movers and cross over to Danny Berger for more. Hey, Danny.
Hey, John, if you just look at the biggest movers to the downside, there's an outsized presence of tech, a repeat of what we saw Friday. NVIDIA on the lows of the pre-market session, down 2 1/3%. If it continues to decline, it will be its 4th consecutive day of declines, the longest losing streak since March. Take your pick of why this is happening. Higher bond yields, as you were pointing out. Alibaba unveiling a new AI chip, some bad earnings from other AI players. Regardless regardless of the reason, there are clearly some market jitters around this. Now, elsewhere, another big tech Mag 7 declining today is Amazon. Shares are down 1.5%. A Reuters story out moments ago that sure, Amazon touted its really strong Prime Day sales, but it has one internal metric of how many people sign up to Prime in the run-up to Prime Day, and that declined. That missed the mark, lower by about 2% than what they expected, so that also seemingly have an impact here. Elsewhere, some activist action. The Wall Street Journal reporting that Elliott Management has taken a stake in PepsiCo, a $4 billion stake. This would be one of Elliott's biggest ever. It says that it wants to have some changes at the drinks and snacks maker given they're struggling, losing market share. It doesn't detail what those changes might be, but still shares up 4.5%, John.
Danny, thank you. Big move. More from Danny in about 60 minutes' time. On our radar this morning, leaders from China, India and Russia signaled unity at the Security Summit in China this week. The three nations tightening diplomatic ties in response to President Donald Trump's sweeping global tariffs. The president saying India is offering to remove all tariffs on U.S. goods after imposing 50% levies on New Delhi for buying Russian crude. Trump calling trade relations with India, quote, a totally one-sided disaster.
And then going on to say it's almost too late. So you wonder, is there room for negotiation? You wonder if those two stories are related, if the image of Modi, Xi and Putin getting together, holding hands, giving each other hugs, giving each other claps on the back and saying, yeah, let's be partners, whether that actually did get the president thinking, OK, maybe we need to do something a little bit different here. I don't know. But it really is questionable, especially at a time where the leverage has been taken away, given the court ruling about pausing, at least, if not stymieing the IEEPA tariffs.
The president trying to drive a wedge between a few of those individuals in those pictures, and ultimately it's not working. India is not backing down over buying Russian crude.
Well, the truth is, what incentive do they have to do so if they're going to be penalized from the tariff perspective? And it raises the question, is this the beginning of a true outreach, or is this sort of a one-off, maybe we can negotiate something if you remove all the tariffs? Ultimately, this just adds to the slew of uncertainty that we've seen with respect to what the tariff regime is going to be and what this administration is signaling when it comes to just how much they want certain alliances versus others.
Well, let's talk about taxes, trade and what's happening in this bond market. This is the latest from the Treasury Department, sharing with Axios a list of 68 jobs that are eligible for President Trump's no tax on tips promise. The list includes waiters, bartenders, golf caddies and home electricians. Just a reminder of that massive bill that's been passed, and maybe some of it's shown up in the bond market just a little bit this morning.
Okay, I went through this list, and first I was thinking, okay, so does this mean that people, when you go get a pedicure or manicure, let's say you're getting a manicure, can you now tip with a credit card, and is that just as good as tipping in cash? Because that's ultimately something that they all say. I'm just saying, personally, that's something that I've noticed. But how many of these people actually paid taxes on this? How many people actually meet the threshold to be paying taxes versus either breaking even or getting money back? I mean, that's really the question. How many bartenders, I mean, I guess if you're at a high-end bar, but really are making three-digit figures, these are the questions that I was asking as I went through this.
We don't know, because how much of the earnings were actually disclosed?
That's a great question.
Over the past few years. In fact, the past several decades. How much of the earnings were actually disclosed?
I assume that gambling dealers and gambling cage workers did really well with their disclosures on their tax forms. That's my suggestion. That disc jockeys, if you're a disc jockey, you're good. I was going through this, and you just wonder how much was actually reported, how much do these people cross the threshold for actually having to pay extra taxes, and how much will this really shake the needle? I don't know.
It's hard to know. It's hard to know. I'm with you, but we're losing an offset potentially. And I stress potentially. The offset was going to come from the tariff revenue. And now there's just a little bit of uncertainty around that. I still believe the consensus on Wall Street is that the legal proceedings will continue, that the president will ultimately succeed in the Supreme Court, and these will stay on. But just that uncertainty enough to cause some jitters maybe stateside.
Yeah, and if you are into being a plumber or if you're doing home maintenance, then you can keep those tips. And that actually could be the area that could be most lucrative. I'm just thinking about careers for my children when they graduate. That seems
you're
like
focused on that?
I think it could be a more lucrative career than, going and working in an office these days, because that seems like it's less reliable.
I think there was a report, was it from Stanford?
Yes,
in the last week, on AI and jobs for the entry-level work. It's already been damaged, already seeing them held back.
Massively, because they can just replace them with AI, especially if you're a computer programmer. So if you're going to be in computer programming, even medicine potentially has a disruptive factor. But if you're a plumber, you can keep your tips and you can go out there and you can get a job much more easily. And that's actually what we're seeing in the data.
And there's your pitch from Bramo. We'll get more jobs data later on in the week. We'll get JOLTS, we'll get ADP, we'll get the big one, payrolls, on Friday. Let's turn to markets. Matt Maley, chief market strategist at Miller Tabak, is cautiously optimistic on the Russell 2000's recent outperformance, writing the following: the potential for the small cap sector of the stock market to finally outperform for more than just a few weeks is definitely growing. Matt joins us now for more. Matt, welcome back, sir. Let's talk about it. 7% move in the month of August. Let's talk about what underpinned that move and why you think maybe this can continue.
Well, it's going to depend, obviously, on a lot of things, and we have this situation suddenly cropping up in the bond market. But the whole thing, though, is that everybody's kind of focused on what's happened with the tech stocks. They've had this unbelievable run. Do they take a little bit of a breather, and do we see a rotation? And we are seeing that recently, and we're seeing it rotate into the small cap sector. And if the economy can hold up and doesn't roll back over or slow even more, this is let's face it, the market is incredibly momentum driven. And you have the Russell 2000 now not just getting close to its all-time highs from last year, but that all-time high is actually a double top high from 2021 and last year. You break above a double top high, that's going to create all sorts of positive upside momentum and attract a lot of that momentum flow into the market.
Matt, it's the inflation piece of this that gets my attention. Gold at record highs, big move also through the month of August. What's the relationship between, say, small caps, what we've seen in precious metals, and what might happen with inflation over the next year?
Well, I mean, the thing about inflation, I guess the whole thing I'm concerned about with what's going on with gold is that it's becoming the only risk-free or flight to safety trade. I mean, we've seen that the cryptocurrencies haven't worked as well, and of course, the bond market. That's if inflation's going higher, that means the yields are going higher. And I guess maybe the biggest concern I have about this whole scenario that maybe the small caps can outperform is what you're talking about on global interest rates. We're seeing it in Europe, Japan, et cetera. But a lot of that doesn't just have to do with inflation. It has to do with concerns about budget deficits and fiscal spending, et cetera. And if we can't make up for some of these losses we get some of this revenue that we lose from tariffs or whatever, we're going to have a big. I guess what I'm trying to say is that we have to be very careful. We're moving to this month of September. Watch those interest rates. If they move higher, it's going to be a big problem.
So you think that could potentially curtail the momentum that we're seeing in small caps if you see long end rates go higher, even if you see short end rates continue to decline. Is that right?
Yes, and one of the things two things. Number one, on when it comes to you were talking with the previous guest about the yield curve. And, the yield curve here is like, those old days when inverted yield curves signal a recession, we don't have to worry about that anymore. But it was actually never that. It was only when the yield curve not only goes from inverted back up to positive, but when it gets to 50 to 60 basis points, as it is getting now. That's usually what signals a slowdown, a significant slowdown, or even a recession. That's not good for small cap stocks. And then, of course, the other issue is that when we have the situation where the economy, we go back to the earnings growth, and we could talk about that. But the earnings growth that we're seeing right now, although it's good and it's solid, it's good and solid for a stock market that's up, that's trading at 17 times earnings, not one that's trading at 23 times earnings. So again, we have a lot of headwinds we're looking at right now. So I am saying that the odds are growing that we'll see some outperformance of the small caps, but it's definitely not a lock, and we have to wait to see how things play out over the next couple of weeks.
Are we creating narratives to try to be bullish on all of these stocks in the universe as a result of a very bifurcated market where you have a sea change in artificial intelligence driving a massive increase in market cap of just a handful of companies? And people are saying, okay, they're looking pretty expensive, those 10 stocks that account for about 40% of the S&P 500 now. But, that dynamism can be carried out to other names as well. Are people getting ahead of their skis, over their skis when it comes to that kind of mentality and then trying to find other reasons to justify that?
Lisa, I definitely think that's part of the case. And we look at what's going on right now. We're seeing some more raising of price targets on the S&P 500. Well, that people were tripping over themselves to do that in January, just before the market went down. And people were tripping over themselves to cut their targets in April when the market was making a bottom. Now we're kind of seeing the opposite tack. But what it comes down to, though, which when you talk about, we're looking for that broadening out. People are desperately looking for that. But we have to remember that this is still a tech-driven market. And if the tech stocks trade sideways or even trade slightly higher but lag a little bit, that's okay. We can see a rotation. That's what we saw in January of this past year. January of this year. But if tech stocks start to go down, they're much too highly weighted in all the major indices for those indices not to go down. And I'll tell you, if those indices start to go down, the whole look of rotation is going to disappear. People are going to rotate into cash because we've heard all this talk about bubbles and the September-October timeframe. People are going to start pulling money out of the stock, out of the market. So if the AI situation starts to fade, and of course we had that that report from MIT a week or so ago talking about how so few companies are making money from this. And then you look at what's going on with NVIDIA, reported good numbers, but not so good. But whenever NVIDIA rolls over after reporting earnings, like it seems to be doing right now, that creates headwinds. So again, no matter what we talk about small caps and rotations and things, and everybody's hoping for that, you got to follow the tech stocks. If they go down, the market's going to go down, and the money's going to come out of the market. So we're definitely heading into this seasonality issue that is starting this morning in a rough fashion. We'll see if it continues that way.
They're going down this morning. Matt, appreciate your time. Matt Maddy of Military Back. We're down about 1% on the Nasdaq 100. Speaking of new price targets, this from Julian Emanuel of Evercore. New price target for year-end next year, year-end 2026, 77.50. On the S&P 500.
Yeah, the once-in-a-lifetime opportunity that he sees in AI, and this is what's driving him to see, even if there are some dips or, some volatility, which people have been expecting last month, but might just be delayed, that will still lead to a much higher market on the heels of AI, which could be true. It's just a question of participation. Does everyone get to participate in that gain?
Getting one of those dips this morning, just a little bit softer. We're negative by 0.8% on the S&P 500. With an update on stories elsewhere with your Bloomberg Brief, here's Yahira Arnold. Hey, Yahira.
Hi, John. Food giant Kraft Heinz plans to split its business into two companies in an effort to streamline operations, provide greater resources to individual brands, and drive profit. One company will include its sauces like Heinz ketchup and boxed products like Kraft mac and cheese. The second will sell grocery products like Oscar Mayer hot dogs and Lunchables. The transaction is expected to close in the second half of next year. Meanwhile, Treasury Secretary Scott Bessent said the Trump administration may declare a national housing emergency this fall. He declined to list any specific actions, but Bessent told the Washington Examiner that housing affordability would be a critical leg of Republicans' 2026 midterm election platform. And New York Democratic Representative Gerald Nadler, the former House Judiciary Chairman, will not seek re-election next year, ending his 34-year congressional career. Nadler helped lead President Trump's impeachments, and he told the New York Times that at 78, he wants to respect the need for a generational change in the Democratic Party. That's your Bloomberg Brief. John?
Yahira, thank you. 34 years later, 78 years old, respecting the need for generational change.
It's better late than never, I guess. But it does. Honestly, this will be a real question, though. We have seen retirements. How much are people going to push back? What does that new generation of leadership look like? That's the key question.
Well, from that party, further and further to the other extreme.
Well, this is what we've been talking about. We've seen a polarization increasingly on both sides of the party, and we've seen this globally. So who brings that together? Does anybody, or is this just sort of the way to go in the future?
How interesting is New York politics right now?
It's pretty interesting.
Right?
It would be nice if it were a little more boring.
It's going to get more interesting in a few months' time. Up next on the program, I'm right there with you. A warning sign for financial markets.
It is a warning sign, and we have seen governments react to this sort of warning signal. That's just something we need to be a little bit careful of, not to mix signals here.
We'll catch up with Matt Hornback of Morgan Stanley in just a moment, live from New York City. You're watching Bloomberg TV. equities down here by 0.8% on the S&P 500, negative on the Nasdaq by 1 full percentage point. Under surveillance this morning, a warning sign from financial markets.
It is a warning sign, and we have seen governments react to this sort of warning signal. Donald Trump himself clearly has reacted to that sort of warning sign before, and we have to be careful not to conclude right away that if the bond yield rises, that automatically translates directly into much, much higher spending on interest payments. That's just something we need to be a little bit careful of, not to mix signals here.
So here's the latest this morning. 30-year bond yields inching back towards 5% as bond yields worldwide continue to climb. Matt Hornbeck, the managing director and global head of macro strategy at Morgan Stanley, writing, with Fed rate cuts approaching, we expect both Treasury yields and the US dollar to make new lows in the fall. Matt Hornbeck joins us now for more. Matt, good morning.
Good morning.
It's good to see you in person, buddy. Thanks for dropping by. Been following you, the team, Mike Gapin, your calls on the Federal Reserve. So now looking for a cut in September. But I think you make an important distinction. A risk management move versus something much larger and deeper over the next year. Can you just explain that just a little bit?
Yeah, absolutely. Well, we are expecting the Fed to restart the easing cycle this month. And the reason is not because we're on the precipice of recession. It's really about trying to avoid us being on the precipice of recession. And so the way that you do that is you begin to once again reduce the amount of restraint that the economy is dealing with in terms of short-term interest rates. And the idea there is, of course, as you start to lower short-term interest rates again, those longer-term interest rates, which have not been going down very much, will start to follow. And of course, this happens both with a steepening of the yield curve, which is what we've seen. But as the yield curve steepens, it actually increases the incentive for levered investors to put money to work further out the yield curve. And in doing so, you then start to see those long-term interest rates move lower as well. And that's really what's important for the U.S. economy, is getting those long-term interest rates to begin to trend lower, not just move lower in a given month, right? We want these interest rates to be trending lower. And without rate cuts, it's hard to see that happening.
The flip side to all of this is that maybe the Fed's going too soon. Inflation target is 2%. Inflation's running well above that. And that perhaps we just heard from a Federal Reserve that's more tolerant of inflation. And for that reason, hands off, don't want to buy the long end. How would you push back against that view at the moment?
Well, it's hard to push back against that view at the moment because that's what people are talking about. And oftentimes the narrative will drive the price action. So it is tough to push back against that in this moment, but we need some more inflation data to really understand where is the locus of inflation today. Is it in the tariff-related sectors? Is it in services? This last inflation report showed hardly any signs of tariff-driven inflation. It was mostly in the service sector. Core PCE, which we got last week, goods inflation was 0. So it's really hard to look at the inflation that we're getting and cry foul about tariffs. We think it's coming, but we have thought it was coming for several months now, and it hasn't shown up to the extent that we thought it would.
You suggest in the argument something that John's been raising for a while. At what point will weakening economic data not push people into long-term treasuries, but have the opposite effect, right? The idea that if the economy isn't strong enough, that questions how much the U.S. can really increase the revenues at a time where they're going to need to increase spending, which will lead to more inflation, bigger deficit, higher yields in the long run. I mean, at what point do we reach that kind of doom loop that we're seeing the UK flirt with?
Yeah, I tend to think about these doom loop concepts as relating more to the currency than to longer term interest rates. It's been, I think, a very long time since we've seen investors abandon the long end of the yield curve when the economy is going down the tubes. I just haven't seen it, at least that I can remember, in 25 years. But you can't say the same thing about the currency. And so if we were to get into a situation where the economy hit recessionary territory and the Fed had to lower interest rates much more aggressively, that would be an environment where I think you would see interest rates across the yield curve decline, led by the front end of the curve, of course. But at the same time, I think you would see the U.S. dollar depreciate. And that's more or less what we're forecasting. We have interest rates going down and the dollar going down simultaneously.
If that's the case, why not buy 30-year bond yields, 30-year bonds over in Europe, and just buy them for the absolute, given the fact that you expect currency appreciation relative to the dollar, as well as potentially maybe a stabilizing?
Well, I think for long-term investors, that's a great trade, no doubt. But when we talk about investment strategy, unfortunately, we have to be a bit wonky, right? We have to talk about both what we are recommending real money investors to do with their cash and then what we recommend levered investors to do. And the yield curve in the U.S. is a great example of this. If you're a real money investor and you're really going for total return, the long end of the yield curve has great value. Real yields at 2.5% in the very long end of the curve, that's great value. That's where you should be putting your money if you're a real money investor. If you're a levered investor, meaning you're borrowing money in the short-term interest rate markets and then lending it long, it's better to be in the short end of the yield curve because from a levered perspective, that's where I think you make most of your money.
Matt, important distinction. Matt Hornbacher, Morgan Stanley. Good to see you in person. Once again, got to do this more often. It's been a long, long time.
Pleasure to be here.
Thanks for dropping by. Appreciate it. As we pointed out a few times already this morning, this dynamic that's playing out so far today is not just in America. You're seeing it in the UK and France and Japan and elsewhere. The move in the UK, both in the bond market and the currency, of the utmost concern, I think, going into this budget for the Brits in a few months' time.
Yeah, the highest 30-year yields going back to 1998 at a time where there's a real question about how much money they can raise through the taxes lever, given how many people, as you point out, have been leaving the region, and how much they actually have the willingness to cut budgets at a time of public outcry. And we've seen that in France. So this really is the conundrum.
I'm pleased you used that word, Bramo, because you're dead on. The willingness. They've got the ability. They've got the majority in Parliament. They just haven't been willing to make the spending cuts that need to happen. There's been pushback from their own party.
Yeah, so this is the issue. Do they take the political heat? And if they don't, does the bond market give them the political heat?
There are consequences. Yields up by 6 basis points and the currency a whole lot weaker. Coming up in just a moment, Judy Bill of Kane Anderson Rudnick will catch up with Ken Hoexter of Bank of America, Aaron McLaughlin of the Conference Board, and Kathy Jones of Schwab.
This is an environment that is very volatile.
In general, things have been drifting more positive.
Yields still look elevated versus where they've been.
Our long-term outlook for the equity market is that the returns are going to be lower than they have been over the prior 5 or 10 years.
Everything is expensive right now. And I think we should expect lower returns across the board, both from stocks and from bonds.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, the third hour of Bloomberg Surveillance starts right now, and your scores look like this. Stocks down, bonds down. Equities lower by 0.8% on the S&P 500. Bond yields higher on a 30-year bond this morning, approaching 5% stateside. Your yield, 497.27. As we work our way through the week, tons of economic data, including ADP in a few days' time, and then the big one on Friday. Payrolls Friday just around the corner.
And what is the market lining up to respond to some of this data? Is good news good news? I know that Stuart Kaiser is shaking his head, but this really is the question. If you get better than expected data, what does the Fed do with that? Do they still cut rates this month? If they do cut rates, do people start to worry about inflation? And on the flip side, how punitive could the markets treat a negative number or something that really is thought of as really weak, given already some of the concerns about the dollar and concerns about the fiscal backdrop?
So this is how I'm thinking about the data at the moment. I think it's rate cut on for September, whatever. Would take something massive to change that story. The debate of the Federal Reserve is what to signal beyond that. What comes next? That's where Governor Waller's speech going into the weekend becomes, I think, increasingly important. When he says, let's get on with it, was literally the title of the speech. Everything in it from there is about what you do once you've started. And he started to signal more cuts beyond September. Is this committee prepared to go along with that, or is September still far too soon?
This market is going along with it, and this market is pricing in the greatest number of rate cuts through the end of next year that we have seen outside of a recession in the United States going back to the 1980s. So if that is true, does that come with no consequences? Does that come without the inflation that some people worry about? Or do we have to think about what that means about a tolerance of higher inflation in order to prompt growth? And that, I think, is what the market is grappling with around the world, with yields going higher.
Seeing in precious metals, gold record highs up 30% so far this year, up 5% last month. Are you seeing it at the long end of the yield curve? I think in some cases you might be. Just a little bit of pushback from the bond market too.
Yeah, and this has to do with inflation. It also has to do with just credibility in the fiscal backdrop over the next 3 decades. I do wonder, we talk about gold at record highs at almost $3,500 an ounce. You wonder what happens if you start to see something like Peter Scheer suggested, yield curve control. If the Fed starts to say, we're concerned about the yippiness, the 30-year, we're going to try to control it, buy some bonds, try to get that down. Do you start to see gold prices go even higher? As a lot of investors around the world think of government bonds of developed markets as not being the haven that they have traditionally been.
Danny mentioned this last week, and Danny's right to bring this up. The transmission of monetary policy, is it being disrupted? Are you dropping interest rates but not seeing an easing of financial conditions? Now, here in America, that would mean lower mortgage costs, and that would mean lower yields at the long end of the curve. And is that a reason, a justification to step in at the Federal Reserve? And I'm not thinking about this Fed. Forget this Fed. Chairman Powell, when he offers guidance in September, that's the last guidance you're getting from Chairman Powell. The next time they deliver forecasts, we'll know who the next Fed chair is, and we'll be far more interested in their guidance for 26 than his. And I think it's the next Federal Reserve, the next iteration of this Fed, and what they're willing to do and not willing to do with the balance sheet that I think becomes more interesting.
Well, it also becomes more interesting at comparisons with Turkey, because if you have yield curve control in order to transmit monetary policy, what is the goal of that monetary policy? It means that inflation is no longer the preeminent concern. It really is about juicing growth, and that is a very different priority for a Federal Reserve that will require a very different market. And that, I think, is what a lot of people are trying to wrap their heads around. But I think the market has been pretty complacent, or at least not really taking that as a realistic kind of probability, and saying there are enough people who take their job seriously that isn't going to happen.
Bonds down, yields up by 5 basis points this morning, 30s at 4.98. Coming up this hour, Julie Bill of Kane Anderson Rudnick as we kick off a new trading month. Ken Hegster of Bank of America as shipping companies face fresh headwinds, and Erin McLaughlin of the Conference Board as we look ahead to jobs data this week. We begin this hour with stocks pulling back from recent record highs. Julie Bill, the chief market strategist at Kane Anderson Rudnick, writing August brought us a broader market led by small cap, value and the laggards for the market. I think if the employment data continues to hold up, that can continue. Julie joins us now. Julie, welcome to the program. That disconnect that we've been talking about, a Federal Reserve that's worried about a cyclical downturn. At the same time, the equity market is displaying more of a cyclical tilt in the last month. Does something have to give?
Yeah, I think something does have to give. I think everyone is assuming that the Fed is moving to a place of easing, and that's going to make life easier for everyone, including small caps. And there's also an assumption that we've really seen everything we need to see about tariffs. Like, case closed, it's really not a big problem. We don't really have to worry about it, guys. It's not showing up in inflation. And I think most people can really recognize that companies did a great job front loading and doing everything they could to offset tariffs. I don't think we've seen the worst of it. And if they're ruled illegal, that creates problems in the bond market as far as the credibility of the U.S. government for being able to pay back its debts.
Well, Julie, let's start with the bond market then. I'm pleased you've brought this up. Do you think this morning's price action is somehow connected to the legal decision going into the weekend?
I think it's part of it. I do think that there is a recognition that, we set up this budget with the assumption that we were going to be able to plug the hole with the tariffs. And, they've done a great job rolling in. I think there's a real recognition that if we do not have that lever to pull, and we don't seem to have any inclination to be able to do the hard work of either cutting or raising taxes, that really does call into question the level and ability for us to repay our debts. I think we really sort of start to look like that kind of creditor, that friend of yours that borrowed money and under, not great circumstances. And I think that's problematic, and that's kind of where the bond market is right now.
If we do get negative economic data this week, how punitive will the response be in equity markets?
I think it depends, right? Because I'm always like, I agree with you. I'm always like, hey, just curious, is good news, or is good news bad news, or where are we right now? I think that right now, the way that the market is levered to interest rates declining, and that really seems to be the place where everyone's focus is, that if we have superlatively good economic data, that you'll see actually a pullback in the markets. I would argue that that's probably a good sign. It's really showing the level of resilience of our economy to handle an incredible amount of uncertainty and a challenging, policy situation. I think it would be positive, but I think for most investors, they're really levered to what's happening at the Fed and what's happening with interest rates.
So if we get negative data, that could end up being positive for small caps because of the potential rate cuts that could come on the heels of it. Is that what you're saying? That ultimately the small cap story is a yield story, and that is the reason why when you see yields higher, that leads to a sell-off like the one we're seeing today?
Yeah, I think that most people have a really strong connection between interest rates and small cap. And some of it makes a lot of sense to me because most small cap companies are borrowing short and they're borrowing with their banks on variable rates. And so they weren't able to lock in the fantastic interest rates that we as home buyers or large companies were able to do. So they are more economically sensitive and their leverage is more variable. There is benefit to them. But I think beyond that, it's really much more important for small cap is how good is the economy doing, because broadly speaking, it's more economically sensitive.
Well, Judy, let's talk about a couple of names. Ross Stores up 8% last month. TJ Maxx up almost 10% last month. Names that you like. What does that price action speak to?
Well, I think it really speaks to everyone in retail is moving towards where is there good traffic, right? Because traffic is where you could really recognize that a retailer is able to meet what its customers are really looking for. And just like we are hunting for value as investors, if you think of just how price starved we all are, we don't have value anymore with the level of inflation and erosion that we have. Everything that happens in off price, you go into the stores and there's a real recognition, my God, this, at least here I can find some good value, some good deals. And I think what's interesting about off price is most of our manufacturers of retail and general merchandise, they have this incentive to create as much stuff as possible, right? Because that incremental incremental sale is so high margin. So there's always an excess of goods. And so these retailers do such a great job collecting all of them and then selling them quietly without putting them online. So you have a lot of price discovery, right? Amazon can't do this, right? It's too much price visibility. But, your Ollie's, your Ross, your TJ, you do a great job being able to collect all of this merchandise, and it's structurally protected.
Do you think it speaks to a step down in economic resilience of the consumer that we're seeing those names before?
Absolutely, because it's not just them, right? You see that Walmart is able to really bring in more of the very, very high-end customers. I think that if you look across income spectrum, everyone feels annoyed with how high prices are. I mean, we had the management team of Hermes in our offices, and she just kept talking about value. And for them, value was just look at the quality of our craftsmanship and what you pay for it. And we've only raised our prices mid-single digits, while Chanel has raised them 20 or 30%. Everyone's talking about it, and I think it's just a recognition that we're just starving for any sense that our dollar is worth something.
So is inflation good or bad for small caps?
I think inflation is generally pretty bad for small caps. They've shown themselves less able to raise prices. They don't always have the level of economic control that larger cap companies have, right? They can't shrink down their packaging as easily as Procter & Gamble can. And so they were really hamstrung by what happened early on with inflation. I think they've gotten their footing. They have reset their capital structures. They've reset their cost structures, and they're in better shape. But if we see an environment where inflation really skyrockets, that's problematic for them.
Judy, appreciate your time. As always, thank you. Judy Bill there of Kane, Anderson, Rudnick. If you're just tuning in, seeing another leg down in stocks, another step up in bond yields. Stocks are down by 0.9% on the S&P 500. Bond yields higher now, Bramo, on 10s at least, by more than 6 basis points.
So how high can they get before something breaks? And can this be this sort of persistent grind higher that we've seen, particularly in the UK, but around the world? In the United States, you pointed to this idea that it could be tied to the idea of tariff revenues not coming in here. Is this the breaking point or not quite? That, I think, is what people are wondering.
And the good news stateside is we're still at 430. Which is the low end of the range. I believe we're still down on the year as well for 2025. Much more disturbing, I think, is what's happening further out along the curve, 30, say, and beyond America, what's happening in the UK and in France, where the bond market is asking for corrective action in those countries. I don't think we're there yet, stateside, but we're certainly there, beyond those levels, in France, in the UK, and elsewhere.
I just wonder what the response is going to be from policymakers. Maybe it's just not to issue the debt, because ultimately, at what point is it just a dead denomination, because there isn't the demand for it at a time where we can't see out 5 years, let alone 30?
Ask the Treasury Secretary the same question when he was sat in the seat on this programme. What's the incentive for anyone right now, the UK, France, or otherwise, to issue out along the curve at a point where the investor base is turning around and saying, don't want it anymore? don't want it.
And what you're going to expect is that they're probably not going to issue as much, and we're already hearing that. So will it become a rare currency, or a rare denomination that people will go to even more? I mean,
like
these
the 20.
But these are the questions. Then does it offer value? If they're going to reduce issuance, then is it the Matt Hornback view of the world that you've got to coalesce around?
The bond yields higher around the world so far this morning. With an update on stories worldwide with your Bloomberg Brief, here's Yahira. Hey, Yahira.
Hi, John. We have more details on the Klarna IPO. It is looking to raise as much as $1.27 billion in its highly anticipated debut. The buy now, pay later firm plans to sell 34.3 million shares in the IPO, with the price expected to be between $35 and $37 per share. The Swedish fintech will trade on the New York Stock Exchange under the ticker KLAR. And as you all were just discussing, the yield on 30-year gilts climbed to the highest level since 1998 as an already rough fiscal backdrop adds pressure to the Bank of England ahead of its meeting this month. But it's not just in the UK. 30-year bond yields around the world are rising to fresh multi-decade highs amid concerns over inflation and government financing. And here, the Treasury Department has given a first look at the jobs that will qualify for President Trump's no tax on tips pledge. The 68 jobs mentioned include waiters and bartenders, bellhops, golf caddies, and home electricians, to name a few. Treasury Secretary Scott Bessent described the full list, which has yet to be released, as expansive and fair. That's your Bloomberg Brief. John?
Yahira, thank you. Appreciate it. Up next on the programme, the morning calls as Ferrari shares are higher following a recent upgrade. Plus, Ken Hexter of Bank of America as shipping companies face fresh headwinds. All of that just around the corner.
I think the administration is going to go to the Supreme Court and get a final determination on whether the tool they use to put these tariffs in place are going to stand or not. If they fall, they've got a lot of other options. They've got many different statutes they could go to. It is not the end of the story by any means. There's a lot of other options out there.
That was Everett Eisenstadt, the partner at Squire, Pan & Boggs and former National Economic Council Deputy Director, following the legal pushback going into the weekend on President Trump's tariffs. Now, there's a few people already this morning pointing out that maybe some of this is showing up in the bond market, seeing 30-year bond yields higher, 10-year bond yields higher. Just the idea being that maybe the offset, the revenue raising of this tariff effort, has supported this bond market over the last month.
Henrietta Trey's came on and said that this reduces some to the tune of $2 to $3 trillion revenues to the U.S. Treasury Department if there is this full rollback of IEEPA, of the tariffs that have been put under that statute.
The issue for the bond market, though, is that is one small issue in the grand scheme of things. Bond yields are higher stateside. They are much, much higher worldwide. In the UK, in France, in Japan, yields higher across the board. The equity market a whole lot softer on the S&P, the Nasdaq and the Russell, following some massive outperformance on the Russell. In the month of August, up 7% this morning, down by more than 1%. The S&P 500 negative by 0.9. That's the price action. Here are the morning calls. First up, Mizuho raising its price target on Alibaba to 159, saying the firm has the best cloud assets in China. Your second call from Deutsche Bank upgrading Ferrari to buy, expecting the supercar maker to unveil ambitious new targets next month. Their stock is up by another 1%. And finally, Barclays raising its price target on Ulta Beauty to 617, citing increased transactions and growth across all categories. Let's turn to the shipping industry, as the end of the de minimis exemption is causing fresh headwinds. Bloomberg's Brendan Murray joins us now for more. Brendan, welcome to the programme, sir. As always, difficult to keep up. Share with us the latest and what's going on this point.
Yeah, exactly. So what we've had is about 2 or 3 dozen mail services from around the world that have suspended the shipment of these smaller parcels to the U.S. because they don't have the sort of back office facility yet hooked up to the U.S. Customs Agency to process these shipments or to pay for them. So the sender is responsible to pay the tariff, and if they don't have the linkages connected between all of these various mail operators, these parcel delivery companies, then all these packages are going to sit around or not get sent at all. So it's gonna create some disruption in this particular part of global trade. These packages that ship a small amount of goods worth not a whole lot of money, but they can add up. There are something like 1.4 billion of them sent into the U.S. every year. That's something like 4 million a day. So it's a huge volume, even if the value of them is small.
Brendan, you track a lot of the volume. Just talk to us about what's happened, not just with the U.S. to China and China to the U.S., but around the world. One thing that we've noted, and Lisa and I were talking about it earlier, is that tariffs might have gone up and trade between the U.S. and China might have gone down. But global trade between China and the rest of the world seems to keep on increasing. And that trade surplus doesn't seem to be going down at all.
Yeah, exactly. I mean, we've seen it play out in recent weeks, where China and other countries that are hit with U.S. tariffs, they go out on missions to try to establish new trade relationships and build those up if the U.S. relationship is deteriorating. So, look, we've had this huge spectacle in China over the weekend with India, Russia, and Xi Jinping hosting those three leaders of the BRICS countries. And this is the fragmentation of the global economy happening before our eyes, and it's yet to be seen whether the U.S. and Donald Trump can use this particular tariff authority that he's launched this latest trade war with. But as these experts say, he's got a lot of tools that will allow him to impose tariffs on U.S. imports. But those tools are slower, and they're less broad. You can't just flick a switch and turn them on and off the way President Trump has done with his reciprocal tariffs. So the bottom line is there's just a lot of uncertainty. There already has been, but this just extends it out until the courts resolve this issue. If you're a small business or a company looking to hire or invest, you're looking at the situation and going, what do I do? Do I wait or do I go now? It's just it's going to extend this period of uncertainty.
I don't think you know what to do. That's for sure. Brendan, appreciate it. Bloomberg's Brendan Murray there out of London. Ken Hegster, the Bank of America Securities Senior Analyst of Air Freight and Surface Transportation, joins us now for more. Ken, good morning.
Good morning, John.
Let's extend some of that conversation, and thanks for being here. Let's take the de minimis exemption. Can you just walk us through, give us a feel for how much of the overall volume between, say, trade between the US and China that actually accounted for through air freight alone?
Yeah, and happy post-Labor Day. Welcome back to work, everybody. So, it's a great question in terms of, Brendan was mentioning the 1.5 billion packages a year. It's about 4 million a day. So you've got a lot of frequency. UPS and FedEx export combined about 2.8 million packages per day. So they're representing, and that's not all de minimis, but a huge portion of this de minimis movement on a per day. But international is only about 25% of each of UPS and FedEx's revenues, and then the export portion is only 17%. So we're still talking a small portion, as Brendan mentioned, a smaller portion of the number of volumes, or the high volume but low value of the packages moved. But this is meaningful. This is the highest profitable lane, is the U.S.-China lane. So we've already seen those volumes down about 75% year over year once this went into effect in May. The new news here is on Friday, it expanded to the rest of the world. So that's about 24% of de minimis is now encapsulated in this new expanded part.
How enforceable is this?
So it's enforced by the U.S., right? So it's something that our Customs and Border Protection Division is going to be watching. And so now everybody has to comply. The difference of what's going on before is UPS and FedEx already required the information on what's in the package, but now you've got to get who made the package, who made the goods. And so the difference is the postal operators. He was mentioning 30 different postal service operators suspended because they don't have the technology. Before, you could just check a box that this was a small, low-value package. Now you've got to give so much more information. So that's guarded by the CBP on imports.
Now, I was just wondering, if you get on a plane, let's say, and you get $500 worth of goods from some country, how do they come on the plane and get it? I just wonder, is this, I'm just thinking theoretically, stop laughing at me. I mean, how do they enforce this? Does it become difficult given all of the changes in the tariff regimes and some of the legal challenges?
Yeah, what you're carrying on you, that's still not going to change as far as that $800 limit, right?
I think Lisa's just looking to clarify for personal reasons.
This is mailing cross-border, right? So this news is going, what's going in packages, what's going on vessels, what's going on different methods of transport, even rail cross-border. So they're managing what packages are going cross-border.
Of the companies that you follow at the moment, who's executing really well? Who have you been impressed by?
Well, I mean, they're executing in terms of FedEx and UPS already move traffic, right, have the skill sets. But this is a question about what's going to happen with the increased rates to those packages. So, for example, Temu and Shein, right? These were low-value shippers that had found a loophole and expanded that loophole. We went from 100 million packages 20 years ago to 1.5 billion, right? And that's already up to 900 million packages at run rate by the time this went into effect in May. So you're seeing this. This is really taking those companies that learned how to take advantage. And what you've seen is Shein's volumes are down 23%. I'm sorry, down 12%, but revenues are up 23% because they've taken rates up to adjust for the tariffs, or they've gone in and as you were mentioning, gone to different countries.
Super smart. Ken, appreciate your time.
Thank you so much.
Come back soon. We'll do it again. Ken
Right.
Hexter there of Bank of America. Are you shipping a parcel sometime soon? On your person?
On my person? Am I going to pack myself with gold bars from London? Look, I do think that what the point here is, does it kill the fast fashion industry? I mean, just to be serious, aside from the fast fashion of getting on a plane with lots of clothes on.
Would that be a bad thing?
Well, yeah, but you know what I'm saying? That's the issue is that, I don't know that my kids are going to get from Shein in the same kind of way, and maybe that's positive.
The businesses that were viable 6 months ago maybe aren't anymore.
Or they're just going to jack up prices.
Yeah, we've still got to figure it all out.
Yeah.
I mean, how do you price this if you're a company at the moment?
I mean, this is the reason why I just wonder, do they come back to the office and say, let's invest?
Up next on the programme, the sneaky ball case.
Yeah, exactly.
Is that what that was?
I just wonder. I am curious.
Erin McLaughlin of the Conference Board joins us in just a moment from New York City. You're watching Bloomberg TV. On many occasions, you wake up in the morning stateside and Asia or Europe's had a bit of a freak out and the American session buys it. Not seeing that so far this morning. We'll see if this sticks, but at the moment, we're negative and getting lower. We're down 1% on the S&P, down by 1.3 on the small caps, and in the bond market, yields taking another leg higher. Up 7 basis points now on 10s, approaching 430, up 6 on 30s, approaching 5% at 498.93.
Yeah, and you just wonder whether this is being led by the United States or whether it's being led by the rest of the world. And that ultimately is the question. You asked, John, whether this is tied to a lack of revenue coming from tariffs, if the IEEPA statute isn't enough to justify this government. But there's a bigger question, and is it a loss of credibility of governments in France and the UK, in addition to what's going on in the U.S., that's causing this global sell-off?
And arguably, the US is in a more comfortable seat at the moment relative to what's taking place in the UK and France. And you and I were talking about it just briefly. The moves we're seeing outside of America, these moves in the US aren't just screaming for corrective action from Washington, D.C. The moves in France and the UK are. And I'd be much more worried if I was sitting down in the United Kingdom, facing down the prospect of putting together a budget in a few months' time, with yields at the highest since the late 1990s, and up again this morning, and pushing 5% on 10s, and on 30s, pushing 6.
Yeah, with a currency that is rapidly depreciating, with a pound that is losing ground versus the euro and versus the dollar, are they willing to make the hard decisions? And what does that mean for growth in a region that's facing off with a real conundrum?
What are the hard decisions? The hard decisions aren't putting up taxes. The hard decisions are cutting spending. That's the most difficult decision they've got to make at the moment. And you and I went over it briefly. This is not about ability. They have a majority in Parliament. This is about willingness of MPs to follow through. And the market's going to keep demanding it. We talked about this last week. I think it's really, really important. At what point do they believe they need to vote for those kind of spending cuts that the market is asking for? And I think we basically concluded that politicians won't vote for this until the alternative is worse. And the alternative needs to get worse before they vote for it. And we're just not there yet, which means things can get worse in the UK, they can get worse in France before the corrective action is taken.
This is John Farrow asking for the bond vigilantes to pick up the pace, make things worse so that things can get better.
Not what I want
that's
all.
a little bit. I mean, that's kind of the idea. I mean, what is the pressure? It's going to come from the bond market. They're the adults in the room. That's what everyone keeps saying. And the question is how much they have to push back before there is corrective action. And that is ultimately this sort of game of chicken that we keep talking about. that isn't quite there yet this morning.
I don't think it's a game the UK wants to play.
Nobody wants to play.
Or France, for that matter. And let's see if there's a central bank willing to step in sometime soon, because right now I don't see signs of that either. That can change, but I don't see signs of that right now. Under 1 hour away from the cash open, let's turn back to the equity side of things. Bit of a downdraft this morning. We're lower by about 1% on the S&P and lower by a whole lot more on the Nasdaq and the Russell. With your morning movers, here's Danny Berger. Hey, Danny.
A really tough start to September, John, so you've got to find some positive stories where you can. Pepsi, by far, is one of the biggest winners today. It's a report from the Wall Street Journal that Elliott Management has taken a $4 billion stake in the company, an activist stake, hoping to turn around PepsiCo, which has been falling and lagging its peers. So those shares up 4 1/3%. But elsewhere, some bad news for the beverage makers. We had earnings from Constellation Brands, the beer maker. Really tough set of results. They see for the full year some of their sales declining between 4 and 2%. They cite the macro environment that not only is consumer demand weaker, but it is just frankly more volatile, and that makes things like judging their inventory increasingly hard. So those shares down 9.2%. Finally, some of the gambling companies, those are also falling on some news. A report from CNBC that you are looking at a new gambling venture opening up with Crypto.com and Underground Sports. So that means just more competition for the existing online gambling companies. So Flutter Entertainment and DraftKings both down by more than 1%, John.
Danny, thank you. Appreciate the update. Danny Berger, Matt Miller taking over things in about 26 minutes time. So look out for open interest at 9 a.m. Eastern time. That's some of the morning movers. Let's turn back to the labour market. Key data coming out through the week, including Friday's highly anticipated payrolls report. With a look ahead, here's Mike McKee. Good morning, Mike.
Good morning, John. Well, let's pick up on what Danny said about trying to find some good news. Are we going to find any in this week's big data releases? August is over. It's the first week of September, and that means the big data numbers for the month get released for the most part this week. And we start today with the ISM manufacturing numbers. Are they going to show any kind of rebound? And what are they going to show us about prices paid? Factory orders, jolts. And the Beige Book tomorrow. Beige Book will get some interest. Thursday's a big day, not only for the markets, but for Lisa, because ADP comes out. And, you know, it's really weird, Lisa, that everybody in the markets is saying we're suddenly going to pay much more attention to ADP, since we don't necessarily know if we can trust the jobs report. We'll get a lot of attention paid to that. Jobless claims also on Thursday, and then Friday, as you mentioned, the August jobs report right now, 75,000 jobs created, expected, but given the revisions last month, we're going to be looking to see what the ISM, the ADP, the jobless claims tell us that might change minds among those who are prognosticating for Friday. What else to watch? A lot going on. Besides just the data numbers, we've got the Lisa Cook situation. The judge last week gave the plaintiffs, Lisa Cook and her lawyers, till today to file a response to the government's arguments. We don't know what happens then. Does she make a ruling, or does she ask for another hearing? We hope to find out something today. Stephen Myron gets his hearing on Thursday to become a member of the Open Market Committee, a Fed governor, and we're expecting perhaps a vote next week on the Senate floor. Alberto Busalam speaks on Wednesday. I put this on there because he's been one of the more hawkish members. Has he changed his mind? Is he more open to the idea of that September rate cut? And then, of course, we're all waiting for the administration response to that IEEPA ruling, because if the tariffs are on, if the tariffs are off, that's going to make a big difference to what the Fed does. We probably won't have a decision by September meeting, but we'll have something for them to think about, no doubt.
Mike, just before you go, ADP, can you just sit on the ADP report just for a few beats? Can you explain to us the relationship between ADP and payrolls more recently? And has ADP given us actually a decent look at what's happening with the labour market? And have we actually seen those downward revisions on NFP come down towards ADP?
Well, that's a possibility. ADP, of course, tells you you can't use their data to predict what the NFP numbers are going to be. And remember, these are private payrolls. They don't include the government side of the payrolls report from the government. But they have been closer now, given the revisions. And we have some big revisions coming next week to the prior year's NFP numbers. So they might become even closer then. But what is important is that the Fed buys the ADP data on a weekly basis, and they track it. So if the Fed is looking at ADP and the ADP numbers are bad, and last week Chris Waller said they might be, then that's going to really influence the market's thinking about what we might get on Friday.
Mike McKee, thank you, sir. Looking ahead to ADP on Thursday, payrolls on Friday. Stephen Myron coming up too. That's box office later this week. For those of you that follow these things, that really is box office.
Especially given the push to try to get him into the seat before the September 17th meeting at the Federal Reserve. Should be fun. Should be fun to watch. So let's see how quickly they can get this through.
I imagine some senators will be more fired up than others, maybe.
Are you thinking about somebody?
I'm thinking of the senator from Massachusetts.
Yes, his last name rhymes with Barron?
Yes, just about.
Tarn?
Kind of.
Okay.
We can redo that another time. So this is live, by the way. Okay. Let's stick with the outgoing data. Aaron McLaughlin, the senior economist of the Conference Board, joins us now for more. Aaron, welcome to the programme. Let's talk about your data, the loss of confidence. Are you seeing that more pronounced, or have we seen a bounce back as we come into the post-Labor Day period?
We have not seen a bounce back yet. It is still, after our sort of dip after Liberation Day, it elevated a little bit in May, and it's still very similar, those numbers. Looking at sort of a trend or a possible emerging trend, it looks like younger consumers under 35, are feeling more negative than some older consumers. And we think in part this might be, well, in general, because of cost of living. But one thing that we're also closely looking at is the end of de minimis and the additional cost for fast fashion and other items.
Hold on a second, Aaron. Are you saying that because people can't get their Shein packages and that's typically the younger individual, they're feeling worse? Is that what you're sensing?
I am sensing that could be the case, yes. So we've done some analysis. These packages that have come directly from China, other places from around the world that have really boomed the last few years. And in fact, 83% of e-commerce packages come de minimis, and they came in virtually without any tariffs on them because they came direct from China and elsewhere. And we think that the additional tariffs could add up to 0.2 of a percentage point on inflation over the next year. And, it could be a downer for younger consumers.
Taking a step back, there are two prongs to the consumer confidence side of things. On one hand, there's this question about inflation, which has been a really dominant theme over the past number of years. On the other hand, it's employment, and that's kind of what we're looking for to understand what the breaking point will be. Are they still confident that they will have jobs? Are they still confident enough to keep spending, even if they don't feel very good about it? Because they haven't always done what they've said they've felt when it comes to inflation.
Right. Right now, it seems that consumers still feel that the labor market is fairly healthy, although they're starting to reveal in some of the answering of some of our data that they sense that there's less jobs available out there, which is kind of interesting. So personally, they may feel confident, still continue to spend, but we do think the spending will be on sort of not on discretionary goods is where it will weaken, that non-discretionary goods is where consumers will continue to focus. And that when it comes to big purchases like appliances and automobiles, as tariffs have an impact on these, we just may see that confidence erode in the future months.
Aaron, let's talk about confidence, particularly about the labour market. I think there's a lot of confusion right now about whether the step down in payrolls for
When
growth.
the rest of the markets slow down, the futures market keeps moving. Did you know that CME Group S&P 500 and NASDAQ 100 futures trade nearly 24 hours with great liquidity? In the ETF markets, volume and liquidity lessens after 4 p.m. until the next morning. But with futures, you get trading opportunities both day and night. Learn more at cmegroup.com/equity futures.
News when you want it with Bloomberg News Now. I'm Nathan Hager. Markets are starting to find their footing with tech shares leading the way and fresh data on the labor market. Right now, the S&P 500 is higher by 0.4%. The Dow Jones Industrial Average is still lower by 0.3%, but the tech-heavy NASDAQ Composite is leading the gains up 1%. Right now, the 10-year Treasury yield is down 4 basis points to 4.22%. The latest read on job openings has it down to its lowest level in nearly a year. Bloomberg's Michael McKee has the latest JOLTS survey.
7,181,000 jobs openings. Now, this is for the month of July, not for the month of August.
When the rest of the markets slow down, the futures
is leading the way, and fresh data on the labor market. Right now, the S&P 500 is higher by 0.4%. The Dow Jones Industrial Average is still lower by 0.3%, but the tech-heavy NASDAQ Composite is leading the gains, up 1%. Right now, the 10-year Treasury yield is down 4 basis points to 4.22%. The latest read on job openings has it down to its lowest level in nearly a year. Bloomberg's Michael McKee has the latest JOLTS survey.
7,181,000 jobs openings. Now, this is for the month of July, not for the month of August. Friday, we get the August payrolls report. Last month, which would have been June for JOLTS, 7,437,000. So we have seen a decline, but it's still a fairly strong rate. This was about where we were, maybe a little higher than where we were before the COVID sort of upset the apple cart with JOLTS.
Bloomberg's Mike McKee reporting those numbers are adding to bets that the Fed will cut interest rates this month. You can keep Fed Governor Christopher Waller in that camp.
I would say over the next 3 to 6 months, we could see multiple cuts coming in. Whether it's like every meeting, we'll have to wait and see what the data says.
Fed Governor Chris Waller was on CNBC this morning. Contrast that with Atlanta Fed President Raphael Bostic's latest remarks. He just put out an essay saying he still thinks one rate cut this year is appropriate, though he says that could change depending on the data. St. Louis Fed President Alberto Musalem says he still thinks policy's in the right place with the labor market at full employment and inflation just about a percentage point higher than the Fed's target. Musalem spoke this morning at the Peterson Institute in Washington. As for the tech rally, you can credit Google parent Alphabet for leading that. Those shares are higher by 8% after a judge found Google does not have to give up its Chrome browser as a remedy for its search market monopoly. Bloomberg Intelligence senior tech analyst Mandeep Singh says it is a major antitrust win.
Chrome has so much strategic value for Alphabet that when you think about, generative AI, this is the priced asset that everyone wants. Even OpenAI and Perplexity, openly bid for, being a buyer of Chrome.
Mandeep Singh with Bloomberg Intelligence, and the ruling is also lifting shares of Apple. They're higher by 3%, even after Bloomberg News reported Meta Platforms has poached the head of Apple's AI robotics division to join Meta's robotics lab. Right now in Washington, the spotlight is turning back to the Jeffrey Epstein case. Victims of the pedophile financier are holding a news conference at this hour on Capitol Hill. They're demanding full release of the Justice Department's files. House Oversight Chairman James Comer says they're taking the issue seriously.
We brought people in, and I've come up here to sign subpoenas, and we're moving as quickly as we can.
Republican James Comer's Oversight Committee released more than 33,000 Epstein pages last night, though many of them already appear to be in the public domain. At the White House, President Trump is meeting with Poland's new president, Karol Nawrocki. He's aligned himself with the president. Bloomberg Government's Jack Fitzpatrick reports that's putting him at odds with his own government.
It's been causing legislative problems in negotiations within Poland itself. So this could at least be a test of President Trump's ability to keep in mind domestic political tensions in Poland.
Bloomberg Government's Jack Fitzpatrick. Meantime, Ukrainian President Volodymyr Zelensky says he hopes to connect with President Trump tomorrow. Poland was absent from Zelensky's recent meeting with President Trump and other European leaders at the White House. Turning back to markets, Macy's shares, they're up nearly 20%. The department store icon reported its best sales growth in 3 years and raised its outlook for the full year. Bloomberg's Emily Cohn reports the turnaround under CEO Tony Spring seems to be taking hold.
He did have some cautious signs on the call today, warned of a surgical shopper, said that price increases are here and also coming. So we're eager to see how shoppers respond during the holiday shopping season.
Bloomberg's Emily Cohn covering retail. We also heard from Dollar Tree. Those shares are down more than 8%. The discount chain says its profits this quarter are going to be flat. That's overshadowing a boost to its full-year outlook. A Bitcoin mining company tied to President Trump's family is soaring in its trading debut on the NASDAQ. American Bitcoin right now is higher by 91%. The parent company is co-founded by the president's son, Eric. His eldest son, Don Jr., is also a stakeholder. And that's news when you want it with Bloomberg News Now. I'm Nathan Hager.
The payrolls report just around the corner. And the range, let's just say the range is already pretty wide for Friday. 115 at the high end, 0 at the low end, and the estimates are still coming through.
And how credible will the numbers be after the firing of the Bureau of Labor Statistics chief? And how will the administration message this, given their concern the first time around? We got the last jobs market report and some of the turmoil that ensued subsequently.
Kathy Jones, the chief fixed income strategist at the Charles Schwab Center for Financial Research, writes the following: the bond market is struggling for direction. Yield curve steepening remains the dominant trend. Kathy joins us now for more. Kathy, we're seeing that steepening again this morning in the US, in France, in the UK. Can you pick one dominant driver of things, Kathy? And if so, what is it?
Well, I guess the story is, well, there's two things. There's inflation being stubbornly high, and there's deficit spending that continues to increase with no checks against it. So you have these policies that really are incompatible with lower inflation and with lower yields. And that, I think, is driving the market in the long end pretty much around the world. And don't really know what's going to change that dynamic unless you get policy changes and or some sort of recession signal that actually pulls long-term yields down.
We had Matt Hornbach on earlier today, and he was saying that this actually is a good opportunity to buy the long end of the yield curve around the world, including the United States, if you are a long-term investor. Do you agree with that?
Well, real yields are high at the long end, so you could make the argument that if you're willing to ride out the volatility, that this is an opportunity. I'm not terribly enthusiastic about that because I think that opportunity will get bigger as we go forward, unless some big change happens. But I would say the bond market is telling you, not just here, but everywhere else, that it's worried about the path that we're on. And I don't see what's going to change that path anytime soon.
So in other words, you think that yields are going to go up even more. What do you think the pain point is that would actually prompt some sort of change on the policy front that would prompt you to see an opportunity?
Wow. I would have thought we'd reached that point already. So it's very difficult to say what the pain point will be. I suppose if we go up very quickly, we hit a liquidity problem, which in the U.S. is probably unlikely, but in other markets it could happen, where we start to see it very difficult to finance operations or to, get into the market in an orderly fashion, or a big drop in the dollar. Now, we've seen the dollar come down pretty sharply from its peak, but a bigger drop in the dollar might spur some sort of action from policymakers. But at this stage of the game, they seem willing to kind of ride through this and continue to do what they've been doing for decades, and that is cut taxes and increase spending.
Kathy, I've got to say, the US side of things is actually pretty stable. Some stability in the face of what's happening elsewhere. If you told me at the start of the year that we'd have yields down to 4.29 after all the policy changes we've seen over the last 6 months or so, I think a lot of people might be surprised from that we were approaching 5% before the start of the year, and now we're down to 4.30 as the rest of the world is freaking out. The difficulties for me lie elsewhere, in the UK, in France. And Kathy, I wonder if I could sort of frame this question differently, whether you believe the US can remain some kind of bastion of relative stability in the face of what's happening elsewhere.
Well, I think the U.S. still has that advantage, having the world's reserve currency, having the ability or some leeway for the Fed to cut rates. I think that there is some room here, but our call for the year was a steeper yield curve as these policies play out, and I think it's very difficult for the U.S. to see a lot of progress on the downside in long-term yields with everything going on in the rest of the world. So we're going to be a bigger market, very liquid. We certainly have the capacity to handle our debt and deficits.
Yep.
We just don't seem to do it. And I think the market will continue to price in a higher term premium until we get some sort of coherent policy or a signal that the economy is really, really slowing down. And we might get that Friday with the jobs report.
Certainly seen those steeper curves, that's for sure. Kathy, thank you. Kathy Jones there of Charles Schwab, thank you very much. Bramo, let's just finish on that note. The US, in the face of everything at the moment, the US is looking pretty good compared to what's happening in the UK and France.
And you could say it's a bastion of relative stability. You put that well. Key question is going to be the labor market data. If it rolls over, how much do you end up seeing the dollar punished in a material way where you see true weakening, in addition to, yields coming down, but a sense that maybe the United States isn't the haven that it was in terms of growth and momentum?
Getting a shortened week at least, Bramo. Had a long weekend, shorter trading week.
I think
sprinkle of economic data.
There is so much going on this week with Congress coming back, with this question on economic data.
What's your favorite?
Well, I mean, payrolls report is going to be really interesting, or maybe ADP report on Thursday. That could be most interesting. But I do think that the economic data is going to take front and center. Real questions, though, on the political side as well.
The fact that ADP has taken on this additional importance is amazing, isn't it?
What's your favorite?
ADP.
Hey, there you go.
Super excited for it. Coming up, Julian Emmanuel of Evercore, Kate McShane of Goldman Sachs, Libby Cantrell of PIMCO, Mark Cabana of Bank of America. They join us tomorrow morning. Looking forward to that. From New York City, this was Bloomberg Surveillance.
News when you want it with Bloomberg News Now. I'm Nathan Hager. Geopolitics is taking center stage in Washington. At this hour, President Trump is meeting with the new president of Poland, Karol Nawrocki, at the White House. Bloomberg Government's Jack Fitzpatrick has more from Washington.
Certainly around the war in Ukraine, because the president has kind of gone back and forth on, you look at his critical stance on India, trying to pressure them to pull away from Russia.
Bloomberg Government's Jack Fitzpatrick in the nation's capital. Ahead of the meeting, President Trump put a focus on the Middle East, posting on Truth Social, quote, "Tell Hamas to immediately give back all 20 hostages, not 2 or 5 or 7, and things will change rapidly," end quote. The message comes as Israel begins to step up efforts to take over Gaza City this month, with plans to order 1 million Palestinians from their homes, despite widespread global opposition. On Capitol Hill, the spotlight is turning back to the Jeffrey Epstein case. Survivors of the pedophile financier are holding rallies and meeting with lawmakers from both sides of the aisle, demanding release of all documents in the case. Liz Stein is one of those survivors.
As survivors, we're initiated into a sisterhood. We're in a sorority that none of us asked to join. But we all stand here today strong, stronger together because our collective voice is powerful.
Liz Stein spoke at a news conference with Republican Congressman Thomas Massie and Democrat Ro Khanna. They're pushing legislation that would force the Trump administration to release all unclassified Epstein files, including information on clients who abused underage girls. Bloomberg News has learned that President Trump plans to block a series of offshore wind projects off the coast of Massachusetts. Court filings show the administration's moving to withdraw permits for the New England Wind 1 and 2 projects. So far this year, stop work orders and yanked permits have disrupted at least 4 East Coast wind farms. Massachusetts Governor Maura Healey's taking part in a Bloomberg Town Hall event. You can hear that this afternoon around 1:30 Wall Street time on Bloomberg Radio and watch on the Bloomberg podcast page on YouTube. President Trump's immigration crackdowns had a new legal setback. A federal appeals panel voted 2-1 last night to block the president from deporting Venezuelan men under the 1798 Alien Enemies Act. The judges say the presence of violent gang members in the U.S. does not amount to a foreign invasion. This case is likely to go to the Supreme Court. Yesterday, President Trump announced 11 suspected Venezuelan gang members were killed in a military strike on their alleged drug boat. Defense Secretary Pete Hegseth says they won't be the last.
Last year, under the Biden administration, all 4 years 100,000 Americans died from drug-related, from drugs, from the use of drugs, many of which poured in from Central and South America through our southwest border. Now, we're sealing the border, but President Trump is willing to go on offense in ways that others have not been.
Defense Secretary Pete Hegseth spoke this morning on Fox News. Turning to Wall Street, the bond sell-off has gone in reverse after the latest read on the labor market. Job openings fell to their lowest level in 10 months in July, according to the JOLTS survey. Ira Jersey is chief U.S. rates strategist at Bloomberg Intelligence.
Yields were slightly higher prior to the report. The JOLTS report came in with significantly lower job openings, and now you've seen a turnaround and a pretty decent rally, especially in that long end of the yield curve, which has really been taking it on the chin over the last couple of weeks.
Ira Jersey of Bloomberg Intelligence notes the 30-year Treasury yield hit close to the 5% level overnight. Right now, it's at 4.9%. And stocks are mostly higher. The S&P 500 is up 0.3% right now. The Dow Jones Industrial Average is lower by 0.4%, but the tech-heavy NASDAQ Composite is leading the gains now, up 0.8%. Even before this new data, Fed Governor Christopher Waller was making the case for multiple rate cuts over the next several months. Waller is on the long list to succeed Jay Powell as Fed chair, but he says he hasn't spoken to Treasury Secretary Scott Bessent about it yet.
I'd met with Scott in the past, but it wasn't an interview for this job. It was just more of talking, and particularly some of my speeches and things like that. So it was a while back, but we haven't had any kind of interview yet.
Fed Governor Chris Waller was interviewed on CNBC this morning. The Wall Street Journal says Treasury Secretary Bessent plans to start Fed chair interviews on Friday. And some breaking corporate news. Reuters is reporting that ConocoPhillips plans to cut 20 to 25% of its workforce. The report says the CEO announced it in a video email to employees this morning. A town hall on it's expected tomorrow. Conoco shares right now are down 4.5%. And that's news when you want it with Bloomberg News Now. I'm Nathan Hager. This is Bloomberg.
Let's start with China, because we're seeing in terms of the market performance, it's really being underpinned by liquidity, even against the backdrop of these macro risks. What are you seeing from global investor flows?
Well, certainly, as you say, this is a very interesting time in terms of the rally that's taking place in Chinese equities. This is not an overnight rally. It's worth noting that it was a year ago that we saw the media conferences and the announcement of various measures. And really since then, there have been a few milestones along the way. The first milestone, of course, was in Hong Kong, where we saw the Hong Kong market really move. And now we're seeing the onshore market A-share rally taking place. And what we're hearing from our clients and investors is sentiment has improved. Foreign investors are showing more interest, but the positioning changes are yet to come. Most of what we're seeing is still domestically oriented. And I think it's worth remembering that a big driver of this rally remains the retail investor in China. And it's that retail investor who's got this excess saving that a lot of people are talking about, the household savings that are built up, and they're looking for other options, and the equity markets are providing some of that focus. But sentiment has improved. The first half in China saw relatively strong GDP growth. The second half is likely to be more challenging. So we should keep a careful attention to the underpinnings here, the fundamentals. China still faces many challenges, but this rally in the equity markets has got some legs.
What are your clients saying about what they want to see more of before that positioning comes back?
Well, it really depends which clients. If, from your question, you're asking about the foreign investor, clarity and consistency are the key words that come to mind. Because ultimately, there's still a focus on some of the headwinds, the demographic headwind, deflation and the challenges that we're seeing from a combination of overcapacity and demand limitations. And finally, of course, the backdrop for all of this, the geopolitics, remains and lingers. So progress in each of these is what underpins confidence to ensure the foreign investor can return and the flows can move. We are seeing some return, though. I think it's important to acknowledge that. Hedge fund positioning has improved. But the long onlys, the longer-term investor, that's going to take a lot more clarity and a lot more consistency before we see the flows move.
Has that been enough for Goldman to lower its bar on investing in China, as well as, build on the business that's already here?
Well, we've been in China for 40 years. We have a long history here. We are very committed to our business here. We've been maintaining the footprint through tough times and good times. This is a moment when we see certainly opportunity, and we continue to look at China with a lens that says there are plenty of places where our clients need services, need the support that we can provide, and we're going to be there for them. And it's with that lens, our client lens, that we're very focused on the opportunities that we have in China.
We talked about Hong Kong earlier. We're seeing this IPO boom. Is Goldman looking at expansion potentially here?
Well, this has been a busy time. 57 so far this year, 200 in the pipeline. There's a lot of activity building in Hong Kong. And in that context, we're hiring. We certainly are hiring. We continue to look at the opportunity to meet the needs of our clients. But we'll do it in a thoughtful way, because one of the things which I'm very focused on, and my colleagues are very focused on, is making sure that we're there for our clients, but we don't get ahead of ourselves. And so it's a thoughtful approach, but we certainly are hiring.
Are you hiring in India, where you recently opened a bigger Mumbai office? But this is
guys, क्रूड ऑयल में यहाँ पर हाफ प्रॉफिट बुक कर लो, बुक द हाफ प्रॉफिट इन क्रूड ऑयल। एंड नेचुरल गैस में भी काफ़ी देर से रुक रहा है, थोड़ा टारगेट बड़ा कर दिया मैंने, पहले इतना ही रखा था। चाहो तो इसमें भी बुक करके निकल सकते हो, अगर ट्रेल कर रहे हो तो हाफ प्रॉफिट बुक करके ट्रेल कर सकते हैं, ठीक है। नेचुरल गैस में भी हाफ प्रॉफिट बुक करके ट्रेल कर लो अगर ट्रेल कर रहे हो, नहीं तो पूरा प्रॉफिट बुक करके निकलना है तो निकल जाओ। काफ़ी स्लो आ रहा है, बड़ा टारगेट है, थोड़ा सा 11 पॉइंट का देखना पड़ेगा, नीचे तो जाता नहीं जाता। ट्रेल कर रहे हो तो अगर ट्रेलिंग एसएल जाए तो फिर निकल जाना, होल्ड मत करना। बाकी क्रूड ऑयल में फर्स्ट टारगेट हो गया है, हाफ प्रॉफिट इसमें बुक करो। सेकंड टारगेट ये है तो आपका 150 पॉइंट का फाइनल टारगेट, इसके लिए ट्रेल कर सकते हो सेकंड टारगेट। बट हाफ प्रॉफिट बुक करना, कहीं डब्ल्यू बनाने चला गया तो फिर बहुत स्लो जाएगा, तब तक मार्केट भी क्लोज जाएगा। तो बुक द हाफ प्रॉफिट एंड देन ट्रेल रिमेनिंग क्वांटिटी।
Pay careful attention to it. And I think in reality, the India story has been a domestic story to a large degree. If you just look at Q2 GDP, it came in at 7.8%. And that was largely driven because of a combination of consumption beginning to improve and also the services economy. So of course it does matter what happens in terms of broader geopolitical context, the political relationship, the export, all of that matters. But the Indian story has a large domestic component to it as well. And I hope and believe that over time these differences, as the world itself transitions to a different set of international relations, the images coming out of Beijing talk to this. We're in a period of change. Hopefully it will settle down. And over the course of that time,
So let's start with the latest. We're hearing reports that the Treasury Secretary could begin in Fed chair as soon as this week. Who in your mind do you want to see taking over from Chair Powell?
I'm not going to comment on individual candidates, obviously, but Jay Powell's term as chairman ends in May, and so it makes sense that they should start the interview process. I think the main thing for the leader, the next leader of the Fed, has to be somebody who has strong grounding in economics and can make independent judgments about the economy, can forge a consensus, can oversee the Fed and manage it, and can operate, in my view, in an independent manner to make the best decisions for the U.S. economy.
An independent central bank is something you've cited previously as being the mark of a successful nation. We've seen Trump ramping up pressure on Powell, moving to fire Lisa Cook, moving as well potentially to get a majority on the board. How worrying is that for you?
Well, I won't comment on those individual situations, but I do think, as you've said, it's critical that the people that are in the governor's seats and in the bank president's seats operate without regard to political influence or political considerations and divorce themselves from worrying about political pressure. They have to make the best decisions they can. They can debate, they can disagree, they can bring innovative ideas, but it's got to be done on the basis of what they think is the best decision for the U.S. economy. And I think it's critical that that ethic, I think it's in the interest of the United States for that ethic to be maintained.
They're under a lot of pressure, though. How do you think they can work with these constraints? How might that shape policy making between now and potentially in May?
So the best way to deal with these pressures, if I'm at the Fed, is to ignore them and to focus on the job. And I would right now be focusing on my team on the decision for the September meeting, and it's not completely clear. The job market, on the one hand, we're at full employment, but we think hiring is slowed to stall speed. We'll see what the jobs report is Friday. So that's on one side, but inflation is above target, and that's before considering the tariffs. Service sector inflation is still very sticky, and so I'd be focusing my team on making the best decision in September. I personally would be leaning toward cutting in September, but I doubt it will be the start of a rate-cutting cycle. I think they'll take it one meeting at a time. But those cross currents are complicated enough. I'd make sure, if I were at the Fed, keep my team focused on the issue at hand and doing our job.
Do you see strength in the labor market? You were talking during the break about some of these structural changes underway. How is that going to affect?
So GDP growth in the United States is solid but somewhat sluggish. We started the year thinking GDP growth in the United States might be 2.25%. I think our best judgment at Goldman Sachs now it's more likely to be closer to 1.5%. So, and why is that? Number one, the tariffs, at least in the short run, and the uncertainty have slowed growth. The second thing that slowed growth is labor force. We are curtailing labor force supply. There are at least 10 million undocumented immigrants in the United States that are key parts of construction, agriculture, other industries that are either not reporting to work, they're not shopping, and it's creating also some stickiness and slowing in the economy. And so I think the reason the unemployment rate is so low is because supply is declining, but hiring is also very sluggish. So I think the Fed is starting to realize maybe they need to look through the headline unemployment rate and realize that even though we're still looks like we're at full employment on the surface, the hiring level is very sluggish because growth is sluggish. And that would be the argument for making some adjustment to the Fed funds rate, even though inflation is still above target.
It's interesting also because this is a Fed that, for the most part, has stuck to its guns about data dependency. What is your sense of how the BLS needs to evolve along with these structural changes that you just cited in the economy, including trade, AI? Yeah. How does it need to?
So you may know when I was at the Fed, and since I've left, I've never been a fan of the term data dependency because it's a piece of the puzzle. What do I mean by that? There are BLS and Commerce Department figures every month The problem is they're backward looking, they're aggregated, they tend to get revised later. So you want to look at them, but you don't want to overreact to any one data print. You also want to talk to businesses, you want to look at structural trends, you want to look at the whole mosaic. But in that regard, to your point, it's critical that the Fed still rely on BLS information. But here, let me give you an example. We've got a significant AI data center power boom going on in the United States. It will be disruptive to many industries, but disruptive in a constructive way that will increase productivity growth. That's disinflationary. We haven't seen that quite yet show up in the data, but I think it will. And so even though inflation's running above target, that structural driver has to be taken into account, because it's one reason why inflation may moderate. And that's a good example when you're at the Fed. You want to look at data, but you want to look at the whole picture, including structural drivers, in forming a judgment.
That's really interesting, because you talk about these cross currents they include for the inflationary outlook, and this is coming at a time when we still might not have seen fully the impact from tariffs.
That's right.
What is your sense of, is that going to be coming, one-off or more in waves?
Well, we're going to find out, and that's still somewhat in flux, but we do know the following. Before even considering tariffs, as I said, service sector inflation is still sticky. But we know the following about goods. First of all, goods for the last 2 years have been disinflating globally. What's driving that? China overcapacity, manufacturing overcapacity. That overcapacity hasn't gone away. The tariff situation may complicate it, but I think over the horizon, global overcapacity in goods, and the fact that U.S. consumers don't need to buy goods. They can shift, they can substitute, they're price sensitive. They can decide to go to dinner instead of buying a set of goods. I think that makes me think it is more likely these tariffs will be one time, more likely to be, and that the effect may moderate over time. That and the AI boom, which is also disinflationary, and also the fact that growth is sluggish, which also limits demand for goods. I think all those things make me more optimistic that maybe you'll see some moderation of the tariff impact when we look back a year from now.
Would it not make sense then, beyond September, for there to be more cuts then?
Well, those who want more cuts will argue that. The truth is, I mentioned cross currents. I think in a period where you've got cross currents, the best thing I think you can do is don't be a prognosticator, be a risk manager. And that means take it one meeting at a time. So all my attention will be focused on September. After that's done, I'll wipe the slate clean and do my analysis between September and the November meeting. And that's why I say I wouldn't assume this is the start of a rate cutting cycle. I think they'll shorten up the time frame and the prognostications and take it one meeting at a time.
Are we nearly done? We were joking as we sat down.
Yeah.
When the traditional news starts covering the bond market, you know that probably we've reached an end to the near-term pain.
I think so. I think we're in the realms of a local high in yields. I'm not going to pinpoint it and say it's today, but it's music to my ears to hear somebody saying I can't find a single reason for these things to rally. That's exactly when. If one goes back to the depths of the equity market, say in April, nobody could find a reason. If you remember that weekend, I think it was of April 9, nobody could find a reason down the equity market, and we're 15% higher. I would have a reasonably high degree of confidence if you could fast forward 3 or 6 months, you'll probably make a lot of money in these bond markets.
A lot of money?
Yeah. Bear in mind, a 30-year yield, if you get a rally of 100 basis points, say, you're talking about, 20% capital return. So could you rally 25 basis points? You could rally 25 basis points in very, very little.
Who would be the buyer there? Who's buying? Who's the marginal buyer in Europe right now?
It's price itself. I mean, we know the way these things work. I mean, it's important to have, you've got to have a lot of clarity, and you've got to step back and try and think carefully about this. I mean, who was buying, the question we should be asking ourselves is who was buying these bonds when they were yielding zero?
Yep.
Right. I mean, I didn't have any.
Yep.
You know, like the point is the yield to maturity is the yield to maturity. So take the 30-year gilt just because it's the highest level of yield. Actually, the UK isn't that interesting. We can talk about why. But if you take a 30-year gilt yielding where we have 5.6, 5.7, 5.8, that, you know, if you think the Bank of England is going to deliver you 2% inflation over the medium term, that is an equity-style return now for owning a gilt. Now, we were told for most of the last 10 years that these were safety assets. What's really going on here is people were buying these hand over fist when yields were 0, when yields were 1. Yep. And they are sitting on huge capital losses.
Yep.
Right, they've experienced equity crash style returns. So there's a huge risk premium because we're pricing the past. If you go forward, you know, if you're in your 30s, you can fund your pension fund, right? I mean, think how difficult was it to fund a pension when the 30-year gilt was 1%, right? How much capital? Yeah. If the smart thing to do here is look at the income, and the reaction function is exactly what you want, which is people are going to stop issuing. Finally, people are going to stop doing QE. I mean, what's QT rather? QT, like, yeah. Why on earth is the Bank of England doing QT? I mean, that's the question. That's with our money as the public, right? Okay. I mean, that's nuts. They were buying them at 0 during COVID. Yeah. They're selling them at 5.8. Like, I don't know which book of asset allocation, right, they're using, but apparently it's okay if you call it QE and QT. I mean, the emperor has no clothes. I mean, there's the child at the back of the room who's going, sorry, what are you doing? Yeah. Right, that's nuts.
Is that you?
Okay, that is you. So many
Keep
questions.
Keep it simple, right?
So many questions.
Yeah.
TSMC.
Hello and welcome to Insight with Haslinda Amin, live from the Bank of Thailand, Beijing. Steve, the mood on the ground, what are you seeing?
Yeah, well, it was a big parade, the largest China's ever held. There were a lot of people. It's finally clearing out a little bit. Gets a little breathing room right now, and our signal is up and being able to broadcast because it was an absolute crowded place full of pomp and ceremony and nationalism, and Xi Jinping up on the riser up there on the gate, the Tiananmen Gate in front of the Forbidden City and Tiananmen Square, essentially talking about the historical importance of China's contribution to the ending and the winning of World War II, something that many people here in Beijing feel that the Western powers do not necessarily respect. So that's why they held this parade today. They claim September 3rd is sort of the anniversary of the victory over the Japanese. And then they did hold it in the exact same spot 10 years ago for the 70th anniversary. Now, we did see a lot of weaponry come by. The other side of this narrative is not only the historical correctness, if you will, from Chinese perspective of China's contribution, but also a message to the West that they will not be bullied, and that they can stand beside allies like Vladimir Putin, also Kim Jong-un, and have a respectable, sizable strategic bloc of their own against what Xi Jinping called intimidation and bullying, a veiled, a not so veiled reference to the United States. But surely there was lots of military hardware rolling past, including the latest fighter jets overhead, like the J-20A, in conjunction with the drone, the reconnaissance and strike drones that China has put lots of money into, as well as hypersonic missiles, including the Dongfeng, the DF-17, and a number of different ICBMs that have the capability to reach the United States with a range of about 15,000 kilometers or 7,500 miles. That would be the DF-41, being the latest supersonic ICBM being rolled through the streets here of Beijing.
So, Steve, a display of Chinese weaponry. We saw that in action, of course, when India, had a conflict with Pakistan. It's also a display of alliances, new alliances perhaps getting forged. Talk to us about the takeaways from what you're seeing there.
Well, surely China has modernized its military. They've streamlined it, and they've also added a lot of discipline into the ranks. Xi Jinping has gotten rid of a number of different generals, more so than any past leader since Mao Zedong. So he's trying to install discipline into the force, but he's also, through that modernization of its equipment, through hypersonic weapons and others, is to export its military expertise. It is now the fourth largest military equipment exporter to countries like Pakistan and elsewhere. So I thought it was interesting when I saw the hands clasps between Xi Jinping and Vladimir Putin and Narendra Modi in Tianjin. By the way, Modi was not here. Maybe not the best optics for the Indian leader, which espouses, of course, sort of a strategic autonomy. But again, I found it very interesting that you had Modi, you had Xi, and you had Putin really showing a camaraderie. And that was very much intended to show a message to the Donald Trump administration, the Western powers, that China has coalesced a group of powerful allies to combat the U.S. world order. Whether that will come to fruition or not is another question. But at least in optics alone, it was pretty powerful messaging.
If nothing else, it is in the messaging. Steve, thank you. Our Chief North Asia correspondent there, Stephen Angle in Beijing. Now, China's display of strength comes amid growing uncertainty over geopolitics and trade here in Thailand, which is dealing with a 19% U.S. tariff rate, a tourism slump, and a recent flare-up in its deadly border clashes with Cambodia. On top of that, the nation is embroiled in fresh political turmoil following the court-ordered ouster of Prime Minister Paetongtarn Shinawatra. Thailand's largest political group, the People's Party, announced earlier today that they're backing Anutin Charnvirakul as the next prime minister to end a political deadlock. However, the group will not be part of his government and is demanding new elections. As Bangkok grapples with a perfect storm of problems, the country's central bank is also gearing up for a major leadership change. Bank of Thailand Governor Sattaput Suthiwarnaruput is stepping down at the end of the month to complete his 5-year term. He helmed the BOT during a turbulent political period that saw 3 prime ministers and 3 finance ministers within 2 years. He also faced persistent pressure from government-linked officials who wanted BOT to loosen its monetary policy. Joining us exclusively here at the Bank of Thailand headquarters is Governor Sattaput Suthiwarnaruput. Governor, thank you so much for having us today.
My pleasure.
It is such a poignant moment right now, with the situation politically in the country and how your term is ending as well. It's almost like we're back to square one, right exactly how it all started. How are you looking at the political situation here?
As you mentioned, it's the political situation has been challenging. I have a 5-year term here, and if things go as it seems to be going with a new government forming, I will have seen before the end of my 5 years 4 prime ministers and probably 4 finance ministers. So there's been certainly a lot of turmoil on that front. So the problem for us, Haslinda, has always been that we have a lot of structural challenges that we face. And that in order to address those challenges, we need really kind of deep, taking a very long-term structural reform perspective. And the fact that, again, the governments have such a limited horizon, there's so much turnover, limits our ability to do that.
It's hard to talk about structural changes and reforms given that the government all is looking near term because there's just no certainty in terms of the political situation. How big a risk is this current situation to the economy, which is already struggling to turn around? 2% growth is half what we're seeing in the rest of Southeast Asia.
I would say this, that one thing that I think we've been fortunate about is that our buffers are reasonably strong. So from a vulnerability standpoint, the chances of the country kind of heading into a crisis or whatnot are fairly low. So the downside isn't
Why?
huge.
Why do you think
if
it's
you look
low?
At if you look at the usual things that tend to cause a crisis, like a balance of payments crisis, right? You would expect to see, current account deficits. You would expect to see high levels of foreign debt. You would expect to see low external reserves. On that front, we're okay. The other source of crisis is a banking crisis. And if you look at our banks, they're very liquid. They're well capitalized and whatnot. Yes, there are NPLs that are increasing, but they're fairly well provisioned. So again, chances of a banking crisis reasonably low. Fiscal situation is not as good as it once was, and there's challenges in that front. But again, I think it's not approaching like Greek crisis type level. So that's why I say that on the whole, the chances of us having that big downside of a crisis are relatively low. That said, the upside is also limited. And that's a big issue. I mean, if you look right now, right, one thing that's very clear from all this uncertainty is that this uncertainty is going to be with us for quite some time. And so that's going to be an overhang in terms of what the private sector is looking for. And again, in terms of policy initiatives, right, we want to see that kind of long-term perspective, deep structural reform. You're not likely to see that. I mean, if the deal that is talked about goes through, we're talking about a government again, that they have announced, say, 4 months into the process, and then elections. And then elections take a while again before the new government comes in. You're talking about at least, say, ballpark about 8 months where you have this government which is kind of, not there, and it's going to be very difficult for them to pass any kind of major.
Might Thailand then have to rethink its 2% growth target?
No. I think the 2% growth target this year is intact. I think that when we came out with that number again, we were, I think, somewhat criticized, saying we're being too optimistic. But I think the events have turned out to prove us correct. And largely, as we were trying to emphasize, is because the first half looked pretty good, and the official first half figure that came out from the NSDC was 3%. Right. So even if the second half grows at 1%, you're still going to see a 2% number, and it's very unlikely that we see something below 1%. The second half, even despite all the tariffs and all the slowdown and whatnot. So for us right now, when we look at it, we're fairly confident that we expect to see a 2+% figure this year. Our worry is next year. We have right now out in public a 1.7% figure for next year, but I would say that again, with all this uncertainty, there's some risk to that. The risk again comes to the budget. If elections happen and the budget, and the next year budget, the 2026 budget gets delayed, then that's going to hit the fourth quarter calendar year figure next year, and then that might put some downside risk to that headline figure.
We've been talking about China. China is a risk to Thailand as well. This is the largest export market for Thailand. Yeah. Also, the market for tourism.
Biggest source of tourism. Yeah.
So the data so far has been pretty mixed, and it's not looking good. When you take a look at the property sector in Thailand, in fact, I think Goldman said that prices could go down as much as 10% by the end of 2027. That's not good news for sentiment. That would impact Thailand even more.
Yeah. The big risk for us, I think, on the property market, we haven't seen kind of the rapid price increases that you saw in other countries and whatnot. So I don't think there's like this kind of huge property bubble happening here in Thailand. But back to China. To me, that's where the risk is for us in terms of the impact on the broad picture of the economy. Why? It's not just because of the exports, as you mentioned. I think China is an important destination for exports, both in terms of final goods and also as part of the supply chain going elsewhere. But the big impact in terms of the overall economy is on tourism, because as you mentioned, tourism is a huge kind of footprint here in Thailand, and the Chinese tourists haven't been coming back. So, last year we saw about 6 to 7 million Chinese tourists. This year to date, it's about 3-odd million. We expect by the full year to see about 4, but still that's kind of a significant drop-off. And while the total tourism spending has been holding up reasonably well, because we see more European tourists who tend to spend more, stay longer and whatnot, there's a distribution effect. Because the Chinese tourists tend to go to certain kinds of, do certain kinds of spending, stay in certain kinds of hotels and whatnot, and that segment has been hit very, very hard. If you go around a lot in certain areas and whatnot, you'll see like the restaurants being very, very quiet and whatnot, and that again reflects the fact that the Chinese tourists haven't been coming back.
The picture is not looking pretty. Some are perhaps suggesting that a credit rating downgrade may happen. Is there basis for that?
Yeah, I mean, if you look at the credit rating report, the kind of stuff that they talk about, they would like to see some more fiscal consolidation, which we at the Bank of Thailand have been saying the same thing, that we would like to see more fiscal consolidation, especially over the medium term. I mean, we needed to do a lot of the fiscal stuff that we did during COVID and whatnot, but now it's a time to kind of start to tighten our belts. If we don't see clear signs of a medium-term fiscal consolidation, that would be because the particular metric that they've been flagging and paying attention to is like interest payments as a share of the budget and whatnot, and that's been creeping up. But the other thing they also cited about was the political uncertainty as one of the possible triggers. So, that's certainly a possibility.
Given the leg lost economy, is there reason to think that Thailand perhaps needs more rate cuts than that's already been priced by the market?
I should caveat this by saying that my term is ending, so when talking about the outlook, I will not be on the next MPC meeting. But I can comment on what our thinking has been to date. And I think that for us, the Monetary Policy Committee, I think is reasonably comfortable about where rates are now. We've always emphasized that when we set rates, we do so in what we call an outlook-dependent manner. And so the outlook, as I mentioned, particularly for this year, seems pretty much consistent with what we had been expecting. So we feel that the rates as they are consistent with that, and that takes into account, again, even the newer risks that we've been talking about. The uncertainty, as I mentioned, has more to do with next year. And then again, that I think we need to see how things evolve on that front. But the thing I would urge also to keep in mind is that we do have a limited amount of policy space left. Rates are 1.5%. That's about what, the fourth lowest in the world. I think it's only what, Japan, China, the Swiss have lower rates than we do. So there's not a whole lot of policy space and room left to cut rates. And I think one of the lessons that we've learned, right, is that there will be shocks that we never anticipated that will come along, and that it's important, again, to maintain the policy space to try to handle those things.
You said that 1.5 is already low. We had Nomura coming out to say that given the current situation in the economy, terminal rate should be below 1%. What would force you, under what circumstances, I suppose, should rates go below 1%? What needs to happen?
A material deterioration in the outlook. As I mentioned, we're outlook dependent, right? So if we see a material deterioration in the outlook, then that would warrant further rate cuts. And again, I have to emphasize that we have what we call a flexible inflation targeting framework. So we don't look just at the GDP numbers, but we also look at what's happening with on the financial stability front. We have very, very high debt, so that's always another issue. And also, what's happening with the inflation outturns. So we take those three things into consideration when setting our rates.
Throughout your time, you resisted calls to cut rates further. Given where we are right now, with greater clarity on where inflation is, inflation has been pretty benign. Should you have cut more? Should you have cut earlier to ensure that growth is actually better than where it is today?
One can always argue about, whether at the margin you should have cut 25 basis points here or there, sooner, later, slower, whatever. But broad picture, broad strokes, I think we're ballpark, we're roughly where we need to be. And why do I say that? If you look, I think it's fair to say that we haven't been dogmatic in terms of our approach towards rates. Yes, right now there's still calls for us to cut rates and whatnot, but you look at what we did over, again, 5-year term. When COVID hit, we brought rates down all the way down to 0.5%, because obviously big crisis, we had to do what it takes, brought that rates down to 0.5%. Then we got the Ukraine thing. Inflation here peaked, right? 7.9%, highest in the region. At that point, we were facing calls consistently that we were behind the curve, we needed to raise rates, faster and by more, chunky bits, right? 50 basis points a time. We said no, because we saw, again, our economy is recovering much more slower than others because we're so tourism dependent. So we took what we called a gradual measured approach, gradually increased rates, and we raised them back to 2.5%. We were aiming to try to get it back to neutral, which is ballpark in that range. But then come the next phase, which is where we were facing structural headwinds. The recovery, as you mentioned, has been slower than we expected, particularly in the household income front. So we got new shocks with the tariff shocks and whatnot, and so we felt that again it's important to move from a neutral stance to a more accommodative one, and that led to our next phase of, again, lowering rates back down to 1.5%, which we feel, again, is broadly appropriate for the situation that we have. I know that on the optics, it's easy to kind of say you should cut rates. Why? Growth is kind of below your potential, inflation is below your target. From a financial stability standpoint, right, credit isn't going all that fast, so you shouldn't be worrying about the accumulation of debt, household or otherwise. But it's our job to not do the easy thing. It's our job to look beneath the numbers and not just kind of look at the headline numbers and look at why those numbers are why they are. Why is growth below potential? Why is inflation below target? Right? And if you look
but
at
it is your job to look at inflation and growth.
Absolutely.
Lackluster growth at 2%.
Yeah.
If you had cut rates 200 basis points instead of the 100 that you did, would growth have been much higher?
Short answer, very little. And that's why I say it's important to kind of look behind the numbers and look at why is growth so low? Why is inflation below target? So if you look at the growth pattern in Thailand, right? Every time we get hit with a crisis and we recover, it takes us a while to recover. When we recover, we come back at a slower growth trajectory. So, we went after post, 1997 crisis, about 5%. We got hit during 2008 with the global financial crisis, tracked down to 3%. After COVID, it went from 3+%, now down to 2+%. So that's that trend that you're seeing, which does not reflect, the cyclical stuff about whether rates are at this or that level. That reflects structural stuff that we're seeing. It reflects the lack of resilience in the economy, that we're not able to rebound back from these shocks and these crises. A lot of it reflects stuff like demographics, right? You got fewer people working. The only way to get our growth up is to get higher productivity, but we haven't been investing, right? We haven't been getting new kinds of technology, increasing our capacity in that front. So those are the kinds of things that we need to address. And rate cuts alone are not going to deliver that. You look at inflation, again, below the target, agreed. And it's been negative for a couple of months now. But again, our job, look behind the numbers and look at, why is that inflation coming in below target? And it's not because of, this kind of deflationary problem, negative wage price spiral, people aren't spending because they expect prices to go down. No, it's largely because of supply side stuff. A lot of it's energy, a lot of it's raw food. And that's not, again, stuff that interest rates directly can affect. So again, and when we look at the broader picture, we don't see that signs of big risk of deflation. So again, I take your point. You look at the numbers, it looks like we should be cutting, but again, it's our job to kind of look.
Governor, your successor, Governor Vijay, is known to be pro-rate cuts.
Yeah.
He's aggressively pushed for that, pretty much in line with what the government has been proposing. Is there a sense, perhaps, that he was chosen as governor because of the stance that he's adopted? Because there was a very well-respected deputy governor who was in the right place to take up that position.
It's not for me to comment on what the selection committee and the Minister of Finance, who was the one that made the final proposal to cabinet about the reasons for choosing the governor. I won't go there. But I would say, just getting back to what we were talking about also, Aslinda, what you were saying, if we had cut rates, sooner, whether we would have seen a stronger growth impact. And like I said, I think the thing that we also need to consider is, if you cut, right, what's the upside that you get from it? And also, if you cut, how much room, how much policy space do you have left? Please keep in mind that we got calls to kind of cut rates from, even way back, even before the tariff stuff happened. So imagine if we had cut rates, as people were calling for us to do, and then we got the tariff shocks, and then we're out of ammunition. What do we do? Both on the fiscal side and the monetary side.
Governor, I'd like to get back to the upcoming governor, the new governor, because Fed independence is, or rather BOT independence is a huge question for the market right now. What messaging do you think this is sending to the rest of the world, to investors interested in putting money in Thailand when that independence is in question?
Are you talking about for the Fed or for Thailand?
For the BOT.
For the Bank of Thailand.
It seems like both central banks are in the same situation.
There's no doubt that we have been, and I'm sure will continue to be, under pressure. And it's what we see happening, again, as you mentioned, not just in Thailand, but in many, many different countries. But I think, if anything, we've demonstrated that we are able to maintain independence and try to do what's right and not pay, necessarily. We need to listen, but not to kind of pay undue heed to the demands of government. So I think, in a sense, the independence has been what I would call, tried and true and proven. And I would emphasize this, that...
So far, but no, going forward, that is the question, because we had the finance minister, Pichai, who said that, now the BOT and the ministry will work hand in glove, meaning that the BOT will do what's in line with the government.
Working together doesn't mean you have to actually, do exactly what the Ministry of Finance tells us to do. So I think in terms of collaboration and cooperation, there are many things that we have, even, during my term when there was all this turbulence on the political side, that we worked closely with the Ministry of Finance on. But I will say this, Haslinda, that independence of the central bank, of any central bank, but including the Bank of Thailand, is not just about one person. It's not just about the governor. It's broader than that. It's about the whole governance framework that you have. It's about the legal setup you have. And it's about, if I may say, kind of the whole institution setup. So
you are confident that Governor Vichai will not cut rates more aggressively than what's needed?
I can't comment on the upcoming MPC decisions. I'm not going to be...
The concern is that because he stands for aggressive cuts, that he may be doing that. Is there concern that he might end up doing that?
You'll have to ask him that. But it's not for me to comment on what the MPC is going to do going forward. I can tell you what the MPC has been thinking and has been thinking, and that's what I commented on. But what I was trying to say, Haslinda, was that the independence of the central bank is deeper than just one person. There's this, we've been around 80 years. There's this long tradition, I think, of independence, of being, technically very sound, technocratic people. There are 3,100 people here working. So it's part of the DNA of the place. So I don't think it's something that just depends upon one person. There's a whole kind of ecosystem around that, right? Well, the other thing you have to see, and we'll have to see. I'm not saying there are no risks to this. I'm not being sanguine. We have to see what happens with the Monetary Policy Committee. There will be changes in the Monetary Policy Committee going forward, both this year and next year, because some members...
Governor Setaput, hang tight. We'll continue our conversation. We'll have more with Setaput Sutiwar Thanaraput, Governor of the Bank of Thailand. Keep it here with us. This is Bloomberg.
They're going to do it in September, not today. For what reason? Nobody knows.
I'd love him to lower interest rates.
Well, we call him too late for a reason. He should have cut him a year ago.
With policy in restrictive territory, the baseline outlook and the shifting balance of risks may warrant adjusting our policy stance.
That was just a sample of President Trump's repeated attacks on the Fed and Chair Jerome Powell in recent months, urging him to cut interest rates. The central bank has held off on rates to this point, but Powell did open the door to a rate cut in his speech recently. Let's get back to our guest today, Governor Setaput. What's the sense you're getting from the repeated calls for the Fed to cut rates? I mean, the Fed independence, a big question mark for the rest of the world. We had the likes of Lagarde saying that it is a danger to the global economy.
Yeah, I guess the term I would use, it is unfortunate because there are many things that economists disagree on, but I think one thing that they all tend to agree on is that central bank independence is a good thing. And it's a tried and proven thing that it works, it's important, and that there are many examples of what happens when you violate central bank independence, both historically and if we look across the world, many countries that violate that, the problems that arise that come about when you violate that. So it's a hard-won lesson. It's a shame that it's being, I think, not remembered as well, especially in, again, the place which is supposed to be the world's safe haven. So. And that there's a danger that there are spillovers, negative spillovers, right? Because if people start to see, even in the U.S. this can happen, it kind of increases the chances that it happens somewhere else, because people can say, look, even in the U.S. they're doing this, why not do this?
What might the repercussions be for the rest of the world? This is the most important central bank in the world. It sets a policy tone for the rest of the world. How might this play out?
Well, I don't know how it's
to the global economy. To the point that Lagarde said, this is dangerous to the global economy. How might this play out?
Well, I have to say, I don't know how it's going to play out, but I mean, just the kinds of things that we're
weaker
seeing.
dollar?
Sorry?
We're already seeing that, perhaps?
Yeah, I mean, the stuff that you're seeing is already seeing, right? The yields are going up and the dollar is weakening. So those are the immediate market effects. But again, it remains to be seen how the whole rest of it plays out. But again, like I said, I think some of the effects that we worry about, regardless of how it plays out, is how do I put this? It increases in a sense, the scope of what is. I don't want to use the term acceptable. That's not quite the word, but in the realm of the possible, things that we never thought, were likely now, seem to happen. And I think it's also brought into, I think, stark relief that a lot of things that we kind of took for granted, that we thought were checks and balances, that we thought were guardrails, were just norms, and that those norms can be violated. So yeah, I think those will be some of the.
How concerning is it to you when you take a look at the current bond route, global bond route, and we're seeing 30-year yields inching ever closely to 5%? Surely these are signs that someone like you, in your position as a governor, will be looking really closely.
Yeah, again, not entirely welcome, especially since you look at the broader fiscal picture. The fiscal situation globally is not a good one. Public debt is again way too high. Again, we haven't seen the kind of fiscal consolidation that we need to see after COVID. Again, COVID was an exceptional thing. We needed to kind of do the fiscal stuff at that point, but we really needed to retrench after that, and we haven't seen that happening as much as we should. So that with the high debt stock and you have these yields going up, it does create the vulnerabilities that we need to keep a close eye on.
What are the implications for emerging markets in particular when you see such high yields? We talk about the bond vigilantes when they take action. It was only the bond vigilantes that could actually make Trump listen.
Right. I would argue, Haslin, that actually the first immediate channel that hits emerging markets like us in this region most directly is less on the bond market side, because most of our economies are more bank-based rather than bond market-based. So even if global yields go up and our yields go up, it hits us relatively less. The main channel that hits us immediately is the dollar. So what we've seen with the dollar weakening is we've seen currencies in the region tend to appreciate. And one thing that we normally would expect and would normally like to see is, with the tariff shocks, we would normally expect the tariff-imposing country, in this case the U.S., we would expect that currency to appreciate, and the currencies in the other regions tend to depreciate. That hasn't happened. It's gone the other way around. And that's caused the exchange rate, which normally we would want to act as a shock absorber, to not play that role. And I think the appreciation of the exchange rates, not just in Thailand, but across the region, has exacerbated some of the adjustment difficulties to the tariff shock that we've all been.
How much capacity, how much appetite is there to perhaps manage that? Because the dollar is set to depreciate even more from here. That's the expectation of the markets, at least.
Yeah. I think again, most of the countries in the region, Thailand included, we have a managed floating exchange rate system. So we don't have a target level that we set. We allow the exchange rate to move in line with fundamentals and whatnot. But again, the movements have been quite marked. Our volatility has gone up quite a bit. The bot volatility, it's about 8% now, close to like the Korean won, which is a higher volatile currency, which is not good for us. So, in terms of our response, it's been more to try to manage that volatility, to prevent that excess volatility from happening too much, but rather than trying to steer the direction one way or another, which we know is very, very difficult to do.
It's not just about the dollar, it's also about the yuan. Some talk about perhaps competitive devaluation. If we continue to see the yuan decline from here, that's detrimental to your economy as well.
Yeah, but like I said, I think, a lot of the countries in the region, there's still enough of us that are still around, present company included, that still remember the 1997 Asian financial crisis. A lot of us are retiring, like myself, but there's still a bunch of us around that still remember that and still recognize the lessons and the dangers of trying to, basically do too much in terms of trying to keep exchange rates at a certain level for competitive reasons.
Prosper thy neighbor. I've covered this region for a very long time. And just when there are signs that, the region's picking up and growth is intact, here we are, not just in Thailand, but Indonesia, seeing a lot of violent protest. I mean, how concerning is it that the region itself is pretty much unstable? Growth in question?
For me, the lessons actually that you're seeing from what's happening in countries like Indonesia or even, to a certain degree, but we see signs of it here and elsewhere, is that it's important not just to look at the growth, the headline numbers, but to look at where that growth goes. So I think one of the messages and one of the takeaways is the importance of paying attention to issues about inequality, issues about opportunity. I think the rise of populism that we see in a lot of places reflects the fact that they don't feel that growth has delivered for people, right? That some people are, very well off, and then other people aren't getting the benefits. And I think it's that sense of loss of opportunity, right? That creates that sense of frustration. I think that's what we need to pay a lot of attention to, and not just, again, this kind of short-term stimulus, get the headline growth numbers up.
But when you expect tariffs to bite, and this region is looking at tariffs anything between 10 and almost 40%, you can expect the region to actually be saddled with a lot of challenges.
Absolutely, absolutely.
What are some of the things that need to be done, to be adopted? What policies need to be implemented in this part of the world to ensure that growth remains intact?
For us in Thailand, I would argue, again, given what we had talked about initially, right, that far too long, and not just any government, every single government over the past, I would say even 20 years, the focus has always been on that, short-term stimulus stuff. Handout, stimulus, and we haven't paid attention enough to the structural stuff. And for me, this is like, we use that cliche term of a wake-up call. This is about as clear a wake-up call as you can get, that we need to kind of get our house in order on that front. And I also think that what will happen eventually, it will take a while to play out, is that things will realign. There's an action and there will be a reaction. We don't know exactly how it's going to play out, but it will play out. On the tariff front, again, as we know, the U.S. at the end of the day, it's 15% of the kind of the final import demand. So there's still 85% of the rest of the world, and so the rest of the 85, we kind of need to reorganize and whatnot. That's again not to downplay the importance of the U.S. by any stretch of the imagination, but I think it's just again a stark reminder that again we need to find these new avenues of growth.
Governor Setaput, you've navigated, I guess, a turbulent 5-year term. You
a very long 5 years.
You would agree with me on that. I'm just wondering if there is anything that you would have done differently. Any decision you would have.
Yeah. I mean, again, Haslinda, in terms of the broad strokes of what we were doing in terms of the adjustment, particularly on the monetary policy front, which is what most people pay attention to. I think broadly, we kind of got that right. The right calls at the right time, the big calls. And again, I'm not saying, exactly every single 25 basis point, up or down we got right. And you can always argue about whether that should have been 25 basis points higher or lower, and, one MPC sooner or later. That stuff I take. But the broad contours of what we did, which was to bring rates down a lot during COVID, not raise them too rapidly during the Ukraine thing, and then gradually lower them down to where they are. I think broadly that was right. My takeaway, but I'm not saying it by any stretch that we got all the stuff right. There was the one thing I am relatively proud of, me and the team, is that we didn't just pay attention to the short-term stuff. We also try to make sure that we put in place the longer-term foundational stuff in place. So we did things in the financial landscape about open infrastructure, open payments, open data, open competition. So virtual banks, cross-border payments, things like that we continued to do. The thing I would have done differently, there was some stuff on the longer-term structural agenda which turned out to be a whole lot harder to do than I had thought, and that the lead time to do it took longer than I thought because there was a lot of pushback. So I wish I had started that stuff sooner. So for example, credit guarantees, that's very important because we've seen SME credit kind of trend down. I worry about that. We need a way to address the credit risk on that. So we've been pushing this thing, but it took much longer than we expected, so it should have started that process sooner. The other thing I think is very important for us is open data. I think that's a real kind of game changer. Try to get the freer flow of data to float around. And we started that in the plan, but again, given the amount of pushback and resistance we got, I wish I had done this sooner so I had more lead time to do it, and I've kind of taken us further along than where we are today. So those are the kind
What a ride it's been.
What
and congratulations on the BOT being named Central Bank of the Year 2025. So
Thank you.
ain't too shabby, Governor. Thank you so much for your time today.
Thank you very much.
Setaput Sitiwar Naruput, Governor of the Bank of Thailand here in Bangkok. Still ahead, our exclusive interview with the CEO of Thai Airways. Hear what's next for Welcome back. You're watching Insight, coming to you live from the Bank of Thailand headquarters here in Bangkok. Well, Bloomberg Intelligence believes Thailand's slump in Chinese tourism could show tentative signs of easing in the fourth quarter. That's as it sees the pace of booking declines moderating, particularly around the key Golden Week holiday in October. The pickup in Chinese travel demand is seen to help the recovery of airlines like Thai Airways. The national carrier stock is up 20% after resuming trading for the first time in 5 years last month. That's as it emerged from its $12 billion debt restructuring. My next guest runs Thai Airways, the state-controlled airline and the fifth largest carrier in Asia. Joining us exclusively is CEO Chai Imsiri. Kun Chai, good to have you with us. We've been talking about the political situation here in Thailand. Is that impacting sentiment in any way? Is that impacting your business in any way?
Yes, maybe it's maybe impacting the confidence of the countries a bit, but actually, we Thai Airways, we are we lay down our new strategy that we will becoming the network airline. So that's the difference is in the past we mostly carry passenger from other country into Thailand back and forth, but now we can carry the passenger from one country through Bangkok and to the other destination. That's the difference from the past and now. So this is a way that we can reduce risks that relying on depending on heavily on only one single market. Yeah.
So in terms of Thailand as a holiday destination, a business destination, has that been impacted at all in any way? Are you seeing perhaps a decline in numbers? Add to that, of course, we have the border situation between Thailand and Cambodia.
As a visitor or the traveler coming to Thailand, the only one area that dropping is the China market. But the rest, for the rest of the market, European, India, Australia, other northern Asia is still growing. Only, as I said, the only impact is China. But China, there's some other issue, like a safety issue, the confidence to travel into Thailand. During the past, early this year, we have a problem on that. But we, as a Thai Airways, we carrying the passenger not only to Thailand, but also through Thailand to the other city. So it's different picture between Thailand and Thai Airways. Because most of our passenger is the individual FIT, not the group. Mostly the group travel with the low-cost carrier. We FIT travel with us. Some of them into Bangkok, and some of them passing through Bangkok to other countries.
You talked about how you're seeing growth apart from China when it comes to passenger numbers. Can you shed some light as to what the numbers look like?
European round, we fly to 11 cities in Europe. Two of them are double daily, But actually, we have even the short-term plan. We will increase the capacity to Europe, as we see the number from European coming into Bangkok and again going through Bangkok to the other region. The number they increase, of course, the European traveler and also Indian into Thailand and Australia into Thailand. North Asia, maybe Japan is slowing down, but there's a lot of Thai going to Japan and Korea. As a conclusion, the number coming from the other area still growing 2 to 3% from last year. Is showing that there still have some demand from the especially long haul passenger.
Given the optimism that you're expressing, what are your expansion plans for the next several years?
As I said, we will make Thai Airways, which situated in Bangkok, to be the hub for this region. Our expansion will be mostly to Europe and also through the Asia Pacific, especially India and China in the future. We will receiving the narrow body end of this year, and next year in total is 17 of them. This aircraft will be cater all of the passenger among Asia Pacific. They can fly up to 6 hours, which can connecting our intercontinental passenger through regional city in Asia. That's our strategy. And on top of that, not only feeding our aircraft by ourselves, but also using our partner, whoever, like a star partner and also the non-star partner. We open for that. And actually we have a lot of code share and SPA. SPA stands for the Special Project Agreement with the non-star partner also. So this can be strengthening our network by using the partner. We also selling a ticket to them also. So this is a good this example of collaboration between partners.
Right. You talk about taking delivery of new aircraft, but we know there is a shortage of aircraft at this point in time. What conversations are you having with the likes of Airbus and Boeing? What are the indications from them?
From Airbus, the narrow body, we are already firm with them. This one will be the lease aircraft from the lessor. 32 of them is already confirmed. The first 2 will be coming end of this year and will be in production by early next year. The 15 of them is on time next year, and the rest still on time. So 3 years from now, we can get it all 32. But for the wide body, we just have a commitment with Boeing end of 2023. The first one will be, the first lot will be delayed a bit, about 6 months. At the initial plan, the first fleet will coming in mid of 2027. But we have been noticed by Boeing that it will be about 6 months delay. That means it will be coming in end of 27 and will be in traffic by early 28. Yeah.
Khun Chai, because of the shortage of aircraft, a lot of airlines are actually turning to second-hand aircraft. Is that something that you're looking at as well?
Yes, definitely. We are open for it. We have a big eyes on the used aircraft, but every airline facing the same problem. So the difficult part is every airline holding the aircraft, the old aircraft, because they get a late delivery from the new production aircraft. So it's very rare to find the used aircraft in the market, but there are still some. but we have to put more effort to get that aircraft. But the problem is, it may be 1 or 2 or 3 aircraft available in the market, but those aircraft are different configuration in the aircraft. We have to think about that also. Ideally, we would like to have one sizable number of aircraft which have the same configuration. For example, 8, 10 of them by having the same configuration. That's the most difficult part. Yeah.
We know that Thailand is still in negotiations to bring that 19% tariff down. And we also know that a lot of these negotiations with the U.S. actually involve a component involving aircraft deals. Are there any plans whatsoever for Thai Air to be buying more Boeing planes?
As we know, we all know that we already fully committed for the firm order of 45 Dreamliner, but together with 35 options.
Khun Chai, I'm afraid we have to leave it there. Great speaking with you. Chai Imsiri, CEO of Thai Airways, and that is it for Insight Live from the Bank of Thailand headquarters here in Bangkok. Keep it here with us. This is Bloomberg.